Came to NASDAQ futures and whether that lifts, for instance, the big heavyweights here in Europe, ASML and ASM.
Yeah, it's really, really fascinating that we're going to see some of these. I mean, does the tech story really even bleed into the narrative? There is that piece. There's a geopolitical narrative. Again, this is why I went back to the CAC 40. If you are worried about what's going on in China, that's going to show up immediately in the French and, frankly, in the German indices as well. We're going to dive into that dynamic later in the show. It is, of course, time for the opening trade across Europe. Let's get these markets open. When it comes to the FTSE 100, right off the bat, kind of virtually unchanged. The futures didn't give us much to work off of. I am wondering if we are going to see a little bit more liquidity. Remember, we do have the NVIDIA earnings, as Val mentioned earlier this week. We do also have a couple of other narratives as well. Remember, MBS is meeting Donald Trump today in the White House. Is there an oil conversation to be had in tomorrow's trade? Are we going to be talking about the BPs, the Shells, the Totals of the world right off the bat? The Stock 600, again, giving me nothing here, but you can see that the underperformers from the futures picture, Val, are the early underperformers of the session.
Yeah, let's take a look at how at least the sectors are performing, if my screen gets off frozen, on how we're shaping up here. It does look like a pretty even open. We have around half of the equities open in the red, around half of them in the green. And when it comes to sectors, we are seeing a bit of a decent bounce back when it comes to tech. As I mentioned, we do have the NASDAQ leading gains right now when it comes to Wall Street futures. We're also seeing one of the biggest stocks to the upside, up over 4%, WPP. So it does seem to be reacting to the news over the weekend that they have gotten some takeover interest. Pretty an interesting session so far. I know we have a lot to contend with this week, especially all those interested in the NVIDIA earnings on Wednesday.
Yeah, it's a really fascinating one. When you look at some of the individual movers here, right off the bat, it is just kind of feels like a heavyweight kind of day, as maybe promised by some of the futures indication. You are seeing the underperformers very much in the French market. LVMH is taking a little bit of a battering. I feel like they tend to get their cue from what you see in the Asian session. They were also rallying on Friday as well. So the show shares down about 1% at the moment, and one of your biggest weights on the index as a whole. On your screen, though, you can see where some of the volume movers are. I'm not seeing a ton of volume today in general. It kind of feels like a sleepy Monday, if I can go ahead and say that. I will say, going on to the index contributors to the upside, though, a lot of these seem like companies that maybe guys interacting with. I'm seeing a lot of defense companies moving. I'm seeing the Airbuses of the world. Of course, we have one eye on Boeing as well over in the States in terms of the orders that are coming out of the Dubai Air Show. We know that has consistently been a major market mover and certainly a sector we're going to keep an eye on for the rest of this week. We're going to give the markets a little bit of a chance to shake out here so we can get a little bit of a clearer read. In the meantime, bring a little bit of a market expert, Tom Becker, hot-footing it over from San Francisco for us, Senior Macro Portfolio Manager over at BlackRock. Thank you for coming.
Thanks, Freddie. Good to see you.
Good to see you. We're trying to find a little bit of direction today. I feel like today might just be a write-off. I'm going to get in trouble for saying that, simply because it feels like the action is in the back half of the week. Walk us through how you're thinking about NVIDIA. Walk us through how you're thinking about the delayed NFP report.
Sure. So I think some of the market volatility is coming back into the markets, given the end of the U.S. government shutdown. So the vol suppression of just not having data for a couple months, markets kind of continued on. A lot of the momentum names were continuing to do well. From here, we're a little bit less optimistic on directional equities compared to a couple months ago. The earnings outlook looks a little bit choppier, kind of the dispersion's a little bit higher across countries, but you don't have that uniform global thrust that I think we had in the late summer and early fall. So we pulled down a little bit of directional equity positioning. The leadership over the last couple months has shifted quite a bit to sort of junkier names, a little bit more leveraged names. And so the technicals that associate that don't look as good to us kind of heading into the end of the year. And so we've just pulled down directional equities. We spend a lot of risk in relative value exposure. So we still like the US, we still like Japan, we still like Italy, but there are a number of names that we think are a little bit overbought, some of the emerging market names that are a little higher beta.
Let's come back to you said a bunch of things. So let's go back to the leverage story specifically, and then we'll get to kind of the global take. We've been talking about this kind of over leveraged, kind of bought conversation in tech for a very long time. Why now? Why the pullback now?
So I think the market breadth has definitely narrowed. A lot of different sectors are focusing on AI. We had our investor conference amongst BlackRock a couple weeks ago, and you heard commodity experts, you heard communications sector experts, you heard European. Everybody sort of talking about how AI is going to impact their industry, their sector, their asset class. To us, that means that it's a bit of a kind of less diverse market. That is not as supportive as when you have lots of different cylinders kind of pulling up earnings. And then I think the dynamics since the Fed cuts came into kind of the market's focus in the fall, it's just a little bit more speculative, not so much AI, but just more kind of highly levered, more speculative names where the cash flows and the earnings aren't as near dated. And to us, that's not as supportive going forward.
Well, Tom, what about the fact that this next stage of this AI boom is going to be fueled by debt? And we have a backdrop of hawkish Fed, members of the FOMC claiming that a September cut isn't needed. You're also seeing tighter liquidity in the front end when it comes to repo levels.
Yeah.
How does that play into the equity picture for you?
I think that liquidity is kind of an undercurrent that's going to be a little trickier for kind of all financial assets here. And as you mentioned, kind of some of those spread assets, those front-end refunding markets, those interest rates are a little bit higher than they were. The Fed is going to stop QT, and so that will help a little bit. But overall, we think kind of the liquidity picture doesn't look as supportive as it did in the summer. We think treasuries look attractive in the cross-section of government bond markets. And so we've actually been buying treasuries over the last couple months versus foreign markets, versus Europe, versus the UK. We think kind of treasuries with the end of that QT program and with a Fed that has a dual mandate, so they can respond a little bit more to labor market weakness compared to the European central banks that don't have that dual mandate.
Talk to us about how you're valuing gilts. We've had a blow up in the market on Friday on Reeves backtracking on this income tax increase. We have UK CPI this week, we have UK retail sales, and the budget is next Wednesday. How are you viewing the markets here?
I think Friday's price action pointed to the fact that the market is still has a lot of uncertainty. The CPI number is going to be really important. It's still not close to target. So, the BOE has, 3 cuts priced, but that's on the back of CPI kind of looking really solidly between 3% and 4%, services CPI above 4%. And so I think you're right to point out that CPI, the budget as kind of risk factors, but when we step back and we look at kind of the supply of gilts, it's still really challenging. You've got issuance at the long end that's still pretty high. You've got active QT sales, which you juxtapose that to the Fed where, they're ending their quantitative tightening completely. And the BOE is still kind of selling extra supply into the markets. And so it's a much more fragile debt market from our perspective. The currency is not super supportive. If you look at just euro sterling over the last year, you've had weakness from the sterling side, and that's going to just keep inflation a little higher. And so, whether the BOE can really validate what's priced in markets to us is a little bit more challenging. We liked it a few months ago, but here it just looks a lot trickier for gilts.
It kind of sounds like we're awaiting a sell-off come next week. What's your doomsday scenario come November 26th?
I don't think there's a I think it's a bit of a tempest in a teapot. Well, no, I mean,
right now.
Well, so the back end kind of sells off, and then the Bank of England has to respond by kind of keeping rates higher. And I think this idea that counter-cyclical monetary policy is a given, it's not a given. Not every country has that luxury. And so this idea that you can have a weak labor market and that's going to translate automatically into cuts, A lot of central banks don't have that situation. And so I think kind of the challenge would be one where the labor market continues to deteriorate, but inflation just stays sticky. And the question then for the long end of the gilt market is, who's going to buy the bonds?
Best case scenario then. How does Rachel Reeves get out of this with a gold medal?
I think, so first, the tax, you want kind of the revenue to come from non-inflationary forms of revenue raising. So you see this in Europe a lot or the US, tariffs, they pass through to consumer prices. And so you raise revenue, but you kind of up the CPI. When you have these one-off adjustments that feed through into CPI, that's a bit challenging. I think long-term, when we think about debt sustainability over multiple years, you want growth. You need productivity. You need a plan for how does an economy grow to make its bondholders feel secure, that there's a perpetuity of kind of economic resilience. And so I think the UK for a few years here has sort of had that challenge. The last decade has not been a great productivity growth decade.
Yeah.
And so how do you get out of that trap?
Tom, we have a month and a half to go before we close the books on 2025. Is there a risk event in your mind that the market is underpricing?
I think the U.S. data is going to be super interesting to see. So it's going to be stepping back in time. We're going to miss a month. We're not going to get all the data from during the government shutdown. But I do think now with kind of Q3 earnings out of the way, it really is going to be how does the U.S. consumer look? How is the labor market? Some of the more recent kind of big data that we look at look a little bit choppier. And so, we are questioning the resilience of the U.S. consumer a little bit more than we have been in the last few years. And I think that's just been powering a lot of global output. And so from our perspective, getting more of these kind of high quality data from the BEA, from the BLS is really kind of front and center in our view.
And that December cut is on a knife edge, at least when it comes to pricing in money markets. What's your view? Do they cut or do they hold?
I think from here, the path of least resistance is a cut. And so I think they wanted to put it more into play, and you're going to get more dissents here. But from where we sit, the labor market has definitely shifted to be much more the higher priority. And so barring kind of inflation really reaccelerating here, they seem to be comfortable with 3% inflation, like 3 is the new 2. Not to say that is going to play out as we head through 2026, but I think there's just a plurality on the committee that feel like the job market is just weak enough that they can kind of go again.
Even though they could get multiple dissents. Evercore ISI's Krishna Guha talking about how they could have maybe 4 at the December meeting. Really fractious a Fed at the moment under this huge political pressure from the Trump administration.
Yeah, which is probably why you're seeing such the kind of pricing that we are seeing in this market. Tom Becker, thank you so much for joining us, for coming in from California, Senior Macro Portfolio Manager over at BlackRock, joining us this Monday morning. Let's get a quick check on the core 6 here, the heavyweights that tend to move in the European session and move the benchmark as a whole. Again, a mixed picture, kind of what we saw in the sectors picture earlier as well. You are seeing the outperformer this morning is Rheinmetall and ASML. That tech theme is running strong. The defense theme is running strong as well. There's already a series of orders. Saab is one key example. Rheinmetall perhaps taking its cue from there as well. Schneider Electric, though, down about 0.3%, as is LVMH. The French underperformance continues throughout this market. Let's go check out some of the other individual stocks in the move. Chloe Melly is here with more. Chloe.
Good morning, Kriti. WPP is on the move today. It is up almost 4.5% after it was said to be drawing interest from Havas, which is a rival advertising agency, and also private equity. So this follows a series of setbacks for the company. They had seen guidance cuts, a share price that has seen a big downward spiral, and quite a lot of key client losses as well. But it seems that investors are getting quite happy about the prospect of a potential deal and think that this is actually maybe the right move for WPP to kind of move forward. And so we are up almost 5% this morning. Moving on to Societe Generale, which has announced a €1 billion buyback. So this is a bank that had disappointed investors just a few weeks ago by not announcing fresh payouts when it announced its third quarter results. But it seems that now investors are getting what they want, and therefore we are up 0.7% for SocGen this morning. Moving on to the defense company Saab, which has announced a new deal to provide Colombia with new fighter jets, and that is is a deal that is worth 3.1 billion euros. So this is a big order, and that is really getting the stock higher this morning. We've got a movement of 5.8% for Saab this morning on the back of this big order from Colombia. Going over to the provider of semiconductor equipment, SUSS Microtech, which is up quite impressively this morning. We're up 12% after setting out some new long-term targets, and that is targets that apparently investors are quite happy about. This comes just a few weeks after third quarter results that showed really strong order momentum for that company. So it seems that the outlook is quite bright for SUSS Microtech, and we are up 12% on the back of that. And finally, we actually only have positive move this morning. Heidelberg, the provider of construction materials to the construction industry, is up 1.6% after being raised to an overweight rating at Barclays. This is a company that is a big beneficiary of the big fiscal stimulus and infrastructure investment in Germany, and we are up 1.6% on the back of that upgrade.
Chloe Melly from our equities team, thank you for running through the stocks to keep an eye on in this session. We do have the Eurostock 600 in the green, up 0.2%. Those NASDAQ futures are up higher by 1% this morning. It does seem to be a Monday is a strong session for this U.S. equity market rebound. But coming up on the show, we'll check in on Deutsche Bank ahead of the firm's Investor Day as the CEO outlooks his next steps for the German bank. More on that next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to the opening trade. We're around 18 minutes into today's cash equity session here in Europe, and we're clinging on to gains when it comes to the Euro Stoxx 600, up just 0.1%. We are following some pretty decent gains when it comes to Wall Street futures. S&P 500 up 0.6%. NASDAQ futures up 1% to start this Monday morning. But let's check in on Airbus after Boeing has learned the aircraft manufacturer is set to win the majority of an order being negotiated with Fly Dubai. Sources have told us the European aerospace and defense giant may secure about 150 commitments for its A320 aircraft. The deal would be an early strategic win for Airbus at the Dubai Air Show over its rival Boeing. Joining us now from Dubai is our own Guy Johnson. Guy, what is the latest news out of the event other than the sun is out quite strongly?
The sun is out quite strongly. It's nice to be in the sun for once. It feels like it's been a long time since I last saw the sun. Let's talk a little bit about the news that we've had. Look, that order that could come through from Fly Dubai, it's not confirmed yet. And it would be a huge win for Airbus, which actually dominates the narrow-body market in this region, but not with Fly Dubai. Fly Dubai is an all-Boeing fleet, so they can secure some big orders from Fly Dubai, and it looks like this order might be split between Boeing and Airbus. That would be a massive win for Airbus, and Airbus has been struggling in this region recently. Donald Trump has had a huge impact here in terms of the orders that we've seen coming through. His trips to the region, his impact on the region has been significant. We're also waiting to see whether or not there's going to be a big order coming through from Emirates. Now, that could be for the A350-1000, the long-range version of that aircraft, but that's having engine trouble. Will Sir Tim Clark, who runs that business, order that aircraft, or, as we're hearing this morning, potentially place a big order for the 777X from Boeing? Remember, that aircraft's been heavily delayed into 2027, but Tim might have the confidence to place that order. Stephanie Pope, who leads the civil side of Boeing, is here in Dubai, pushing all of these programs very, very hard. So it's early stages. The SO is only just getting going, but it looks like there could be some very big orders from some of the big carriers in the region.
Guy, it feels like defense, and you mentioned this at the start of the show, is a bigger part when it comes to narrative this year. You're already seeing some of the defense names move off some of the back of that. Walk us through what you're hearing on the ground.
So normally, Critty, this is a civil show. It's dominated by the big civil orders coming out of airlines like Emirates. For the first time, I have to say, this is not the case this year. This feels like a show that is evenly split in terms of what people are talking about. Defense is now a much bigger piece of the pie. I was talking to Steve Parker, who runs the defense side over at Boeing, a little bit earlier on. Like a very different kind of vibe around his sector at this air show, and you can kind of understand why. A lot of people are looking to place very big orders, and it's interesting the Saudis are going to the White House this week. What impact are we going to see from that trip? You got the UAE looking to up its Patriot missile defense batteries. What impact is that going to have? So the defense side of this business, like it is in Europe, like it is in America, like in many parts of the world at the moment, feels like it's in a very different place. I've been coming to this show since the late 90s. I've never seen so many people or heard so many people talking about the defense side. Normally, it's just these massive orders from Emirates. But this show feels very different.
Well, Guy, when it comes to the more consumer-driven, we know that airline industry is kind of a decent bellwether for what it signals about demand. U.S. and European carriers have been signaling worries, but does that maybe pair with what we're hearing from the rest of the world at the show today?
So I was talking to Tony Douglas, who runs Riyadh Air, the new startup coming out of Saudi Arabia, about this a little bit earlier on. He says not yet. He's aware of it. He's paying attention to it. When he says when bellwethers like the big US carriers and the big European carriers, remember it's been Air France and IAG over the last few days, start to talk about a softening, you want to pay attention to that. But I was at an Airbus event last night as well. They're talking about epic demand coming out of this region. Huge, huge pickup in terms of the demand that we're going to see coming out of the Gulf. Yes, there are going to be some blips, but the long-term trajectory looks very strong. And you kind of think about the relationship with India as well, another massive market that is only a couple of hours flight away, that is also expanding very rapidly. People here are fairly confident in the demand outlook. But yes, they are paying attention to the wobble that we're seeing in America and in Europe.
All right, Bloomberg's Guy Johnson on the ground for us at the Dubai Air Show. We thank you so much. Of course, look forward to your coverage throughout the rest of the week. In the meantime, let's talk about another key event this week as well. This side in Europe, the chief executive of Deutsche Bank is set to unveil his strategy for the next 3 years this afternoon. Analysts expecting new financial targets, but few changes to the overall strategy. You're seeing Deutsche Bank shares higher by about 0.4%. Tom Metcalf, Bloomberg's managing editor for EMEA's finance coverage, joins us now. Thank you for coming. Walk us through what we need to be paying attention to.
Yeah, I mean, analysts, broadly speaking, not expecting any kind of drastic changes. I think what they're hoping for is maybe a boost to returns targets. And then, you know, on the strategy, maybe more some tinkering. So, look, the retail bank has always been a bit of a drag. Are there ways they can kind of boost the margins there and sort of make sure it's not quite the sort of black sheep of Deutsche Bank? But, you know, the last strategy change was much more significant. It was really sort of rolling back a few things on the investment bank, but seems to be succeeding. Certainly the shares are up. So the sense is executives today will largely be like, we're going to continue this, but with a bit more ambition.
Well, Deutsche Bank is having a new CFO take the helm in the next few months. Does he have a message he needs to send to the markets in order to maybe take out some of the skeptics on Deutsche Bank?
Yeah, I think on the personnel side, that would be the most interesting thing of today. You've got the current CFO, then CEO soon presenting, and then the new CFO, Raja Akram, coming in. So, yeah, no, I mean, I think he'll definitely be on display. He comes from Citi and Morgan Stanley. And, you know, the big question will be, you know, does he signal any kind of drastic shift in terms of how Deutsche Bank are doing? You'd expect on his first appearance, he's going to be very kind of calm and not trying to spook any investors with any surprises.
Tom, let's zoom out for a moment, if we can, and just talk about the European banking sector broadly. We're going into the end of the year. We're maybe starting to see people wrap up their books. We're trying to see people, maybe a little bit of the deals that are coming down the pipeline or trying to squeeze through, maybe put on pause until 2026. Do buybacks get affected at all going into year end?
Well, investors will certainly hope not. And actually this morning you had SocGen coming out and announcing another buyback. They got the authorization from the ECB. And yeah, realistically, in terms of what is upholding these European bank share prices, it comes back to the capital return more than anything. So you'd expect not, because that would, you know, as long as they've been signaling their plan to continue them, you know, I think Q4 will be another decent period for buybacks, unless obviously something changes significantly on the macro front. Or
yeah, it's been like a massive run that we've seen in the banking sector, right?
Yeah, I mean, Deutsche Bank in the last 2 years, I believe the stock's basically tripled. It's on par to hitting book value soon. When it comes to what's going to keep this bank rally going in Europe, what is it in your mind?
Yeah, I mean, you need the economies to sustain. It's got to be that kind of broad-based, you know, with the rates moving around, they keep those businesses going. I mean, I think the sort of positive story about European banks is they spent so many years with negative rates on the continent, at least. You know, anything where the rates are positive, you think their businesses have adapted and become sufficiently efficient. But yeah, the biggest question always when it comes to European banks is, can they ever truly catch up with the big players on Wall Street? And so far, there's a huge gap. And as you pointed out, look, Deutsche Bank shares massively run up, and yet its price to book is still just about 1.
Yeah, that's a fun number to have. Tom Metcalf, who leads Bloomberg's EMEA finance coverage, walking us through some of the strategy updates that we can expect out of Deutsche Bank later today. We thank you so much. In the meantime, let's do a quick check on some of the stocks that are moving the most in the session. We're 26 minutes into the European trade. Saab higher by 6.2%. This one's interesting. The defense orders, as Guy was mentioning earlier, at the Dubai Air Show, are coming in kind of hot and heavy here. Saab talking about a $3.1 billion order from an unlikely source, Colombia, of all places. But this is probably just the start of a series of orders that we're going to start to hear not only from Saab, but from other defense places as well. Airbus, Boeing, of course, still kind of in a tight race in terms of being able to secure some of those orders from Dubai. We'll see how much the defense and the Trump effect plays out throughout the rest of the week. Coming up on the program, we're going to go right back to the economics. David Rees over at Schroders will be joining the program. Stick with us. This is Bloomberg.
Climate change is going down right now. going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we. All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back to the opening trade. We're 30 minutes into today's cash equity session here in Europe, and it does look like we're going nowhere fast to start this Monday morning. Eurostoxx 600 up just shy of 0.1%. Some underperformance in the CAC, but really pretty. It seems like we're just treading water, and this is despite a pretty strong showing for Wall Street futures. NASDAQ futures rebounding some 1% so far to start this Monday morning, but it doesn't feel like that exuberance is leading into Europe.
A little bit of a sleepy session. I think you can kind of see that treading along or chugging along or treading water, whatever analogy you want to use. And it's really emblematic of what you're seeing here. The volume on a 20-day average basis is down some 35%. However, sentiment, to your point, is skewed to the downside. You are seeing 304 members lower, 270 higher. And it is some of maybe the heavyweights that are pushing some of the markets, maybe just a little bit higher in some places. Nevertheless, let's talk about some of the leaders and the laggers. Some of the leaders, I think this is really interesting. I'm going to start over here. This is the Guy Johnson show, really. The Airbus and Saab story coming out of Dubai Air Show. You can see moving the markets quite substantially. We're going to continue to see that throughout the entire week. Siemens Energy is the other, higher by 3.3%. We saw a lot of action here last week. They came out with their earnings as well. So you are seeing some positivity in that stock. There are some laggards, though. Remember how I said there is going to be some weakness when it comes to the French markets. Well, LVMH is emblematic of that, down about 0.9%. There's a couple of other movers to the downside. Adyen, for example, taking a bit of a hit. But to me, Val, the heavyweight of LVMH really moving the French market lower.
Well, here's what else you need to know this morning. President Trump is ramping up pressure on Russia by backing proposed Senate legislation to sanction countries conducting business with Moscow. The bill would allow Trump to impose tariffs of up to 500% on imports from countries that buy Russian energy products and are not actively supporting Ukraine. This specifically targets major consumers of Russian energy, such as China and India. Well, sticking with China, China is escalating its confrontation with Japan over Prime Minister Sanae Takaichi's comments on Taiwan. A post from social media account linked to China's state broadcaster hinted at imposing sanctions and suspending economic, diplomatic, and military ties. Then the People Liberation Army Daily reinforced that message by saying if Japan became involved in the Taiwan Strait, quote, the entire country would risk becoming a battlefield. German Finance Minister Lars Klingbeil is headed to Asia, pushing for open, rules-based trade as tensions rise between the U.S., China, and Europe. He'll take part in the German-Chinese financial dialogue in Beijing, meet officials in Shanghai and Singapore, and press for fair competition along with better market access for German firms. Kruti?
A really fascinating relationship between Germany and China, and really China and the rest of Europe. We'll still get a little bit more analysis in terms of how we should piece it all together. David Rees, head of global economics over at Schroders, joins us around the table. David, pleasure to have you on the program. Thank you so much for your time this morning. China, of course, in the news this morning for a variety of reasons. As Val mentioned, there's geopolitical tensions with Japan. There's a relationship with Lars Klingbeil, who, of course, is leading the German delegation there. There's a little bit of a market read-through that we're seeing into the French market as well this morning. How should we be thinking about China's kind of economic impact into Europe? Is there still an overcapacity story? Is it a kind of deflationary story? How should we be thinking about it?
I think it is. I mean, if you look at the Chinese economy, certainly the domestic indicators, they're quite soft at the moment. You've seen investment is tanking and consumer spending is really going nowhere. So you have still got this issue of demand not keeping up with supply domestically. There's better news on the trade front, so the US-China tariff story has been kicked into the long grass. But as you just pointed out, one tariff story gets dealt with, and then you get another one coming up around Russian energy. So you've still got that tension. Domestic demand isn't strong enough, and deflation is going to remain in place for quite a number of years, I think, in China. And they're going to have to ship that somewhere.
When it comes to overcapacity, I was really captivated by this chart in the FT about tomato paste exports, about how they used to export to Italy, and now that's completely reversed, and they're stuck with a huge stockpile of tomato paste. How are you viewing the Chinese overcapacity issues? Is this something that is going to cause deflation in the rest of the world? You know, their exports of EVs have surely dismantled some German industries. How do you think China's going to deal with it, and what are the long-term ramifications?
So I don't think the pressure is going to go away pretty clearly. I mean, the government has talked about policies such as anti-involution, but that really clashes and jars against the sort of 5-year plan where they continue to talk about manufacturing upgrade and leading the kind of global manufacturing and tech sector. So there's a clear tension there. And really, if anti-involution was going to cut down excess capacity, you'd be talking about mass job losses, which is clearly not in line with the kind of government's economic policy. So that pressure will remain there. I think the bigger question now in the future is which countries and markets are going to be willing to accept that excess capacity. So if you look at European industry, you pick out the car, which is the obvious one, right? So in Europe, if they continue to wave in cheap Chinese goods to the detriment of domestic manufacturing, that's going to mean local job losses, local deindustrialization at a time when populists are coming up and you've got elections on the horizon. So it's going to be very interesting dynamic between who's going to protect themselves and stave off populism and who's going to allow the goods and bring inflation down.
And you think Germany is one that's likely to not be able to cut those ties with China, or to really be, I guess, waving the strong stick that the U.S. is on their trading relationship being more balanced?
Historically, Europe has been more timid in terms of trade policies and tariffs, but you did see that first round of tariffs on EVs. There is a kind of precedent there that could be ramped up, but it's quite difficult for Europe to move in one big block, right, when you've got the different tensions across the region.
Talk to us a little bit about kind of, if you could be prescriptive, if you could be kind of Dr. Europe for a moment and say, here's what Germany needs to wean off of that dependence, or I would argue France, I would argue Italy as well, maybe even Spain that has those kind of big auto manufacturing sectors. What is the magic solution for that?
Oh, I think that's quite a difficult question, because clearly there's been a major technological shift from combustion engine cars to EVs, and clearly you almost kind of got the first mover disadvantage of being so advanced in the combustion engines that you haven't really concentrated on the EVs, and then you've got someone's come up behind and overtaken you. So it's difficult. Probably there needs to be a lot of investment. There needs to be development in the auto industry to be competitive. But it is going to be really difficult. This is a global challenge that China is not going to be going away. It's supremely competitive, and its exchange rate is getting cheaper and cheaper and cheaper in real terms.
Let's talk about the UK. Speaking of magic wands that we need to be kind of waving around, we have a budget coming up in T-minus, let me do that math, what is that, 9 days?
9 days, yeah.
9 days.
Next Wednesday.
Next Wednesday, a very exciting time. We saw a wobble in the gilt market on Friday. What's your best case scenario? What's your worst case scenario come November 26th?
I think we've already had a taste of the worst case scenario where they're already backing away from income tax increases because the government is stuck between a rock and a hard place, right? It is deeply unpopular, and it said it won't raise taxation, but it needs to steady the ship, otherwise the gilt market is going to find them out very quickly. So we're assuming that the government's going to rebuild a kind of, tighten net by about 30 to 40 billion, probably closer to the 30 now. They're not going to touch the income tax. It's a little bit of a concern that they're going to be concentrated on smaller measures, which will be less effective in raising revenues rather than just raising income tax. So probably by the spring or at least the autumn next year, we're going to be back in the same position because it will be difficult to raise the taxation. And the UK is clearly still very vulnerable to an increase in global yields, which we think will probably be coming through and could quickly eliminate a lot of this headroom.
Dig into that for me. You do think that yields are going to rise next year substantially, and that could pose a threat to the UK? Is that mostly based on Treasury yields?
Partly Treasury yields, partly what's going on in Europe. Mm-hmm. So we did some analysis earlier in the year, just working on the basis of Treasury yields, that if Treasury yields go up 100 basis points on a sustained basis, then you're going to add about 1% of GDP to the UK interest bill. So, and that would eliminate the headroom very quickly. So whether or not that's going to happen is a different story, but you could get the kind of the pressure coming from Europe, you could get it from the US, and now Japan is going to be loosening as well. So we just think global long-term rates will be rising, grinding higher over time.
Yes, the UK has to confront the rising tide of global yields as well as its own domestic problems. Exactly. It does really seem like a hard pickle for them to figure out. But next Wednesday is the UK budget, and famously the day before US Thanksgiving, which is not always kind when it comes to liquidity. So we'll have our eyes squarely on that announcement from the UK Chancellor. But thanks to David Rees for joining us this morning, the head of global economics at Schroders. Now back to China. Chinese state media is threatening further countermeasures in its growing confrontation with Japan. Beijing has taken issue with Japanese Prime Minister Sanae Takaichi's recent comments on Taiwan, in which she expressed concern that an attack by China might create an existential threat for Japan. Joining us now is Bloomberg's Tokyo Bureau Chief Isabel Reynolds. Isabel, China is now discouraging its people from visiting Japan, whether as tourists or students. What's been the fallout so far, at least in commercial terms and market terms for Japan?
Right. Well, what we've seen so far today, obviously, is massive falls in share prices in certain sectors, and particularly vulnerable companies such as Shiseido. We saw a drop of 9% in Shiseido shares, and department stores like Isetan Mitsukoshi, that fell about 9%, I believe. And of course, also in the hotel chains and the airline chains, there have been all sorts of falls across the board. But I think if you look more closely, I mean, we've made calls around to try and find out what's actually happening in terms of perhaps cancellations of travel or bookings at hotels and so on, and we haven't found a huge effect so far. So we don't know so far whether this sort of encouragement to stay away from Japan is actually going to have a huge effect on the Chinese people's travel plans, or whether it's all going to sort of blow over relatively quickly. Of course, the Chinese do make up the largest single group of tourists to Japan. That number has been growing massively since the end of the pandemic, and that's the situation we're in now. Of course, Hong Kong has issued similar warnings to its people about coming to Japan. So those two together, if they were to sort of disappear overnight, that would have a huge effect on Japanese business.
Isabel, you explained it from a commercial perspective. Talk to us from a diplomatic and from a defense perspective. Earlier in the program, I want to say about an hour ago, we got some commentary coming from the chief of the U.S. Navy, and I just want to read some headlines out to you and to the benefit of our global audience, saying that he's not surprised by Takaichi's comments on Taiwan. They're closely watching how China uses aircraft carriers, and of course, they understand Takaichi's concerns over Taiwan. This comes right off the heels of a pretty massive Asia tour from the President of the United States. Just walk us through that dynamic there at a time when you are trying to see the defense story in the Indo-Pacific ramp up.
Right, yes. Well, I mean, I think I'm sort of not surprised that he's not surprised by these comments. Sanae Takaichi has long been known for her hard line on China. So for her to say something that is particularly threatening towards China is not that surprising. But of course, what she said, although it's more specific than what other leaders have said in the past, it's not really out of line with what Japan's policy has been. It's always been, if there has been a situation that threatens our existence in close by waters, then we would engage in collective self-defense. In other words, that Japan would come to the aid of a country such as America that might be involved in that conflict. What the leaders have involved is sort of specifically saying that might happen in Taiwan. So that's the unusual part, but it's sort of saying the quiet part out loud. It's sort of what everybody knew, but hadn't said in the past.
Isabel Reynolds, our Bloomberg Tokyo Bureau Chief, joining us this morning to walk us through some of the details. We thank you so much for your time and, of course, for your explanation. Coming up on the program, we go to a very different part of the world. S&P upgrading South Africa's credit rating for the first time in 2 decades. More details on why coming up next. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back to the opening trade. We're 46 minutes into today's cash equity session here in Europe, and European equities are going nowhere fast to start this Monday morning. Euro Stoxx 600 essentially trading flat this morning. We are tracking the gains on Wall Street futures, though. NASDAQ 100 futures up 1%, continuing their strong close in Wall Street on Friday. But now let's go to South Africa. S&P Global Ratings has lifted South Africa's credit rating for the first time since 2005, citing the nation's improving growth growth and fiscal trajectory. The company upgraded its assessment by one level to BB, 2 steps below investment grade. Bloomberg's chief Asia correspondent Jennifer Zabazaja joins us now from Johannesburg. Jennifer, what did we hear from the agency? It's been a great year so far for South African assets.
Yeah, Val, and I think many analysts are pointing to the fact that, I think as you were just saying there in your intro, it's been 2 decades since S&P actually upgraded South Africa. So this is definitely a positive step. And if we take a look at just the details of what they cited in the upgrade, it seems like analysts are taking this as not just a positive step, but it seems like there is a positive tilt because they are expecting even more improvements with this government of national unity, this coalition government that was formed just about 18 months ago. A lot of what S&P points to, though, is something that we've spoken about quite extensively over the past few years, which is hobbled growth in this economy, which is the state-owned power utility, Eskom, actually improving and not being such a burden financially for the government. And so it seems like they're expecting more growth moving forward. And this is a welcome sign for this economy that has really struggled, at least from a growth perspective, from a revenue collection perspective. And so perhaps many analysts are pointing to the fact that if we do, in fact, since we did see S&P upgrading, perhaps we do see other credit ratings agencies follow suit, and then we continue to see investor sentiment potentially lifting for one of the biggest economies on the continent.
Bloomberg's chief Africa correspondent Jennifer Zabazaja walking us through this really pivotal moment for the country. We thank you so much. Ahead of this week's G20 meetings in Johannesburg, we are also hosting global business leaders at the Bloomberg Africa Business Summit. Among our guests tomorrow, JP Morgan's Daniel Pinto, the CEOs of the Johannesburg Stock Exchange and 91 as well. Before that, of course, Jen will be hosting an audio live Q&A on Bloomberg.com later today. Digital subscribers and terminal clients can put their questions directly to a panel of Bloomberg experts in real time. Visit Bloomberg.com/live Q&A for more details. Val, a really fascinating event that's going to shed some light on a part of the world that we don't cover that often.
Yeah, well, let's take a look at the risk events on the horizon. It is a busy week, both when it comes to politics, data, and earnings. On Tuesday, Saudi Arabia is meeting Trump in D.C. We'll be watching that for any cues on perhaps the glut of oil supply and where headed to when it comes to oil prices from here. On Wednesday, we have UK CPI. That is before the UK budget, frankly, that will be released a week after that. We also have the Fed minutes and a big one, the NVIDIA earnings, the last of the Mag 7 to report. That is Wednesday after the bell. Thursday, we finally get some data from the BLS. The delayed September non-farm payroll release will be released at 1:30 p.m. on Thursday. Friday, we get the global flash PMIs for a first glimpse look on how the U.S. economy and global economies are shaping up in the month of November. Well, European stocks are starting the week on a flat foot along with U.S. futures as investors look ahead to the earnings, as I mentioned, from NVIDIA and the long-delayed economic release of September non-farm payrolls. To help us walk us through this week's Bloomberg's senior equity strategist, Neil Campling, joins us now for more. Neil, I feel like the big center of attention is going to be NVIDIA and what it tells us about these worries about AI valuations. What do we need to hear from NVIDIA to calm these recent fears in the equity market?
Yeah, I think it's highly likely we're going to get a positive message out of the CEO Jensen, as we come to expect. But it's really the nuances that we get to hear. I think in particular, analyst questions will be around some of these agreements that have been reached, OpenAI, the funding that we've seen from some of these deals that have been announced in these kind of areas, and also the outlook in terms of where they see the market progressing from here. Particularly, I think, because we have recently seen TSMC's monthly sales, TSMC being obviously their partner for manufacturing these chips, was slightly lower than people had expected, a deceleration in the latest data. So I think that perhaps overshadowing everything else, given that at the center of the AI narrative, at the center of the big cap tech narrative, the center of all these big thematics that we have in global equities, NVIDIA is absolutely key to really seeing the continuation of the rally, if you like, into year end.
Let's game this out. So Wednesday after the U.S. bell, we get these NVIDIA earnings. If they're a solid set, is this just buy more NVIDIA come Thursday morning? And if it's a not so solid set, how badly do you get punished? Or even if it is a solid set, do you sell the news?
Sell the news, yeah.
Like how do we game this out?
Well, this is the thing, isn't it? And in fact, if we look back here historically, sometimes the quarterly numbers from NVIDIA have been particularly strong. We're expecting something in the region of 56% year-on-year sales growth, which is, taking a step back, it's absolutely phenomenal. So sometimes the actual reaction to the stock is quite muted, we've seen in recent times. But if you take a step back and think that we're coming up to the anniversary, the 3-year anniversary in terms of ChatGPT coming up, and in that time frame, NVIDIA is up nearly 1,000%. So the long-term narrative is the most important thing, rather than taking a short-term one-day view on the stock or related trades. As long as we get support for the narrative going forward on Wednesday evening, you'll get probably bullish reaction from analysts, etc. It's highly unlikely, I think, to get anything particularly negative coming out from the story on Wednesday evening.
Well, alongside NVIDIA, we also get a bunch of retail earnings this week. A lot of the big box retailers in the U.S., Walmart being the big one on Thursday, but we'll also hear from the likes of Home Depot and Lowe's, which are tracked as well for a guide on consumer sentiment. This comes alongside all this chat about the K-shaped economy, that the tech exposed, the AI exposed, the wealthier bit of the U.S. is doing well, but the lower income households in the U.S. aren't. Do you think we'll see more evidence of that in these earnings releases this week?
I think it's going to be really key, because of course it's not just the earnings, but the outlook into a critical time of the year, not just holiday season, but of course we've got Thanksgiving next week and Black Friday, etc. So I think the views in terms of what's happening in terms of data, we had, as you mentioned, the K-shape, and there's many people are saying that we're starting to see consumers wearing, if you like, the impact of tariffs. There are tariffs that have come through. That's impacting some of the consumers, and we might see evidence of that, I think, in the commentary coming out this week from those companies.
Let's talk about some of the data that we're going to get in the rest of the week as well. A delayed NFP report that everyone says doesn't matter. Does it matter?
Well, it's great we've got some data. Then that's great news that the BLS are giving us the data.
Low.
The bar is low, absolutely. And the problem is we've been relying on private data, and the ADP jobs data has become a real key watchword currently for the weekly data. And actually, last week was kind of seen as one of the reasons for the market sell-off. And the problem we have now is that even though we get the data this week, what happens then is it's September's data. We're getting ADP data on weekly that's happening at the moment. So even though we get September, what about October? It's quite backward looking in terms of September probably doesn't reflect the impacts we could well have seen in data since then. So I think that the fact we got data, great. The volatility around the fact that we're going to get a deluge of data and we don't know exactly when we get different pieces of data, that's an issue for markets and probably leads to a spike in volatility.
Well, Neil Campling, thanks for joining us around the table with a look ahead of what we can expect. This is Bloomberg's senior equities strategist. And Kriti, I honestly thought we'd get more from the BLS, from the Bureau of Labor Statistics, when it comes to what they intend to do with the October CPI release. That's the one that they weren't able to collect during the shutdown. And the market is really wondering whether they're going to skip it altogether, possibly somehow collaborate it with the prices they could scrape online and interpolate some of the other components. But I think that can be a huge factor for the markets and for the Fed, because it could have ramifications for the CPI print for months to come. Bloomberg's Anna Wong thinks it could have issues for the index up until May of next year. And when there's talk about data quality, everyone seems to just use it to argue their own point to their own advantage, instead of getting a clear picture on the matter. But this debate around whether we are seeing this tariff pass through, whether it's done, whether it's still coming, is still rife alongside the market.
Well, the fact that you're starting to see, and we talked about this at the start of the show, the fact that you are starting to see so many of these Fed officials, Beth Hammack, even Raphael Bostic had made these comments previously as well, that things are not looking or the cap on inflation isn't as strong as maybe we had previously thought. But the markets are still pricing in several rate cuts, which begs the question, is that a data read-through? If you are flying blind, quite literally, and if you're worried then about some sort of data or lack of data clarity, is an insurance cut the better move? Or do you kind of hold and risk it until you have better guidance? And that, I've got to say, is a really tough predicament for any Fed official to be in. A conversation, of course, is going to feature in the lead up to that data print coming in on Thursday. Still had a conversation with Tal Cohen, the president of NASDAQ, joining the polls at 9:15 a.m. London time with our very own Tom McKenzie. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
US futures gain ahead of a big week for markets as investors look ahead to earnings from AI bellwether Nvidia and delayed US jobs data. Bitcoin briefly wipes out its yearly gains, shedding about $600 billion from an October high, testing the resolve of the crypto bulls. And China escalates its confrontation with Japan over Prime Minister Sanae Takaichi's comments on Taiwan. State media now threatening major countermeasures on top of Beijing's travel warnings. The markets, though, on the front foot as we look through the geopolitical tensions between Tokyo and Beijing. European markets on the front foot, posting gains after a volatile and choppy week last week. Very modest upside that was eked out by the end of that week of trading. Today, US futures are also looking a little bit more solid, up 0.6% on the S&P E-minis. NASDAQ 100 futures pointing to a decent session, looking to add 258 points on a massive week, of course, as we said, with those Nvidia earnings on Wednesday, and a gauge then for the global markets in terms of that AI and chip demand. Crypto then, Bitcoin at 95,500. Strength in the session today, but in the context of the downside that we've seen, of course, in recent weeks, Again, at that level, 95,500, is this dip buying? Has the turnaround happened? Is there more upside, or is there further selling to go for the biggest cryptocurrency by market weight? The US 10-year currently at 412, moves of 2 basis points, a bit of money moving into the sovereign debt markets and into US Treasuries. Markets, though, traders paring their bets around December in terms of the Federal Reserve and whether they cut again. Across the map in Europe, then, with the strength coming through for real estate as the sector and energy. Those are the two top-performing sectors so far in the session. Oil prices in focus, of course, and that is tying in to the energy space. CAC current is currently down 0.2% over in France. The IBEX in Spain, some losses there. The UK, the FTSE 100 is relatively unchanged. The DAX is also flat. A little bit of softness over in Italy, but that is the broad picture. So in terms of the optimism, the upside, it's more pronounced when it comes to US futures, certainly, than what we've seen so far. The gains that we saw at the start of the European session have paired and moderated. For the conversations that matter and the insights you need, let's get the show started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. US futures then ticking higher ahead of the AI bellwether NVIDIA reporting later this week. As we mentioned, traders also juggling the data blackout from the US, which will end this week following the longest government shutdown in its history. Let's bring in Seema Shah now, Chief Global Strategist at Principal Asset Management, at the start of a big week for investors then. Seema, thank you for your time. Great to have you around the desk, of course. Let's start with the NVIDIA story and what you're going to be watching for in terms of what it may tell us about that demand around AI, the key provider of these AI accelerators, the broader market implications of the earnings that drop on Wednesday. Where is your lens going to be?
Good morning, Tom. So I think, firstly, the lens has to be firmly on NVIDIA, actually above any of the other details and data that's coming out this week.
So to be clear, NVIDIA is front and centre for you this week?
I think it is front and centre because the stakes keep rising with regards to the mega cap tech companies, with regards to whether or not they can continue to deliver on these very, very elevated expectations. And of course, with the amount of CapEx spending that's going on, are they going to be having the return on interest? So that has to be front and centre for us. We are quite positive about the big tech narrative, but of course, there's going to be pockets of pain. And at the moment, the markets is very, very cautious and edgy with regards to how that tech narrative is going to go. So that, to us, is a key thing. The data, the macro data, of course, we've been starved of it. And we do need to really get a clearer picture. I just don't think that this week we're going to get that very clear picture. So it's all kind of building blocks, which hopefully by the next couple of weeks we'll have a clearer perspective.
Okay, I want to pin in the US data and come back to that. But you talked about your relative optimism still around US tech. What underpins that? And then I want to get your view and the potential pain points. What underpins your continuing constructive view on US tech then?
Yeah, I think for a lot of investors, the key thing is still the narrative about the productivity boom. That has to be the one thing that's really holding you to this. And then at the same time, the fundamentals for all of these companies continues to deliver. Even the earnings for all the other tech companies through the last couple of weeks have continued to be really positive. So they are meeting investor expectations. It's just that bar is getting higher and higher and higher. And certainly right now, with the way that the market has been trading, potentially because with a lack of data, there's just been an additional focus on the AI narrative. But it really does need to meet these hurdles. Otherwise, we could be looking at a fairly difficult couple of weeks.
In terms of the spend that we've seen on infrastructure around the AI story, do you take comfort from the fact that most of it is being done by hyperscalers that have those significant balance sheets that support that? And when it comes to debt-fueled spending, is that where the tension is? The hyperscalers can do this. The question mark's more over the OpenAIs and others that are not profitable or that are going to the debt markets?
Yeah, so there's a couple of things. So obviously at the moment, one of the key things is just on the valuation front. People asking, is this a bubble? When we're looking at the valuations and we compare it to the dot-com, we don't think it's really comparable, considerably more elevated back then. And as I said before, the fundamentals of these balance sheets are still very strong, very cash-rich. Going forward, though, the key thing is going to be how all of that CapEx, and these are trillions of numbers, are going to be funded. So up till this point, it's been very, very healthy. It's been really driven by the cash side. The more and more it moves to the debt-driven leverage, well, then we have more of a concern. So at the moment, we're not too concerned, but it's absolutely a market that we have to keep an eye on, and of course not just for NVIDIA, but for all the firms, but given NVIDIA is the largest, that has to be the key one.
Okay, let's get to the data then. And we do get the jobs data on Thursday, non-farm payrolls, but for the month of September, markets have paired their bets in terms of December. Where do you need that data before you make a clear call on December, or have you seen enough to think that the Fed makes a decision to cut next month?
Well, so I think the alternative data that we've been getting in the last couple of weeks have been on the soft side. However, they are somewhat unreliable, and there's a lot of things going on in there, specifically with regards to the government shutdown and how many of the government sector has been losing jobs. And then even on the private payroll side, again, still a lot of question marks. From our perspective, we do think that the Fed should be cutting, but the Fed, the FOMC members in the last couple of weeks have been very, very clear that they have some caution. They want to have clear evidence that there is a labour market slowdown and that interest rate cuts are required. So unfortunately, whereas typically we would say, no, the data isn't as important right now because of the FOMC and the way they've been talking, we do think that they need to have some kind of clarity. The question mark is whether in the next 3 or 4 weeks, are we going to get a clear picture, something that can convince them that the labour market is slowing and really requires interest rate cuts. So I would say that the December cut is very, very finely balanced. And even as we get the data, if we were to get a cut, it's going to be very finely split within the committee.
Yeah, we've seen those divisions, haven't we, amongst FOMCs, and the FOMC, and we've heard those and seen those divisions amongst Fed speakers just in recent days and weeks. I want to get your views. There's an ongoing debate around private credit and the risks within that segment of the financial system. And we've been hearing, our team in the US have been speaking to Jeffrey Gundlach, of course, the CEO of DoubleLine, to get his views on private credit. I want to take a listen to that and get your take, Seema.
The next big crisis in the financial markets is going to be private credit. It has the same trappings as subprime mortgage repackaging had back in 2006. Now, it took a couple of years for it to totally unravel. So this stuff doesn't happen in a week or a year even. But I'm very negative on that.
So that's Jeffrey Gundlach speaking on the latest episode of the Odd Lots podcast. Do you align with that view that the next market risk is going to emanate from private credit?
I think it makes sense that when investors are trying to figure out where is the next crisis going to be coming from, typically it's from where you haven't been looking. So it makes sense to look for the part of the market which is particularly opaque. So private markets certainly fits that bill, that we just don't have, of course, the mark-to-market data to be easy to track. Now, having said that, what we can see in the data that we're tracking, we can see that there are concerns, just like you do in a normal credit cycle. So there are risks growing. For an investor, that doesn't mean that you completely shun private credit. Just like in public markets, you have to pick the more defensive areas, slightly higher quality segments. So for us, private markets, private credit continues to be a really important part of your portfolio, particularly if you're looking over the next 5-10 years and reaching the returns that we need to be striving for as the environment gets a little bit more pressing. But we do think that focusing on areas such as the direct lending middle market side of the private credit market, where there is slightly more defensive nature, slightly more higher quality, is probably the area that investors should be focusing on, given that the credit cycle is moving into a more negative area.
Still an opportunity in private credit, defensive, and do your homework around what you pick. Seema Shah, thank you very much indeed on the broader markets as well. Seema Shah, Chief Global Strategist at Principal Asset Management. Now to geopolitics. China escalating its confrontation with Japan over Prime Minister Sanae Takechi's comments on Taiwan. The diplomatic crisis risks unraveling recent progress in bilateral ties, just a few weeks, of course, after Takeichi met with Chinese President Xi Jinping and agreed to improve relations. Bloomberg's Hong Kong news desk editor Balash Pence joins me now for the latest. Balash, talk us through then this China-Japan spat, which seems to have kind of really blown up in the last 24, 48 hours or so. Where do things stand?
That's right, Tom. This is a story that dominated headlines out here in Asia, and it is emerging as the biggest diplomatic test of Sanae Takeichi's term as Prime Minister. It all goes back to earlier this month when she said that any military action around Taiwan would be a threat to Japan's survival, to which China responded saying that this is a meddling in their internal affairs. And over the weekend, we got this travel ban, or travel advisory rather, for Chinese citizens traveling to Japan, and also some comments in semi-official publications out of China suggesting that there may be room for more economic reprisals or some even more bellicose statements. So now Japan is trying to smooth things over a little bit. They sent a very high-level diplomat to Beijing to try to cool tensions a little bit, and they will be looking for a meeting between Takaichi and her Chinese counterpart at the G20 meeting in South Africa, although at this point there's no confirmation that such a meeting would actually happen.
Okay, so maybe that meeting, if it happens, would be a sign that things are starting to ease. But so far, to your point, there's no confirmation of that. On the here and now of the economic damage done already between the two ties, and certainly China has taken a measure, hasn't it, to discourage travellers to Japan. Are we starting to see the economic impact, or what is the likely economic impact of those steps on both economies?
Well, the travel advisory in and of itself is a pretty significant step. Some estimates suggest that the damage might be as much as $14 billion. Just this year so far, almost 10 million people from China and Hong Kong together have traveled to Japan, so they make up a huge chunk of Japan's tourism industry. The last time there was a Chinese travel advisory for Japan in 2012, that cut Chinese travel about a quarter. And then they can go even further than that. Just like so many other economies, Japan is very reliant on China. China is their biggest trading partner. And Japanese manufacturers, just like so many other companies around the world, rely on Chinese rare earths, critical minerals, lots and lots of materials. So there's a lot of potential damage that could be done if the situation escalates further.
Okay, Bloomberg's Balazs Pence, thank you very much for that update. A situation we'll continue to monitor, of course, the tensions between Tokyo and Beijing. Coming up, with NVIDIA earnings on the horizon, we're going to talk all things tech with the president of NASDAQ. That is next. This is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg. We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
November 26th, Chancellor of the Exchequer, Rachel Reeves, delivers the UK's autumn budget. Can she boost growth and productivity by unlocking investment? How will the Treasury raise revenue without breaking tax promises? And will the budget prove that a fairer economy can reward working people? Bloomberg Television brings you special coverage starting with the Chancellor's statement to Parliament at 12:30 p.m. UK time. And tune in Thursday for the opening trade budget special at 7 a.m. Bloomberg, context changes everything.
The conversations that matter, the insights you need. This is The Pulse. I'm Tom McKenzie in London. Bitcoin higher this morning after a slump which wiped out its gains for the year. The cryptocurrency has fallen more than 30%, 30, since its October highs, raising more than $600 billion in market value. Joining me now is our senior editor for Digital Finance, Ana Herrera, who watches things very closely for us in the crypto space. Anna, so we're seeing the gains right now for Bitcoin up 2.2%. Ether is having a stronger session than that, up 4.1%. But this in the context of that pressure that we've seen in recent weeks and months for crypto. What's been going on? Is this? We've seen this story before. Are things different given the ETF inflows we saw at the start of the year, the regulatory focus in the US?
So it's very different, right? Normally when we had these big crashes, it was around some big event like a big exchange collapsing, multiple companies going bankrupt. But in this case, it's very confusing to people. There's no clear sign as to what. It's more, I guess maybe the asset is maturing more and it's following other asset classes, which is a bit ironic, seeing that it was supposed to not be connected to anything else. Obviously, it's interesting because the industry has all the support it needs now, the President of the United States and Congress as well. So while the environment has not changed, from the election of Trump, Bitcoin has erased all of its gains, which is really interesting.
So it's not about disappointment that the rhetoric around crypto regulation hasn't been met with real changes. Those changes have come through, and that they are continuing and will continue to support the market.
Yes, and I mean, what happened was on October 10th, there was a big flash crash, and the industry hasn't really the price hasn't really recovered as much. It's gone up and down a bit, but after those big liquidations, it sort of remained kind of, and we're entering now sort of another bear territory and perhaps another crypto winter, which is not connected to the wider environment. There's been no, jailings, as we saw the last cycle. So it's very different.
What are you watching for in the days and weeks ahead? What could be the next catalyst then?
I guess we're going to see if there are more liquidations out of crypto ETFs, because that was a big change. When the ETFs were approved, we saw a massive inflow from retail investors, and now it's not coming back. They're pulling out. I guess maybe people are becoming more sensitive and used to the big price swings, and they don't want to risk it again. And it's maybe following the wider sort of risk-off environment.
Okay, Anna, thank you very much indeed. An important update in terms of what's happening in the crypto space and giving us some context. Anna Herrera, Bloomberg's senior editor for Digital Finance. Anna, thank you. Now, as fears of a tech bubble continue to occupy investors' minds, one stock market being watched more closely than ever is the NASDAQ, which counts, of course, stocks such as Nvidia, Apple, Microsoft, you may have heard of these, and Google amongst its listings. Joining me now for more is Tal Cohen, the president of NASDAQ. Tal, fantastic to have you around the set with us. Let's start with, there's a lot to talk about. Let's start with what's happening in terms of the rally, and we'll risk on in the session today when you look at US futures, and tech is getting a broader lift globally as well. What are your clients saying to you? How much confidence is there that this rally has further to run?
Yeah, and Tom, thanks for having me this morning. So number one, we've seen a lot of activity in our markets. Volatility is up. As you said, it's a risk-on environment. Our responsibility as NASDAQ is to make sure that we're supporting investor confidence. We're making sure that our markets are well-functioning, that our members can transfer risk, and that entrepreneurs can raise capital in this environment. So we don't necessarily have a view on the market. We want to just make sure that we support the market. But we are proud that many of the companies you just mentioned in the AI rally or in the tech rally are associated with NASDAQ. They're in the NASDAQ 100, so we're proud to be associated with those companies.
And given the rally, and given the spending we're seeing on CapEx, and given the valuations, if you look at companies like Palantir trading on a forward earnings of around 240, which is just remarkable, how much anxiety are you hearing? Anxiety? Are investors saying, "Look, do you guys have the protocols in place?" I mean, given the potential risk, if this unravels and something within the AI run-up bursts, there is concern amongst some that there could be pretty significant implications. How are you thinking about all of that and packaging it all together?
Well, the good news, bad news is not the first time. And so we've prepared ourselves for this moment. We've had the 2001 bubble. In 2011, we had the flash crash of 2012. And since then, we put in volatility guards. We've made sure that there's harmonization across the industry. So there isn't, if you will, a tsunami of liquidity that moves from one exchange to another, where there's a lot more harmonization around that. It's not a competitive dynamic. We want to make sure that we're supporting the market. And so we're working really well with other exchanges, the industry, the regulators. Feel really good about what we've been able to accomplish over the last decade. That should support the markets in terms of investor confidence and the well-functioning of the markets.
To be clear, you feel match fit
if there is any significant downturn?
We've seen this before, is what I'm saying. And if we are to see, if you will, more volatility in the market, if we see it in a matter of moments in the way that we did in other occasions, we're just preparing ourselves for that moment. That's what we're always doing. We're always making sure that we have the resiliency. We've hardened our systems. We're talking to the regulators. We're talking to the industry. And we're out there watching the signs of volatility to make sure that we can handle it.
Well, given that historical perspective then, does this feel to you like an AI bubble, like a bubble?
I think it feels like that this is a transformative technology that's got incredible long-term potential that will transform the way that you and I work together, the way that industry and society thinks about this technology and interacts with the technology and the tools that are coming out. So I think it's incredibly powerful. We believe in the long-term potential of that technology, and what you're seeing here is a manifestation of it in the markets.
We were just talking about Bitcoin there in the cryptocurrency industry. You and the team at NASDAQ have made a push for regulators to allow you to have investors trade tokenized securities on the exchange, which would be a really significant test, really, of blockchain. Where are we in those negotiations? How close are we to that happening?
I'm glad you brought that up. So about 2 months ago, we put a filing into the SEC to allow for tokenized equities in the U.S. The reason we did that is to make sure that the market structure as it evolved optimize the outcomes for issuers and investors. That's what our mandate would be. We also thought we could help modernize and advance the ecosystem and market structure and the way tokenization took place without impacting or compromising market integrity, investor confidence. And we wanted to show that it was simple to implement. You don't need a slew of exemptions and exceptions. And then last is we don't want two vertical silos, one in which the world of Bitcoin and other tokens exist, and then we have our traditional securities, because then you won't fulfill the promise of either tokenization and you won't take advantage of the scale that we have in the system today.
Is the SEC reciprocal to this? Are they, what are the timeframes we're looking at if they do approve this? Are you confident that they'll approve?
Well, they just came back to work. So,
yes, this is true.
Yeah, so we'll engage the SEC as we always do in a really constructive way. The rhetoric out of the SEC and the new chairman has been really, really positive towards this. They want to bring crypto under the regulatory umbrella. They want to provide regulatory clarity, and I think our filing goes a long way in helping them do that.
And if things progress as you would hope they would, we think, is this a 2026 story or beyond in terms of approval if things move forward?
Yeah, so it's more of not just NASDAQ, but it's about the industry.
Okay.
It's about the industry being ready. There's our members, there's the clearinghouse, there's regulators passing rules, and we have a lot going on in 2026. We're continuing to modernize our markets. We're talking about 24/5 trading in the U.S. There are changes to the securities information processor in the U.S. So there's just a lot going on. We need to balance all of that, but a lot of what I've just talked about are foundational to allowing for tokenization.
And you touched on 24-hour market at the NASDAQ, which is something that is in the cards as well. What's the time frame for that? When does that become a reality?
Yeah, so we're excited about that. We're already taking the work underway to make sure that we're operational and technically ready. Our mandate on that one is to make sure that we can improve the liquidity, the transparency, and the integrity of the markets to the extent that the markets are going 24/5. And in many cases, our markets are already 24/5. Retail is participating in our markets, just not on exchange. So we want to bring that in a highly regulated environment with investor confidence, help price discovery, and that's the role that we'll play.
Now, I spend a lot of time talking to tech CEOs and investors, venture capital here in Europe, and one of the constant questions is, how do we keep our European entrepreneurs from migrating and listing on the NASDAQ or the S&P, listing on the New York Stock Exchange? What conversations are you having along those lines? Klarna listed in the US, that was a success for you, that was a miss for us, arguably. What's the pipeline looking like?
Just to let you know, we do have markets that we operate here in the Nordics.
Yes, you do.
We are part of the European landscape and the European story. So every issuer, they're going to make decisions based on the strategic factors and what's, if you will, individualistic to them and what they need and how they see the markets. So there's not a one-size-fits-all. The second is Sweden is a great blueprint. We're really proud of what we've been able to do in Sweden. And the things that are...
A lot of activity in Sweden.
Incredible. We're so proud of what we've been able to do in Sweden. There's three primary factors to that. One is retail. Retail is highly engaged in the market. It's the second, if you will, second largest market in terms of retail participation behind behind the U.S. so that it is an equity-loving culture.
Yeah.
They've put a really constructive tax regime in place. They have investment savings accounts that really motivate and send retail to go into the market. And you have a really constructive regulatory and government backdrop to that. And then the pension funds are there to anchor and support liquidity in that market. As a result of that, just a few stats, because you talked about it, is 60% of the capital raised this year across the EU has been in Sweden. We've had 5 of the top 10 IPOs. And then we had Verisure, which is the largest IPO in the last 3 years, 3.2 billion euros we raised. So that's just an incredible model that we think is a blueprint for other markets.
What is the IPO pipeline looking like in 2026? Not just for Sweden, Stockholm, but also back in the US?
Well, now that the government's back to work, we're making sure that we can release that pipeline. It's been pretty healthy all this year for certain sectors, tech in particular, obviously digital assets and crypto, notwithstanding the latest rally or lack thereof in crypto. But we've seen a pretty healthy market this year. We expect it to continue. We'll see what the markets bring in 2026. We have to make sure that we manage like geopolitical risk, interest rate risk, the uncertainty with the economy. So all of those factors will play into what 2026 looks like.
Fantastic to get your thoughts and insights. Thank you very much indeed. The president, of course, of NASDAQ, Tal Cohen, joining us around the desk this Monday morning. Coming up, more hedge fund managers pair positions in Magnificent 7 stocks. We're going to have the latest details from these 13F filings. That is next. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. And Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. US futures gain ahead of a big week for markets as investors look ahead to earnings from AI bellwether NVIDIA,
and delayed US jobs data. Bitcoin briefly wipes out all its yearly gains, shedding about $600 billion from an October high, testing the resolve of crypto bulls. And China escalating its confrontation with Japan over Prime Minister Sanae Takaichi's comments on Taiwan. State media now threatening major countermeasures on top of Beijing's travel warnings. So investors getting new insights into the holdings of the world's biggest stock pickers with the latest 13F disclosures to the Securities and Exchange Commission, the SEC. Charlie Wells has been digging through the data and is here with the latest. What stands out to you, Charlie?
Tom, so what really stands out in these 13F filings is the positionings on tech. This is really where the smart money has been making moves and trying to figure out how they are going to navigate this rally despite the talk that we hear about a potential bubble. You can see here that the most significant weighting is in that tech sector, followed by financials and followed by health, consumer discretionary, but tech really in focus and questions about that rally. If you just take a look at the NASDAQ, these 13F filings are required to be sent in by anyone who invests over $100 million to the SEC, and these are for that third quarter. So you look at the third quarter, you see that upward trajectory, but still questions really at month end in July, in August, in September, questions there in the market. You see those spilling into these 13Fs as well.
What about some of the individual names, Charlie, and maybe what they tell us about investor appetite, the kind of themes that investors are looking to tease out of these markets?
So Bloomberg has gone through some 909 of these filings for hedge funds, and we've picked out some winners and losers as far as individual names. So NVIDIA, really the winner there, up some $11 billion in that third quarter, followed by Alphabet, followed by Apple. I want to flip the board and take a look at some of these losers, some that declined the most in that third quarter. What you see when I bring up these names, they're also in tech. So winners in tech, losers in tech. We've got CoreWeave here. They had a very difficult August. Shares down some 21% in the day on the back of a disappointing earnings report. So we're seeing again here that theme of investors trying to parse this rally, but also take a look at some cautious moves there as well. Let's think about individual names and the funds that are often associated with them. We've got Warren Buffett. I want to bring up a look at these two funds. We've got Warren Buffett's Berkshire Hathaway building up a significant stake in Google, but then paring back on Apple. So that pattern of kind of stop-start there too. And I've got to bring up Thiel Macro, of course, associated with Peter Thiel. They, in that third quarter, exited their entire holding in NVIDIA. So questions even about these firms, even about these stocks that have been on a roll lately.
Oh, you know that Peter Thiel move is going to get a lot of traction amongst retail investors, isn't it, in the US with exposure to NVIDIA. Charlie Wells, thank you very much indeed. And you talk, of course, about Warren Buffett and the moves around Alphabet and Google. Let's check in on the Alphabet share price then, because pre-market you can see that pop of 5.5% for Alphabet, with Warren Buffett, of course, Berkshire Hathaway, building that stake in the parent company of Google, acquiring 17.9 million shares in Alphabet during the third quarter, and Alphabet rallying then on that news. Let's stay with tech and look at the best opportunities in Europe. My next guest says it is a pivotal moment for the continent to scale up its AI champions. Joining me now is Hala Fadel, who is the managing partner in the growth team at Eurazeo, the specialist in private markets with more than $43 billion in assets under management. Hala, thank you very much indeed. You recently, and the team recently raised, 650 million euros in your latest growth fund focused on European AI champions. Where are you finding European AI champions?
Well, thank you for having me, Tom. We're finding European champions really across the board. As you know, AI is disrupting every single sector, from coding to customer support, every task that has a bit of repetitive task or automation in it. So, for example, we invested in this super German company called Cognigy, AI for customer support, automating conversations when you're calling clients such as Lufthansa. And so this is a sector that was very prone for automation and early wins from Gen AI. And so Cognigy was also the largest European exit. We exited that company
that was your largest European exit, or
the largest AI exit in Europe.
Okay, so your LPs were happy with that.
Exactly. So just 1 month into the close of our first fund, the first close of our fund back in July, and we exited that company in September. But we're seeing also the use of Gen AI in warehouses with our recent investment here in the UK in a company called Dexery that is using robots to take constant pictures of your warehouses and creating a digital twin of the warehouse, and so that companies can have a real-time inventory with faster reach into this inventory and less time wasted on looking for inventory. So that's Dexery. They have clients like DHL or IKEA.
What is the framework that you and the team use to weed out the froth when it comes to some of these AI investments and make sure you're getting the Cognigy's of the world with that successful exit? What metrics are you putting? What framework? How are you making sure that you're not getting caught short and investing in froth?
Yeah, that's a great question because, as you can imagine, there's lots of hype, lots of noise, lots of companies claiming or using actually Gen AI, but where's the real value? So at Eurazeo Growth, we're organized by sectors. And so every person who's leading a sector knows this sector really well and tries to map it and to identify by talking to customers ahead of a meeting with actually founders to try and see where the real value is and to try and preempt where the market trends are going to be and where those successful companies are going to be. So by having this deep knowledge of a given sector, so in this case it was the automation of customer support, we had identified Cognigy because it was very well integrated in very large enterprises, and we thought this was an edge compared to new competitors that wouldn't have had this level of integration with a big company.
More broadly, what do you say to those like the former CEO of Google, Eric Schmidt, who said that Europe has already essentially lost the AI race? It's lost on infrastructure, it's lost on large language models. It can find some value on the application layer. Do you agree with that assessment?
Well, of course not, because if you look at Europe, I mean, it's always the same thing. If you look at a funding gap or as Europe lagging behind, you can see there's something negative, but you can see it also as an opportunity to catch up. And this is what we're seeing today. I think there has been an awakening in Europe following the Draghi report that Europe has to do something about it. And both the public institutions like the European Commission and the private sector are really ramping up their investments in Europe. We can see even sectors where Europe could start leading, like defense, because of the huge amounts invested in defense, but also robotics and everything that has to do with this combination of hardware and software.
Do you think Europe could lead on defense?
I mean, it could definitely lead, not just on defense, but on autonomous vehicles, these hybrids models between hardware and software, but also on the application layer where you don't need maybe as much capital and you just put a layer on top those large language models where European companies are already creating an edge. And these European companies starting in Europe can sell to the US market, making them at par with their US peers in terms of market opportunity.
You work with startups, you work with founders at the growth stage in particular, and you've got experience working as you prepare them pre-IPO, if that's the exit that they follow. What is the message now to your portfolio companies about the merits of staying in Europe versus the US?
So at some point, a company starting in Europe, as I mentioned earlier, need to expand into the US because it's the largest tech market in terms of customers. So at some point, some of their operations will be in the US, the same way maybe later in time a US company moves into Europe. So as long as key functions such as R&D and the product team is in Europe, which is often the case. I mean, the US is less attractive than it used to be in terms of having people excited to move to the US, thanks to the geopolitical situation there. I mean, it's always been a debate, but from an investor perspective, it doesn't really matter. The company is born here. It has offices already across Europe, in the US. It doesn't matter also where it lists. I heard you speak earlier with the head of the NASDAQ. I think it's it's not necessarily the right debate where a company lists. It doesn't really matter as long as the operations are
So the
in
focus
Europe.
should be on where the operations are rather than where the company lists.
Exactly.
Okay. Hala, thank you very much indeed. Hala Fadel, managing partner in the growth team at Eurazeo, of course. Thank you for your time. A view on the European AI space and where the opportunities are. Let's switch focus to banking right now, because the chief executive of Deutsche Bank is set to unveil his strategy for the next 3 years this afternoon. Analysts are expecting new financial targets, but few changes to the overall strategy. Joining us now is Tom Metcalf, Bloomberg's managing editor for EMEA Finance. Tom, what are investors watching for?
Yeah, I mean, they're not expecting fireworks, I would say. I mean, it's very much a continuation of what they've seen in the last 3 years, broadly speaking. I do think they expect their returns to see a boost, so Deutsche Bank might well go above 12% ROTE, which would be lovely, but it's very much a kind of continuation of effectively, you know, what they've seen before. I think there'll be a lot of interest in the new CFO, who's making his first big public appearance, see how that goes down. But broadly speaking, when we think of Deutsche Bank, I don't think today will change the shape of that firm.
Okay, so but maybe was that the target around the return on tangible equity above 12%?
Exactly.
What would you highlight as the main challenges that remain for a bank that has had some success, to your point, over the last three years in rewriting the ship?
Yeah, exactly. Those shares have jumped up. You know, I think it's the retail part of that. It's always proved a problem at Deutsche Bank, and it still throws out issues. A, it's pretty low margin. B, you know, the integration issues with its IT system, they just continually come back. It's a very hard problem to solve, but, you know, I think investors would love to see a bit of progress there this strategy. And then just generally, it's how do you compete with the big Wall Street firms? You know, you're undersized relative to the JP Morgans, the Goldman Sachs, and how can a Deutsche Bank set out its stall and make sure, you know, its offering is suitably sort of unique so that, you know, customers and investors support them.
You mentioned the new CFO getting an outing of sorts then today. Yeah. Who is the new CFO and what do we know about them and what changes may come about under their leadership of that part of the business?
Yeah, so it's a gentleman called Raj Akram, and he used to be at Citigroup for about, I think, 14 years, and then Morgan Stanley, where he was deputy CFO for about 5. So he's come over, and, you know, this will be, I think he's really taking the role early next year, but effectively where he's going to be talking about today is the look forward, right? What the strategy is going to look like under him. And yeah, it'll be interesting to get to grips with a new figure in European finance. He's quite sort of risk tolerant. You know, he rides motorbikes, and that also comes through in terms of his, his strategy, and that he's always keen to kind of, you know, max the returns if you can.
Okay, a motorbike riding CFO. There you go, with the leathers to suit as well.
I believe so. Yeah.
Yeah. Okay. Tom Metcalf, thank you very much indeed. We have that image now. Who leads our Bloomberg EMEA finance coverage with a look ahead to a big day for Deutsche Bank and any changes that we might expect of the new CFO as well, taking the stage, or at least CFO being introduced to investors. Now, to what's happening in the airline space, and particularly the makers of aircraft. Boeing's factory workers in the St. Louis area have voted to accept the company's latest 5-year contract offer, ending the longest strike at the plane maker since 1948. This is the company has recently started production of the F-47 stealth fighter for the US Air Force. Bloomberg's Guy Johnson spoke to Boeing's Defense, Space and Security CEO, Steve Parker, on the sidelines of the Dubai Air Show earlier this morning, and started by asking about the ending of that strike.
It's just great to have the team back. They're the best in the business, building our fighter aircraft in St. Louis. So it's really, as they come back in today, going back through recertification work, making sure we've got all the quality standards right, and then we'll get them back on the job. But really pleased the strike's over with, the dispute. And just excited to get the workforce back in and get them doing what they do best, which is building some of our most advanced systems in the world.
Is there a kind of, when we've seen other strikes finishing, there's a kind of long recertification process that has been an issue and has slowed things down. Any issues with that kind of thing?
No. It's again just a very measured approach. Nothing is more important than safety and quality. So just making sure people are refreshed, we're good to go, and then we'll get them back onto the job. So it'll take a couple of weeks, but no impacts there.
You've had a couple of clean quarters now. You've got a strike that's over. You've got a big order under your belt. It's starting to feel like a different Boeing defense business.
Well, you know, it's early days.
Yeah.
Pleased with the progress so far. It's very simple from my perspective. It's really about our customers. So driving discipline back into program management, our engineering resources, making sure we're looking at risks, looking around corners. So it's been a good year. The team's stepping up.
But do you feel like the last few years have been difficult? You must feel that this business is on the front foot now.
Well, definitely, to use a bit of a cricket term, definitely on the front foot. And again, I think you're seeing some confidence come back in. But again, just discipline, making sure we're for the new work that we're winning, we're bidding it the right way, so we can execute with scheduled margin, technical margin. But I like the progress, and I think there's going to be more to come.
More to come. Okay, let's talk about more to come and what comes next. You've got the F-47. So where is the F-47 now? I'm told you're building it.
Well, that's what the Air Force have said, so I guess I can confirm that now. But I mean, the F-47, this is the F-22 Raptor replacement for the United States Air Force, which is, Boeing, Lockheed products, amazing aircraft. This is the next generation of stealth, performance, survivability. Highly classified, so not a lot that I can say. But what I will tell you is that we invested in advance of this win. We're building new facilities in our St. Louis, Missouri, and Mesa, Arizona areas. Billions of dollars of capital going in here to position us to be able to execute, and it's just head down execution right now, working very closely with our customers.
Was the Super Hornet the last kind of ground-up aircraft that new aircraft built?
From a fighter perspective, yeah. So again, this is just the next generation. We do a lot of work in the classified spaces that people don't see. And again, we've got our T-7 Red Hawk, which is really a clean sheet training aircraft, which will train every U.S. Air Force fighter and bomber pilot. So I think F-22, the F-47, B-21, and so forth.
So the learning curve in terms of building a new aircraft, I haven't done it for a while though. How steep has it been?
No, I feel like this is just what we do. So you think about the T-7, the MQ-25 Stingray, both new aircraft that we're building right now in St. Louis. At the same time, we developed the F-15EX, a major modernization effort on the F-15. Actually, developed a lot from Saudi and Qatar with their investments on the F-15 over time. Same with our Block 3 Super Hornet. So it's just what we do.
Bloomberg's Guy Johnson speaking to Boeing's Defence, Space and Security CEO on the sidelines of the Dubai Air Show earlier this morning. Coming up, the British Prime Minister tries to regain control of the political narrative after a bruising few weeks, but the latest property sales data does not help the economic narrative. We have the details next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back. Sales of the UK's most expensive homes plummeted in October, with the prospect of a so-called mansion tax appearing to hurt activity ahead of Labour's budget later this month.
Follows a bruising few weeks, of course, for the Prime Minister Keir Starmer and Chancellor Rachel Reeves. Let's bring in our UK reporter, Joe Mays. Joe, so we have the impact on the housing market, at least the top end, and a reminder of the challenges there and the uncertainty. Budget uncertainty, November the 26th. Where do things stand, Joe? So many things have been floated, balloons have been floated. What do we know? What do we think we know about what is most likely to appear or not appear in that budget?
Well, it feels like we now know we're heading for a smorgasbord budget of lots of little tax rises in different areas of the economy, because all that controversy and drama last week where we learned that an income tax increase, which we've been expecting, is now not going to happen. But Rachel Reeves still does have a big fiscal hole to fill. And that's why we're now in the realm of talking about things like a mansion tax, or perhaps revisiting the idea of potentially increasing the bank levy, perhaps also taxes on Airbnbs, hotels, rentals, other property, also potentially in scope, pensions. You know, it's going to be across the piece, all these different tax rises that Reeves needs to stabilise the public finances. And the risk is that we still have a few weeks to go until the budget, and this uncertainty will continue. You had the former Bank of England chief economist Andy Haldane pointing out this uncertainty is weighing on growth, weighing on sentiment. But here we are, and we've got to wait until next Wednesday to find out the details.
Okay, a smorgasbord of tax changes. We'll look at the gilt markets right now, and there's money moving into gilt, so yields are down around 3 basis points across the curve, and we'll see if that smorgasbord of options will satisfy the bond market. Meanwhile, look, the Labour Party, the government, clearly they lost their footing in terms of having the narrative, the political narrative in recent weeks. Can they regain it, Joe, do you think, with this focus on migration?
Well, I think, as ever with this policy area, the question is, does the outcome arrive actually reducing the small boats crossings? And so far this year, clearly not. The numbers have continued to be very high, and there's no sign of Starmer succeeding on this goal of smashing the gangs. So again, it's, well, let's see what these latest policy reforms are from Shabana Mahmood, the Home Secretary. It's going to be changes such as, if you come and are given refugee status, you might have to return to your country from which you've come if it's later proved to be safe, for example, reducing the amount of benefits that asylum seekers get, perhaps looking again at the ECHR and articles within it which prohibits people from being deported from the UK. We're still in this realm of talking about changes to process, but whether the outcomes actually arrive, I think that's the key test. And until the public sees immigration, illegal migration falling significantly, then Labour still have their work cut out.
Yeah, delivering on policy. Okay, thank you very much indeed, Bloomberg's Joe Mays, on what to expect around the budget and the new policy, at least adjustments to the migration policy that we're expecting from the UK government in focus today. Joe, thank you. Now, former Bangladeshi Prime Minister Sheikh Hasina has been sentenced to death. A special tribunal in Bangladesh found her guilty of crimes against humanity for her role in a violent crackdown of student-led protests last year. She fled to India in August of 2024 after 15 years in power and remains in exile there. Hasina says the allegations are categorically untrue. President Trump says House Republicans should vote for the Justice Department to release its files on Jeffrey Epstein, effectively reversing a position he's held for months. Trump has been under increasing pressure to release the investigative materials on the paedophile and disgraced financier who ran an underage sex ring and died in prison in 2019. Switching focus, S&P Global Ratings has lifted South Africa's credit rating for the first time since 2005. Bloomberg's chief Africa correspondent, Jennifer Dabasaja, joins us from Johannesburg. Jen, what do we hear from the agency then in terms of what underpinned this decision?
Well, this is quite significant, Tom. As you know, for South Africa, this country has been really dealing with high debt and weak growth for quite some time. So many investors were waiting to see what S&P, in fact, was going to point to. And many analysts are assessing the fact that it seems like there's a bit of a positive tilt to what S&P is saying. They see future growth potentially being even better than they expected, especially if we do continue to see this coalition government here, which is just about 18 months in to the term, continuing on with fiscal consolidation. And perhaps what's most important is they point to the state-owned utility provider, which is Eskom, and a lot of the improvements that we've seen with Eskom. And since this GNU has been formed here, there hasn't been load-shedding power outages, which have been hobbling the economy for many years. They hope that will continue. We did see Eskom return to positive returns earlier this year, profits, excuse me, And so they are seeing a lot of green shoots moving forward for the economy, but still there is quite a bit for the South African government to point to. But this S&P nod of approval, I guess you can say, is a welcome sign for investors. Perhaps we see some of the other ratings agencies to follow soon.
Yeah, and Jen, this happening, of course, as we gear up, as you and the team gear up for the Africa Business Summit. What are you looking ahead to? What's going to be front and centre at that event?
Well, Tom, it really front and center is where the continent is at, and also where South Africa is at leading into this presidency. Of course, we have been covering quite a bit extensively the tensions between South Africa and, of course, the United States. The United States, as far as we know, President Trump decided last week that there will not be any U.S. official representation here at the G20, but still, there are a number of other leaders that are going to be here later this week. As far as our summit goes, as you can see on the screen here, a number of business leaders living here on the continent, but even those globally who do business across the continent, very focused in on potentially what the growth looks like for several economies, South Africa included. Of course, we've covered quite extensively emerging markets and some of the momentum that they've been seeing since there's been a bit of a shift, not necessarily away from the U.S., but just diversifying portfolios. Where, in fact, are there opportunities? What are the sectors that we're looking at? Potentially, what are some of the challenges that still lie ahead? If we just bring it back to South Africa, of course, this is a vote of confidence for this S&P rating, but still there is quite a bit for business leaders to get together and figure out what more do they need to do to get more investment on the continent.
Okay. All right, Jen, we are looking forward to your coverage and interviews. Of course, Bloomberg's Chief Africa correspondent, Jennifer Zabashaja. Up next, Bloomberg Brief. This is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Based on the data that you've seen, do you think it's a good idea now for the Federal Reserve to lower interest rates?
The Fed doesn't want to lower rates and appear to be kowtowing, if you will, to President Trump's language. On the other hand, I think there's actually room for them to lower rates. If you look at the Fed's beige book, which the Fed reacted to last year when they started lowering rates, I think there's room for them to take action now. And if I were the Fed, I'd start thinking about going ahead and lowering rates. Real rates are very high right now relative to history, and of course we have a pretty significant term premium built into the term structure of interest rates right now.
So let's talk about the Fed's goal, which is 2%. Is that too low a rate to really get to at this point? And does it have to be at 2% or in sight of 2% before the Fed should lower?
They have a credibility issue right now. The Fed has to get to 2% because that was the target that they set. Although they've already started to project that they're willing now to target a range of inflation, which I think is the approach they should have taken all along. But they're going to get to 2%, and I think the trajectory is still in favor of the Fed's 2% target. And what we're seeing on a shorter-term basis is that's where rates are actually going to in terms of the inflation level, and I think the trajectory is their friend.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's 5 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stock futures rise as investors look ahead to NVIDIA earnings later this week. Bitcoin rebounds after erasing its year-to-date gains. President Trump urges House Republicans to vote in favor of the Justice Department releasing its files on Jeffrey Epstein, reversing a stance that he had held for months. And U.S. airlines are set to resume normal operations after more than a week of government-mandated flight cuts as Boeing's factory workers return to producing airplanes. Take a look at what's going on in terms of futures. We are up across the board, not at session highs, but 0.5% almost on S&P futures. NASDAQ futures gaining 0.75%, and the small caps are up as well. In terms of treasuries this morning, we're looking at a 2-year yield. Actually, across the curve, we're looking at yields lower, but a 2-year yield at 359.34, a 10-year at 412.11 as investors buy those bonds. For some stocks to watch, let's get over to Valerie Titel. She's in London. Valerie?
Good morning. Matt, let's start with a check on what's leading those gains in the Mag 7, possibly what's leading those gains in the NASDAQ, and that is shares of Google, up over 5.5% after the 13F filing has showed that Warren Buffett's Berkshire Hathaway has amassed a near $5 billion stake in the company in the third quarter. This does come alongside them trimming their holdings of Apple by 15%. So normally we don't see these kind of reactions to these delayed 13F filings, which showed us mostly what happened in the last 3 months, but Alphabet shares really gaining off the back of these 13F filings from Berkshire Hathaway. Next, let's move to Morgan Stanley downgrading the hardware sector. Dell receiving a double downgrade from those Morgan Stanley analysts. Shares of Dell are down 3.6%. They also downgraded HP and HPE. Those shares both in the red, down over 1%. This is as they quote, sluggish demand in the broad hardware sector. Lastly, let's move on to some acquisition news. Clearwater Analytics. This is a company that is an analytic company focused in the investment space, up nearly 12% after over the weekend. It was reported that Warburg and Permira, two buyout firms, are interested in taking this company private. Now, it's interesting because these two companies were the ones that took this company public back in 2021, but with the share price now back to where it went public, perhaps they see value in buying the company. Matt?
All right, Valerie, thanks very much. Valerie Titel there with some stocks to watch. Coming up this hour, we're going to speak with David Royal, Thrivent Chief Financial and Chief Investment Officer, as well as Lucy Baldwin, Global Head of Research at Citi. But first, President Trump has reversed his position regarding the release of the Jeffrey Epstein files, posting on Truth Social, quote, House Republicans should vote to release the Epstein files because we have nothing to hide and it's time to move on. The House Oversight Committee can have whatever they are legally entitled to, and then in all caps, I don't care. Joining us now is Bloomberg's Suzanne Lynch. So it's interesting, Suzanne, do we know why the president has reversed his stance and why he was so dead set against releasing these files in the first place?
Yes, this is a problem that is not going away for Donald Trump, and this abrupt shift that we have seen by the president on Sunday, I think is underlining the fact that he knows this vote is coming this week. The House is due to vote to release these files on Tuesday, and all signs are that there are a significant number of Republicans who are prepared to break with the president on this issue, and he knew that. This appears to be the kind of motivating factor behind this shift we've seen by the president. We saw it. He couldn't have been clearer in that social media post. He's calling for the files to be released. But I think it is significant that we're seeing this break with the president, that this issue is the one that has divided his caucus, his support base in Capitol Hill when it comes to these Epstein files. So let's see if his intervention changes things ahead of that vote on Tuesday.
Yeah, it was a quick flip, really, because he was so angry with Marjorie Taylor Greene for supporting the release of the Epstein files that he called her a traitor on Truth Social, and she said on the Sunday shows that puts her life in danger.
She did. I mean, this was an extraordinary escalation between Donald Trump and one of his traditionally most staunch supporters. And Marjorie Taylor Greene, who has broken with the president, not just on this, but other foreign policy issues, for example. But as you said there, the member, she was very strong in her statement on the Sunday shows on Sunday, saying that this language by Donald Trump was putting her family in danger. She was suggesting they had received threats. But significantly, she also outlined her support for the president during those statements on Sunday, saying she was still fully behind President Trump. So perhaps there is some kind of a rapprochement now between Donald Trump and Marjorie Taylor Greene. And of course, she is not alone. There are a number of members who have broken with Donald Trump on this Epstein issue. So it's really becoming a tricky issue for Donald Trump. It's not going away. And because these votes are happening now, I believe that he felt he had to move on this.
Let me finally ask you about further sanctions on Russia, on Russia's trading partners. What is the president now prepared to do to try and hold Vladimir Putin back in the war against Ukraine?
Yes, significant statement by the president saying that he is prepared to back a Senate bill that would punish buyers of Russian energy. And really, who's in the frame here? It's India and China, two of the big purchasers of Russian energy. This bill potentially could allow tariffs, of up to maybe 500%. This could be potentially huge. Donald Trump has said he is in support of this. Figures like Senator Lindsey Graham has for a long time been calling for this. So I think it's significant in that it shows this hardening of Donald Trump's stance vis-a-vis Russia. As we know, these efforts to get Vladimir Putin and Volodymyr Zelensky, the Ukrainian president, around the table, some kind of peace deal, have not happened since that Alaska summit over the summer. So I think this is further evidence that Donald Trump is losing patience with Russia and with Vladimir Putin as this war drags on.
All right. Thanks so much, Suzanne. Really great to get your take on these stories. Bloomberg's Suzanne Lynch coming to us out of Brussels. Now, over in Asia, China is escalating its confrontation with Japan over Prime Minister Takaishi's comments on Taiwan earlier this month. A social media account linked to China's state warned over the weekend that Beijing has, quote, made full preparations for substantive retaliation. Joining us now from Beijing is Bloomberg's Colin Murphy, who covers China. So, Colin, first remind us, what the incoming prime minister has said about Taiwan and what China could possibly do in retaliation.
Right, so I'm not sure how much this story has sort of filtered to the US or other parts of the world, but it's the biggest story out of Asia today, I think. And it goes back around a week ago when the relatively new Japanese Prime Minister, Takaichi Sanae, made some remarks in which she said that should there be a conflict between China and Taiwan, that would constitute an existential threat for Japan, which has the implication that Japan could then mobilize its self-defense forces. And this kind of rhetoric or this kind of talk has obviously been super provocative in the point of view of Beijing. And it has led to a week, the past week basically, of over and back in terms of denouncing what Takaichi said and taking countermeasures. So the other point to remember here is that this is coming immediately after Prime Minister Takaichi met with the Chinese leader Xi Jinping on the sidelines of APEC in South Korea, where they had both agreed to improve bilateral ties. So in a way, it's kind of seen here in Beijing as a slap in the face coming from Takaichi so soon into her position as the new Japanese leader.
So in this case, I guess the prospects for easing tensions between China and Japan have been greatly reduced. How can this be turned around?
Well, we're still in the process where we're seeing the sorts of retaliation that China is talking about. So far, they've done things like warned Chinese residents about the dangers of traveling to Japan, and also similarly telling students to think twice about studying in Japan. There's been a whole bunch of exchanges on social media, and there has been state media pointing to future possible steps, including sort of economic sanctions, whatnot. So it's not looking good. Now, Japan is about to send a diplomat to China in the efforts possibly to sort of smooth this out. There is an opportunity, in theory at least, at the end of this week when Li Qiang, the Premier of China, will actually be in South Africa at the same time as Prime Minister Takaichi for the G20. However, it's unlikely that the two will actually meet because it's a little bit too soon, I think, or the story is still unfolding. So in that context, it does look like these tensions between Tokyo and Beijing will continue for the foreseeable future and for sure into 2026 as well.
Colin, thanks very much for your time. Colin Murphy there reporting out of Beijing. Let's get to the other top stories trending on the terminal this morning. DoubleLine Capital founder Jeff Gundlach is keeping his strategy simple by loading up on cash and staying away from private credit, which he says is awash with, quote, garbage lending. In an episode of the Odd Lots podcast, Gundlach called out nosebleed valuations in the equity market and warned investors against incredibly speculative bets. Jeff Bezos, meanwhile, is throwing his money and time into an AI startup that he will help manage as its co-chief executive. According to the New York Times, it's called Project Prometheus and will have $6.2 billion in funding, making it one of the most well-financed early-stage startups in the world. And U.S. airlines have been able to resume normal operations starting today after more than a week of government-mandated flight reductions. The U.S. Transportation Department and the FAA announced they would lift cuts across 40 major U.S. airports starting at 6 a.m. Eastern today, so in just about 50 minutes from now. Coming up, we speak with David Royal, Chief Financial and Chief Investment Officer over at Thrivent in your CFO brief. Next, this is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
This is Bloomberg Brief. I'm Matt Miller in New York. U.S. equity futures gaining this morning as investors look ahead to earnings from NVIDIA later in the week. Let's dig into the outlook for the equity market and the state of the U.S. consumer in this month's CFO briefing. We're joined by David Royal, Chief Financial Officer, as well as Chief Investment Officer at Thrivent, as well as Bloomberg Senior Editor Nina Trentman. Thrivent is a retail-focused financial services firm with now $193 billion in assets under management. David and Nina, thank you both very much for joining us early this morning. David, let me get your take first on the AI bubble talk, because it's perked up a little bit lately with Jeff Gundlach's interview on Odd Lots, as well as the sale that we saw from Peter Thiel and his 13F of NVIDIA shares. What's your view on this incredible investment?
Yeah, no, I think we still think there's some opportunity there. I mean, unlike 2000, a lot of the AI investments being funded out of cash flow. So I do think it's different. It's hard to predict who the winners and losers will be. If you go back to 2000, it wasn't necessarily the infrastructure providers, the Intels, the JDS Uniphases of the world. It was the utilizers of the internet like Amazon. I think we'll see some of that with AI as well.
Just following up on that, just thinking about future investments, what do you see your retail customers doing at this point in time, given that we're facing a lot of uncertainty as to where will markets head from here?
Yeah, I think there's still a lot of caution. There was a lot of volatility in the first part of the year that came down a little bit in the third quarter, but it's picked up again in the fourth quarter. A lot of people are still sitting in money markets. Our money market fund has about quadruple the assets it had 3 years ago. Industry-wide money market assets, as you know, are pushing $8 trillion, up from $4 trillion just a few years ago.
And just thinking about the upcoming Fed meeting next month, we've been seeing about 50% chances of a rate cut being priced in at this point. What do you think the Fed should prioritize at this point?
Yeah, those chances have really come down. Going into the Fed meeting, they were 85% or so before Powell's press conference. They're balancing the risks of inflation and unemployment. I'm more worried about unemployment at this point. The 3-year rolling average of employment, prior to the shutdown was 29,000 a month, and the private numbers imply that last month was probably in that range. When Powell was talking in Jackson Hole in August of 2024, he said any further weakening of the labor market would be unwelcome. They were averaging 120,000 a month back then, and actually 170 given the data he had at the time.
It's interesting because I think, especially being in the Midwest, I'm from the Midwest, here in the Midwest, you would be more worried about inflation. I mean, consumers have already been hit so hard, and even though we're not looking at 9% right now, 3% on top of what we've already had must be incredibly damaging.
It is, and we hear that. Probably the things we hear most often from our clients are those effects of inflation, and particularly housing costs. When are my children, grandchildren going to be able to afford a house? But we are seeing signs of weakening employment. Speaking of the Midwest, Target announced layoffs recently in my hometown, Minneapolis, and so I think we're starting to feel it on the employment side as well.
Yeah, we're starting to see a lot more layoff announcements on the headlines. I want to get back to the money market assets, because you have quadrupled your money market assets at Thrivent, and we just heard from, again, Jeff Gundlach on the Odd Lots podcast with Joe Weisenthal and Tracy Alloway that he's going to cash. Now, that may be severe, right? And he's known for his strong statements. Yep. But you do see a lot more fear in this market, and I wonder if you think that could drive money market assets further.
I think it could, but I think people should be looking at lengthening duration. I mean, normally in a recessionary environment, you want duration, and so I think there's, you can lengthen duration without moving into lower quality assets. So obviously governments, but also high quality corporates we like. Another area that I think is neglected right now is municipal bonds. Municipal bond spreads are quite attractive, and I think can be a high quality way of lengthening duration in taxable accounts.
David, just following up on one point that Matt made earlier about private credit and the outlook for private credit, wondering what you're hearing from clients on that and what your personal view is on that asset class.
Yeah, I think there's a lot of interest in private credit. I mean, some of that I think is public high yield bond spreads are really tight right now, historically tight, so you're not getting paid for that risk. People are looking for other areas of yield. A big chunk of the assets we manage, about half of those assets are insurance company assets, and we really like investment grade private credit. I mean, I don't think that gets quite as much attention in the press as the below investment grade credit, but there's some really attractive investment grade private credit opportunities out there.
Just wondering, in terms of the things to watch for us in the coming weeks, in terms of market impact, the Supreme Court, of course, is about to decide on whether the tariffs that were imposed by the U.S. government should be in place or not. I'm just wondering, how strong a market reaction do we think we should expect?
I think the market would rally on tariffs being overturned. I mean, markets generally don't like uncertainty, but we've all seen reports. I think Morgan Stanley came out this past week with a report saying they thought about 50% of the tariffs could be implemented. I think it would be a little higher than that, but I think the market would probably welcome it in the short term. But I think either way, between that and a live Fed meeting in December, we're going to see some more volatility in the next month or two.
I wonder, when it comes to the Fed, the president is getting a chance to replace more than a couple of seats now. And are you worried about independence? I talked to Paul Tudor Jones a couple of months ago, and he said he expects President Trump to put in the yesest yes man he can in the chair. Is that a problem?
It's really interesting. If you chart, Fed independence globally and rates of inflation, you do see a correlation between reduced Fed independence or central bank independence and inflation. So, in that scenario, you would be, looking at potentially higher long-term rates, and you'd want to position yourself accordingly.
All right. Interesting stuff. Nina, thank you so much for bringing David. David, thank you so much for joining us early this morning. We'll have to get you back. David Royal there of Thrivent, along with Bloomberg's Nina Trentman. Check out Bloomberg's CFO Briefing. It's a weekly newsletter for and about CFOs, featuring top executives at global companies and covering key trends in corporate finance. And not always this early in the morning. Coming up, President Trump's reversal in one of his biggest positions lately, his resistance to the release of the Epstein files. Now he says it's okay for his Congress and Senate to vote for that. And a look at what else is making headlines in your front page news next. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York. Time now for your front page news. First up on the Wall Street Journal, a sharp reversal for President Trump. He now says House Republicans should vote to release the Epstein files. He posted on Truth Social that we have nothing to hide and it's time to move on from this Democrat hoax. The House is scheduled to vote this week on whether to require the Justice Department to release the files. Next up on the New York Times, Border Patrol agents descended on Charlotte, North Carolina, searching for immigrants who are in the U.S. illegally. The operation, dubbed Charlotte's Web, has already drawn criticism for the name and its aggressive tactics. Local officials have been telling people to record their interactions with agents. It remains unclear how long the Border Patrol agents will stay in the city. And on the Washington Post, President Donald Trump said he's considering talks with Venezuelan President Nicolas Maduro. Trump has accused Maduro of leading a narcotics organization, sending drugs to the United States. The suggestion of potential diplomatic outreach, though, comes after weeks of escalating tensions in the Caribbean, with the U.S. deploying an armada of warships and troops to the region. In terms of futures, we're still seeing gains just 4 hours away from the opening bell. S&P futures, although still up, those gains are being diminished. The dollar right now up at 12.17 on the Bloomberg Dollar Index, and the 10-year yield over 4.12. Coming up, markets awaiting long-delayed economic data. We'll look ahead with Citi's Lucy Baldwin next. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the
anxiety about jobs? I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It is 5:30 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stock futures rise as investors look ahead to NVIDIA earnings later in the week. Bitcoin rebounds after erasing its year-to-date gains. And President Trump urges House Republicans to vote to get the Justice Department to release the Epstein files, reversing a stance he's held for months. Here in the U.S., airlines are set to resume normal operations after more than a week of government-mandated flight cuts as Boeing's factory workers return to building planes. In terms of futures, we still see gains, although those are dissipating as we get closer to the opening bell right now. S&P futures up only 0.3%. NASDAQ futures still up 0.5%, and the small caps are just treading water here. In terms of yields, we see them coming down as investors buy government debt. Right now, the 2-year yield at 359.76, and the 10-year yield just over 412. And Bitcoin has erased its year-to-date gains. It's coming back a bit, as you can see, at 95,563. But now just dead even in 2025. For some of the stocks to watch, the individual stock stories, let's get over to London. Valerie Titella is standing by. Valerie?
Good morning, Matt. Let's start with a check on Google. Perhaps the reason why we're seeing the NASDAQ outperform this morning is that we're seeing shares of Alphabet up near 5%, and this comes after these 13F filings from Warren Buffett's Berkshire Hathaway have shown that they have built a near $5 billion stake in Google in the third quarter. Now, while these 13F filings are backward-looking, Warren Buffett has talked extensively about missing the rally in some of these tech names. It does seem like he was tempted in to Alphabet in the last quarter. Let's move on to some calls from analysts at Morgan Stanley. They are downgrading the hardware space, and with that, giving Dell Technologies a double downgrade. So we're seeing shares of Dell down nearly 4%, and shares of HP and HPE down around 2% off the back of this. Now, they are citing a sluggish demand and that this memory super cycle is going to be posing some issues for these hardware names in the coming quarters. Lastly, let's move on to some M&A or acquisition speculation, shall I say. Clearwater Analytics is up nearly 14% in pre-market. This is an analytics company based in the investment space. There was some speculation about them being taken private last week. Over the weekend, it was confirmed that Warburg and Premier are looking at taking this company private. It's interesting because those are the two private equity names that actually took this company public back in 2021. But with the share price back down to where it was when they went public, perhaps they're seeing value in taking the company private yet again. Matt?
Valerie, thanks very much. Valerie Titella with some of your stock movers. Now, earnings season is nearing an end. We have 11% of the S&P 500 market cap reporting this week, with NVIDIA slated for Wednesday, and that obviously makes up a huge part of it. Joining us now is Lucy Baldwin, Global Head of Research at Citi. And Lucy, you know, ex-NVIDIA, we've had a pretty good earnings season. We've got double-digit earnings growth once again, and we weren't expecting that as we came into it.
Yeah, good morning. Great to be with you. Yeah, absolutely right. We've had a strong earnings season. I think the magnitude of the beats a little bit less than they have been previously. And I would say, obviously, that some of the reactions to earnings season has been less good than hoped, right, in terms of the positioning, obviously, coming into this. Many people now set up for long equities into the back end of the year, expecting that sort of Santa rally given the performance that we've had year to date. And so some of those stocks not performing as well as you might have expected as we've gone through earnings season. So I think that tells us a lot about the kind of reluctant bulls that you see across the investor community at the moment.
Well, as you said, it's not been quite as good as it has been in the past. Really, we expect about 5%, a 5% beat on profits, right? So what are we looking at in terms of earnings expectations in Q4 and in 2026? And let's go ahead and just add that 5% in.
Yeah, look, I think, you know, the expectation generally is that you're going to see that double-digit earnings growth going into next year, and that's on the back of an unbelievably resilient economy, right? So at the end of the day, as we've come through this year, the US market and many other markets around the globe have performed better than economists expected, generally seeing some upgrades. And if you think about the first quarter, you know, why are so many people still long equities other than this amazing structural AI boom? The reality is people are still long because they're they're actually expecting to see a good pickup in growth next year. There's that expectation, particularly in the US, for the stimulus to kick in and provide a lot of support. There's the expectation that consumers will have money back in their pockets with the tax refunds. There's some other incentives in the One Big Beautiful Bill that should incentivize more companies to invest. All of that should give you a good growth picture in the first quarter of the year. So in many ways, quite a positive setup. But of course, there's that wall of worry that people still have to climb, because you have got a number of issues, not least, of course, valuation in the US market in its 98th percentile of history, as well as the big question around whether the Fed is or isn't going to cut rates imminently and then continue that cutting cycle into next year.
Lucy, of course, we're focused here in New York on the U.S. markets. You're talking about the United States, but we've seen real outperformance in the rest of the world. What do you expect in terms of that kind of continuation? Will we still see Europe, Asia, EM outperforming U.S. equities into the end of the year and next?
Well, I think as you look longer term, you're right. The expectation that you're going to see perhaps better earnings growth coming through in other parts of the world is definitely something that investors are focused on. Usually when you have a Fed cutting cycle, and by the way, our view is that the labour market is weak enough, given some of the data we've just seen, the layoff data, to get this cut in December and then a couple more cuts next year. When the Fed's usually cutting, that broadening thesis tends to hold, both in terms of the US stock market performance, but also in terms of rest of world. And so our expectation is you are going to see that. I've just come back from China as an example, and there was a lot of buzz there, particularly around AI. And again, that's a market where it's trading on 13 times forward earnings relative to obviously the S&P on 23. So there's much less of a valuation concern in terms of the capping of that upside, and an expectation that you can have some really, really strong earnings growth from some of those high-tech sectors. So we like many of the emerging markets, China included, where we'd be overweight, and even for Europe, when we look into next year, we've sort of got mid to high single-digit upside in earnings, and then obviously in terms of that expansion in the market next year. I think the concerns people have has been around some of the narrowness, both in the European market and in the US market, as being an indicator of, again, issues to watch for. So we're cautiously optimistic, and we're still very much long and overweight equities from an asset allocation perspective as we go into next year.
Yeah, concerns here about the concentration risk, as well as the valuations. You bring up the S&P trading at 23 times earnings, plus the fact that we saw last week SoftBank selling all of its NVIDIA stake. Now we know that Peter Thiel has sold all of his NVIDIA stake. Jeff Goodlock says he wants to go to cash because of equity valuations. Is there any concern on your part that we could be seeing the bursting of a bubble at some point?
Well, the question of is it an AI bubble is probably the most asked question out there at the moment, as you say, right? And I think our view, we've got some split views internally, right? We think there's many aspects of this that technically look like it is a bubble that is building. You know, Dirk Willer, our strategist, would suggest that you have got the beginnings of a bubble, but that doesn't necessarily mean you don't want to own equities, right? In fact, we think you almost always do at the beginning phases of a bubble period. I think what people are looking at the moment is the leverage that's starting to build in the AI ecosystem. So up until now, we've typically had this great backdrop that most of the money being spent has been spent in CapEx terms by the big hyperscalers out of cash flow after dividends, after buybacks, right? And so that has given people a lot of faith that this is different to the early 2000s. But I think we're now at that sort of tipping point where more and more of the money that needs to get spent from here on in this CapEx spending spree, is going to have to come from debt. So we're shifting from an era of fiscal expansion post the pandemic into an era of credit expansion. So we think the bubble, if you like, can have quite a long time left to run, because I think a lot of the backdrop is still very healthy. But we are definitely entering a new phase where there is undoubtedly more leverage coming through in that AI ecosystem, which of course is why investors are watching so keenly for what the returns outlook for this space is actually going to be like, because again, I would say the spending on the infrastructure piece has been a lot more and a lot heavier than people perhaps expected to see, and the monetization has been in part a little slower to come through, particularly at the enterprise level. So those are all things that we're going to have to watch for as these trends continue. But we do feel that the backdrop is still pretty positive in terms of being long that group of tech names in the US. But to your point, flagging the narrowness of returns that are coming through, that is a typical feature as we go through a bubble period in markets.
Lucy, great to get some time with you. Really appreciate it. Lucy Baldwin there of Citi coming to us out of the big smoke. Now let's get on to the top stories trending on the terminal this morning. U.S. airlines will be able to resume normal operations starting today. After more than a week of government-mandated flight reductions, the U.S. Transportation Department and the FAA announced they would lift cuts across 40 major U.S. airports starting in about 20 minutes' time. Boeing expects to triple deliveries of seekers that guide Patriot missiles amid high demand for the air defense system. Boeing's Defense, Space, and Security CEO Steve Parker spoke to Bloomberg's Guy Johnson from the Dubai Air Show.
Really about our customers, so driving discipline back into program management, our engineering resources, making sure we're looking at risks, and looking around corners. So it's been a good year. The team's stepping up.
But do you feel like the last few years have been difficult? You must feel that this business is on the front foot now.
Well, definitely, to use a bit of a cricket term, definitely on the front foot. And again, I think you're seeing some confidence come back in, but again, just discipline, making sure we're for the new work that we're bidding it the right way, so we can execute with schedule margin, technical margin. But I like the progress.
China is escalating its confrontation with Japan over Prime Minister Sanae Takaichi's comments on Taiwan. Beijing has since warned citizens against traveling to Japan, and state media said that Beijing has, quote, made full preparations for substantive retaliation. Coming up, a major reversal. President Trump is now urging for a vote to release the Epstein files after fighting back against it for months. More on that story next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Matt Miller in New York. After months, President Trump has changed his position on the release of the Epstein files and is now looking to have them released, posting on Truth Social, quote, House Republicans should vote to release the Epstein files because we have nothing to hide and it's time to move on. The House Oversight Committee can have whatever they are legally entitled to. I don't care, in all caps, with an exclamation point. Joining us now from Washington is Bloomberg's John Harney. So, John, this is fascinating, especially on the heels of labeling Marjorie Taylor Greene a traitor because she wanted to release the Epstein files. Why was he so against the release, and why is he now for it?
He said all along that the files, the issue of the files, amounted to a hoax by Democrats to distract from their own failings, particularly the shutdown, which ended last week. Now, this is certainly a big about-face. And for months now, he'd been saying he didn't want the files released, even as almost all Democrats in the House and a few Republicans, including Marjorie Taylor Greene, asked for that they be released. Now, we should point out that this, even if the House does approve it, it still has to go before the Senate, and President Trump has to sign this measure. So we still have a ways to go before these Justice Department files are actually released.
Well, and it should also be pointed out that these files are going to be coming from the president's Justice Department, and he's really taken control of that department. So how much can we even trust? I'm wondering if people are asking this question in Washington, what the Justice Department gives us at this point.
Well, we'll have to see. I mean, there were all sorts of speculations and, of this kind. I mean, we're just going to have to let the process play out at this point.
Yeah, it can't be forgotten that the Attorney General herself said at one point she had the Epstein files on her desk and then later said there were no Epstein files. The president has also floated talks now with Maduro, the Venezuelan leader, just after the Secretary of State labeled Maduro and a group with which he's allegedly involved a terrorist group. What can we take from this?
Well, the group is called Cartel de los Soles, or Cartel de Suns, and the State Department claims that President Maduro of Venezuela leads this organization, and this designation puts Cartel de los Soles in the same league as, say, Al-Qaeda. All this comes as the United States has brought a huge military has heightened, drastically heightened its military presence in the Caribbean with a flotilla led by the Gerald R. Ford, an aircraft carrier. So military action, is that in the offing here with this designation? But at the same time, President Trump said last night as he was heading back to the White House from South Florida, he seems to be willing to talk to Maduro, and that the Venezuelans are eager for some sort of negotiations. What the outcome of those negotiations would be is as yet unclear. Many Secretary Rubio and others are demanding that Mr. Maduro step down.
All right, John, thanks very much for joining us. Bloomberg's John Harney out of Washington, D.C. Now, over the weekend, documents released showed that former Federal Reserve Governor Adriana Kugler violated Fed ethics rules and was subject to an internal investigation when she resigned in August. Her abrupt exit allowed President Trump to appoint an ally in Stephen Myron at the central bank. Bloomberg's Alistair Bohl from our economics and government team joins us now for more. And Alistair, this is interesting. We had no idea why Kugler had stepped down, and I guess now it's because she was trading stocks during a blackout period. Is that right?
Good morning. Yes, that's correct. And it is a bit of a head-scratcher after everything the Fed went through in 2021 and 2022 with irregular multiple transactions by two of their regional Fed presidents. And after that, Fed Chair Jerome Powell drew up very strict and very clear guidelines to avoid a repeat. And yet again, we've had a number of transactions in prohibited securities during a blackout period. But you're right, it does clear up why she did sort of suddenly exit. It was very perplexing, and the investigation is ongoing.
I see. So, you know, we don't have yet all the details. A lot of times I know that these officials are working with agents who could, I guess, trade stocks without their knowledge. But she did ask for a waiver from Chair Powell, and he denied that, right?
That's right. But I think that might have been something to do with the fact that she got a waiver for the previous year before. So in a way, this was a repeat problem. And it was her husband trading, according to the disclosure. And you've got to wonder, I mean, after everything they went through, after the efforts to make it very clear these are things you can't own, and if you do own them, you can't sell them within a certain period of time, for that to happen again is really a bit of a head-scratcher.
So this now allowed the president to put Stephen Myron in place, and I wonder how our central bank independence here in the U.S. appears, especially to the rest of the world, Alistair. Under attack is a phrase that's been used quite a bit, and the president is going to be able to appoint a new Fed chair soon. Are there doubts about U.S. central bank independence?
So the U.S. central bank is the gold standard of central banking, but the constant attacks from the president have clearly raised a question mark over the durability of its independence. This issue, which must drive Chair Powell completely crazy, it creates an opening. It allows it to be attacked yet again, and it's bipartisan from both the Republicans and the Democrats on Capitol Hill, who are calling for stronger guardrails and greater transparency, which probably, if you're at the Fed, feels a little ironic, given their rules are already a lot tougher than the rules that lawmakers subject themselves to. But, you know, in this environment where you're under an enormous amount of political pressure to lower interest rates, do something, you really don't want to kind of create any open. You do not need to be on the back foot, and this kind of puts them on the back foot a little bit.
Yeah, if you're a Fed governor, maybe tell your spouse not to buy and sell shares of Kava and Southwest. Alistair, thanks so much for joining us. Bloomberg's Alistair Bull there of our economics and government team. Now, DoubleLine Capital founder Jeff Gundlach has a warning. The next big crisis in the financial markets will come from private credit. He spoke with Odd Lots anchors Joe Weisenthal and Tracy Alloway.
The most ridiculous argument of all for private credit has been private credit belongs in every portfolio because it lets you sleep at night, because it helps you ride out the volatility of your public credit. Again, that's just a repackaging of the volatility. If you don't market to market, there's no volatility. But if the price goes from 100 to 0 in a matter of a few weeks, there's something untoward is going on. And so I'm very, very negative on those types of non-transparent markets. It reminds me, I've been saying this for probably 2 years now, that the next big crisis in the financial markets is going to be private credit. It has the same trappings as subprime mortgage repackaging had back in 2006. Now, it took a couple of years for it to totally unravel. So this stuff doesn't happen in a week or a year even. But I'm very negative on that.
That was DoubleLine Capital founder Jeffrey Gundlach speaking with the Odd Lots podcast. Joe Weisenthal and Tracy Alloway are the hosts. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg. Let's take a look now at what's ahead this week. First up, Fed speak from Williams, Jefferson, Kashkari, and Waller coming all throughout this day. Then on Wednesday, we'll get the Fed's latest meeting results and NVIDIA's third quarter earnings coming on Wednesday after the bell. Plus, the Bloomberg Africa Business Summit kicks off today in Johannesburg. Heads of state, central bankers, and CEOs will gather to address the issues shaping the continent's future. Guests include JP Morgan Vice Chair Daniel Pinto and Johannesburg Stock Exchange CEO Leila Fourie. In terms of the markets right now, we're looking at NVIDIA shares that could weigh on the trade, down 0.5%. Google shares, on the other hand, up 5%. That's it for the Bloomberg Brief. Surveillance is up next.
Estava sitiada.
Isso ao começo eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
We do have almost an equal set of headwinds and tailwinds for the equity market.
Things got out a little bit over their skis here. They got a little white hot.
There's probably some room to see more pullback.
There are a lot of warning signs. There's a lot of froth in the system.
These pullbacks and corrections won't turn into something more nefarious.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, teeing up a major week ahead. We'll get quarterly earnings from retailers Home Depot, Target and Walmart, plus chip giant NVIDIA reporting following a volatile week for megacap tech, and a much delayed jobs report. Payrolls data just around the corner. That data only days away.
So here's the question, and Stuart Kaiser over at Citi, please plug your ears. Will good data coming from the jobs market in September be good for markets or be bad for markets? And if you're screaming at the screen and saying it's always good information, at the same time, you have to think about the Federal Reserve and what justification they'll have to potentially cut rates. Right now, there is a 43% chance priced in for the Fed funds futures for December of a rate cut. That is down from more than 100% chance before the last Fed rate meeting.
Not to overdo it, but it could be quite a defining week going into year-end for financial markets worldwide. The consumer setting the tone for that. Retail earnings later on this week, plus that payrolls report as well. Just a few more weeks to go until that Fed meeting.
Finally, this data desert is starting to evaporate, and the market's going to get fed with a tremendous amount of data this week. And I think even more important than the jobs report, maybe even more important than the NVIDIA report, is going to be what retailers have to say. Given the fact that we've already heard from the likes of Chipotle, we've heard from McDonald's, which was talking about the concern about the health of the consumer, the fact that the administration is also starting to lower tariffs on things like agriculture. What does the affordability crisis in this country look like ahead of Thanksgiving? That is going to be on display this week.
That's Main Street. Need to talk about Wall Street. Earnings in focus, NVIDIA, the major one, of course. Palantir, NVIDIA, Oracle, all having a difficult go of it in the last few months or so. But let's take stock of things. The S&P 500, 2% away from all-time highs. High yield spread still below 300 basis points. If you came down from Mars and looked at this market still looks pretty frothy. This market still looks pretty fully valued.
And if you had an ear to Wall Street, you'd hear this bullish chorus coming from all the strategists heading into next year. So it's not as though people are throwing in the towel and saying, the bubble is upon us, let's all hide and run for the hills. Here is the issue. NVIDIA's gain. How often do we see this sort of perpetuate the idea that there is this real robust AI bet? At what point does it become emblematic of the pain elsewhere? The idea that Microsoft and Apple, Apple maybe not so much, but Amazon and Google are all racing to buy expensive chips that have a very quick depreciation schedule in order to just stay ahead of the next guy without necessarily an eye on what the ultimate goal really is.
Do you want a bullish forecast?
Please.
7,800 by year-end 2026. Mike Wilson of Morgan Stanley. Here's the quote. We're in the midst of a new bull market and earnings cycle, especially for many of the lagging areas of the index. Mike Wilson of Morgan Stanley looking for a big move over the next 12 months.
And overweighting small caps, seeing a rotation into some of the less loved areas. And one thing that he and other bulls that are coming out of Wall Street into 2026 are saying is it is helped by an accommodative Fed. This is the reason why it is so important to put this picture together and understand whether the Fed will have the justification to keep cutting rates, keep being accommodative in the face of the ongoing spending that we see not only from the consumer, but also from AI giants.
Stocks just about positive this morning, higher by 0.2% on the S&P. Coming up this hour, we'll catch up with Russ Kostrick of BlackRock as stocks look to start the week on a firmer footing. Torsten Slock of Apollo on the case for a rebound in the economy, and the former White House trade advisor Kate Kalukowicz with the U.S. saying all options are on the table for China trade talks. We begin this hour with stocks little changed as traders gear up for a key week of earnings and the return of longer-awaited economic data. Russ Kostrick of BlackRock writing, we remain long stocks into year-end, while valuations in parts of the market are stretched. Many of the mega-cap tech names are still attractive. Russ joins us now for more. Russ, welcome to the program. We often play this game. If you're looking for the retail earnings later this week, there's tons. NVIDIA in the mix as well, a delayed payrolls report. If you had to pick one this morning, Russ, as the driving factor for this market, which one would you pick?
Good morning, Jonathan. If I had to pick one, I'd probably pick payrolls because we haven't had any in a while, and the market's going to fixate on it for understandable reasons. But I was listening to Anne Marie in the lead up to the broadcast. I think she said something very profound, which is a close second is going to be the retail earnings. And the reason is there's a lot of anxiety about the consumer right now. Part of it is some of the comments from other retailers and restaurants. Part of it is just the absence of any data the last month or two. So I believe that we are going to see a lot of focus on the big box retailers. What are they saying about the health of the consumer?
So, Russ, the White House right now is telling you they want to make America more affordable. Should we take that bet? Should we put that bet on and bet on their success over the next 12 months of leaning to some of these names?
Well, I believe that they're serious in that effort, and clearly some of the announcements over the weekend lean in that direction. But there are another couple things here also that are worth keeping in mind. The most important of which is we have seen prices remain sticky. Part of that is on the tariff side. We can say that because we know it's coming from the goods. Many of those increases are going to begin to fall out as we get into Q2 of next year. In addition, if you look at other components of the CPI, you look at some of the service areas, you look at housing, they are starting to come down. So the notion that inflation is just permanently stuck at 3%, I don't think that's right either. I do think that we are going to begin to see prices come down, the CPI come down as we get into Q2. And also, and this is a big debate, and it's also a longer-term issue, there is an argument, which I think is right, that AI is ultimately deflationary. And as we start to see more of an impact on corporations, on productivity, on efficiency, that's also going to help bring prices down, keep inflation below where it might have been.
Russ, let's say that the retailers come out with earnings that are pretty good, and they talk about a consumer that's strong, that's able to go out there and keep spending, although perhaps more choicefully or more limitedly is a more accurate way of putting it. And let's say that the jobs report comes out not showing that much distress. Can the Fed still cut rates?
Well, that's, I think, a great question. This is why you might even get a weak payroll number, and depending upon how weak it is, the market may actually react positively. But I do think, the Fed has made it very clear the December cut is now more in question. I do think the payroll number is going to be critical. But we know from the consumer side is that we do have a bifurcated consumer. There's definitely pockets of weakness. We've known that for some time. Part of that is a lagged effect of rate hikes a few years ago. Lower income consumers are struggling more. The flip side of that is you've got an older affluent consumer that has benefited from stock market gains. They've benefited from generally higher rates over the last couple of years because it's meant more income on their cash, and they're still spending. We are seeing that in travel and many parts of the economy where spending is holding up remarkably well.
So I guess that what I'm struggling with is if the Fed doesn't cut rates, doesn't have the accommodative backdrop that so many people are expecting, can you still be bullish on stocks? Or is the bullishness on stocks predicated on the idea that the Federal Reserve is going to focus on the bifurcated economy and then the lower tier of that economy and not worry about a bubble, not worry about inflated equity valuations, and just say, that's not our job?
I think it's a good question. There are three pillars in my mind to why stocks can go higher. One is the Fed, and as you rightly point out, if they don't cut, okay, that calls that a little bit into question. But there are two others that we're pretty confident about. One is the economy is in good shape. Now, obviously, the labor market is a bit soft. We don't know exactly how much, but it has softened. But the reality is, if you look at growth expectations, it's not crazy that you're going to see some acceleration in the beginning of 26 on stronger CapEx, on a very likely powerful refund season. So that's one positive. The second are earnings, and obviously we continue to see that march higher, and a lot of that is driven by tech. Now, there are legitimate questions about valuations. There are legitimate questions about CapEx. But if you look at why tech has continued to lead, you don't have to look much further than the earnings we've seen in Q and Q3 and probably in Q4. That probably it continues into 2026, regardless of what the Fed did. Again, these companies, their earnings outlook is not really going to be driven or impacted that significantly by whether or not the Fed cuts a quarter point in December or they don't.
Ross, when it comes to tech, NVIDIA is going to be really important this week. An analysis of all the 13F filings, you see an even split amongst sentiment in terms of those that are bullish and taking some money off the table when it comes to NVIDIA. Why do you think that is, such an even split right now?
Well, I do think there are a lot of questions about the CapEx and the build-out, but the reality is the spend going to continue? Yes, we believe it will. So, you look at where we started the year, you're talking about maybe around $350 billion by the 4 hyperscalers. That's gone up for 2025. Again, it's very likely to go up again in 2026. Now, you can debate, is it an arms race? We do think a lot of this is ultimately going to lead to gains in productivity, and we're going to continue to see a broadening out of that CapEx spend. It's not just about the chips. It really extends further into the economy, in construction, in HVAC, in the industrial side, in energy. So again, I think it's a mistake to only focus on one company.
So in that sense, the Treasury Secretary talked about this weekend, this idea of parallel prosperity, Main Street and Wall Street both doing well. Could AI be the gateway to that?
Yes, I think it can. I think when you consider both the build-out we're seeing, but also, again, the long-term implications for productivity. There are a lot of concerns right now about the labor market, and there are anecdotal stories about our companies hire fewer entry-level individuals, workers because of AI. Truth is, it's early days. We don't know yet. What we do know is that we are seeing increased adoption. We are seeing early signs of productivity, and that's something long-term that I think, as the Treasury Secretary alluded to, is a positive for the economy.
Hey, Russ, a lot of people hope you're right. It's got to catch up, sir. As always, Russ Kostrick there of BlackRock on financial markets worldwide and the tech theme. In credit over the past few weeks, some select convulsions starting to develop in the credit markets. Is that a fair way of characterizing things?
I think that's a beautiful way of characterizing things. Select convulsions. You can see those select convulsions in Oracle bonds. You can see the select convulsions in credit default swaps attached to some of these names. And you see those convulsions in people pushing back on certain corporate debt issuance that just seems a little bit too speculative. The glut of bonds that has been sold by big AI tech companies has just been astronomical over the past 3 months. This is the reason why people are getting very concerned.
We often talk about healthy pullbacks. I think a greater scrutiny at the foundations of some of these spending commitments is a healthy thing. And it's a healthy thing we're starting to see in credit markets. Just that subtle pushback, just to say, you know what, we've got some questions here. Let's see some answers.
Are we going to supply debt to a company that's earning nothing, that's supplying CoreWeave, that's a speculative rated company, to supply NVIDIA and OpenAI with services that they don't have to supply themselves? It raises this question of the circularity, but also what the outlook is for how much energy use, data center usage, and what the paradigm's going to be in 5 years at a time where people can't see 2 feet in front of their face when it comes to AI.
NVIDIA's got to carry a lot of weight later this week when we get those earnings. Look out for that on Wednesday. Equity futures on the S&P 500 this morning, positive by 0.2%, with an update on stories worldwide with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Good morning, John. President Trump said House Republicans should vote to require the Justice Department to release its files on Jeffrey Epstein, reversing a previous position he had. Trump has been under increasing pressure from some within his party to release the investigative materials on the convicted sex offender. The House is scheduled to vote on it tomorrow. Meanwhile, tensions are ramping up between China and Japan. China's state media warning Beijing is prepared for economic retaliation for Japanese Prime Minister Sanae Takaichi's comments on Taiwan. This after Takaichi said a Chinese attack on Taiwan could trigger a Japanese military response. And U.S. airlines are resuming normal operations this morning after more than a week of government-mandated flight reductions. The FAA announcing it is lifting cuts across 40 major airports. The agency said staffing levels have continued to snap back since the shutdown ended last week. That's your Bloomberg Brief, John.
Yahara, thank you. Appreciate it. More from Yahara later this hour. Up next on the program, taking game at Russia.
They're passing legislation, or the Republicans are putting in legislation that very tough. So any country that does business with Russia will be very severely sanctioned.
A conversation up next with Terry Haynes of Pangea Policy, live from New York City this morning. Good morning.
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Payrolls Thursday just around the corner. Your estimates look like this. We're looking for 50K on Thursday. That's your median estimate. The range is pretty wide. The high is 75. Thank you, Deutsche Bank. The low is 40. And the estimates will keep pouring in going into that number.
And what do we do with them? We're not going to necessarily have an unemployment rate. We're going to have to wait for the real income levels. When we look at Friday's data, that's when the inflation-adjusted real wage is going to come out. So what do you do with this? It's backward-looking. It's messy. It's something that a lot of people are going to question. There isn't a reference point. It's already been messy. You know, pick your narrative.
Let's go with Neil Kashkari, Minneapolis Fed president, who came out recently and said that he didn't like the rate cut that was delivered at last month's meeting. And one of the reasons he didn't like it is that he was seeing signs of spending pick up again after the summer. Is that validated in the jobs number for the month of September? I know it's backward looking, but it's all we've got. And I just wonder if it validates some of the hawks out there going into the December meeting.
This is the reason why I think a big upside surprise could be the most negative for markets, because it would really edify this idea that there's a lot of pent-up strength that people are underestimating in the underlying jobs economy.
Equity futures on the S&P into all of that, just about positive by 0.3 on the S&P, on the Nasdaq up by 0.5, on the Russell so far this morning, up 0.1%. Under surveillance this morning, taking aim at Russia.
They're passing legislation, or the Republicans are putting in legislation that very tough. It's sanctioning, et cetera, on any country doing business with Russia. They may add Iran to that, as you know. I suggested it. So any country that does business with Russia will be very severely sanctioned. We may add Iran to the formula.
So here's the latest this morning. President Trump ramping up the pressure on Russia as he backs a proposed bill to sanction countries doing business with the country. Bloomberg's Mika Solner joins us now for more. So, Mika, I can think of some pretty big economies doing business with Russia still, and it includes the Europeans. Mika, who does this include?
Yeah, absolutely. I mean, this is a huge shift from President Trump when it comes to his posture on Russia, but this is going to include a number of countries, and particularly U.S. adversaries as well, so countries like China and India, and as the president just mentioned before, he wants to add Iran to it. So this is a key part of the president really trying to shape his foreign policy legacy here as well.
Do we know if there's going to be some runway provided to these countries to actually de-escalate, de-emphasize their relationship with Russia?
Yeah, I mean, I think that there's a lot of details that are still being worked out. This has been a long time push by Senate Republicans and Senate Democrats, I might add, on the Hill, who've had this bill and have been advocating for it. But I think that, you know, this is largely indicative of the president's frustration with Vladimir Putin for him to try and escalate tactics like this on the global economy. So we're going to have to see, you know, what happens here.
Mika Solner of Bloomberg down in Washington, D.C. We've heard this. It's been building for a while. The push against Russia, the push against countries, economies doing business with them, notably China, India. Who else does this apply to?
Well, I think really it's about China and India, because this is going to really force China to either have to go around some of the sanctions or deal the blow from the United States. At the same time, that the Treasury Secretary over the weekend talked about the fact that they don't have the final agreement in ink, fully in place, and they expect that to happen by Thanksgiving. Is this now another point of leverage Washington is trying to use?
Joining us now is Terry Haynes of Pangea Policy. Terry, welcome to the program. What is the president's big effort around Russia all about, and will he actually follow through?
Good morning, all.
I'm on Team Anne-Marie this morning to pick up on that point about leverage. This is about a lot of things, but one thing it is exactly about that. What you can read between the lines from Secretary Bessent yesterday in a long interview is that the supposed current deal that's happening between the United States and China is now taking a lot longer to paper than was widely thought, even that Bessent had said. So it's about that. It's about pushing India, I think, on getting a trade deal done. Secondly, thirdly, I think it's about pushing the Europeans on getting serious on Russia as well. The president has long said that the United States policy only works well if the Europeans are willing to pull equal weight here, and Europeans have been tap dancing on core questions around Russia and frozen Russian assets for years, literally. And either they're going to get serious or the Ukraine thing is going to drag on for even longer.
Terry, the administration is going to use this leverage as part of the destination, but when we get to the final destination, do you think Congress will end up passing this bill?
I think they can, sure. The willingness exists, the votes exist. This is a lot more up to what the president wants to do in terms of how he wants to use that particular pressure point. One thing I saw in Trump's impromptu remarks there, frankly, was an ability to take the thing off and put it back, take the thing off the back burner and put it on the front burner. Russia may dismiss that, but I think they probably dismiss that at their peril, considering that the president has the ability, thanks to Congress, to actually get this thing done if he chooses.
The Treasury Secretary seems to be throwing cold water on a Wall Street Journal report that says China is trying to ratchet back rare earth minerals that go to companies that help the U.S. military. Do you think China will amend that, or is this something that they're going to stick with?
I think the track record here is that China has been, I think Bessent referred to April 6th in that interview as being the date in which the hijinks started on rare earths. I think they've been doing this for 6 or 7 months. I think the base case has to be that they'll continue to do it. So what from a market's perspective, you have to take that into account. You also have to take into account that the United States is going to continue to redouble every effort it can to get rare earths and start rare earths that are not of Chinese origin.
Terry, how much of a conflict is there between trying to get leverage in some of these trade talks and trying to get cost of living gains for the United States and for average consumers, given the fact that that seems to be a renewed push by the president? Is there a conflict here?
I think there's an order of precedence here, and the order of precedence from the administration's point of view is that they need to get the trade deals done, as many and as much as possible, and move forward from there. And they will. They tend to put their stake out kind of far and in a pure sense, and when work back and cut back as they need to. And I think that's a lot of what you saw with the foodstuffs tariffs last weekend or last week. Bessent talked about this as being mostly a matter of existing trade deals coming or new trade deals coming into force. I don't think that's quite the case. It's part of the case, but what they'll continue to do is continue to work on the trade deals with the idea that they can calibrate them pretty much in real time as they need to.
Terry, just to circle back, full circle to the beginning of the conversation, how much can this administration go really hard on China with sanctions on oil if it raises gasoline prices in the United States at a time where there's a real cost of living focus?
I think the priority for the administration, there's a balance here, but the priority for the administration is going to be making sure that China understands that it will use the leverage of it that the United States has, and that's certainly a big part of it. I think the president cares a lot about gasoline prices, but one reason why he talks up so much the price of gasoline coming down, frankly, I think is he wants to buy himself some wiggle room with the public to to make sure that if he ends up having to drop a dime on China on oil, that people understand the what's and whys.
Terry, it's good to hear from you. Thank you, sir. Terry Haynes of Pangea Policy on the latest in Washington. One of the top stories in Washington, if you're tracking the Epstein story, many of you are. The president posting this on social media over the weekend, that House Republicans should vote to release the Epstein files because we have nothing to hide and it's time to move on.
So this is a reversal from what the administration was trying to do, which was get Republicans to strike this down and not vote for it. I think the administration realizes that this was going to go through anyway, so you might as well say, I don't care, let it come out, because pushing it was not working regardless. So now at least take the high ground and then deal with the fallout after.
The president going on to say the House Oversight Committee can have whatever they are legally entitled to. I don't care. The word to the president over the weekend. Coming up on the program, we'll catch up with Torsten Slock of Apollo on the case for a re-acceleration in the U.S. economy. Plus, Danny has your morning movers. A big move on Alphabet today. The stock is up by almost 5%, leading the Mag 7 higher on a bigger stake from Berkshire Hathaway. That stock is up by 4.8% in the pre-market. Equity futures doing okay. Futures up by 1/3%, following a very, very volatile week on Wall Street. The epicenter of that, big cap tech. From New York City, this is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Not enough volatility to stop these equity market bulls. Mike Wilson of Morgan Stanley looking for 7,800 year-end 2026. Max Kettner of HSBC publishing earlier on this morning. We think the probability of a melt up into year-end, particularly in equities, is much greater now. Max Kettner of HSBC.
Yeah, just joining the fray, talking about how maybe you should be worried. No, just kidding. You absolutely shouldn't, because ultimately the earnings are going to be there. Lots of recent pushback on our continued constructive view are around potential canaries in the coal mine. Instead, the belt up really is what keeps on burning the bears and what will keep going.
Last week did not feel like a week of gains, but we squeezed out a week of gains on the S&P 500. Up again this morning, up by 0.25% on the S&P. On the Nasdaq 100, higher by 0.4. In the bond market, the 2-year kind of anchored around 350, 360, still in that range, 359.55, and a major debate developing at the Federal Reserve. On the FOMC, the chorus, the hawkish chorus, is growing louder and louder into payrolls on Thursday.
So on Friday, Dallas Fed President Lori Logan said, I think it would be hard to support another rate cut unless we were to get convincing evidence from the data. What is convincing evidence, especially without an inflation report, because it's unlikely we're going to get CPI, and we're not going to get a lot of key metrics around some of the data that does get released. So again, what is the reaction function from a Federal Reserve that's operating in the dark?
What is a good number? 50K is the median estimate on Thursday. Is that a good number? 50K is the median, the high 75, the low is 40. Payrolls Thursday is just around the corner. Trying to get used to that one. As we count you down to the opening bell, about 3 hours away, let's get you some morning movers with Danny for more. Here's Danny Berger. Hey, Danny.
Hey, John. Good morning. The good number for Alphabet is $4.9 billion. It's the amount of the stake that Berkshire Hathaway has built in Google's parent company, Alphabet. Reported filings at the end of Friday. That's giving a boost to Alphabet shares. 4.8% is where we're trading in the pre-market. For what it's worth, Berkshire Hathaway also trimmed its Apple and its Bank of America holdings. Elsewhere, we got some earnings from the Chinese EV maker XPeng. They are listed here in the U.S. They had a disappointing outlook and a disappointing set of scores. The issue for them is that they had promised profitability, or at least their goal was for profitability next year. That throws them into question. Shares declined 3%. This company has also been spending a lot, much like Tesla, and trying to become an autonomous company and build things like humanoid robots. Finally, a little bit of sell-side action. Morgan Stanley out with a note on some hardware makers. It gives a double downgrade to Dell to underweight, to HPE. It's a downgrade just to neutral, saying that some of the memory chip super cycle, if there's downside risk there, and that has bad implications for the hardware providers like Dell, like HP. John.
Hey, Danny, thank you. Appreciate the update. More from Danny in about 60 minutes from now. On a radar this morning, President Donald Trump backing a Senate-proposed bill that would slap Russian trading partners with severe sanctions. The bill would hit countries that buy Russian energy like China, India, and potentially Iran with 500% tariffs. Elsewhere, the U.S. Trade Representative Jamieson Greer heading to Europe this week after calling out EU trade practices. Greer pointed to European regulations and barriers impacting U.S. exports into the continent despite the trade deal reach earlier this year. And finally, the Treasury Secretary Scott Bessent saying President Trump's $2,000 tariff dividend payment to U.S. citizens would need congressional approval. One estimate saying the plan could potentially cost the U.S. double what it's projected to take in for all of 2025.
So Treasury Secretary Bessent has been trying to thread a needle with respect to the $2,000 checks for quite a while. He's been talking about initially maybe we could just use some of the money that we've gotten in that people are going to be getting as tax rebates for the $2,000. That didn't work. So now he's talking about, well, maybe we can't do this unilaterally. And it goes to sort of the deep anxiety. How do you maintain a budget, balanced budget kind of policy while also providing fiscal stimulus? And this is going to be a conundrum right now for the administration.
Not only do we need Congress in order to do this, you also need to make sure the Supreme Court doesn't strike down your IEEPA tariffs in order to have those tens of billions of dollars you brought in from the tariffs to then redistribute them to Americans. That's the first thing that needs to happen. The second thing, it's very interesting hearing this administration talking about checks when for months, all I heard during covering the Biden administration, when inflation was sky high, that it was goosed by the Biden administration because they sent out checks during COVID. So if you're sitting at the Federal Reserve, you have to be concerned looking at this, that this might just impact inflation.
There is a bigger and bigger effort to make this too big to strike down at the Supreme Court. And the Treasury Secretary offered a curious legal argument that I'd love to hear from lawyers about over the weekend, that it's very difficult to strike down a signature policy of a sitting president. I'm not sure how that's going to stand up in a Supreme Court later on this year.
Having studied constitutional law, I'm not sure that a signature agenda by a president has legal clout for the Supreme Court or in the Constitution. That said, it does highlight how perilous it is for the Supreme Court to weigh wholeheartedly and undermine this particular policy, because they will be accused of politics. And this will really make it difficult for them to do this in any kind of comprehensive way without also laying out exactly how any kind of remediation would take place, right? How do they do that while still remaining credible?
The other thing the Treasury Secretary said is he doesn't think the Supreme Court wants to wade in the mess that this would become if they have to start distributing funds back to businesses. But remember, even if IEEPA is struck down, they will find a way to enact tariffs, but it is going to push the timeline well into 2026, and that is going to come ahead of key midterm elections.
The economy very much in focus. Investors awaiting the delayed September jobs report due out on Thursday. Torsten Slock of Apollo making the case for a rebound in the economy, writing Liberation Day was almost 8 months ago. Fiscal and monetary policy are easy, and easy financial conditions point to a re-acceleration. Torsten joins us now for more. Torsten, welcome back, sir. Are you expecting to see some of that in the September jobs data, or is that too early?
That is too early, because the risk, of course, is that in October we had the government shutdown, and of course the chance is that there therefore might be some weaker data for the month of potentially November also, once we do get that. But I do expect that once we look into next year, we have still relatively easy financial conditions with, of course, the stock markets, with some wobbles more recently, but still very supportive. IG spreads, high yield spreads, loan spreads, very supportive. You also at the same time have that you have tailwinds because Liberation Day is now 8 months ago. And finally, we also have general tailwinds because we are going into an election year. And therefore, if we do get the $2,000 stimulus checks that you just talked about, that will certainly also be helpful. So in total, I do think that the market is too negative on the economic outlook, and the risks are actually rising that we may have some re-acceleration once we get into 2026.
Torsten, is that a re-acceleration that comes with jobs growth or not?
I do think that it will come with job growth. It is actually very impressive when we think about it, that over the last 8 months, think about what we've been through, the shocks that the U.S. economy has been facing, not only when it comes to, of course, trade war, also the shocks coming from immigration. And as you just mentioned, Jonathan, the non-farm payroll equilibrium is now down at 50,000. According to the Dallas Fed, it's as low as 30,000. So therefore, the bar has been lowered. And therefore, I do think that if we get numbers that are in that range, then we should look at that and say, this is exactly where we should be. So in that sense, I do think that the economy has been remarkably resilient for the last 8 months. And I do think that as the trade war gets more and more behind us, I do think that a lot of the fog will be lifting.
Torsten, to Anne-Marie's point earlier, how important are the retail earnings this week? The Walmarts, the Targets, the Lowe's?
They are very important, and they do fit into the broader conversation about the K-shaped recovery. So it is still the case that higher income households continue to benefit from asset prices having been higher. And of course, also very importantly, because the level of yields is higher, that means that not only are high income households benefiting from asset prices going up, but they're also benefiting from the cash flow they get in fixed income is at the highest level in decades, both when it comes to public credit, but also private credit. So therefore, the tailwind to high income households continues to be strong. Lower income households have been suffering from interest rates going up. They have also been suffering from wage growth being weaker than what you see for high income households. But broadly speaking, again, with job growth still steady and stable, and again, the trade war uncertainty more and more behind us, and especially now, think about the one big beautiful bill. The CBO is estimating that that will lift GDP growth next year by 0.9%. That's a very significant tailwind from fiscal policy. So all those things combined argue for the economy beginning to look better as we get into 2026.
And Torsten, conceivably, this could argue for the Fed not to cut rates, and explains why there has been a more hawkish tilt to some of the communication that we've gotten from Fed officials recently. What do you think the consequences would be if the Fed cuts by another 50 to 75 basis points by mid-year next year?
Oh, that would be very serious, because think about it. We already have an outlook. If I type ECFC Go on my Bloomberg screen and look at the quarterly profile, it is already the case that the consensus expects inflation to be 3% for the next 18 months, while at the same time growth is slowing down. So to your point here, Lisa, if we now see that growth is actually not slowing down, and we already have inflation at 3% in a slowdown scenario, the risk is, of course, that inflation could be even higher than 3%. So cutting into that would, of course, be a major mistake. So I do think that the risks are rising, that we are, again, underestimating that inflation has a lot more tailwind over the next several quarters.
With that as a potential backdrop, what would it mean then if the government gave everyone $2,000?
That, of course, would provide even more fuel here to the economy. So if we already have the one big beautiful bill lifting GDP by almost a full percentage point, we have trade war uncertainty beginning to be more behind us. If we still have stock prices, we are discussing the AI bubble, all of us, very intensely at the moment. But given that there's still tailwind in the stock market that's supporting, of course, high-end consumer households in particular, all those things combined, they definitely argue that if you send out $2,000 checks, then you just run the risk that you will overheat the economy even more.
Torsten, then we're introducing a new Fed chair on top of all of this as well in May of next year. And I just wonder, Torsten, how difficult it is right now to offer any kind of outlook on Fed policy for next year, including that second half of next year, which includes that new Fed chair.
That's right, Jonathan, and that's exactly why I think that the FOMC members are really coming out with quite strong voices at the moment. Lori Logan, first of all, saying that she did vote for the cut, and then subsequently saying, well, I didn't really want a cut. And now also on Friday, it really begins to emphasize more that, well, we still need to get inflation under control. And whereas you have, of course, other FOMC members, Steve Moran in particular, of course, saying that we should be cutting sooner rather than later, the dots are really moving in very opposite directions here. And it's becoming much more outspoken from the FOMC members what exactly that their views are, because this debate, to your point, Jonathan, is really still very, very early, in particular when you have these very strong opinions about what are the tailwinds and what are the headwinds at the moment.
Torsten, do you think this is a new era for the Federal Reserve, where we're going to see greater dispersion, at least publicly, from policymaker to policymaker? And ultimately, what do you think the consequences are for financial markets?
I think it is a new era because we do get, by definition, of course, a new Fed chair in May of next year, because that's when Jay Powell has to step down. And then we will, of course, figure out if that Fed chair, of course, is going to take the same view as Steve Moran, or if that Fed chair is going to have the view of Lori Logan. And if the risk is, of course, that Fed chair comes in and then begins to say, well, interest rates could begin to go down because maybe the economy can handle lower rates, then, of course, the fear could be that inflation is going to be higher. So the debate, exactly to your point, Jonathan, here around what should we put weight on, especially on the dual mandate? Should we put weight on inflation still being at 3%? Should we put weight on Challenger Gray and Christmas, showing that there are maybe a bit more announced job cuts? I mean, this is still a very, very important debate, and we will not know the answers to this before we get into January. Remember also the non-farm payroll numbers for November are normally collected in the month, the week of the 12th. And in the month of November, the week of the 12th was last week. So that means that we get closer to Thanksgiving. That means that even there may be some distortions on the data for November. Yeah. So that means that we may get all the way into next year before we really have a better handle at how strong is the U.S. labor market. So that's why we still have a fairly foggy situation for the next several months.
This will be fun, Torsten. That's for sure. Torsten Slok there for Apollo. Torsten, thank you. Appreciate it. Looking at not just next month, but of course next year as well. I think it's fair to say for most investors, for most economists, they assume the incoming Fed chair is going to be very close to Governor Myron and maybe less close to some of the hawks out there on the FOMC.
Which is the reason why a 50 to 75 basis point in additional rate cuts almost is baked into the market valuation expectations for next year. When you look at some of the forward-looking expectations, they almost all talk about accommodative conditions and that sort of code for Fed rate cuts. I just wonder, are we looking at a Fed with a new mandate? Are we looking at a very different Fed that is transforming akin to a 1977 style kind of transformation?
Well, they certainly weren't given a new mandate. Were they?
Well, they might be emphasizing other parts of the charter coming back from 1977. Just saying.
Just looking through hot inflation repeatedly, apparently. Equity futures on the S&P this morning higher by about 1/3 of 1%. Let's get you an update on stories worldwide with your Bloomberg brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Thousands took to the streets of Mexico City in protests of President Claudia Sheinbaum's administration and the slowing economy. The protests turned violent, causing the police to step in and regain control of the area. Mexico City's chief of police said that 20 people were arrested and 100 officers were injured. Meanwhile, former Fed Governor Adriana Kugler was found to have violated ethics rules and was subject to an internal probe when she stepped down back in August. Documents released over the weekend showed that Kugler repeatedly broke rules over securities trading by purchasing and selling shares of stocks like Apple, Southwest Airlines, and Kava. And Jeff Bezos is back in the entrepreneurial seat. The Amazon founder has created an AI startup called Project Prometheus, which focuses on the engineering and manufacturing of computers, cars, and spacecrafts. Bezos will help manage the company as its co-CEO. This is Jeff Bezos' first formal role in a company since leaving Amazon back in 2021. Can't just retire, right? That's Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. More from Yahara in the next hour. Up next on the program, progress between the U.S. and China.
I am confident that post our meeting in Korea between the two leaders, President Trump, President Xi, that China will honor their agreement. We haven't even finished the agreement, which we hope to have done by Thanksgiving.
Up next, we'll catch up with the former White House trade advisor, Kate Kalukowicz, live from New York City. You're watching Bloomberg TV.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, tap the bottom, make the sushi shape more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
There's been a shift down in Washington, D.C. around affordability. There's been a shift within this White House. Think about the policies that have emerged in the last week or so. Tariff relief, beef, coffee. We're talking about $2,000 checks. And on top of all of that, attempting to open up the mortgage market as well. Sort of a 3-pronged effort over the last week, and I expect there's more to come.
The midterm elections were a game changer with respect to this administration's policies and a renewed focus. And the question for a lot of people in markets is, how much do you bake in extra fiscal stimulus in the first quarter of next year in response to this outcry from the population, clearly in the election results, showing a real focus on cost of living?
Treasury Secretary said over the weekend, we are not going to tell people how they should feel. They think that the Biden administration told people that this is just a vibe session, prices are not higher. The problem is, that's what the Treasury Secretary is saying. Last night on the tarmac, the president came out and said, go to Walmart. Your Thanksgiving dinner is 25% cheaper. Now, maybe certain Thanksgiving items are cheaper this year, but the fact of the matter is, everyday items for kitchen tables of American families are higher. Bananas, beef, coffee. And this is why they're lowering the tariffs on some of these goods.
The Treasury Secretary learned the right lesson from the Biden administration. Don't gaslight the public. If the American public tell you they don't feel good right now about the U.S. economy, they don't feel good right now about the U.S. economy. You've got to do something about it. The problem that I think economists would have right now, the amount of credibility economists have left, I don't know, but the problem they've got right now is that some of the policies on the table down in Washington, D.C. have the potential to make the situation worse, to put up prices, not bring them down.
The issue has to be a supply-side response, which maybe is relieving some of the tariff barriers and getting more imports. At the same time, that really undermines some of the trade agenda, which goes to the heart of what the president has been trying to do. Ultimately, there has to be a good look about how you can generate some sort of stimulus for lower-income individuals without causing the kind of inflation that we saw a couple of years ago.
Equities this morning doing better. We're higher by about 1/4% on the S&P. On the Nasdaq 100, higher by 0.4%. Trade very much in focus. Under surveillance this morning, progress between the U.S. and China.
I am confident that post our meeting in Korea between the two leaders, President Trump, President Xi, that China will honor their agreement. The magnets will flow freely as they did before April 4th. We are going to set up a dashboard of very quantitative metrics that they are going to have to meet. We haven't even finished the agreement, which we hope to have done by Thanksgiving.
So here's the latest this morning. The White House expecting a deal between the U.S. and China will be finalized soon. The Treasury Secretary, Scott Bessent, signaling both countries are still negotiating details over rare earths. Joining us now to discuss is your former White House trade advisor, Kate Kalukowicz. Kate, welcome back to the program. I just want to build on what we were discussing around the table just moments ago. $2,000 checks, tariff relief, attempting to do something about affordability in this country. Kate, how important is that developing backdrop for these negotiations with China?
Well, they're very important for the president's trade agenda. I mean, I think we saw over the weekend a number of new trade deals announced in addition to the progress they keep trying to push on China. All of these deals, these winnings for the president are important in the message that he's delivering to the American people, that just stick with me. We're going to remake the trade agenda that will be better for the United States. We just have to weather these bumps. This has been the message all along. Of course, I think his team realized that, tariffs were increasing costs on regular goods for everyday consumers, and particularly on things we can't produce in the United States. And so this easing, I think, is a recognition that perhaps some of the tariffs are not in our interest long term, and it's an indication that he's willing to consider that.
Kate, what do you think is left to really understand between Washington and Beijing in order to ink this agreement?
Well, Anne-Marie, I think we just continue to return to this status quo problem because China and the United States keep failing to get leverage over one another. We have this discussion about rare earths, it seems, every time that the two sides get together, indicate progress. We have progress. The progress gets challenged by some sort of licensing regime, and we end up in the same place. I think we can all be hopeful that this is the real deal this time, but I continue to be a bit discouraged by every time the Treasury Secretary or Trump officials signal that they're not quite there. I think that's because neither side is fully prepared to give away the leverage it has yet.
Could the U.S. sign an agreement with China restricting rare earths to some companies that have ties to the U.S. military?
Well, I suppose anything's on the table. China controls these rare earth metals, which are so critical to the U.S. economy, from military to more traditional sectors like autos. China has kept a stranglehold on these and restricted who gets them through a pretty complicated licensing regime. What the U.S. would like is for China to get rid of that licensing regime altogether, of course. But I suspect in the midterm, there is a potential for some sort of let's say, situation where certain companies are given priority over others.
Kate, do you have a sense of how quickly the administration is moving to solidify trade deals with strategically important countries that have some of the resources that the U.S. would need to be more independent from China?
Yes, I think that is absolutely a priority for the Trump administration because, of course, to change the dynamic with China, they are going to have to change this dynamic on critical minerals. Of course, before the president traveled to Asia, we had a very huge deal with Australia around some licensing and critical minerals deals in Australia. Last week, the president's administration, he announced a number of trade deals, including with Argentina, which will be another very key ally when it comes to accessing these critical minerals we don't have in the United States.
Hey, Kate, good to hear from you. Thanks for being here. Kate Kalukowicz there, the former White House trade advisor, weighing in on the trade situation. Here's a name in focus, Alibaba. This from the Financial Times over the weekend. A White House national security memo claiming that Alibaba Group provided the Chinese military with technology support against targets in the United States. That's a report worth taking a look at.
How much is this actually something that they found that really does highlight the potential connection between Alibaba and the military, which honestly, how surprising would it be given the fact that there clearly are national champions in China that have pretty intimate relationships with different companies? At the same time, how much is this additional leverage to try to get a sense of just how much the U.S. is willing to crack down on some Chinese companies?
What's interesting, too, is that the administration potentially could then use something that would be more of a nuclear option when it comes to Beijing, and any of these Chinese companies that need access to the U.S. capital markets, potentially they will not be able to list anymore in the United States.
That's the next step. That's how this escalates. Not saying it will escalate, but that's how it could escalate. You cut off access for U.S. investors to invest in some of these companies. If you go there, that's a massive problem because these companies are absolutely humongous.
Yeah, and a lot of people want to invest in them because they want to invest in both the Chinese tech story as well as the U.S. tech story because they seem to be developing a bit more in parallel right now.
We've got a lot to get through this week. If you're just tuning in, welcome to the program. Stocks are positive by a third of 1%. Big week of earnings coming up, including numbers from NVIDIA. We'll catch up with Sarah Hunt of Alpine Saxon Woods, Henrietta Trays of Vader Partners, Airbus executive Christian Schreier, plus Stephen Parker of JP Morgan Private Bank. The second hour of Bloomberg Surveillance up next.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It is hard for me to see an economy that is not continuing to move forward in a world where the consumer is still so engaged.
The consumer spending numbers and the credit card data numbers have still been robust.
There's just this creeping level of inflation.
We do expect inflation to stay at least above what the Fed's target is anticipating.
There is enough evidence here for the Fed to continue to cut rates, at least one more time.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500, and in some way to last week's very painful rally. We're up 0.1% last week, believe it or not. We're up by 0.2 this morning. On the NASDAQ 100, up by 0.4. What a week we've got in store for you. Earnings from NVIDIA, some of the major retailers, Home Depot, Target, Walmart, plus a very, very delayed September payrolls report.
It's all cylinders that have been really driving this market. You have questions around the consumer, maybe some color from Target and Walmart and Home Depot that will give you a sense of what's going on there. Then when it comes to Fed rate cuts, you get, of course, the non-farm payrolls report, which is, of course, for September, not for October, let alone November. But we also do get some Fed speak when it comes through just all the speeches as well as the meeting minutes on Wednesday. And then, of course, you have NVIDIA. This question of how far the AI boom or bubble, depending on your perspective, can ultimately go.
I'm going to pick one. Let's run with chops. Here are the estimates right now. Median estimate 50K, the high 75, the lows 40. Torsten's Lock of Apollo on the program about 30 minutes ago. Torsten making a case that 50 is pretty decent. 50 is better than good. 50 is enough to keep this Fed on hold.
That was actually something that one of the Fed, regional Fed banks talked about, the idea that because of the lack of immigration and the lack of population growth, you need a much lower break-even rate. What do we do with that number? We're not getting the unemployment rate. We're not going to get wages until the next day. And it raises this reaction function from the Federal Reserve. Are they focusing on the wrong metric at a time where they don't have a lot of other data, including the CPI?
Torsten making a case that we could see a reacceleration in early 2026. We asked the question, the obvious one, for the politicians out there right now. Please tell me that GDP growth comes with some jobs growth, because we've got a problem right now. That problem is affordability. And this White House has seen a shift develop, a real shift develop in the last week or so.
Absolutely. You can see that for how the president speaks, how his Treasury Secretary speaks. Scott Bessent over the weekend saying he is not going to do what he thought the Biden administration did, which was tell Americans how they are feeling right now. But what's the administration doing? They're thinking about $2,000 dividend checks when it comes to the tariff money coming in. That might actually increase inflation and become a problem. The other thing, notably, this administration did when they talk about their central policy being tariffs, they actually lowered the barrier when it comes to tariffs for certain products that consumers are saying are just too high. Coffee, bananas, beef. Omaha Steak CEO talking about $10 a pound for ground beef. That is going to be a problem heading into the midterm.
The good news for the Treasury Secretary is right now in the middle of November, 10-year bond yields are closer to 4 than they are to 5. Yields are down again today by 3 basis points, so let's call it 4.12. Everything we're talking about that the White House might be doing might be a case for high yields and not lower yields. And the Treasury Secretary has probably got the same idea, the same worry about what could develop if we start handing out checks for $2,000 here, there, and everywhere.
Which is the reason why you've seen Treasury Secretary Scott Bessent really kind of try to thread a needle, start talking about, oh, this is money that's already going back to people, that didn't work, and then talking about, oh yeah, guess what, this is actually going to need some congressional approval, so I can't do this single-handedly. This is clearly a difficult thing for him to swallow based on the balance sheet considerations as well as inflation.
Well, remember, the president comes out with sometimes unconventional, sometimes controversial, extreme ideas, and then it's the Treasury Secretary's job to go out there and soothe the market.
The market's been soothed. We're up about 0.1% so far on the S&P 500. Last week was crazy, so volatile, and squeezed out a weekly gain of 0.08% or something like that on the S&P 500. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods as Wall Street looks to revive the equity market rally. Henrietta Trays of Vader Partners as the White House weighs tariff dividend checks, and Stephen Parker of JP Morgan as AI ignites a new era for investing. We begin this hour with stocks inching higher ahead of key earnings from NVIDIA. Sarah Hunt of Alpine Saxon Woods writing, earnings estimates still seem to be faring well. And absent any bad news from NVIDIA, markets could stay on track for a positive end to the year. Sarah joins us now for more. Sarah, good morning.
Good morning.
What are the lessons from the recent volatility, if there are any lessons at all?
I think that there was a whole lot of things that were going on that created some of that downdraft. And I think, there was an earlier question about what's the most important thing that's coming up this week. I think it's a question of timing. If the payrolls was coming before NVIDIA, I'd say payrolls. But because NVIDIA is coming first, that's going to set a tone. And either payrolls are going to help that or hurt that. And I think that, if you get any more downdraft in technology, it's going to be hard to rally through the end of the year because there is some concern there and there's some concerns about valuation.
We've been speaking for years about the K-shaped economy. This week's the K-shaped market. Consumers been struggling. You've seen that in some of the restaurant earnings. We're going to see it in the retailers potentially later this week. And then there's NVIDIA. Can we close that K anytime soon in the equity market? Never mind the economy.
It's a bit tough because people are, if the technology story stays on track, people stay away from some of the retail areas where you've seen weakness. If there's a wobble, then people start looking at staples. Like you saw that downdraft day, there was some of the stocks that were doing okay, were the more value-oriented, more dividend-oriented, like those kind of stocks did better. I think there's an argument to be made that going into next year with valuations where they are, there should definitely be a balance in the portfolio, and you should have some of that, because if you get volatility, that's going to act better than some of the technology. And I think the volatility is just going to stay and get moved around from data point to data point.
Is NVIDIA the last tech company to actually feel the pain if AI isn't delivering on some of the promise that people expect?
Well, it's interesting to see the number of people who are, going publicly talking about getting out of their NVIDIA stakes. And I'm not sure if that's one of those, we want to move on to the next thing, or we think that's the top for NVIDIA. I think NVIDIA is in a good spot in terms of being able to keep bringing money in because people still need these chips. There is, to your point earlier, also a big depreciation cycle on those chips. So there is a round robin. It's not like you buy it once and you don't have to buy them again. So I don't know that NVIDIA is going to be the problem there. I think the issue is going to be who's making money with those chips and how is that return coming? Because that is the big question into the next iteration of AI.
This is the reason why Oracle has been so interesting, why OpenAI has been so interesting, why the CDS spreads and how much they've been blowing out has been so interesting, because there is a question about whether the rank and file company in the average economy is seeing the monetization from some of the new AI tools that they've been getting and whether that's enough to justify the massive spending and investment. Is anything that you're seeing seeming to suggest that, yes, we are getting to a place where we will see massive sea change kinds of earnings from the rank and file companies that could lead to that broadening out and a justification for AI valuations?
I think the hard thing is that to believe that that is going to be the case in the near term, it has to be about, to some degree, productivity, which has to be about not having as many people on the payrolls. And that's not a great thing right now because we don't want to see that happen. I don't know that we are yet understanding exactly how those tools are going to play into a variety of things, including productivity and better earnings, except to get rid of people. And so I think that you need to see some work cases where it's very clear that this is less about getting rid of people and more about making them more productive. And I think that's still not quite clear enough from the investment side to say, oh, I can see this going into this industry and that industry and that industry. That's what people are hoping for. I don't know that we're there yet.
Well, Lisa mentioned this earlier about how some Fed members are talking about the structural changes in the economy, like immigration, like these technology changes, which is why potentially there are shifts in the labor market. How does the Fed address that?
That's another question that having a whole bunch of 6 weeks of not having data does not help you at all, because that is trying to figure out what the right number is, to Torsten Slack's point, given all the things that are going on, is very difficult when you don't have enough data. You don't see weekly claims either, which also sort of informs you, even if it's not that week, the average of that starts to inform you. I think that's going to be one of the things that into 2026, you need to see some earnings growth because that's what's being built in, but you also need to see a labor market that people feel comfortable with. And I think that we just don't have enough information right now. And that's where the timing of that data coming in versus other things starts to be an issue. And the faster we get some of it, the better off we are. But it's going to be about what's happening now. I don't know that September is that informative because people were looking at the ADP numbers for October.
Two pillars coming out this week in terms of Wall Street for NVIDIA earnings and then Main Street for when it comes to Walmart. Could Wall Street continue to do well if the consumer's really struggling?
It's managed to do it so far this year, and the consumer has been struggling for a while, especially on the lower end. I mean, you've seen some of that delinquencies on the lower end in auto loans, delinquencies on the lower end in credit cards, but not on the upper end. That upper end spend has really been able to carry things, not so much for the retail sector, because as a whole, they need more than just the upper end, except the very high luxury stuff. So it depends on where that goes, and that's also where the labor market comes into play, because if you feel comfortable that you're keeping your job, it's easier to spend the money as it comes in. But if you don't, that's where people start to get a little bit more on the savings side.
Things are about to get really difficult for the American CEO. We've talked a lot about the difference between corporate earnings up there and employment down here. And the space between is where all the tension's going to play out. They've got to be very careful about how they talk about some of the progress and benefits they're getting from this technology. We've heard a lot of the banks talk about how they're going to keep the staff force, the workforce stable and get more revenue out of every single employee. I think they need someone, the head of Washington Affairs, alongside them whenever they talk about this issue, because the more you talk about greater productivity, greater technological advancements and fewer people, the greater the chance of the regulatory pushback developing down in Washington, D.C. And that would be a great shame, because what we've got in America, I think the secret sauce to this economy is fantastic labor market flexibility compared to, say, the Europeans. And I fear, it's my fear, I have this worry that we're just going down this path that just makes greater regulation almost inevitable if this is where corporate America wants to go. And you're going to see some regressive impact up front, some job losses early. Washington's going to push back. They're going to have no choice but to push back.
Which is the reason why every single CEO, you can listen to the earnings calls. Very few of them, except for Amazon, which really ballooned in terms of its staff recently, very few of them have actually said, we're going to cut jobs in response to AI. They say, oh, it's increasing productivity. Oh, potentially we could do more with just the same footprint. And you just wonder at what point that story will change, or if the rhetoric is going to stay the same, but the numbers start to move.
Sarah, it's good to see you. Thanks for being here. Sarah Hunt there of Alpine, Saxon Woods, PR down in Washington. Imagine how much they're going to have to spend on that.
Yeah, you know, what they have to spend on is training programs, because you can't fight a sea change. And that ultimately is what a lot of people are talking about. What's the strategy? There are plenty of jobs that are still required. And so you start to have to say, okay, do we need retraining? Do we need to focus people on different things? These are the questions that ought to take up more of the oxygen in D.C., frankly, and on Wall Street.
Unions have been fighting technological advancements for a long, long time. Talk to anyone down at a port in this country, talk to the European train driver. We've had the technology to have driverless trains for a long, long time. You will get the labor force to push back and to stop certain companies and certain industries implementing this kind of technology. We've seen it before, why won't we see it again?
The only difference I would say, and I don't know if this is optimism or pessimism, is the existential overlay to this. That if you do not keep up with this technology, there is this existential fear that you will become obsolete, that you will ultimately get overrun by China or by another power who gets better technology. So the only change in that narrative would be that there is this race, an almost arms race of technology going on that might supersede some of those impulses.
It's going to be the tug of war between the technology and the regulator over the next year and beyond. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. Tensions are increasing between China and Japan. China's state media warning Beijing is prepared for economic retaliation for Japanese Prime Minister Sanae Takaichi's comments on Taiwan. This after Takaichi said a Chinese attack on Taiwan could trigger a Japanese military response. Meanwhile, Bitcoin has fallen sharply after topping 126,000 last month, briefly wiping out all of its 2025 gains before stabilizing earlier. Bitcoin's total market value fell by about $600 billion from an October high, with some traders citing the 4-year halving cycle while others blaming global liquidity. And Apple is making big changes to its iPhone strategy. Sources telling us here at Bloomberg that the tech giant is developing a foldable model and a new high-end version with a hidden camera. Apple is also ending its traditional single fall product launch in favor of a new biannual schedule starting in 2026, releasing pro models in the fall and mid-tier models in the spring. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the program, President Trump's tariff checks.
Is he going to be sending these direct payments to Americans of $2,000 or more?
We will see. We need legislation for that. And again, President Trump is all about solutions.
Lisa, you said this. This is the second consecutive weekend that the Treasury Secretaries had to dance around this over the weekend.
Oh, beautifully done, by the way. Really impressive.
So we need Congress for $2,000 checks, but they don't need Congress for IEPA. Interesting.
Up next, Henrietta Trace of Vader Partners, live from New York. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Check out the week ahead. Retailers in America, look at this. Absolutely stacked, full of earnings throughout the whole week. Some of the highlights: Home Depot tomorrow, Wednesday Target, Thursday Walmart. The U.S. consumer very much in focus, not just for Wall Street, but for Washington, D.C. and this White House.
Especially given how much they're focused on cost of living. Not only cost of living, but housing. You've got every story for politics in this earnings season that we have coming up when it comes to Home Depot and Lowe's, housing market flat on its back. Any kind of negative reaction from those earnings will just embolden some of the mortgage proposals that we're hearing from Washington, D.C. And then a question of how much consumers are able to absorb higher prices or whether they're really pushing back.
One thing, though, that is going to happen this week is an important meeting for the president. He's going to be meeting with the Crown Prince of Saudi Arabia, Mohammed bin Salman. And when the president is dealing with affordability, he can continue to tap into potentially lower gasoline prices. And there is one country in the world that still maintains this idea of a swing producer that could flood the market with barrels of oil if the president is in need.
Just getting a red headline across the Bloomberg terminal. I'm going to share this one with you. This one's interesting. This comes from the Financial Times. I'll read the lead paragraph of the story for you. The UBS chair, Colm Kelleher, and the U.S. Treasury Secretary, Scott Bessent, have privately discussed moving the bank's headquarters to the United States as the Zurich-based lender explores contingency plans to leave Switzerland if the government does not back down on new capital rules. That story just dropping from from the Financial Times.
This seems like the nuclear option in the ongoing fight between UBS and the regulators in Switzerland. Just to give you a sense of what these proposed capital requirements look like, it would require UBS to hold an additional $26 billion of capital. In addition to what they already have, UBS has called this extreme and disproportionate and has been speculating that they could move elsewhere. How much is this a wonderful way to engender some sort of favorability in the United States at a time when that economy is doing very well and capital markets are robust, at the same time offering a threat to local regulators? It's kind of a perfect storm that makes a lot of sense right now.
This is to put pressure, and I just got back from Switzerland, and this is their crown jewel. This is to put pressure on the Swiss government to try to lessen some of these capital requirements so that UBS can operate in the United States and be competitive with the likes of JP Morgan, Bank of America, and all the other financial firms.
This is how you do it. That's exactly how you do it. That headline just crossed in moments ago. The UBS chair talked to Scott Bessent, the Treasury Secretary, about moving the Swiss bank to the United States. More on that in about 10 minutes' time. Under surveillance this morning, President Trump's tariff checks.
Is he going to be sending these direct payments to Americans of $2,000 or more?
We will see. We need legislation for that. And again, President Trump is all about solutions. And everything is on the table. That would be for working families. We'll have an income limit. Those could go out.
So here's the latest this morning. The White House saying President Trump's plan for $2,000 tariff dividend payments will need congressional approval. The committee for a responsible federal budget estimating the proposal could cost $600 billion or double the expected annual tariff revenue. Bloomberg's Mika Solner joined us now for more. Mika, welcome back. Just how is this one going to work?
I think that the administration is beginning to realize that it's going to be very difficult to allow these dividends to occur unilaterally. So they're going to need congressional approval. Now, with that, it's going to be very, very tough sell for Democrats on the Hill and even fiscally conservative Republicans who have long been a thorn in Trump's side when it comes to trying to bring down the debt. When they see that sticker price of how much this could cost, that's going to be a huge issue for the president as well if they moves through Capitol Hill.
Mika, it sounds good, and obviously people like it. We all want our money back. We pay a lot of taxes. But Mika, is there a lesson from the Biden administration that sometimes there are some unintended consequences of doing things like this?
Yeah, absolutely. And I think that the White House is extremely focused right now on the affordability push, a term that they said that Democrats made and weaponized against them. But they're very cognizant of the cost of living impact that many Americans are facing right now, especially ahead of the holidays. I think that they're in a squeeze and really trying to message and say that, you know, they're going to start feeling this relief as early as next year, but we're just going to have to see.
Mika Solner down in Washington, D.C. Thank you. Joining us now, Henrietta Trace of Vader Partners. Henrietta, that line from the Treasury Secretary, Scott Bessent, everything is on the table. Henrietta, what else is on the table?
I would recommend starting to take some of these tariffs off. That's really your first problem. It's the easiest way to get money back to the U.S. consumer. It eliminates some of these taxes that they've had to pay on. You've already seen it last week on coffee, on beef, on different agriculture products, bananas. Why not expand that? I think the Supreme Court's about to give them a really great opportunity to do that. We have 65% odds that SCOTUS is going to repeal the IEPA authority. Just let it stay lapsed. Boom, you got $1,800 back in the pockets of every household in America without the tariffs on.
Henrietta, when do you think we will get that Supreme Court decision? Because this may play into whether or not the administration continues to lower the tariffs on some agricultural and food goods.
Yeah, Anne-Marie, that timing is so critical, and I think will be impactful to determining whether or not the president re-ups the tariffs later on if the Supreme Court strikes down the IEPA authority. We're really optimistic that a mid-December time horizon is achievable from the Supreme Court. We take that guidance from watching the Court of International Trade and the Court of Appeals earlier this year take between 33 and 35 days to reach their conclusions that the tariffs were not permitted by the U.S. Constitution. So we're hopeful that after the oral arguments in early November, we'll get an answer from the Supreme Court in mid-December, but it's not a guarantee. They do not have to announce where they're going to land until the summer of 2026. So it could be a while, but we have fingers crossed it'll come in mid-December.
When it comes to $2,000 checks, and the Treasury Secretary is saying we need legislation for that, would Democrats sign up for that if it is for low-income individuals, as the president has highlighted in his social media posts?
It would have to be a really expansive bill in order to get Democrats on board. You have to add a lot of sweeteners just for that conference. So think extending the ACA subsidies, for example, which we just shut the government down for 43 days over. There would have to be a lot of sweeteners for the Democratic Party to get them to cross the aisle. And it's probably going to be mandatory because I think there's no way around authorizing a $2,000 tariff rebate check without tacitly acknowledging that you support the tariffs. And I'm trying to work through that with clients right now. But if you're going through the budget committee and you're trying to understand where the $600 billion in revenue, as CRFB estimated this weekend, is going to come from to provide those tax cuts, you're going to need to acknowledge where the revenue comes from. Let's not pretend that Republicans are deficit reduction advocates anymore. I mean, they just passed a $3.5 trillion deficit increasing bill and eliminated the current policy baseline. So I don't think the deficit is necessarily the problem, but the tacit acknowledgement that tariffs are okay and that they should continue to be collected is probably unavoidable in this bill in the budget committee level. And that's why potentially Jody Arrington announced he is going to retire. I don't see a path forward for the bill, mostly because you're not going to get those tariff votes.
And Rita, we're talking about tariffs and cost of living measures coming from the administration because those are the most significant market-moving ramifications that could potentially be on the horizon. The headlines over the weekend were all about Jeffrey Epstein and the files that could be released. Are there any market implications for that, or are clients just sort of moving past that wholeheartedly?
I don't really talk about the Epstein stuff with clients. It's not our wheelhouse, I mean, as a macro analyst, but you can't, it's definitely in the ether. I would say the whole thing with Nick Fuentes and the president deciding to get around Tucker Carlson and the angles that they're going for there, they play a role because you always need a distraction and a deflection. And I think maybe the problem for the Republican conference is that Democrats are now associated with the concept of affordability. And when the top three issues are not Epstein and an island and, pedophilia or whatever, that's not what American voters are concerned about. They're concerned about affordability, the economy, inflation, prices, and that's what Democrats just won an election on by a pretty substantial margin, 12, 13 points in Virginia and New Jersey. That's your problem. So as long as you're talking about other stuff, you're not talking about affordability. And when you're offering ridiculous ideas like a 50-year mortgage, you don't have a message anyway on affordability. So it always is going to come back to these tariffs.
Henrietta, appreciate your take. Thanks for being here. Henrietta Trace there of Ada Partners. It keeps coming back to affordability. Credit to the Treasury Secretary, Scott Bessent. The fact is that at the moment, year to date, 10-year bond yields are down about 45 basis points. The Treasury Secretary's ability to manage the message, I think, has been a major contributor to some of the stability we've started to see in the Treasury market, which is why it keeps dancing around this issue of $2,000 checks. Up next, we'll catch up with the Airbus Commercial Aircraft CEO. That's just around the corner.
to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Stocks are doing okay, positive by 0.1% on the S&P 500. On the Nasdaq 100 this morning, positive by about 0.2. As we count you down to the opening bell, 2 hours away with your morning movers. Here's Danny Berger with more. Hey, Danny.
Hey, John. Alphabet continues to be one of the big gainers in the pre-market this morning after, over the weekend, new filings from Berkshire Hathaway show that they took an additional stake in the company, now worth $4.9 billion. So that's up 4.3% for what it's worth. Berkshire Hathaway also trimmed its holdings in Apple and Bank of America. Elsewhere this morning, some earnings, quantum computing. Well, there's NVIDIA. NVIDIA shares down 1.1%. There has been a little bit of negativity. Peter Thiel, for example, selling his stake in NVIDIA. So those shares down. Jeffrey Gundlach also throwing some cold water on the AI trade. Finally this morning, wrapping things up, we also had a little bit of take-private news. Sealed Air, those shares falling 3.3% after it was confirmed after some Bloomberg reporting that CD&R will be taking the maker of Bubble Wrap private. I didn't realize Bubble Wrap was actually a brand name and not just generally what the packing thing is. Anyway, the price for Sealed Air from CD&R is just above $41. The shares had rallied beyond it, so they're starting to come back to that deal level, which is $10.3 billion, John.
Danny, thank you. Thanks for the update. That stock is down by about 3%. On our radar this morning, a story just developing. The UBS story picks up a notch, talking to the White House about moving the bank's Zurich headquarters to the United States. Sources tell the Financial Times that the Treasury Secretary Scott Bessent and the UBS chair discussed options if Swiss officials do not back down from new capital rules. Something about this fairly predictable, but what a move from the UBS chair.
And how serious is it, given the fact that they hope that the regulators will reduce some of the capital requirements, but at the same time, it's a convenient way to get a greater access to the U.S. market, which has been the most dynamic and is expected to be chock full of M&A and other deals activity over the upcoming 12 months.
This all goes down to the Swiss government basically saying that to be a Swiss bank, you have to have an additional $26 billion of capital that you wouldn't have to have if you are in the United States. So basically what the UBS says, this is way too extreme and we cannot compete in the US. So what do? They have some meetings with the White House, and then potentially this is going to force pressure on the Swiss government to maybe lessen those capital controls.
Isn't it fair to say that UBS wins either way?
100%.
Right? You know, either they get them to back down in Zurich and they back down and things stay the same way, or they don't back down and they move to the United States, and perhaps investors like that anyway.
At the risk of editorializing, this was a genius move. Absolutely 100% a genius move, because exactly the leverage they have is significant given the fact that they acquired Credit Suisse, so they now are the biggest by far and main national champion of the banking industry of Switzerland, and potentially they get access to the U.S. market more considerably, and they curry favor with the Trump administration. So pretty much win-win-win.
That story just dropping from the Financial Times about 10 minutes ago. Let's turn to this one. The feud between Japan and China escalating after comments from the Japanese Prime Minister suggesting Tokyo could take military action if Beijing attacks Taiwan. China warning it is preparing to retaliate by imposing sanctions and restricting trade.
So this is going to be challenging, especially as you see Japan really trying to walk this tightrope when it comes to how they speak about Taiwan, even though Japanese officials saying nothing has changed in terms of a long-term policy on Taiwan. At the same time, Xi Jinping just met with President Trump, who also met with the new Japanese Prime Minister, talking about the strong relationship they have. It's becoming very tense right now with this trade agreement, given the fact that China is talking about not allowing rare earths to go to these companies that have ties to the U.S. military. And as Kate Kalukowicz said, we're basically just churning water in this status quo environment.
I remember speaking to the Malaysian Trade Secretary a couple of years ago or 2 years ago, and I said, what will happen if the U.S. and China force you to choose sides? And they were like, oh, we hope that doesn't happen. We hope that doesn't happen, right? I mean, that's essentially what's happening, right? Is you're seeing the U.S. and China forcing all of their trade partners to choose sides. And that's what you see in cold relief with China and Japan. And that's what you're going to see and have seen with other Southeast Asian countries in particular.
We've been asking the Europeans that question for a long time.
Yeah, Germany.
And they just carried on sitting on the fence, and then all of a sudden the industry starts to change. The industry starts to turn, the pressure starts to build on the national champions in Europe, and Germany and the rest of the Europeans are figuring this out for themselves without the pressure of the US.
Yeah, although the conclusion isn't necessarily so clear, because there was a story on Bloomberg the other day talking about how Germany is exporting so many vehicles into China right now and making so much money that they can't stop. So it raises this question of, are they going to be economically incentivized to potentially reduce their exports to China and reduce the reliance on that revenue? And if not, well, with or trade.
Do you want some good news?
Please.
US Airlines resuming normal operations today following government-mandated flight restrictions. The FAA and Transportation Departments say staffing levels are getting back to normal since the end of the shutdown last week. There's some good news this morning at least.
They're saying they're snapped back in terms of the staffing levels. What's critical and important about this is obviously we are just 2 weeks away from Thanksgiving. And the worst thing that could happen, not just for this White House, but even congressmen and women, senators, would be long lines at TSA, long lines at airports, and some planes not even be able to fly into certain airports because of the government shutdown. Just over 40 days, at least TSA and FAA starting to work again.
I think that I can say on behalf of all travelers, don't make us your political football. And that's what we heard from a lot of different airline executives. Don't make us the football, because ultimately pick a bit different pasture, because ultimately this is just a frustrating experience for everybody.
Good timing. Thanksgiving next week. Sticking with the skies, Airbus closing in on a major deal with Fly Dubai. Sources telling us here at Bloomberg the plane maker is set to win the majority of an order from the airline. Bloomberg's Guy Johnson joins us now from the Dubai Air Show with a special guest. Hey, Guy.
Hey, John. Yeah, the sun is setting on day one here at the Dubai Air Show. We're waiting to hear about these big orders. There's possibly one coming from Fly Dubai. There's possibly one coming from Emirates as well. We don't have much clarity on either at this point. Let's try and get some of that clarity now. Christian Scherer is the CEO of Airbus Commercial and joins me now. I'm going to apologize in advance. There's a French fighter just behind you, which is making quite a lot of noise. So hopefully everybody will be able to hear. Christian, is it getting harder to sell aeroplanes in this part of the world if you are Airbus?
No, it isn't. We're very successful around the world, including in this region. It's true that our backlog extends so far forward that it is getting a little bit more difficult to convince customers to buy airplanes 10 years in advance. But no, I wouldn't differentiate this part of the world from any other.
So President Trump, who has had a meaningful impact in terms of sales of your competitor in this region in the last year, is not having an effect at this point.
It is having an effect on the number of orders that our competitor is benefiting from. But it doesn't change the path, the successful path of Airbus selling airplanes around the world.
Do you have to work harder, though, because of that factor? Do you have to be more competitive? Do you have to be more price competitive, more efficient, whatever it is, to overcome that?
That's an interesting point. What I'm telling myself and my colleagues is, well, in the face of these forces, we just have to continue to be better, to be more innovative, to respond to our customers' needs. And but that's a healthy thing.
But he is making a difference.
In terms of volumes.
Yeah, in terms of sales.
In terms of volumes, yes. Yeah. But it does not change the fact that Airbus is nearing 9,000 aircraft on backlog and is serving our customers very, very well, and we're quite successful in the market.
Is he the biggest problem, or are you having actually, is your Achilles heel Rolls-Royce engines at the moment in this region? Your aircraft might be good, but are the Rolls-Royce engines holding you back?
I wouldn't call it an Achilles heel, quite on the contrary. We're very, very happy with the engines that equip our aircraft, be it the Trent 7000 on the 330, and then the Trent 84K and 97K, as we refer to them, on the A350. Very, very good engines. We have, indeed, an engine improvement program that is coming live now, very, very soon, on the 97K, that's going to make the engine even better in the challenging environment, for example, in the Middle East.
Enough to make Tim Clark over at Emirates want to buy the aeroplane?
Well, that's a question you have to address to Tim. But we've listened to him, to other customers. The engine is being improved, and Rolls-Royce is about to verify the testing on the engine. We're very hopeful it'll be a great engine. It already is around the world. It will be for this region.
It's just, this is a tougher operating environment for that engine to work in. So I guess there are different requirements for it. It does, though. Just if you'll bear with me for just a moment. 2 years ago we were here and we were waiting for a big order from Sir Tim Clark at Emirates for an A350-1000. I'm having slight deja vu this time around. 2 years later, are you having deja vu as well?
No, Guy. I appreciate you're asking the question here at an air show, but air shows regrettably don't just yet dictate engineering work and the laws of physics. We'll be ready when we're ready. It's just around the corner. The engine works really, really well, including in this region. And then Sir Tim can make his decision once he can verify that the engine has been upgraded to
Are there regions now where Airbus has a disadvantage and Airbus has an advantage? Is it, this is a tougher region, but maybe China's an easier region. Does one offset the other?
No, I wouldn't say so. You know, Guy, our company has won 2/3 of all competitive wide-body decisions in the last 3-4 years. So I wouldn't differentiate one region from another. That would be inappropriate.
You've also you are dominant in this region on narrow bodies as well. Fly Dubai has traditionally been a 737 customer. Are we about to see you breaking that monopoly? Is it about to become a mixed fleet operator, do you think, Fly Dubai?
Well, we'll see what surprises air shows bring. But I wouldn't say we're dominant. We're quite successful. And as we should be with a more modern, higher technology aircraft. But it is an air show. Air shows are made of surprises. Let's see. It's only day one.
Okay. It is with great regret that I say this next bit. You are about to step down as the CEO of Airbus Commercial. Do you think you took advantage enough of the opportunity that a weakened Boeing represented in this phase? Could you have done more? If I'm an Airbus shareholder, would I expected Airbus to have delivered more performance during this phase, or was that just not possible?
I don't like the words taking advantage
maybe that's the wrong word to use.
Somebody's weaknesses.
What words would you use?
So I would say that we were constrained not so much by what may have happened or not happened or the mistakes of our competitor. We're constrained by a supply chain, by an ecosystem that has suffered the worst crisis in modern times, the pandemic. And for this ecosystem, with thousands of suppliers, to reorganize ourselves, to recapitalize itself, that's the real challenge. That's what's been the brakes on our ramp up, if you like, in the recent past. Much more so than the trials and tribulations of this or that competitor.
Is your successor going to have to make some tough decisions, do you think? There are big, tough decisions potentially coming up. One of them could have reared its head today. Again, Tim Clark over at Emirates, placing an order for 777, what looked like a Dash 10. And I'd never heard of the Dash 10 before, but I'm assuming that that is the next iteration of this aircraft that you might have to match. Are we going to have an A350, not 1000, but maybe 1100 fairly soon, do you think?
I wouldn't call that a tough decision. That's an exciting decision. What is true?
Are you looking at it?
What is true that the market, our customers, just like they did on the freighter, are telling us, guys, you have a really good platform with the A350, where technology matters most on these ultra long ranges, where the weight of the aircraft and the fuel burn efficiency of the airplane matters most. You have the A350. and you're opposing it to an aircraft that is arguably of much older generation. Use that platform. So we're looking at that.
Christian, great to catch up. Always a pleasure. Thank you so much for your time today. Christian Scherer, the CEO of Airbus Commercial, from day one of the Dubai Air Show. We're excited about day two to see what that's going to bring. Team Surveillance, I hand it back to you.
That whole experience was very Guy Johnson, wasn't it? Guy Johnson in Dubai with the planes behind him and the noise of a French fighter jet over the top of the interview.
With the sunglasses and very kind of James Bond, new technologies. Guy, great job.
We'll have more from Guy throughout the week on Bloomberg TV and on Bloomberg Radio from the Dubai Air Show. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. UBS is considering moving its headquarters from Switzerland to the U.S. The Financial Times reporting that UBS Chair and Treasury Secretary Scott Bessent discussed the move amid long-standing issues over strict Swiss capital rules. The report says the Trump administration is receptive to welcoming one of Switzerland's most prized assets. Meanwhile, the UN Security Council is set to vote on a Gaza plan that anticipates Palestinian statehood with a multinational stabilization force to demilitarize Gaza. It's meant to build upon President Trump's peace plan. Israeli Prime Minister Benjamin Netanyahu striking back, vowing no Palestinian statehood and that Hamas will be disarmed by force if necessary. And Peter Thiel's hedge fund sold off all of its NVIDIA stake in the third quarter. The move comes shortly after it was revealed SoftBank also sold its NVIDIA stake back in October. According to a 13F filing, the Thiel macro fund now counts Apple, Microsoft, and a reduced stake in Tesla as its main bets. That's your Bloomberg Brief, John.
Yahara, thank you. The hits keep coming for that major tech name. The earnings drop this coming Wednesday after the close. Up next on the program, the era of AI.
We are in the midst of a major technological transformation.
AI is going to be important someday. It's just going to take a while.
Right now, we're underestimating all of this.
Up next, we'll catch up with Stephen Parker of JP Morgan Private Bank from New York City. You're watching Bloomberg TV.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
UBS, that stock unchanged this morning. This story, though, from the Financial Times is getting everyone's attention. The chair, Colm Kelleher, and the US Treasury Secretary, Scott Bessent, have privately discussed moving the bank's headquarters to the United States as the Zurich-based lender explores contingency plans to leave Switzerland if the government does not back down on new capital rules. Those words coming from the Financial Times this morning.
Taking the nuclear option at a time when they could potentially be forced to pony up $26 billion in additional capital to put aside. A question of how UBS is going to play their hand? Well, they just gave a sense of exactly how they're going to do it.
We'll pick up on that story later on this morning. For the broader market, equity futures on the S&P just about positive, rolling over in the last hour or so. We're just about positive by 0.1% on the Nasdaq 100. Under surveillance this morning, the era of AI.
We are in the midst of a major technological transformation.
AI is going to be important someday. It's just going to take a while.
The minute we don't see earnings supportive, that's when I think you'll see it all flip.
Demand for AI is very strong. Every Fortune 500 company, every enterprise has their own AI strategy.
Right now, we're underestimating all of this.
So here's the latest this morning. Profitability of the AI narrative whipsawing tech stocks as valuation concerns rise. JP Morgan's 2026 global investments outlook remaining bullish, writing artificial intelligence remains the defining force in financial markets. Stephen Parker, the co-head of global investment strategy at JP Morgan Private Bank, joins us now for more. Stephen, good morning. Good to see you.
Good to see you.
Should we talk about the three bogeymen?
Let's do.
Overcapacity, leverage, valuations. Your words, how concerned should we be into next year?
Yeah, look, we think that there's still a long way to run in this AI trade. If you look back since the launch of ChatGPT, 75% of the returns, 80% of the earnings, and 90% of the capital spending growth of the S&P has been driven by AI-related companies. And so the question now is, are we facing a bubble? And as you said, it's really those three factors. It's overcapacity, it's leverage in the system, and it's valuations that we need to focus on. And we think that we're still in the early stages of this story.
How much do you think that the extra editions of this story, the extra chapters, really will come from a Fed rate policy or fiscal policy or some sort of more accommodative backdrop that can allow valuations to get even more heady?
Yeah, look, I think we're in a world where there is still a lot of capital that is looking for a home. Investors are willing to make investments, but importantly, what we're seeing now is that these investments in AI don't look speculative like bubbles of the past. If you go back to the dot-com era, in the late 90s, there was 40 million miles of fiber that were laid to help support the internet. And by mid-2001, only about 1% of that was being used. It was supply in search of demand. AI, the story is reversed. The vacancy rates in data centers today is at an all-time low, 1.5%. And 3/4 of the demand for new construction in data centers is already pre-leased. So we're not seeing those signs of speculation, particularly from a capacity perspective, that gets us nervous.
So your base case for next year is 7,200 to 7,400 in the S&P 500. Your bull case is 8,000 to 8,200. What makes you either constructive or uber bullish?
Yeah, I think it all comes down to earnings. And we've seen a tremendous run of successful earnings results. 5 of the last 6 quarters, we've seen double-digit S&P earnings growth, despite the fact that we've had policy uncertainty, economic uncertainty, trade uncertainty. There's perhaps never been a bigger disconnect between the stock market, particularly large cap stocks, and the broader economy. We think that continues, and we see another year of double-digit earnings growth, which is going to support that upside that you talked about.
How do you think about all of this in an age when globalization is out of fashion?
Yeah, I mean, we're launching today our new 2026 market outlook, Promise and Pressure. And one of the key themes is this idea of global fragmentation. So post the Cold War, we were in a multi-decade period where it was all about globalization, cost control, efficient supply chains. That kept inflation down, it kept margins up. Increasingly over the last couple of years, as a result of the pandemic, conflict in Europe, trade policy, we're now in a world where countries are looking in. They're more focused on security and reliability, both in terms of defense, but also of supply chains and infrastructure, and that has ramifications.
US versus China, that's what this feels like. Where does Europe fit in the US versus China?
So Europe is an interesting sort of pivot point in the global landscape. When we looked this year, the announcements that we saw out of Germany in terms of the shift in fiscal spend, the willingness to embrace positive fiscal impetus is a huge change. One of the key themes when we talk about this idea of increasing fragmentation and a focus on security is what's going on in Europe as it relates to the spending on their infrastructure and their defense. We think that's both an important macro trend, but also an investable opportunity.
I think people have the sense they know how to play the US story if they want to play it. I think they feel comfortable playing the China story if they want to play it. After the first half of this year, I think they're sitting here looking at Europe into 26 and thinking, well, maybe that was the trade. That was just sort of like last year, and now we're done with it, and we should move on to other things. What is the trade in 26?
We still think there's opportunities in Europe. One, a lot of the fiscal policy that was announced this year isn't actually going to be put into place until next year. So there is a growth dynamic there. And in fact, we think from an economic perspective, we're probably going to see a convergence, meaning that a smaller discount of growth in places like Germany versus the US. But when you think about how you want to play the story, we continue to think that the European defense names are probably the most interesting opportunity that we're seeing.
Based on the framework that you just laid out, how are you looking at diversification? Is it from a regional basis, or is it from an asset class basis?
Yeah, so we talked about the outlook, we talked about AI, we talked about increasing global fragmentation. The third theme that we think is really going to drive markets in the years to come is inflation. And these factors that we talked about, increasing fragmentation, increasing fiscal policy, means that inflation is likely to be more volatile and the floor is likely to be higher. And so when you think about building portfolios, the playbook of the past has to evolve. Stocks and bonds on their own are not going to be enough. Stocks can help you when you get recession fears and growth scares, but increasingly in a world where inflation is going to be part of the narrative, you need to look at things like infrastructure, real assets, and gold, not just on a tactical basis, but on a more strategic basis.
So sticking with the gold trade, even after the big boom over the last year?
We are. We continue to see upside. We think we can get over $5,000 an ounce on gold. And that has to do a lot both with some of these concerns around geopolitical issues, the concerns around the dollar, but most importantly, and from a sticky perspective, central banks around the world are continuing to realize that they need to diversify. And a lot of these central banks are still underexposed to the long-term targets that they're trying to achieve, which means more demand in a supply-constrained world.
Stephen, good to see you. Thanks for being here. Thank you very much. Stephen Parker there of JP Morgan Private Bank. What a year gold's had. And Stephen Parker talking up another big year ahead.
Yeah, and he's not alone. You actually see Morgan Stanley saying the same thing. China buying secretly. They're reporting much less than they're actually buying.
Coming up on the program, we'll catch up with Jonathan Golub of Seaport Global, Alex Stratton of Morgan Stanley, Abigail Watt of UBS, and Ben Ritzes of Milius Research. From New York City, the third hour of Bloomberg Surveillance is up next.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We do have almost an equal set of headwinds and tailwinds for the equity market.
Things got out a little bit over their skis here. They got a little white hot.
There's probably some room to see more pullback.
There are a lot of warning signs. There's a lot of froth in the system.
These pullbacks and corrections won't turn into something more nefarious.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P just about positive by not even 0.1%. On the Nasdaq, higher by 0.14. A massive week ahead, stacked full of earnings from retail America, including Home Depot, Target, and Nvidia. Nvidia going to be the major one for big tech. Big tech is going to be focused on this name right here on Wednesday after the close. A lot of weight on the shoulders of Jensen Huang.
Just how insatiable is the demand for some of their chips? The idea of the hyperscalers feeling like they can't invest enough and they can't spend enough on exactly what they're going to do. To me, this could be the linchpin for the trade heading into year end. If they confirm the kind of double-digit growth that we've seen from NVIDIA, do we see new tailwind into the AI trade, even amid all of the bubble fears?
What is this story built on? The strong balance sheets of the hyperscalers, the Microsofts of this world, or on the promise of OpenAI? On not major revenues, promising some big spending over the next decade?
I think it's a great question. Another way of asking the same thing is, how much is NVIDIA's bet? The idea of practical efficiencies that companies are currently getting, and how much is it hinged on the idea of a revolutionary technology that transforms the way we engage with the world that we haven't yet seen? Is that sort of the bet that people are hinging NVIDIA on, or is it a very kind of banal, trying to make sure that you get the numbers more quickly and be able to do recipes more efficiently in different circumstances?
Got to be bigger than that, Bramo.
Well, but that's exactly what it's actually doing right now. I mean, that's the point, though, right? How much is it sort of the sea change in how we experience the world around us and humanity?
Nvidia's down by 1% in the pre-market. More on that in just a moment. Retailers in America, I talked about them, Target, Home Depot, Walmart, they report this week. The consumer in focus as well down in Washington, D.C. We get a payrolls report Thursday for September. I know, it's been a long, long time. The estimate in our survey so far, 50K.
Finally, though, we get some data. It has been a desert when it comes to data, which is why the payroll report is really important. Of course, to be determined when we're going to actually get the November payrolls report. Can they get the job done in time for the first week of December? A lot of these questions now going into the next Fed meeting, especially when it comes to the health of consumer, which is why, for me, actually, Walmart, Target, Home Depot, the most important data points of the week, not just for what's going on in financial markets, but for what it means for this White House.
Are you sensing some building pressure over the last week?
Absolutely. Pressure on this White House? Absolutely. When it comes to things like beef, bananas, coffee, why do you think Trump himself came out with this executive order lowering the tariff rates on more than 100 food items because there is concern about this idea of affordability? And then on top of it, throwing in this idea of $2,000 checks for those on the lower incomes of the United States.
The president sitting in the Oval Office in the last week uttering these words, make America affordable. Again, I think they get the message loud and clear.
Yeah, well, why do you think Walmart highlighted the fact that a Thanksgiving dinner was so much cheaper this year than last year? They're saying to the president, here, look, we're part of the solution, not the problem. How much does the rhetoric match what we see in the earnings? And that's what I want to see. How much are prices actually going down versus select prices? Maybe the turkey is lower, but maybe you're seeing your sneakers, 10% higher. Beef's going to be 10%. How much do you see the sort of select items? And that's what I'm very curious about from some of these retailers.
The American consumer is not tracking CPI. We haven't had CPI. It doesn't matter. They're not tracking that. We had a massive price level adjustment in the pandemic, and nothing's come down since. I say nothing, I'm talking loosely, but you know what I'm getting at. Inflation doesn't matter. The month-on-month inflation rate, that's not what this is about. It's about the squeeze that people have felt over the last 5 years, and they're not seeing the offset in the labor market.
And it's the confidence that the squeeze is over, right? How much do you get the sense that prices aren't going to rise that much more? My son came to me and he said, the Egg McMuffin challenge, and it's not necessarily the McDonald's one, but his bacon, egg, and cheese sandwich that he would get in the morning. He said it was a moving target in terms of how much he paid for it for a number of years. It's gotten more stable. That's the kind of thing people are looking for.
Did he vote Mum Downey? Don't answer that. Coming up on the programme, Jonathan Golub of Seaport Global. Too young. As markets look to bounce back, Abigail Watt of UBS as the Fed emerges from the data haze, and Ben Reitzers of Melius Research with all eyes on Nvidia earnings. We begin this hour with stocks little change. Jonathan Golub of Seaport Global seeing the S&P 500 hitting 7,800 by the end of 26. He writes this, investors are concerned over elevated multiples. Market multiples are elevated because of a mix shift towards tech, not because individual stock valuations are problematic. Jonathan joins us now for more. John, good morning.
Good morning.
We've been talking about the lessons of the last week. Volatile week for big tech. What were the lessons for you?
Well, the most important lessons is we don't have an earnings problem, and people are concerned about some of the issues. At least you're talking about, like, what's the ultimate use case? But people are buying into this idea, just like you said, that there is a new thing, and it's not about spending by the hyperscalers. It's about that this is going to change the way that we do all kinds of things. And it's not about OpenAI being an enhanced Google search. It's literally about us being able to do things that we weren't able to do before. The first wave of this is going to be in cost savings by companies that can eliminate certain positions and save money. But then there are going to be things that companies can do that they just didn't have the ability to ever do without these technologies.
John, I think you know why people are nervous, to build on some of the things that Lisa was talking about, but also you mentioned OpenAI. OpenAI has got these massive, massive spending promises over the next 5 years or so. And the revenues don't seem to back it up right now. Now, that could change over the next 5 years. I get that. But there is a sense in the market that maybe we've taken things too far. And Lisa and I were talking about this. What are we actually building this story on? The balance sheets of the hyperscalers, the bigger cap tech names in America on the S&P 500, or the promise of OpenAI and the ecosystem that they've built up?
I think the key is that this is not, I mean, if you're looking at, if we invest in the S&P 500, if you look at the tech sector, it grew earnings 28% versus last year. I don't care what the promise is. It grew earnings 28%. If you look at the forward expectations on the S&P, it's up massively compared to where it was 3 months ago, 6 months ago, and a year ago. In tech stocks, the expectations are going vertical. What that really means is that Wall Street analysts and investors keep underestimating the earnings potential. So we could talk about the promise, but this is not a story where stock multiples are going up like crazy. And even people who are talking about valuations being high, the valuations, I think, on 8 of the top 10 tech names are lower now than they were a couple of years ago.
You think reality is good enough, never mind the promise?
Listen, I would love for the promise is all about will we be able to keep double-digit growth rates, but you and I know that that's a really hard one to keep over the long run. But right now, these companies are delivering, beautifully. The problem is the rest of the market is not. It doesn't look nearly as robust.
Just to put this in an analogy form, it's like a rocket ship, right? And you've got the hyperscalers, you've got the semiconductors all sort of pouring fuel into the rocket, hoping that it gets out of the atmosphere and then it can go on its own volition without all of that ammunition, all that investment, et cetera. When do you need to see that it's getting to outer space?
I thought the most important thing that we heard this earnings season was when Jamie Dimon made the comment that they are already profitable on their AI investments, that the turnaround to these things, becoming profitable was already here, that this is not a decade-long promise, but these are things that can save money and help companies become more efficient right away. So yes, we need to ultimately have real companies deliver profitability, but I think the cycle on this is going to be much shorter than people think. It is the uptake on of this technology is so fast. I mean, I see with my own team, the things where it's not that we're saving money and we'll have a smaller team. We're doing things that we couldn't have imagined doing 18 months ago.
Like what?
We're customizing research for individual. So let's say, for example, we're doing work on corporate profits. We can go and say, tell me about your portfolio. We'll analyze profits only from your own perspective. And we could do that for hundreds of clients. We couldn't do that before.
So how much do you have to bet on a broadening out in equity performance if you have faith that the AI story is real? In other words, do you have faith that other companies are going to actually see some sort of delivery on their investments in a comprehensive way that allows them to outpace everybody else?
Well, let's step back, because we're just talking about technology. Financials grew their earnings, I think, 24% year over year. Now, what's the backdrop there? A more favorable antitrust environment where activity at the banks has been super strong. M&A activity is strong. Lending activity is strong. That's a really big chunky part of the market. Now, what was less strong is the old economy stuff. Traditional industrials and energy and materials and defensive sectors struggled. And so I think the question isn't, will the market be healthy, but will it remain bifurcated? And I think that for now, yeah, I think it's going to remain bifurcated.
Last night, the Anthropic CEO was on 60 Minutes and talked about without intervention, it's hard to imagine there won't be some significant job impact here when it comes to AI, and faster than they've seen in any other previous technological advances. How big of a job impact do you think this is going to be in terms of losses?
It's hard to know. Things moving faster now than they were in the past, but if you went back to the Industrial Revolution, people were talking about how terrible it was that we were moving people into factories off the farm because we're going to have all these job losses. And what did we learn to do? We put people into other innovative jobs in society, move forward. So over the long run, these disruptions are all good. They will enhance our lives, and they will make these companies more profitable. But if it's moving so much faster than it has in other similar periods, we're going to have to focus on making sure that people remain employed. But by the way, the unemployment rate is low. I mean, you're talking about before. We have a 4.3 unemployment rate, so we don't have an employment problem.
I'll tell you where it's moving to right now, the debt market. Amazon. This news just crossed on the Bloomberg terminal moments ago, kicking off a $6-part US dollar high-grade bond sale. We've seen it from Meta. We've seen it from Alphabet. Amazon joins the party this morning.
Yeah, and it's somewhat predictable. Robert Schiffman of Bloomberg Intelligence actually put out a note over the weekend that said Amazon could skip the tech debt party, but an appearance makes sense because ultimately they're getting rewarded for doing so. You have seen tens of billions of dollars of debt sales since September alone from these tech giants, and you're just starting to see some pushback a little bit around the margins, but for the most part, investors in the debt space want the income, and they see these behemoths as very able to pay, given the fact that they do have so much cash coming in.
These companies, Jonathan, are changing. You're familiar with that. You know that. It used to be a capital return story, very cash rich, very asset light. Feels like that's pivoting. What does that mean for the valuations of these companies?
Well, you raise a good point, because if you look, let's talk about margins. The net income margin, the EBIT margin on these companies are skyrocketing. The cash flow margins are deteriorating on the companies. And if you think about what they're worth, what we know is over the long run, you pay for cash flows, not for earnings. If there's a single question that the smart investors we're talking to are focused on is, are these is this cash flow issue going to become a problem? And if something goes wrong, that's going to be the issue, not whether they simply hit the top line.
We've seen some convulsions in the credit market already. Do you think it's too early to draw conclusions on where we are?
I'm like obsessed with high yield spreads. They're wider by a baby amount.
Still sat to 300.
Yeah, and I think that part of the reason the market is off by a couple of percent in the last few weeks is because spreads are up. But we're not seeing a wide set of defaults and delinquencies and bankruptcies. We're not seeing anything. We're all fretting over it, and maybe we'll be right. But we may be very, very early in terms of how much concern we're putting on it.
Jonathan, it's good to see you. Bullish for next year. Thank you, sir. Jonathan Golub there of Seaport. I'm looking at Amazon's 6-part offering, the longest portion of that 6-part offering. I can see some 40-year debt out there for you, Lisa.
Oh my God. I mean, looking at this 40-year debt from this, you've got the 50-year debt that we saw just a bit ago coming, I believe, out of Meta, right? That they had a 50-year bond.
Alphabet.
Was it Alphabet?
Very
okay, thank you. I
long
wasn't
curve,
remembering.
Right?
So Alphabet's 50-year. We've got Amazon 40-year. What are these companies going to look like? Are we even going to have humans doing anything in 40 or 50 years? Are we all going to be just, sitting there and having having robots fan us while we eat dates?
I've got no idea what we're doing in 50 years' time. I hope that's what the future looks like.
I know, that's a very optimistic take.
On the beach somewhere with robots taking care of us.
I
don't think that's what it's going to look like.
It actually could be really helpful, especially if, we're older and need taken care of. Good. I think that the robots could be very good caretakers.
Sounds like a conversation for a commercial break, not live TV. We'll do more of that in a moment. All right. Amazon up for the pre-market by 0.4%. Let's get you an update on stories worldwide with your Bloomberg brief. Here's Yahira. Hey, Yahira.
Hi, John. President Trump is reversing course, telling House Republicans they should vote to require the Justice Department to release its files on Jeffrey Epstein. Trump has been under increasing pressure from some within his own party to release the investigative materials on the convicted sex offender. The House is scheduled to vote tomorrow. Meanwhile, trade tensions rising with the European Union. People familiar with the matter telling Bloomberg EU's trade chief will raise the issue of higher steel and aluminum tariffs with Commerce Secretary Howard Lutnick next week. European officials are concerned the moves may cut against the spirit of the trade agreement signed between the two sides earlier this summer. And in sports, the Denver Broncos won their 8th straight game after beating Patrick Mahomes and the Chiefs at home. The Philadelphia Eagles and LA Rams both improved to 8-2 after strong defensive performances. Elsewhere, the Baltimore Ravens won their 4th straight game to move into second in the division behind the Pittsburgh Steelers. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next, the Morning Calls Plus. Alex Stratton of Morgan Stanley with a busy week of retail earnings on deck. That conversation up next. Live from New York City this morning. Good morning.
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I do expect that once we look into next year, we have still relatively easy financial conditions with, of course, the stock markets, which wobbles more recently, but still very supportive. The market is too negative on the economic outlook, and the risks are actually rising that we may have some reacceleration once we get into 2026.
Interesting call from Torsten Slok of Apollo there a little bit earlier on in the program about a reacceleration in 2026, a call that the St. Louis Fed president has also endorsed. That's his worry that things pick up just as they begin to continue cutting interest rates. That's why he's pushing back at the moment. If you're pushing back, you're looking for an equity market that's a little bit higher. Not this morning. Just about unchanged on the S&P 500, on the NASDAQ as well. Amazon in focus in the tech world today. Moments ago, this headline. Amazon kicking off a 6-part US dollar high-grade bond sale, the longest piece of that 6-part offering, 40 years.
Ultimately, it is cheaper for these companies to borrow in the debt market than to raise money through the equity market, and they want to raise enough money that they can be competitive in this huge arms race to get enough data center capabilities to be the leaders. Amazon, AWS trying to remain in the front seat here, and it highlights how the debt market is facilitating the next phase of this build-out. That, to me, highlights just how much and how ambitious some of these tech companies really are.
We discussed selective convulsions in the credit market.
Great phrase.
Amazon doesn't come to market often. I think it's been 3 years since they tapped the debt market. In fact, our story points out bringing the first investment-grade bond sale in 3 years. That's Amazon. Not everyone's got the balance sheet of these hyperscalers that we've been talking about more recently, the alphabets of this world. Not everyone's got the balance sheet of a Meta, say. It's the smaller companies, the more highly leveraged companies that you've been pointing out that are a little bit more problematic.
And that are getting real pushback from credit markets. The likes of Amazon is getting a warm welcome. I mean, I'm sure that people will eat this up because ultimately they are a high-grade issuer that has plenty of money to potentially fund whatever they need to do. It just raises a question. Is this the tip of the spear? Is there a lot of other financing going on in other capacities? And the best and the brightest are tapping the public corporate debt market. What else is going on and how far can it go?
The pre-market story for Amazon, we're higher by 0.6%. That's the price action. Let's get you some morning calls. First up, Morgan Stanley cutting down to underweight alongside a number of hardware makers, saying a memory super cycle increasingly poses a risk to hardware manufacturers. Next up, JP Morgan raising its price target on down to 170, expecting near-term revenue and earnings positivity from AI-leveraged companies. And finally, Barclays upgrading Gap to overweight ahead of earnings this week, believing the company is executing a strategy for long-term recovery. That stock is higher by more than 3%. Let's stick with retail. A big week of earnings on deck, including Home Depot, Target, and Walmart. Alex Stratton of Morgan Stanley saying we expect another quarter of sales-led third-quarter EPS beats, albeit with less upside surprise. Alex joins us now for more. Alex, welcome to the program. 3 big retailers this week, a bunch of others as well. What are you and the team focused on?
Sure. So I think bigger picture, you hit on our overall view, which is that I kind of sum it up as the headlines will be better than what's actually going on with the underlying fundamentals and how we see the stock reactions playing out. And we take that view for a couple reasons. One is just, yes, we are expecting, as you pointed out, another quarter of sales-led EPS outperformance. But at the same time, we're not projecting as large of outperformance as we've seen in the last few quarters. And you're actually going to have profitability eroding quarter over quarter as tariffs start to work their way into the P&L. So that's the positive headline, and then the give and take to it. And then secondly, another positive headline is third quarter outperformance should enable some of these businesses, and most of them, in fact, to reiterate or raise. But to me, those will mostly be flow-throughs of the third quarter upside, which means fourth quarter is unchanged to worse and mostly being set below consensus. So all in all, what you have is sentiment that's been fairly negative on the group in recent months and might continue to be that way through year end with that dynamic. So expecting third quarter to mostly be neutral to negative catalyst across our group.
Alex, parsing through what you just said, it sounds like you expect to see some pass-through when it comes to inflation to consumers and them absorbing some, but the companies are absorbing even more on the margins. Is that the ultimate takeaway that you're expecting to see from these earnings?
Sure. So I think from a pricing perspective, we've seen a little bit taken so far post-Liberation Day, nothing out of the norm of what's within historical levels. So for apparel, that's about low single-digit price increases. For footwear, that's about mid-single digit. We haven't seen our businesses necessarily surpass that yet. And what really the biggest headline on tariffs has been and how they're managing it with the consumer for the last 2 quarters has been better than feared. They're finding ways as time moves onwards to offset the incremental cost. That doesn't mean there's not an impact. Profitability has certainly compressed into the back half of this year and will continue to do so next year. But we haven't seen the majority of price increases I think that we might see happen. And to me, that'll most likely happen either this month for my a retail type business models or next year for the wholesaler type business models.
Alex, is Walmart still representative of the consumer and the health of the U.S. economy?
I think Walmart is certainly a bellwether in the space that we look to outside of our traditional apparel and footwear coverage to understand how the consumer might be pressured or behaving in other categories. So I think, certainly still a bellwether. For me, I like to watch it in the context of the off-pricers, which I do cover, who have that value orientation as well.
Alex, you said that we potentially are going to see very shortly higher prices because of tariffs. Well, what happens if the Supreme Court strikes down IEEPA?
Sure, I get this question quite a bit, the implications of IEEPA, and it sounds like if you were to take the Morgan Stanley U.S. public policy view on this, is that there's very many other kind of actions he could use to continue to keep some form of tariff in place. So the way I view it is it might be an initial pop for our group on this idea of there could be refunds that quickly shifts as we learn either the degree of uncertainty that comes with it or that there's other ways in which you can keep some degree of tariffs in place. The other thing I would just highlight, as we've learned from tariff experts in the last year, is that this concept of a refund is not something that happens immediately. There are things from the 2018-2019 trade wars that are literally still being litigated now. So to me, I think it's a kind of a headline fake, followed by probably a continuation of tariffs in some form or another. And if there are to be any refunds had, it'll be a long process. I mean, 2018, 2019, 6-7 years ago, and it's still being litigated for some companies.
Well said. Alex, thank you. Alex Stratton of Morgan Stanley on the retailers later this week. I'm not even sure how the Supreme Court suggests how you remedy any of this, even if they do strike it down.
They're going to say, hey, lower court, why don't you figure this out? Thanks. Get back to us.
We'll move on. See you in the new year.
Exactly.
Yeah. We're moving on. Up next, Abigail Watt of UBS as the Federal Reserve awaits long-delayed economic data.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Counting you down to the open about 60 minutes away this Monday morning. Equities just about unchanged on the S&P 500. Pretty flat through last week, but last week incredibly choppy, particularly for the big cap names on the NASDAQ 100. The NASDAQ 100 this morning also going absolutely nowhere. With some morning movers, some stock moves this morning. Here's Danny Berger with more. Hey, Danny.
Hey, John. Maybe the reason the NASDAQ, though, is slightly able to outperform is because of what's happening with Alphabet this morning. Shares are up about 3 3/4%. Berkshire Hathaway in filings over the weekend showing that they are taking a new stake in Alphabet worth about $4.9 billion. So, again, those shares go higher this morning. Elsewhere, some earnings to work through. Quantum computing, a huge gain for this stock, up 15.8%. To be fair, this thing is down 34% year to date, but had earnings that were positive profit, positive earnings versus a negative one at this time last year. The CEO is saying that they had a revenue so far this year that's grown 280%, and that includes a deal with what it said was a top U.S. bank. It didn't name the bank, but we know banks are getting more into quantum computing, so that's the latest with those shares. Finally, rounding things out, a story breaking in the last hour or so that Novo Nordisk is looking to undercut Eli Lilly with a cheaper price for cash buyers of its obesity drug. Now, at the entry level, it's the same price as what Eli Lilly is offering, but once you get to the higher doses, it is significantly cheaper. It's also trying to fight off some of those copycat pharmacies, those compounding pharmacies, which do offer cheaper products for cash buyers. But that extra competition sending Lilly shares down by 1.25%, John.
Danny, thank you. Appreciate the update. More from Danny Mann Miller in about 30 minutes from now on Bloomberg Open Interest going into the opening bout. Let's turn to the economy. Investors are awaiting the long-delayed September jobs report due Thursday morning. The median estimate in our survey calling for an increase of 50,000 payrolls. Bloomberg's Enda Curran joins us now for more. Enda, good morning, sir. We've got one question. What's a good number on Thursday? Is 50 a good number?
Well, 50 would be the break-even rate, according to some economists, including our own Bloomberg economist, Jonathan. So if it came in around 50, say, and the unemployment rate is 4.3%, then it probably leans into the idea that maybe the Fed will hold off cutting rates in December. We know that pricing has fallen back for that move to around 40-odd% last week after that hawkish Fed speak. So a jobs number that comes in around that area will be seen as, I think, as tolerable. It will be a lot of focus on leisure and hospitality, see what they contributed to the September numbers. Also, people will be keeping an eye out to see any impact of those Doge cuts that were announced way back at the start of the year, but are expected to start filtering through to the numbers towards the end of this year, maybe kicking on from September onwards. But ultimately, we have to remember this is now September jobs data. It's quite stale, quite dated, and the focus will quickly turn to the October jobs data, and whenever that's released, that's only going to be a partial read. So still plenty of choppiness when it comes to trying to get a picture on where the jobs situation is at.
We get some timely commentary from Federal Reserve officials later on this morning, and also some Fed minutes later on this week. This morning, we'll hear from the New York Fed President John Williams, Jefferson Kashkari-Waller also speaking, and we spoke to Torsten Slok of Apollo earlier on this morning, and we had a conversation about a new era for this Federal Reserve. The amount of dispersion that you're seeing in the dot plot in the SEP when they put out those forecasts seems like it's getting wider. The Fed speak feels like it's getting messier. And you've covered the central bank story around the world for a long time. Do you sense this is a new era for Federal Reserve communication?
Well, we're certainly seeing play out in public now what Chair Powell hinted at that last policy meeting, John. If you remember when he came on the press conference and he said, look, December is no done deal, far from it. Now we know what he means. Clearly, several policymakers and officials behind the scenes were lukewarm at that cut last month at best, and certainly don't see scope for a cut going forward from here. Now, there are those who say this speaks to the idea that maybe Chair Powell is using his influence, maybe the board is starting to fracture, it's all spilling out into the open. That's one interpretation. But another view is that we are at something of a moving feast, a complicated moment in the economy. Is the labour market reflecting major layoffs, or is it reflecting the supply and immigration story? Is inflation broadly tracking okay, even if it is above the Fed's target, or does it reflect persistent inflation that the Fed can't keep its eye off of, in particular maybe in some of the service sectors and some of the tariff inflation as well? I mean, there are very different interpretations in what's going on in the economy. That's clearly now playing out in the policymakers' public comments. But there's no doubt, if you're looking at this from the outside in terms of a unified, single, coherent narrative from the Fed, well, there clearly isn't one right now.
And thank you. And Karen of Bloomberg down in Washington, D.C. There's good reason, Lisa, for that division on the FOMC.
It's a complicated moment, and as Enda said, especially with the jobs creation or the lack therein, how much is this due to technological changes? I just wonder what the mandate is of the Fed. The tacit mandate has been, yes, price inflation, as well as the jobs backdrop. There also has been this financial stability overlay, and I wonder how that plays into things, too. We heard about that from Jeff Schmidt of the Kansas City Fed, and I wonder how much we hear about that from other Fed speakers as well.
My takeaway on the approach is as follows. Say that you really care about the inflation side of the mandate, say it a lot, then ignore it, and focus on jobs. And focus on jobs. And anytime there's any weakness in the labour market, step up and cut interest rates. That's the observation of mine over the last few years, at least, with Chairman Powell.
And frankly, the data that we're getting kind of plays into that, given the fact that we're going to get the non-farm payrolls, but we're not going to get CPI. So how much do they have going into that meeting in December, and how important is the figure that we get in terms of influencing these Fed officials?
It was easy for the chairman to talk about pain in that speech a number of years ago in Jackson Hole because there wasn't any. There wasn't any pain in the labour market, so he said, you know, there might be some pain. We've got to go through that pain to get inflation down. The moment there was pain in the labour market, the moment you saw any, they cut 100 basis points. The moment you saw some more, they cut another 50. Now, I think it'd be hard to push for me to believe that going into 2026, that if you saw further labour market weakness, that they wouldn't cut interest rates again, even with inflation closer to 3 than to 2, because they've been doing that for the last 18 months.
And they say that there are some disinflationary impacts down the line. San Francisco Federal Reserve came out with a paper over the weekend talking about how in past periods, tariffs have been disinflationary, that you've actually seen a real sort of demand shock as a result. So there is this feeling that in the past, any kind of inflation they do see, they want to look through. What is the ramification of that? A lot of bullish estimates coming from Wall Street.
Big time, 700-800 from Morgan Stanley for the end of next year.
Pretty much.
Not bad, is it? All right, let's stick with payrolls. Abigail Watt of UBS writing the headline game we expect in employment could add some division to the FOMC, currently split between calls for more cuts and calls to stay on hold. Abigail joins us now for more. Abigail, good morning. Good to see you.
Morning. Thank you for having me.
You heard me ask Enda Karen the question, what's good? What's good in the September jobs report? What is a good number in 2025?
Look, I mean, we're currently sitting above consensus. She referenced consensus is around 50K. We'll see, I guess, if there's been any change in that, as we potentially get some more estimates in. It's been a while. We've been waiting for this report. But we think that, you know, a 95K gain in total payrolls could be possible. That's our base case forecast. And I think the key thing to note for the September report is their expectations are that there's a potential for residual seasonality to support this data, rather than this necessarily signaling a significant improvement in the pace of job gains. I think it's probably that September number reflects the fact that you've seen job gains that would have been spread across the summer. So it's essentially a bit of catch up for something that previously would have been spread by the seasonal factors across the summer months. So I don't necessarily see it as a kind of good print. I think it's not as necessarily a big shift in the pace of job gains. And I think it's something that, you know, we'll have to put in that context, I think, when we're thinking about what does this mean for the go forward.
Abigail, are you giving the perfect rationale for why we could see a better than expected number at a Fed that still cuts next month?
So that is our base case. You know, we are expecting that the FOMC will deliver that 25 basis point cut in December. I think for the Fed, the key thing here is that if you look at not just the kind of BLS data that they've been waiting on after the shutdown, if you look at a range of indicators, you know, you really have seen the labor market, as Chair Powell himself has said, it doesn't look any better, it doesn't necessarily look any worse, and it already looked pretty soft. And I do think there's a sense that when we look at the go forward from that kind of potentially supported September number and then think about what we could see in October and November, our sense is that we continue to see that weakness. One of the things we've been watching closely is obviously retail hiring. And if you looked at the Challenger report, the kind of pace of September, October hiring intentions in the retail sector looks very soft versus previous years. Now, it could be that retailers are not reporting their hiring intentions. Maybe the data isn't quite capturing the full spectrum of what's happening, but it does look very soft. And so I do think that's something that we're watching closely, is just the whole spectrum of labor market indicators.
How much do you buy the fact that interest rates above 4% have been really restrictive for a lower income cohort of the economy? That this really is pain that Chair Powell was talking about in that one speech in 2022, and we've seen it come to the fore, and it's exacerbating the K-shaped economy. Do you believe that? And do you believe that rate cuts will help mediate that?
Yeah, so I do believe that you are seeing this bifurcation in the U.S. consumer. I think when you look at the data, you can see that for those lower income groups, you can see that savings have been drawn down significantly. You can see that for upper income groups, balance sheets look really healthy still, right? So I do think there is this sense that there is that bifurcation. And I think when you look at kind of things like delinquency rates, you can look at delinquency rates across the income spectrum for credit cards, for example. You've seen a significant rise for those at the lower end of the income spectrum.
Is that because of Fed policy?
I think it's partly related to the fact that you've seen interest rates remaining relatively elevated. I do think that is part of the story. And I think if you look at not just the consumer, if you look at, say, residential investment in the U.S. economy, right, it's a very interest rate sensitive sector, and you've seen it contracting for most of the past 18 months. So I do think there is a sense that there is interest rate sensitivity within the economy, yeah.
Abigail, you don't think the impact from tariffs is over. What more are we going to see?
I think the next wave of this is the pass-through from businesses wearing the cost of those tariffs in their margins and passing them on to the consumer. I think the reason we've seen that process being relatively slow is because, one, businesses didn't have a great sense of what the tariff policy was. There's been so much flux and so much change that I think businesses were reticent to pass on a price increase to consumers before they knew what they needed to pass on. I think we're kind of reaching that point now, potentially. And I think if we think about how businesses are going to manage that cost increase, I think the sense would be is that they would begin to pass it on at a point where they think potentially demand could be a little bit stronger. So you think holiday season could be one area where you start to see some of those price pass-throughs coming through more readily from businesses.
How much do you project?
So we're expecting that by the end of next year, we think tariffs will have added around 80 basis points to core PCE inflation. So we're expecting that you still have a significant amount of pass-through to come through. And that's why, you know, we get this sense that we think through the end of the year and into the beginning of next year, we think we'll be seeing this bigger real DPI shock for the US consumer. And I think that's where we start to see a little bit more of a slowing in the consumer. And then I think the next big thing is going to be what happens with fiscal policy. Do we see fiscal policy coming in? Is that something that we think would then support the economy going forward? Our expectations are that we see a really healthy refund season next year. So our sense is that by Q2, you could see a pop higher again in the US consumer, supported by that big, beautiful bill act that was passed earlier this year.
Is that a good enough reason for the Fed to sit this out? The anticipated pickup in growth we might see early next year?
I think for the Fed just now, the sense is that the risk of making a weak labor market even weaker, I think, will ultimately outweigh the risk of potential second round inflation effects at this juncture. I think if you think about the way the FOMC members are talking about that balance between the labor market and the inflation risk, they're clearly focused on this kind of weakness in the labor market. And then when they're thinking about inflation, I do think there is this sense that the tariff-related pass-through will be a one-off kind of price level increase, and this sense to kind of look through that. But I think the question will be what we see in the data. I think if they were to see a significant improvement in the economy and they were more concerned about those second round effects, that could be a reason to kind of pause and take things a little bit more slowly.
So you and the team are at 95? 95K?
Yes.
Thursday? Okay. Abigail Watt of UBS, 95K. That's the largest estimate I've seen so far. There's only 8 others. there'll be more still to come going into Thursday.
Yeah, but it's a 95 with a huge asterisk, which is that it's playing catch up, and it's not really that good. So the Fed can still cut rates, even though it's a high headline number, which just goes to the point of what are these numbers that we're looking at, and the interpretation is going to be as important as the actual figure itself.
The jobs report just around the corner. Thursday payrolls for you. There we go. A new flavour to the jobs report. Equity futures on the S&P 500 negative by 0.2% as we count you down to the opening bell. Here's your Bloomberg brief with Yahara. Hey, Yahara.
Hi, John. Amazon has launched its first U.S. dollar corporate bond offering in about 3 years. According to a person familiar, the company is selling debt in as many as 6 parts, and initial price discussions for a 40-year bond are about 1.15 percentage points above Treasuries. Proceeds from the sale are for general corporate purposes. Meanwhile, U.S. airlines are resuming normal operations this morning after more than a week of government-mandated flight reductions. The FAA announcing it would lift cuts across 40 major airports at around 6 this morning. The agency said staffing levels have continued to snap back since the shutdown ended last week. And Bitcoin has fallen sharply after topping 126,000 last month, briefly wiping out all of its 2025 gains before stabilizing earlier today. Bitcoin's total market value fell by about $600 billion from an October high. While there's no clear trigger, some traders are citing the 4-year halving cycle, while others blame global liquidity. That's your Bloomberg Brief. John?
Yahara, thank you. Some more details on that Amazon debt offering. The news dropped earlier on this morning. Yahara went over it a few times already. A 6-part bond offering, the longest piece of that, 40 years. They're looking to raise about $12 billion from that U.S. bond offering later on today.
Yeah, and just to give you a sense of how well this is priced in terms of what the value proposition is for Amazon, that 40-year bond is offering 1.15 percentage points above benchmark Treasury yields. In other words, the premium that they've got to pay over what the U.S. government has to pay is about a percentage point, which highlights why they are doing this now.
Saw something very similar from Alphabet in their long bond offering as well.
Exactly, very well priced.
Amazon this morning on the equity side of things, positive by 0.2%. Up next, we'll set you up for the day ahead. Plus, Ben Reitzes of Melius as markets count down to NVIDIA earnings later on this week. They drop on Wednesday after the closing bell. From New York City, you're watching Bloomberg TV.
Crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
There's still a long way to run in this AI trade. The question now is, are we facing a bubble? It's overcapacity, it's leverage in the system, and it's valuations that we need to focus on. And we think that we're still in the early stages of this story. Investors are willing to make investments, but importantly, what we're seeing now is that these investments in AI don't look speculative like bubbles of the past.
That was Stephen Parker of JP Morgan Private Bank. Going into the opening bell, equity futures just about unchanged on the S&P 500. We're down by 0.2% on the Nasdaq 100. For the Nasdaq, for the S&P, for equity markets worldwide, all eyes on Nvidia earnings due on Wednesday. Ben Reitzes of Melius Research reiterating his buy on the stock and price target of 300, expecting further upside to data center revenues, writing Nvidia's commentary around AI demand trends get more important each report, given wide-ranging concerns around end demand, energy availability, and China's role in the AI race. Ben joins us now for more. Ben, good morning.
Hey, good morning. Great to be here.
Great to have you with us. Talk about China's role in all of this. Some interesting comments from Jensen Huang in the last few weeks regarding the race over AI, and China may be leading the US. It was in the Financial Times. Has he got some massaging to do, the PR for Washington, D.C. and the White House?
Well, he's been trying hard to get himself back into China, and it's not looking so good. I think that the hawks have Trump's ears right now, and so we're not looking for any of that, and don't think they'll put any of that in their guidance. We were hoping, but you know, there could be a case that others outside of China need to invest even more to stay ahead. And I think while Jensen says that about China, I think we're pretty well ahead. You know, the chips there. There's news and propaganda that comes out from time to time, but I still think we're pretty well ahead. I think we don't want to relinquish our lead, but I think that we're well ahead right now.
Ben, I know you've done the research on this. Talk to us a little bit about how they'll use their cash, whether it's capital returns, buybacks, or whether it's going to be to continue investing in the build-out of this ecosystem. How do they choose between one versus the other?
Yeah, about a year or two ago, we kept writing that they're going to have to do the mother of all buybacks. And now it looks like they'll do probably less than half of their free cash flow will go into buybacks, and more than half will go into either acquisitions, which are more unlikely because they're so big, but also investing in the ecosystem. And we think that that is going to be a much bigger place where they put their cash. And we've seen it already with OpenAI, with a few other things, CoreWeave and whatnot, and we think they're going to keep doing that. But I think that it's going to have more scrutiny because we got to make sure that they're picking the winners that actually deliver and it doesn't look as circular. So there's going to continue to be that debate. Are you investing? Is it just circular? You hand them cash, they buy your GPUs. Or I think people will actually look at it more favorably if those companies do tend to win. Like if we start seeing OpenAI's valuation continue to go up, people say, hey, you know, it's a good investment. CoreWeave, like to see, you know, that stock recover, that kind of stuff, then people will be happy about it. But if they're investing in things that crumble, then the market will be very harsh. I think Jensen is going to be explaining that a bit more on this call as cash is piling up.
Who do you think the winners are? Do you think that OpenAI is the right bet, or do you think that somebody else would be better?
I think right now there's, people say 5 or 6 model companies. It's not sure who's going to win, but OpenAI has the most consumer usage. Anthropic's doing very well in the enterprise. We wrote about them today, very promising. And then obviously there's the large language model companies, Google, Meta, Microsoft actually has access to OpenAI and their own models. I think it'll be a combo of those five, and those are the ones that I think are going to keep investing throughout the next several years. And I'm not sure a winner will shake out probably until we're 3 to 5 years more down the road.
I remember a year or two ago, people were saying that the concentration of NVIDIA buyers in just a handful of names was a bug, was a problem with the investment thesis for NVIDIA. Are you seeing it more now as a feature? Because these are cash-rich investors that are increasingly going to be compelled to buy more from NVIDIA?
Well, yeah, what also happens too is, when you hear about these plans from Sam Altman, while they look cartoonish, you know, at the 1.4 trillion by 2033, Google's got to look at that and go, gosh, I have to invest. So does Amazon, so does everybody. And Microsoft, and they all look at that and they go, we have to invest to keep up. Like, what if they win? We can't afford to lose. These massively cash-rich companies. It is a little scary to some to see OpenAI now being such a big part of the growth. And I think if OpenAI, and I think they will, raise the money they need to just keep going, that will assuage a lot of concerns.
What about cash-rich countries? You talked about how you're basically not banking on NVIDIA getting back into China. Does the Middle East fill that hole?
Yeah, I think that the peace in the Middle East type stuff is actually way more important than people think. I mean, we need the Gulf nations to be allied with the United States so that they can receive licenses to build data centers and use their energy-rich economies to build massive data centers so that they can power their own sovereign AI. And I think President Trump and his administration see this, and that's what we're hoping for. So instead of filling up the void, what could fill the void from China is these cash-rich Middle Eastern nations, especially the Persian Gulf ones, buying a ton of NVIDIA chips. And so far, you know, so good.
Likely that'll be on display tomorrow with the Crown Prince coming to Washington. But do you think the China hawks have a point in the administration about potentially the tech leaking to Beijing?
I think that, you know, when you talk to NVIDIA and you say, what are the workloads, it really doesn't seem like China's going to put their entire national defense on an NVIDIA stack because it's an American company. I mean, we have to be realistic here. I think that some of it gets overblown on the Washington side, but it's tough to say that. I mean, what if something does happen? So I don't want to be the one responsible. But in terms of the whole scare, I think it's a little overblown. What I worry about, and I do think Jensen has a point, is if China does develop their own tech stack and then selling it to our allies across the Middle East and Europe, and then we have that issue there. I don't know if that's a hole we want to go down. So there's really no good answer to the whole thing, and I think it'll continue to be a hot debate.
Ben, great work. Enjoyed the note as well. Thank you, sir.
Thanks.
Thank you very much.
Here.
Ben Wrightis there of Melius with a buy rating on NVIDIA and a $300 price target. NVIDIA reporting earnings Wednesday after the close.
Very curious to see what they say about OpenAI and how much they want to diversify and who they want to support and what the programming capabilities are that they're kind of getting behind. I think that's fascinating.
What a week coming up. NVIDIA earnings later this week, earnings from retailers Target, Walmart, Home Depot, and a payrolls report this coming Thursday. Coming up tomorrow, Peter Chia of Academy Securities, Liz Ann Sanders of Charles Schwab, Kate Herr of JP Morgan, Elisa Shallon of Morgan Stanley. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies. which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, you know, I mean, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Good Monday morning, 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Titans diverge on tech as Peter Thiel bails out on NVIDIA, but Warren Buffett bets billions on Google.
And awash in garbage lending, Jeffrey Gundlach warns that private credit is the next subprime.
And the Swiss miss. UBS may ditch Switzerland as its chairman mulls a move to the United States of America.
Meanwhile, Matt, you mentioned it, Berkshire Hathaway having some impact on stocks this morning after reporting 13 Fs for them. It is a new Alphabet holding. Those shares surging, well, not surging, I guess 3.3% is a surge, I don't know. Warren Buffett's Berkshire Hathaway buying nearly 18 million shares of Alphabet in the third quarter. I believe that's worth about $4.9 billion.
Well, they've added a ton more than that to Google's market share. It counts as a surge if you're a $3 trillion company. NVIDIA, a $5 trillion company, or once was, now down 1 1/3%. We have more signs that big masters of the universe, now Peter Thiel, are selling out their stakes. In the 13Fs, his hedge fund dumped all of its NVIDIA just days after news that SoftBank sold its entire stake, a sign that tech insiders are taking profits at these valuations.
And Matt, adding to that, one of Wall Street's bond kings is spotting overpriced assets almost everywhere he looks. DoubleLine Capital founder Jeffrey Gundlach told the Odd Lots podcast as part of their 10-year anniversary that this has been an unprecedented bull run.
The health of the equity market in the United States it's among the least healthy in my entire career in terms of the PE ratio, the CAPE ratio, all the classic valuation metrics are off the charts.
And Bloomberg Tech co-host Caroline Hyde joins us now to discuss big tech players selling their stakes in NVIDIA. Caroline, it just feels like this constant buildup of people being more willing to be vocal about their bearishness on stocks like NVIDIA.
Drip, drip, drip. This one is a filing, 13Fs, and so we get it just by osmosis of the fact that they had to say, and this is the macro fund that Peter Thiel has set up. This is bet on public equities that he's out of NVIDIA. Now, not nearly to the tune of $5.8 billion worth, as we saw with SoftBank. This is only $100 million worth. But still, the fact that they pull back entirely and get rid of a US energy company, Vista as well. They're still in Tesla, which has AI exposure, and that's the #1 holding now. They're still in Apple. They're still in Microsoft, which has a lot of AI exposure. And you've got to remember, Peter Thiel is making other bets in his private equity side of the house, the VC side of the house. He's making bets on the new forms of how you create and manufacture chips with substrate. He's been backing Cognition AI, which is another LLM, which is the company that's helping you really, whether it's agentic help when they're coding. These are bets still on artificial intelligence more broadly. So is he taking profit like we saw with SoftBank? Because remember, SoftBank got out entirely, but again was redeploying that in OpenAI and other areas of artificial intelligence. Is it that NVIDIA's just done too well? Or is there something more that they're trying to signal here in terms of whether the money's going to keep going its direction for GPUs?
But it's just one more of these incredibly well-respected investors, right?
Yeah.
You have Michael Burry shorting it to the point where he's even closed down his hedge fund, maybe so he can hit it even harder. You have Peter Thiel selling his entire stake in NVIDIA. You have SoftBank selling its entire stake in NVIDIA. And you have Jeff Gundlach saying these valuations are incredibly high no matter how you look at them.
And what's interesting about Jeffrey Gundlach was that he doesn't really know how to play it elsewhere other than put it into cash. He's not saying get into gold anymore. It's really trying to understand how you bet against what you get the feeling of an AI bubble. Are you just trying to cut out some of your winners? Because, look, people are still out there raising money to put more money into the data center play. Look what Amazon's doing today. It's following on from Alphabet, another 6-part bond sale. This one's going to be the first time it's tapped the US debt market in 3 years. They're trying to basically have to raise money in all different variations, making the most of pretty cheap debt if you're looking at 40-year just
all of these mega cap tech companies are taking on more and more debt and buying more and more fixed assets.
Yeah.
What is happening?
But they've got so much money. And maybe it's just starting to trying to be savvy with the way in which you spend. Is it just using your cash deployment? Is it therefore being able to use your cash to buy back shares or indeed buy other companies and meanwhile go to the debt markets, which at the moment paying just a percentage point over 40-year US Treasury. I mean, it's just extraordinary how cheap you can do that. But they've got a whole load of capital expenditure to keep on deploying, and that's what we're going to see in the fundamentals on Wednesday. NVIDIA, we get their earnings, and we're going to actually see how much money is coming, the wall of cash coming their direction. Is everyone going to wish they actually didn't sell out?
Levi Strauss, I'm looking at headlines right now. Levi Strauss is getting into AI with Microsoft.
Yeah, of course.
I mean,
of course it has to.
Yeah, well.
So you want AI genes?
Yeah, exactly.
But then just like Levi become an AI play, and then all of a sudden if the AI play crumbles, do you have to worry about like your Levi Strauss stock starting to fall? It's this weird like interconnected weave where
this is how it happens.
But or is this just like the .com, you know, you can get a website. We'll just stop talking about AI at some point because every company will have intertwined it for productivity's sake.
Right, this is like if a pet store decided to become .com. All right, Caroline Hyde.
Never heard of it.
Caroline Hyde co-anchors Bloomberg Tech that kicks off at 11 a.m. today. A lot going on in that world, as usual. As Danny mentioned at the top of the show, Google is up after Warren Buffett's Berkshire Hathaway bought nearly 18 million shares of Alphabet in the third quarter. Bloomberg Intelligence senior analyst Matthew Palazzola, who covers all things Warren Buffett, joins us now. So, Matt, Buffett has said he was late to this trade. Is this how he makes up for it?
Maybe. I mean, he may not have even made this trade, to be honest. He is on his way out. He's stepping down as CEO at the end of the year. He has 2 investment deputies, Ted and Todd, and they have relatively low profiles. Why I didn't say their names, but
Ted and Todd.
Ted and Todd.
Sounds like a couple of guys at the squash club.
Exactly.
You know?
And so there are talks that they manage maybe like 10 billion each, or you know. Where Buffett has admitted not really fully understanding Google in the past. So Buffett may not have even made the trade.
They also increased their position in a fellow insurer, in Chubb. Is there something behind that that could maybe lead to takeover speculation?
Is there something brewing there?
Exactly.
So, you know, there might be speculation. Look, Chubb, I think, we cover Chubb. It is a global insurer, one of the best in the world. Great margins, great growth, great management. I see it being pretty tough for the management of Chubb to want to be absorbed, though I could see Evan Greenberg, the CEO of Chubb, being enticed by running that Berkshire Hathaway insurance empire.
What's your take on Warren Buffett going quiet? I mean, you've been following this company for years. You go to the meetings. Is it is it, in your mind, is it a problem for Berkshire, or has he set them up so well that they can continue on?
So I think he's been setting them up. He's been every year I'm there, he's kind of a little slower. He's talked about how he stepped back from daily duties. He hands things over to Greg Abel. So he's been prepping for a long time. They have mountains of cash. I do think...
Is that a good thing, Matt?
So it's not necessarily a good thing.
Too much cash?
I mean, having mountains of cash, I guess, is always a good problem. But I think there is the school of thought that they lose a bit of the magic, and they are going to not be as good as they were in a lot of
But there's
aspects.
an opportunity cost to holding cash, right? It's not always a great thing, unless you're Jeffrey Gundlach and worried that the sky is caving in.
I still
Then it's a
wouldn't
great
mind.
thing.
I agree with Matt. It's not really a horrible thing having over $300 billion.
Perhaps, fair enough. Matt, thank you so much for joining us this morning. Matthew Palazzolo of our Bloomberg Intelligence team. Now, breaking news in the past 8 minutes, Ford striking a deal with Amazon to offer used cars on the e-commerce site. Joining us now is Bloomberg auto reporter Keith Naughton. Keith, I was just looking at the Ford share price. It initially pops on this, and then you can see it's still down. So is this a game changer for Ford at all to be able to sell its used vehicles on Amazon?
It's sort of Ford putting a toe in the water on doing a deal with Amazon. Hyundai was the first to get on the Amazon Autos portal about a year ago, and they're selling new cars. Ford is coming with its certified used cars first to see how that goes. They are getting a lot of interest from their dealers in it. They do this in partnership with their dealers, but it will sort of address these issues that consumers have about the hassles of buying a car. It's, one fixed price. It's a pretty speedy process. You can do it all, on your phone or at your laptop.
Can't do any deals though, right? With Amazon, I like buying a car because you get to really move the price down if you know how to do it. It's interesting that it's just used cars because, on the one hand, they're not going with the new cars like Hyundai and others who have gone online in various forms. On the other hand, it says something about the affordability of new cars that people are taking certified used cars as a real substitute.
That's absolutely right, Matt. We have this affordability crisis in the new car market where the average price is now over $50,000. Well, the average price of a used car, a 3-year-old used car, is about $31,000, which I know sounds like what a new car used to be. It is, but it's still more affordable. So many new car buyers are migrating to the used lot. Ford's certified program, like many other certified programs, includes a multi-point inspection. You actually can get a warranty of up to a year and 12,000 miles. So it's feeling a little more like the new car buying experience. There's a few more guarantees, but it is a growing market. Used vehicles are what a lot of mainstream buyers are turning to.
All right, Keith, I just want to quickly ask also about the Lightning, because I was on Ford's website this morning putting together my dream Tremor. Is the F-150 Lightning no longer going to be built? Is it done?
Well, what sources are saying is that they're considering dropping the Lightning. Absolutely. It's not selling very well, Matt, and it's paused at the moment as follow-up to that supplier fire they had in September. They're putting all their efforts into building regular gas-powered and hybrid F-150s, which actually make them money, whereas the Lightning loses them gobs and gobs of money.
Keith, thank you very much for that. That's Bloomberg's Keith Naughton out of Detroit. A quick check on futures this morning, because what started out with a gain in the futures session has turned into losses. Seems to have coincided with that monster debt offering from Amazon putting pressure on treasuries. We're down about 0.2 across the board for both the S&P and NASDAQ after just barely getting out gains for last week. Russell 2000 futures, those underperform, Matt. They are down 0.33%.
Let's get a look at some of the other movers on our radar this morning. Crypto-linked stocks broadly are down, although you can see Circle, the stablecoin issuer, is up as Bitcoin trades flat for the year. So we've lost everything we've gained and then some. We did see some of these crypto stocks a little bit higher, but they've turned negative.
And alongside those declines, Dell and HP, they're also falling. This is after a Morgan Stanley cut. They said that some of these hardware stocks are at risk from a memory supercycle downside.
Johnson & Johnson is buying Halda Therapeutics for $3 billion on this M&A Monday to bolster its offerings to treat prostate cancer. And I'm sure we'll have more deals floating in throughout the morning.
I'm sure we will on this M&A Monday, Matt. Okay, coming up, how about this for a deal? The chairman of UBS and Treasury Secretary Scott Bessent have reportedly discussed moving the bank's headquarters to the U.S. We're going to have those details coming up next.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Get to high interest. Look what's making headlines around the world. European officials are warning Washington not to undercut their new trade deal. The EU says a U.S. push to expand the list of products facing higher steel and aluminum tariffs could breach the spirit of the summer agreement that capped most duties at 15%. Brussels plans to raise the issue with Commerce Secretary Howard Lutnick and Trade Representative Jameson Greer next week. But be warned, guys. DoubleLine Capital founder Jeff Gundlach is raising alarms over private credit.
In recent years, the garbage lending has not gone to the public markets. The garbage lending has gone to these private markets. And private credit has been very popular and is now increasingly been over-allocated to by large asset pools.
Gundlach tells us we should be holding 20% in cash to avoid private credit, calling it the next subprime. We'll be talking a lot about that throughout the program. And trading the Alps for Uncle Sam. UBS Chairman Colm Kelleher has held private talks with Treasury Secretary Scott Bessent about moving the bank's headquarters to America. That's according to the Financial Times. The Trump administration is said to be receptive as Switzerland pushes ahead with tougher capital rules that could cost UBS $26 billion. In a way, it wouldn't really cost them that, but we're going to explain. A relocation would let the world's biggest wealth manager tap looser U.S. regulations and deepen its ambitions to buy a U.S. wealth firm. Danny, how on earth did these private talks become part of the news? Was it leaked, perhaps?
It just might have been. And I think the FT might be behind that. And I wonder why it would be leaked. Let's get more on the story. Bloomberg Chief Wall Street correspondent Sridhar Natarajan joins us now. I mean, Sri, is this anything other than UBS sending a big old signal to Swiss regulators?
Look, that is the cynical perspective here. That is the thing that we should look at, and that's probably true. It is a pressure campaign, but the drumbeat of the relocation threat has been growing louder through the course of the year. This is not the first that we've heard of it. This is the first that we've heard of a senior U.S. government official named in such a conversation, the Treasury Secretary Scott Bessent. But over the course of the last year, we've been talking about this because UBS has been very clear that if Switzerland goes ahead with these new capital requirements, they will have to hold an extra $26 billion in capital, and that they believe will certainly make them uncompetitive internationally. Their capital requirements will go from anywhere from somewhere in the 14% region to 20% region, and they believe that is too punitive.
I mean, come on. The top income tax rate in Switzerland is 15%. Those bankers are going to give that up for what, 35% here? Sounds like it's never going to happen.
Look, I think it's fair to say it's highly unlikely because you can't even ignore the significance of such a move. UBS is the Union Bank of Switzerland, goes back to 1862. It's synonymous with the expansion, the industrial expansion of Switzerland over the last century and a half. And what modern-day Switzerland today has been financed with banks like UBS and Credit Suisse. And UBS and Credit Suisse today are one bank, UBS. So if such a move were to happen, it would be dramatic. It would have a big impact on Switzerland because, don't forget, the crown jewel of Switzerland is their tourism economy and their banking system. So if you have their last remaining global bank leave the country, that will certainly dent their reputation. So if you were to handicap this, I would still take the under than the over on UBS moving out of Switzerland, but you can't ignore the threat at this moment.
I would say, to your point, if it's like the last big bank, isn't this to some degree a problem of Switzerland's own making? The fact that it initiated this forced marriage between Credit Suisse and UBS means that UBS has so much more punching power than perhaps it would have in the past.
Yes, but you also have to remember why Switzerland had to step in the first place. A government does not desire to orchestrate a merger like the UBS and CS merger that we saw in 2023. Credit Suisse was in real trouble. And remember, back in 2008, the Swiss government did inject some 6 billion francs in the UBS balance sheet to help UBS through the global financial crisis. So the government will say, when times have gotten dire, we've had to get involved. And that is why it makes sense for us to actually make the system more sound, make the capital requirements a little more harsh for the banks so that we don't have to come to a situation like this every 10 to 15 years.
I wonder where they would go. I mean, you know, West Palm Beach, I guess, is one possibility, or Miami. Colorado, you know, because the Rockies, you can't ski in New York. Do you think they would be here in New York City?
The only thing I want to say is I'm glad we're not throwing out the options you were discussing before we got on air about the possible new names for UBS. I think they should just stick with UBS wherever they are.
Obviously, you just choose what has the best name, and that's where you relocate.
I thought UBUS had a good ring to it. No? UBE, the Union Bank of Earth.
I'm so glad you're not in strategy consulting.
Sri, great having you on the program. Thanks so much for joining us. Bloomberg Chief Washington Correspondent, Chief Wall Street Correspondent, Sri Natarajan. Coming up, the S&P 500 at 7,900. That's Infrastructure Capital CEO Jay Hatfield's target for 2026. He joins us next to talk about that. This is Bloomberg Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I think in equities today, investors should have maximum 40%. If you're at 40% in stocks and 20% or 25% in bonds, you've got another 35, 40% to allocate. And I've been very, very bullish on gold. The rest, I think I would be in cash because I think valuations are just incredibly high.
Double Line's Jeffrey Gunlock on the Odd Lots podcast warning about high valuations, saying hold 20% cash. Joining us now is Infrastructure Capital CEO and Portfolio Manager Jay Hatfield. He has a 7,000 target for the S&P 500 in 2025 and a 7,900 target for 2026. Jay, I'd assume that you disagree with Mr. Gunlock on this idea that you should be holding 20% cash in today's environment.
Yes, we think you should be holding 0% cash in this environment. So we're bulled up. You should always really be long when the Fed's cutting rates. Maybe this Fed won't cut rates, but we're confident the next Fed with a new Fed chair will. And you have the AI boom, so it's pretty obvious you should be long. And we think when you're coming out of the cycle, you shouldn't be so concerned about credit.
We've started getting a lot more layoff announcements or speculation. Is that, you think, going to continue? Will the Fed have to cut rates deeper into 2026? Or will inflation become more of a problem than it already is? And I would submit that at 3%, after what we've already had, it is a problem.
Well, we don't agree with that. So we adjust CPI for shelter. We use real-time shelter. So PCE-R, you can get that on our website. You're welcome to license it, by the way. We don't charge for it. Is 2% already. CPI-R, so using the internet and real-time data, is 1.3%. Money supply is shrinking at 6%. So we think there's a chance we'll have the actual deflation if it was properly measured.
Money supply is shrinking. What do you look at for
We
money
look at M0. So
okay, I was looking at M2, and it seems to be coming back up.
That gets distorted now, and it's kind of irrelevant now because the Fed can't restrict reserves anymore. There's no limit on reserves. And it's better to look at M0 comes out every Thursday. The Fed publishes it. And that's what the Fed controls, and that's what also drives Fed funds.
Jay, really quickly, because we only have a minute until we need to leave for the opening bell, but we're about to get a pretty massive amount of tax savings, tax refunds, maybe tariff relief. Is that factored into this market yet?
I think that's a tailwind for the market for sure. We don't think that's inflationary. It's really money supply that's inflationary. So, but that will be good for next year. We're projecting 3% growth next year, partly for those reasons, but also if the Fed cuts, then the housing market should improve. And that's really what's causing lower employment, is a declining housing market.
All right, Jay, you're going to stay with us. We have the opening bell coming up soon. And a quick check on futures before we get that, just under 4 minutes to go until the opening bell. And it's been a tough start. Over the past 30 minutes, we saw futures go negative after that monster bond offering from Amazon, down 1/3%. For the NASDAQ, your opening bell coming up next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We were looking at futures up this morning since I arose at 2:30. But we're now looking at a drop of 1/3% here on S&P futures, down even more on the NASDAQ as concern grows about big investors like Peter Thiel getting rid of their NVIDIA stakes. You can see Webster Bank here ringing the bell at the New York Stock Exchange, celebrating their 90th anniversary as a bank. The stock has done well over the last 5 years. It's up 71%, so not the S&P, but good for a regional bank. And then Amerisafe ringing the bell, celebrating the 20th anniversary of their listing on NASDAQ. And this stock is only up like 5% over the past 5 years, but I brought it out to 20, breaking my 5-year rule, and they're up 994% over the last 2 decades. So they've done well with that listing. Danny, what are you watching?
I am watching Alphabet shares this morning because they are decisively higher here at the open, 3.8% just about. Warren Buffett's Berkshire Hathaway, they've bought nearly 18 million shares of Alphabet in the third quarter. They've also sold some of their Apple stakes, sold Bank of America, but this puts the stake at about $4.9 billion, Matt.
All right, so an outsized gain on that purchase, but we saw an outsized loss on SoftBank's sale of NVIDIA. And NVIDIA is taking another hit after Peter Thiel's hedge fund sold its entire holdings in the chip maker. That's just days after the SoftBank story. And I guess one more sign that tech insiders, that Wall Street bigwigs are taking profits at these valuations. We're back with Infrastructure Capital CEO and portfolio manager Jay Hatfield. And Jay, I think this is interesting because yet another sign, right? We've had SoftBank, we've had Thiel now. We have had Michael Burry shorting NVIDIA. That big names on Wall Street are starting to point to what they may think is a bubble, or maybe at least say this valuation was good enough to sell.
Well, we're drawing a distinction between fully valued and bubble. You mentioned MicroStrategy. That was in a bubble because that's just trading above its NAV, which is ridiculous. But if you look at the Mag 8, we use a GARP framework, so reasonable peg ratios. Overall, the Mag 8 is roughly fairly valued, 1.5% cheap.
You say Mag 8, so you're adding Broadcom?
Correct, yeah. So everything over $1 trillion, just make it simple. And without value judgments, because I wouldn't call Tesla magnificent, but it's over $1 trillion. But in any case, so it's perfectly reasonable, and we've been doing this. We have much more conservative funds, so actually our funds are doing well in this type of market, but we had small positions in tech because there's a little bit in our index. So we trimmed Broadcom and we trimmed Amazon when they ran up. So it's perfectly reasonable to take profits. But the bubble is not in those companies. It's in the smaller companies. It's in Palantir trading at a 7 peg. So this type of market, or of course, just Bitcoin in general, where you have no actual cash flow, it really disciplines investors and makes them focus on peg ratios, and that benefits us because we always are looking at valuation.
What about the changing nature of these tech giants as it comes to debt? Amazon offering $13 billion in the debt market. Some of the CDS, the credit default swaps, have started to blow out. For Oracle CoreWeave, this is Oracle's credit default swaps for 5-year debt has absolutely been widening to an exponential scale. Is a narrative starting to build that something is unsustainable, or at least concerning about the debt load that these tech giants are taking on?
Well, it's important to note that we're after earnings season, and that's when, and so we had actually taken off some exposure because that just always works. It doesn't really show up in the seasonality of November, but it still is operative. So that's when these fears really run rampant because you don't have any information. We will have NVIDIA on Wednesday, but we don't believe they're relevant. It is an unusual tech boom because usually tech, you just buy some computers and software and hire some engineers. This one, thankfully, it's one reason we don't have a recession, is very old economy oriented. So even, I came from the utility industry originally, even utilities are benefiting. So it's actually good, but it does require more debt and it takes investors a while to get used to that. But if you look at that blowout, I would think that was like from 50 to 110. So
yeah,
I mean, that's
well, blowout for something that's been relatively calm, right? These like debt markets have been insanely calm, and it feels like something is starting to change.
It's also something that Danny has pointed out a lot, which I've been thinking about. After she says it 10 times, then it enters my brain. These companies in the Mag 7 that for the most part have been asset light are buying stuff, a lot more stuff, like hundreds of billions of dollars worth of stuff that is just depreciating. You know, it's like the cars and the motorcycles that I always convince my wife I need to have, and they're worth 20% less the second I drive them off the lot. Isn't that a concern?
Well, certainly it's an uncertainty. I used to audit tech companies and always thought that their assumptions about useful life were overly aggressive. So that's an issue, but we won't know till we know. If you listen to Lisa Su, she used to tell you that there's always use for older chips. So it's a concern, but it is depreciation. So if you look at free cash flow, it wouldn't matter that much. But like I said, we see tremendous demand for AI. Like even if you're on the internet, there's tons of new apps even for retail coming out. But if you're a major corporation and you don't invest in AI, you're going to go out of business. So there's tremendous demand. We're 5 years away from the peak of the bubble. And so when we have these little pullbacks, all these fears come out. And then when earnings come, people calm down. You mentioned private credit, like all the large alternative asset managers reported, they all said there isn't a problem with private credit.
Doesn't, though, that just underline one risk that is emerging, even if it's not a bubble, but the idea that things are becoming more correlated because of the nature of AI? You have more companies investing in AI. Today, it's Levi Strauss, who knows what sector it will be tomorrow. Caterpillar saying they're now an AI company because all of their growth is coming from AI-related industries. Does that make it more risky? Does that make portfolios just inherently more concentrated if so many of the companies are trying to move into an AI economy?
In 5 years, yes, it could be more big concern because really you have to look at the Fed cycle. We're probably 5 years away from a tightening cycle, and that's when you have the pullbacks and these interrelations kick in. So I wouldn't miss out on 5 years of boom because you're predicting the things that might happen when you know, the Fed tightens and demand goes down and you have these problems emerge.
Jay, we started having you on because you're smart and you had this proprietary research that we and indexes that we think are so fascinating. Then we started to notice that the things you were saying were coming true down the line. Then we realized that the most powerful people in Washington were listening to you as well. But you have products that we never talk about. Like you have ETFs. What are they?
Well, thanks for asking, because I normally get fired as our spokesman because we never mention our ETFs. But we have mostly or all income securities. So we have our biggest fund is preferred stocks, a great asset class, mostly for more conservative investors. And then we have equity funds where we write calls and invest in. ICAP is our biggest equity fund. And so we like these kind of markets because when tech's not doing well, they tend to rotate into our securities. So our funds have been doing well while the rest of the market's been doing poorly. So I would recommend having a diversified portfolio and also look at valuation. So it's great to be in the Mag 8. It's not necessarily good to be in MicroStrategy when it's trading at 2 times its value of Bitcoin. So it's a good discipline for the market, takes the bubble out of certain parts of the market, and it's good for our funds.
Hey, Jay, such a pleasure to have you on. Thank you so much for joining. Looking forward to the next 5 years of a run-up and looking at it alongside you, Infrastructure Capital CEO Jay Hatfield. Now, check on the stock market right now because you are looking at a NASDAQ 100 that is flipped to positive and an S&P 500 that is just barely inching into being positive too. It is the strange nature of this market. I mean, just last week, we ended up flat for the S&P. If you were trading every day in this market, it wouldn't have felt like it. It's been so volatile. So what is getting us there this morning? It is Alphabet. Thank you, Berkshire Hathaway and Warren Buffett, for your increased stake in Alphabet. That's moving the shares higher by 5%. The A and B class shares adding 9 and 8 points to this equity market. The Mag 8, as Jay was just talking about, Broadcom, also higher this morning. To the downside, it's NVIDIA. Matt's been talking about this. Peter Thiel selling a stake in NVIDIA. Apple, you also had Warren Buffett selling some of his shares via Berkshire Hathaway and Apple. Those shares down 1.2%. Looking at how these sectors are shaping up this morning, you have a push-pull in tech that leaves it down just 0.4%. Energy falls, that's down 0.5%. Communication services, this is going to be mostly Alphabet, right? Those shares up 2.6% for that index. So overall, Matt, somehow we've managed to turn things around in the past, what has it been, 10 minutes when the futures were negative? So we are up so far this morning.
Yeah, you know, it's fascinating because last week on the down days, we had breadth to the upside. And today, as we turn higher, we have breadth to the downside.
Yeah.
It'll be interesting to watch what NVIDIA does right now, down 1.25%. Obviously, it can move markets, but doesn't necessarily have that result every day at the close. Coming up, the battle for market share in obesity drugs. Novo wants to sell Wegovy and Ozempic at cheaper prices, undercutting Zepbound maker Eli Lilly. But the pricing structure and the timing of these deals is fascinating. We're going to talk about it next with Cynthia Kuhn. She runs our healthcare coverage at Bloomberg News. This is Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Let's look at some of the top calls this morning, the analyst action that we are following. First up, Morgan Stanley warns that a memory supercycle could hurt earnings for computer hardware manufacturers. They cut their ratings on HP. Dell gets a double downgrade to sell. Those shares fall nearly 5%. Analysts expect profit margins to drop in 2026, well below what the street is seeing. They also say that PC and server makers like Dell are going to be facing the biggest risk. Next up, Gap gets another upgrade, this time for Barclays to a buy. They say that the retailer's brand recovery outweighs tariff headwinds. They say that Gap's disciplined leadership is driving long-term gains. The analysts there saying that the strategy, sustainability, and brand elevating has been working for the company. Those shares up just 0.4%. Finally, Yum Brands, they get an upgrade at TD Cowen. The analysts say that the likely sale of Pizza Hut could amplify the company's growth by letting it focus on Taco Bell, I guess the crown jewel of Yum Brands. Those shares unchanged this morning, Matt.
Which would you choose if you were forced? I'm saying like 3 a.m.
To eat at?
Saturday morning.
Oh my gosh, I guess Taco Bell, because there's more diversity. I don't.
It's the right answer.
Does Pizza Hut sell anything besides greasy pizza? Where's Taco Bell?
At that time that I specified, Taco Bell is
it's a crucial point.
But otherwise, never. Novo Nordisk is undercutting Eli Lilly's prices for certain obesity drugs. Novo will offer Ozempic and Wegovy for $199 a month for the first 2 months of treatment. Then it'll be $350 a month after you titrate up. Bloomberg's Cynthia Coons, who leads our healthcare team on the other side of the building, joins us here on set to explain. So this is really fascinating pricing to me because it undercuts Lilly until you get on it, and you really need to stay on it at that point. But after that, they become one and the same, the price.
Yeah, it's very interesting to see this happening in drug pricing. It's very much a consumer price dynamic, and we don't really see that in healthcare at all. Everything's been so obscure. Everything's been behind the curtain. You see bills, you don't pay them. It's kind of always been a mystery. So this is an interesting step, and it's part of this broader theme we've seen with weight loss drugs. Insurers haven't been covering them in a big way, so these companies are trying to get direct to the consumer. And so doing it in this sort of introductory price way is kind of feeds into this bigger, how do you get people in, get them on your drug? And Novo's been, it's a race against the clock for them. They actually face lower prices in a couple years through the government program, through the IRA legislation sooner than Lilly. So they're really trying to get ahead of it as fast as possible to win share.
But to your point, I mean, this sounds like more like something you'd hear from like the Wall Street Journal, like your first month of the paper is $1 and then it goes up from there. If this was any other drug, I feel like people would be angry about it. This idea that this drug that many people need to have in order to protect their health is going to be cheap the first couple months, and then ramped up significantly.
Well, to be fair, it's kind of how the market's already working, because a lot of people are using telehealth platforms to get the drugs, and telehealth platforms operate in a very consumer-oriented model. And so introductory pricing, I hear you, it sounds very weird for drugs, but in a world where different drugs are interchangeable and many different platforms are selling it, it's now just turned into maybe a more traditional consumer marketplace.
Also, you could argue, and I'm the last person to make this argument,
But you're making it now, go ahead.
that you could just eat right and exercise rather than take the drug, you know?
But for some people, it's genetic reasons why they struggle. I think it's
here
too
with you.
nuanced for that, Matt. It's way too nuanced for that.
Well, also, far be it for Americans to have willpower. Come on. I wonder if the changes that are made in March are going to give Lilly an advantage over Novo, because the Trump administration does seem to want to give Pfizer and Lilly an advantage over foreign drug makers, which makes sense.
Well, I think March is a long time away, and I wouldn't be surprised if Lilly makes a move even sooner, just because they have these vials, they offer prices, and they do cash pay, they have Lilly Direct. So they're doing this already. So I think March just seems like a lifetime away right now, given how fast these price wars are moving. I could see Lilly doing something a little bit sooner. It's really hard to say who wins here, because it's really going to be market share versus price and dynamics playing out over the next year or two until this IRA pricing comes in and really brings it down.
But it's not yet about drug versus drug, right? Because I know that Zepbound apparently allows you to lose more weight, but they both allow you to lose a substantial amount of weight.
I think, yeah, coming from where we've been with weight loss drugs, they're both really powerful drugs and powerful agents, but just keep in mind there's also new things coming and add-ons and drugs that you're going to add to these drugs going forward. So this is still going to be a very high-priced market. I think there's still going to be a lot of attempts by the companies to come out with really expensive alternatives that work even better, have fewer side effects, or preserve more muscle. But in the meantime, I think even in the next couple of months, I could see the continued pricing pressure on both sides.
Yeah, man, it has been fierce between these obesity drug makers. Cynthia, thank you so much for joining us this morning. That's Bloomberg's Cynthia Coons. Now, coming up, diverging tech bets. Berkshire loads up on Alphabet. Peter Thiel's hedge fund dumps its entire stake in NVIDIA. We'll have the moves from the latest 13Fs coming up next. You're watching Bloomberg Open Interest.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check of what's going on in stocks after futures fell, and then we had a positive open, and now we're gaining a 0.25%. NASDAQ up 0.6%, so not hurt by NVIDIA shares, which are still down. If you Take a look here. Johnson & Johnson's a gainer on an acquisition. Novo Nordisk is unchanged. We were just talking about that story. Tesla is up, even though Peter Thiel reduced some of his Tesla stake. He still holds it. Ford is down, even though they made a deal to sell used cars on Amazon. Nvidia is the important one, down 0.7%. And yet, this market floats higher. Google helping it do that because it's up 6% after Warren Buffett after Berkshire Hathaway said in the 13F that they do have a big stake there and have boosted it by, what, $5 billion?
Yeah, so the total stake now goes to about $5 billion from Berkshire Hathaway's purchase. Let's get more on that and other tech news. Joining us now is Mandeep Singh of Bloomberg Intelligence. And Mandeep, this comes after Google's already been outperforming. It's up 55% so far this year. That compares with Amazon for 6%, Meta for 4%. What do you just make of the timing of Berkshire Hathaway adding to their Google stake?
I mean, one thing that could have influenced it is the antitrust issue that Google was under, the monopoly lawsuit, and the fact that that overhang was cleared. And that was a catalyst for a lot of the investors in terms of, how Google could have been impacted. Because when you think about Google's assets, it's the Chrome browser, Android operating system, and then the family of apps with over 2 billion users. That's why everyone feels Google will be a beneficiary of AI, that even if the search business gets affected by ChatGPT, they've got all these surfaces where they'll be able to monetize. And I think Chrome was a big part of that.
We've had a wave of bad news on the tech front, starting with Michael Burry saying that he was shorting NVIDIA. Then we had SoftBank selling off their entire stake. Okay, maybe because they want to use it for something else that still supports NVIDIA. Then we have Peter Thiel getting rid of his entire stake. Okay, maybe he owns competing businesses that he would rather invest in. But there have been a lot of big names getting out of NVIDIA. Is it fully valued?
I mean, it always happens ahead of when NVIDIA reports. There are always questions posed around how sustainable this is. And look, they've touched $5 trillion in market cap. So clearly, the estimates have gone up. The valuation has expanded. And what I would say to this is our CapEx numbers for next year are probably you're going to see a 40 to 50% increase from the big hyperscalers. And all of them are customers of NVIDIA. The one big caveat here is Google is looking to commercialize their TPUs and sell to someone like Anthropic, which has said they want to spend up to $50 billion, not like the OpenAI number of 1 trillion plus, but still 50 billion is sizable. And if Google is able to commercialize their TPUs, then that will have some sort of an impact on NVIDIA. But look, I mean, all these investors, whether it's Peter Thiel or someone like that, they are anticipating, what will happen to NVIDIA 2 years from now. And so they're not trying to time the exit perfectly. It's more about, yes, we know probably they're not going to go triple digits anymore. It's still going to be very healthy growth, and maybe that's how they're sizing their position.
Yeah, to be fair, Jay Hatfield was like, it'll be a problem in, 5 years, but now it's great. What do you make of more of these tech giants, so that CapEx coming from debt markets? Amazon today, $12 billion for its first U.S. bond sale in 3 years. Alphabet, $25 billion earlier this month. Meta, $30 billion last month. Oracle, $18 billion in September. What do you do with that, Andy?
Well, I mean, look, these companies have the credit rating profile to raise money in the bond market, and still, they're going to be investment grade and above. So from that perspective, given the insatiable demand for building AI data centers and infrastructure, I think it's wise for them to tap the debt markets, given everyone wants a piece of this. And so from that perspective, I don't see any red flags. Look, they are still generating up to $100 billion in free cash flow in most cases. So they clearly can fund a portion of it. And if some of it can be off balance sheet, that's a good thing.
All right, Mandeep, great having you on as usual. Mandeep Singh runs our technology coverage at Bloomberg Intelligence, now on the 10th floor. Coming up in the next hour, Kim Forrest of Boca Capital discusses the AI bubble debate with us. KKR's Chris Sheldon talks about private credit and a risk to markets. Plus, Stagwell's CEO talks about the company's new partnership with Palantir.
Number one, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies. You know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
CBS News on the Hour, sponsored by Eggland's Best.
I'm Jennifer Kuiper. The FAA allows airlines to resume their normal schedules. No more flight restrictions. CBS's Chris Van Cleve at Phoenix Sky Harbor Airport on what you can expect if you plan to travel for Thanksgiving next week.
Aviation analytics company Cirium says while airline bookings will be up this Thanksgiving over 2024, the pace of bookings dropped 50% during the first week of November.
We were really nervous, actually, to make Thanksgiving plans, so we kind of waited till the last minute. We just bought them.
Still, the nation's airlines predict they'll fly a record 31 million.
And about a major about-face from President Trump on the Jeffrey Epstein files. CBS News senior White House correspondent Weijia Zhang explains.
President Trump is now urging House Republicans to vote in favor of releasing the Jeffrey Epstein files. In a post Sunday night, the president said Republicans have nothing to hide and it's time to move on. A bipartisan group of House lawmakers are leading the charge to force the Justice Department to release all Epstein-related files and communications.
Federal immigration agents are now in Charlotte, North Carolina, carrying out what they are calling Operation Charlotte's Web. Dozens of arrests reported. CBS's Skylar Henry is there.
Federal immigration agents swept across Charlotte over the weekend, from landscaping gigs to shopping centers, arresting 81 people on Saturday alone. And yesterday, the Department of Homeland Security said a U.S. citizen drove a large van at law enforcement mid-operation, ramming cars and injuring an officer before he was arrested.
The world's largest aircraft carrier is now in the Caribbean, within striking distance of Venezuela. CBS's Charlie D'Agata is in the region.
The weekend arrival of the USS Gerald R. Ford, the world's most advanced warship, marks a sharp escalation.
So we just landed in St. Croix, and we found something unexpected on the runway here. 2 U.S. military transport planes.
A powerful addition to the heavy firepower in this region we've witnessed ourselves.
Police in Nigeria say gunmen have abducted 25 girls from a high school in the country's northwestern Kebbi state. One member of staff at the school was killed and another was wounded in the attack. No group has claimed responsibility. Our Jim Krasula has the latest on a higher education trend.
The number of international students enrolling in American colleges and universities for the first time dropped by nearly 20% this fall, according to a new report from the Institute of International Education. The Trump administration has sought to curb the enrollment of college students from abroad.
U.S. stocks drift lower. This is CBS News. Getting the most enjoyment out of Thanksgiving can depend on where you celebrate. More from CBS's Stephen Kaufman.
A report on the best places to go for Thanksgiving is out from Wallet Hub. The criteria used:
enthusiasm for the holiday, Thanksgiving Day parades, Thanksgiving community events.
Wallet Hub analyst Chip Lupo says other concerns are safety, weather, and fewer travel delays. With everything considered, San Antonio comes out on top.
In the South and parts of the Southwest, particularly a lot of Texas cities are dominating the rankings.
Stephen Kaufman, CBS News.
The Screen Actors Guild Awards are now called the Actor Awards. The show, commonly known as the SAG Awards, will officially become the Actor Awards presented by SAG-AFTRA on March 1st. Netflix will stream the event as it has since 2023. SAG-AFTRA says that aligning the show's name with its iconic statuette, the actor, provides clearer recognition for audiences. Jennifer Kuiper, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live as well on YouTube. Head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Scarlett Fu, Paul Sweeney live with you here on our Bloomberg Intelligence program. Coming up, we're going to check in with Caroline Hyde. She is BTech co-anchor. A lot of tech stories out today, so we're going to get the latest there. I saw that Amazon coming to market with about $12 billion in a U.S. bond deal. I mean, you raise it when you can, not when you need it, I guess.
Meta did it, Alphabet did it, so now it's Amazon's turn.
Exactly right. The markets are open. Mike McGlone, Miami Mike, Bloomberg Intelligence Senior Commodity Strategist. We're going to get his thoughts here on the crypto world. Bitcoin down to, down about 25% off of that $125,000 high. Does that mean anything to him? George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. Talk to us about what's happening in the world of aerospace. Dubai Air Show is going on here. We'll get it, figure out what's going on there. So a lot going on in the marketplace. We're actually going to get some economic data later on this week, and Friday's going to be like 50 pieces of news coming out. It's
I know. So
crazy.
what does the market react to, right?
That's exactly right. And we'll see how that data comes. But we'll have all that data for you throughout the week. ECO Go on the Bloomberg terminal, and they can keep it on right in front of you.
It's going to be flashing like crazy at 8:30
Exactly
a.m.
right. And Lisa's going to break it down for us. I just told her that she's going to have to figure out that whole thing. So, Lisa Mateo, Bloomberg Business Flash. Lisa.
You got it. We've got this Bloomberg Business Flash. It is brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. You can learn more at ibkr.com/IBKR. RIA. Well, we've got little movement in stocks. This is ahead of NVIDIA earnings Wednesday, the return of, yes, economic data this week, including September's jobs report on Thursday. Ahead of NVIDIA's report, shares are lower. They're down more than 1.5%. A filing shows Peter Thiel's hedge fund, Thiel Macro, sold off its holdings in NVIDIA during the third quarter. The position would have been worth about $100 million based on the closing price from September 30th. Alphabet shares, they're higher before the bell, up about 5%. Warren Buffett's Berkshire Hathaway disclosed a new $4.9 billion stake in the company. So let's get to the NASDAQ. Right now, it's little change, up about 10 points, but the Dow little change down 29 points, and the S&P 500 little change down about 2. In the two-year yield, 3.61%. That's little changed, and the yield on the 10-year, 4.14%, and that is little changed. Well, when it comes to asset allocation, who do you turn to get some insight? Well, if you're the Odds Lot podcast, you go to bond investor Jeffrey Gundlach.
I think in equities today, investors should have maximum 40%. If you're at 40% in stocks and 20% or 25% in bonds, you've got another 35, 40% to allocate. And I've been very, very bullish on gold. The rest, I think I would be in cash because I think valuations are just incredibly high.
Well, that interview marked the 10-year anniversary of the Odd Lots podcast. Congratulations to them. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. As Lisa just reported, a little bit of red on the screen here. Not much going on in the index level. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Tatiana Darie. Tatiana, what are you looking at today?
Good morning. Good morning. Looking at Alphabet shares, your ticker is Google, up about 5%. This is something that came late Friday, so it might have been overlooked, but Warren Buffett, Berkshire Hathaway acquired 17.9 million shares in the company. That's worth about a $5 billion worth of stock while trimming shares of Bank of America and Apple. And this comes as the company has been a net seller of equities over the quarter, offloading about $6 billion. And this is why it caught my attention. We're here at a time when valuation concerns are so high. We're talking about the AI bubble potentially bursting. And here's one of the biggest value-oriented investors stepping in, still seeing value in some of the Magnificent Seven names. And this just shows you that perhaps some of those bubbles concerns are better reflected in some of the more speculative plays rather than big tech valuations, which have actually retreated over the past 5 years, if you look at conventional measures like PE.
Yeah, those 13F filings are always fascinating, but they are just a snapshot of a moment in time, and he might have changed his position as well.
Coincident with him going dark, stepping back, we're now seeing Berkshire Hathaway buy big tech.
Yeah.
Never saw that before.
Remember, he only invested in things he understood, so maybe he's now understanding what Alphabet does.
My takeaway is he really is out of the equation now.
Oh, I see.
And now the new managers are asserting themselves and buying tech.
Gotcha.
That was my take.
And still finding value at these prices, which is key.
That is fascinating.
I'll transition into my next name, which is quantum computing. Your ticker is QUBT. It's up about 12%. The company reported here income, I will highlight, versus a loss in the quarter last year ago. Revenues rose more than 200% here, and they've also built a solid liquid position between cash and a recent stock offering. And this caught my attention because this is part of the speculative basket that I just referred to on AI, stock that have just, surged this year on high momentum plays and high hopes on AI. And then this stock went to fall, and it's actually down about 30% year to date. And this is where fundamentals come in and, putting a floor under this name. So it is reassuring to see that fundamentals are justifying some of those equity moves, although obviously not to the extent of the moves that we have seen earlier this year.
All right, let's move away from tech and the innovation that's taking place in that sector and towards Johnson & Johnson.
Johnson & Johnson shares are higher by about 1.4%. Your ticker is J&J. The company has agreed to buy the cancer treatment biotech Halda Therapeutics for about $3 billion. This is part of a strategy to cope with eroding sales for its major psoriasis drug Stelara, which is now facing competition after key patents expire. Obviously, this is a big problem for all the biologics, pharma companies, always when your patents expire, you see competition. You need to look for the next big thing. And this transaction is the latest in a spate of deals in the pharma industry as drug companies look to refuel their pipelines. We saw Pfizer beating Novo Nordisk in a bidding war for an obesity biotech company, and Merck buying flu treatment company Cidara Therapeutics. So this deal is just the latest in the latest M&A wave among the pharma world.
Again, my next life, I'm coming back as a healthcare M&A banker. They get paid every single Monday morning, it seems like. Tatiana Darie, thank you so much. Appreciate that. Tatiana Darie, strategist for Markets Live over there at Bloomberg News. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's talk tech. I mean, the headlines coming out of tech today are just ridiculous. I mean, they're going to the bond market. I got Bezos has got a startup. He's going to be co-chief executive officer. Peter Thiel selling off his NVIDIA stake. A million ways to go here. So let's check in with Caroline Hyde, B-Tech co-anchor. She joins us live here in our studio. Scarlett and I were just talking about these tech companies. They don't necessarily need the cash money. Look at their balance sheets. And when I look at their free cash flow, but they can go to the bond markets and borrow as much money as they want, it seems like.
Boy, can they. You had Alphabet really set the agenda.
Yep.
I think it was like a week ago. Now we've got Amazon with another 6-part bond sale. They haven't tapped the high-grade bond market in 3 years. But when you're able to issue 40-year debt at just a percentage point, basically, over where treasuries would theoretically trade on a 40-year, no wonder they're making the most of it. And it's because, yes, their capital expenditures are going up and to the right. Still, they've got huge amounts of cash. But they are kind of trying to think of all the financial ways in which that they can finance data center build out. And look, this is a general corporate purposes, so they could use it for M&A if they wish. They could use it to pay down their own borrowing. But more broadly, we think that this is a company that needs to build yet more and more compute power for not only the startups that they serve, the cloud that they have offering, but their own work as well. So once again, just the demand, we might see it pull away from equities sometimes in tech, but boy, the bond market is there to take down some of these offerings.
Absolutely, and if previous bond sales are any indication, there will be plenty of demand for this paper.
Yeah, Meta too, recently.
Let's talk about the founder of Amazon, because Jeff Bezos is creating an AI startup where he will be the co-CEO. So he's back to operating these startups.
It's 3 years since Amazon did a debt sale, and it's about like 4 or 5 years since we've seen Jeff Bezos take on a CEO role. We know he's hugely active in Blue Origin, and he's all about rockets and space. And we've seen some real achievements just last week with Blue Origin. But now it looks as though he's actually going to be taking a co-CEO role here. Project Prometheus. Who doesn't love a Greek god? Who doesn't love a Greek god who's been taking electricity and fire from the gods and giving it to humanity? This is kind of what it's about. It's about giving AI to humanity, but within the world of robotics, within the world of manufacturing, within the world of space. And he's getting on board with a co-CEO here who's actually well known within Google X more broadly. So this was someone who was helping build out the Waymo bet, building out the Verily bet. Vic Bajaj was really known for some of the moonshots over at Google. Now he's coming to align himself with Jeff Bezos. And we don't even know when this was founded. We don't know where it's going to be based. But it's pretty notable that Jeff Bezos is all in on this AI bet as well. And he has been. He's been backing some of these startups anyhow.
NVIDIA. We're finally going to hear from NVIDIA this week. What are the expectations here? Because it always seems like, I mean, ever since they pre-announced that huge guidance 3 years ago, it's just been, the AI story's been on the front of everybody's minds. So again, we looked at NVIDIA.
Yeah, and they're meant to do really well. And if you go to Kunjan Sabani over at Bloomberg Intelligence, really talking about how he thinks it's going to beat what the street is expecting. And the street's expecting $55 billion alone for the quarter in terms of revenue. But we almost got that pre-announcement from the GTC event where Jensen Huang was on stage saying, I have got visibility on $500 billion worth of revenue coming from Rubin, coming from Blackwell, and then by 2026. So we already think that therefore everyone's going to have to rework their numbers to really build in this sort of capability. Look, this is what's so interesting. While all these public fund managers are having to say, look, we're selling out of these companies and selling out of NVIDIA, we just heard from, as you mentioned, Peter Thiel, the 13F filing showing that his macro fund has sold all of its NVIDIA holdings. It's about $100 million worth. SoftBank selling out $5.8 billion worth. But the fundamentals, I think, just aren't going to lack here. Maybe these are just people who are deciding to cash in on the roaring success of the share price and putting money to work in other bits of the AI ecosystem.
I feel like we've heard a lot from Jensen Huang recently, though.
Yes. You're always hearing from him.
Yes, exactly. So how much detail is he likely to go into for this earnings report? Is it enough to satisfy investors who are now, looking at this with a much more skeptical eye than maybe a quarter ago?
Yes, I think he's front-run that by trying to give the clarity on visibility of sales. I think people are going to be asking a question about China again, because he had to sort of do that dance. Initially, he was talking about how he's still hopeful that he was going to get some sort of reorientated Blackwell chip into China. Yep. Then he pulled away and said, well, China doesn't want any of it until they want it. I can't build it. I think they'll want some clarity on will China ever be an end market for them at the moment. Yep. But he's got 0% demand from China, and he's still delivering $55 billion worth of revenue in a quarter. It ain't bad.
Yep, not bad at all. Caroline Hyde, thanks so much. We appreciate it. As always, B-Tech co-anchor joining us here in our Bloomberg Interactive Broker Studio. Bloomberg Intelligence today is brought to you by the Jewish Communal Fund. New tax laws take effect in 2026, reducing some charitable deduction benefits. Open your JCF donor advised fund now to maximize tax savings. Call 212-752-8277. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. We've got stocks pretty much treading water. Traders bracing for this busy week featuring results from NVIDIA as well as Home Depot, Walmart. We'll also get government economic data. September's jobs report on Thursday. Today we did get a report on Empire Manufacturing for November. The expectation was for 5.8, came in much higher at 18.7. Construction spending for August, month over month. The forecast was for a drop of 0.1%, came in with an increase of 0.2%. So we go to the NASDAQ right now, little change, down about 9 points. The S&P 500, little change, down about 4, and the Dow off about 17 points. In the yield space, the 2-year, 3.61%. That's little changed, and the yield on the 10-year, 4.13%, and that's down about 1 basis point. The Bloomberg Dollar Spot Index strengthening by about 0.2%. Bitcoin up nearly 1%, just above 94,000. Over to company news. We'll start with Amazon. Sources saying it's looking to raise about $12 billion from a U.S. dollar corporate bond offering. And data from Bloomberg shows it's the company's first U.S. dollar high-grade offering in about 3 years. Amazon shares, they're down more than 1.5%. And finally, so Sinclair, it's taken an 8.2% stake in EW Scripps, part of a potential merger strategy.
Those are my names.
Those are, okay, so we got Scripps up 18% on that news. Wow. And then Sinclair, it's starting to rise up nearly 3%. And finally, CD&R, Clayton, Dubilier, and Rice. Oh, I can't say that.
No, that's, you did do it. That's why they shortened it to CDR. Because everybody screwed it up.
Dubilier. Okay, there you go. Agreed to buy bubble wrap creator Sealed Air. It's a deal valuing the package company at $6.2 billion. They have Sealed Air actually down 3%. That is your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, Lisa Mateo, with our Bloomberg Business Flash. And of course, we're looking at a market that is basically unchanged this Monday morning. The S&P, Dow, and NASDAQ moving very little at the moment. And Lisa mentioned Bitcoin recovering from a sell-off on Sunday. And I want to bring in now Mike McGlone. He, of course, is our go-to guy in all things crypto. Mike McGlone is Bloomberg Intelligence Senior Commodity Strategist. And Mike, you look at Bitcoin at one point this weekend, it erased its 2025 gain, which was about 30%. And there's a lot of questions now about whether that October 10th liquidation event in crypto is really a turning point for this asset class. What are you seeing when it comes to Bitcoin and also some of the smaller altcoins that follow its lead?
I think the bear market's just getting started, Scarlett. Right now, it's completely dependent on the stock market going up, and that's getting a little shaky. But right now, Bitcoin's unchanged on the year you mentioned. And one of my key indicators for potentially just getting started is I watch the ounces of gold equal to 1 Bitcoin. Right now, it's 23. That's broken down through key support. Early in the year, it was 35, and that's been flat for about almost 5 years now. It's a great indication of liquidity. And for that ratio to go up, I mean, Bitcoin to beat that ancient store value, basically you need stock market volatility to go lower, and it can't really go much lower. It's 120-day volatility is about the lowest in almost 5 years. And you typically need, so to me, that's what's happening is I think the market's just starting to turn around. Also, I'll give you a good indication I think it's going to go lower. It's the Bloomberg Galaxy Crypto Index is down 10% on the year. Now, about a third of that's Bitcoin. It's the rest of the space I think is finally we're realizing it's unlimited supply, massive hubris, and just speculative excesses look like they're just getting purged.
So can I just depend upon the retail folks coming in and buying this thing through their ETFs?
Yeah. Classic sign of a peak, Paul, I'm afraid to say, is we've had a pile-on into poor performance. Bitcoin's been one of the worst performing major assets this year, particularly on a volatility adjusted basis. I pointed out how the S&P, the Bloomberg Galaxy Crypto Index is down 10%. That's despite the S&P 500 up 15%. So I think they're finding out, yeah, that was great in the past when some of those early tech geeks and insiders made it. Well, now they're getting out because they realize for this space to go higher, number one, you're supporting the Trump administration. You're dependent on the Trump administration. That's what's shifted. In the past, it was away from the system. So I think what we did with Trump getting elected and the ETFs getting launched, as we put in an enduring peak, it's very similar to the dot-com bubble peak in 1999-2000.
We also have news today that Michael Saylor of Strategy, formerly known as MicroStrategy, has doubled down on that digital asset treasury model during the crypto sell-off last week. They bought $835 million in Bitcoin in the 7 days ended Sunday. So he's continuing to move forward with that strategy. What does the struggles of Bitcoin to gain some momentum mean for these digital asset treasury companies?
Well, I think it's an oxymoron, digital asset and treasury in the same sentence. Treasury should be in the same sentence as treasuries. And I think what's happened with Michael Saylor, he gave me a best signal I've almost ever seen of double dog daring the market gods last year when he made fun of Mr. Buffett for being overweight cash and said he should buy Bitcoin. Now he's doubling down in a 10x. So when he discovered Bitcoin in 2020, it was around 10,000. I agreed. It was a bubble. It's going to continue to go up. Definable diminishing supply and increasing demand and adoption. Now that's shifted. It's gone up 10x, and he's doubling down. And MicroStrategy has been one of the worst performing stocks this year. So I'm afraid it's just the beginning. It's a normal peak. The key thing I'll say is if the stock market just drops up, maybe drops 5% into the year end, you can easily see Bitcoin drop well below 70,000.
Let's switch real quickly, Mike, before we let you go to gold here. It's kind of testing that $4,000 support here. It kind of fell a little bit below 4,000 and then bounced above. Should we pay attention to this 4,000 level?
We have to, Paul, because it's stuck there. It's part of the reason I shifted after Halloween from being scared to frightened by what's happening in gold. You put it all together. When gold becomes alpha significantly, and has been alpha this year, something's wrong. So to me, gold is showing peak bull market inklings akin to what I saw in Bitcoin last year. Yes, it lasted for a while, but now it's just, I have to take off my fundamentals hats. We all get the fundamentals. It switched over to the technicals when they get this stretched. It's the most stretched versus its 60-month moving average since 1980. And I say to myself, okay, typically overweight longs don't do well in this business at that level. And typically, it's one of the best things you can do in this business sometimes is just take profits. I'm really concerned that gold's expensive, and the whole thing is signaling that we might have some major reversion in risk assets.
All right. Well, Mike, I got to point out today, the snowbirds are coming. This weekend, I saw like 2 or 3 flatbed trucks around my neighborhood, putting cars on the back, taking them down to Florida. They're coming, Mike, so get ready. So if you get that last reservation, that favorite restaurant, because they're coming, and they're going to overwhelm you guys. Yeah, I know. He was early. Yeah. He's always early. Mike Malone, Senior Commodity Strategist at Bloomberg Intelligence. He's down there in our Miami office. In fact, he is our Miami office for Bloomberg Intelligence. So waiting for other folks to join him. He does. All right, let's get back to these markets. You know, we're going to get a ton of economic data this week. It's going to be like
corporate data
and
with
corporate
NVIDIA
data.
results.
NVIDIA Wednesday after the
Walmart,
close.
Target.
Yep. So if you need some data points to give you some direction on the market, I think this week's going to be a week for you. Phil Orlando, Chief Equity Market Strategist at Federated Hermes, joins us here. Hey, Phil, as you start closing out the year here in 2025 and thinking about 2026, what are the 2 or 3 things you're talking to your clients about these days?
So, first of all, Paul, thank you very much for having me back on the program. We've got a very constructive view on calendar 26 versus calendar 25. Look at our GDP estimate for next year. Full year is 3%. The blue chip consensus is around 1.8%. So I guess one of the questions that clients are asking us is, why are you so constructive? And the top of the list is that we expect to see the Federal Reserve to continue to cut interest rates, which is a question, a topic that's very much in doubt over the course of the last couple of weeks. You know, you go back to the last FOMC meeting at the end of October, I think it was October 29th, the expectation of another quarter-point rate cut at the December 10th FOMC meeting was up around 95%. That number today is down at 41%. So the street has gotten very cautious on what the Federal Reserve may or may not do. I think in part because of the governance issues that are going on in the Fed right now. I mean, Powell, at his press conference a couple of weeks ago, said that a rate cut in December is not a foregone conclusion. Other members of the Fed have sort of seconded that. So you've got, you know, Steve Myron and Michelle Bowman and Chris Waller, who I think are very much in the cut camp. You've got a bunch of other people that are thinking that we ought to do nothing, maybe just sort of maybe there are a couple of folks that even are concerned about inflation for some reason. And so that dichotomy of thought is one that is manifesting itself here in this 4% intraday correction we've seen in the equity market over the last couple of weeks. So I think the most important thing is we think that we'll get through this. The Federal Reserve will recognize that the labor market is softening, but inflation is not in a bad place. And the Federal Reserve should continue to cut interest rates. And remember that we've got a leadership transition coming up next May that we think is going to result in more dovish leadership that will allow the funds rate to get down to about the 3% level by the end of next year.
So no matter the division, we are looking at a more dovish Fed in the second quarter of 2026. In the meantime, we have to get through this week and all the data that comes out, as well as earnings from NVIDIA, which we basically know will be good because Jensen Huang has been out there talking. But Walmart and Target will kind of tell us something else about the U.S. consumer. What are you looking to hear from this part of the market? Because we hear so much about pressure on the lower income consumer. How much of that is going to raise concern about the kinds of gains we've seen thus far?
Scarlett, that's a fabulous point. And the bifurcation among the consumer base is really ratcheted up here. The consumer spending right now is fine. And the reason it's fine is because the top 10% of America keeps spending, and they account for 50% of consumer spending. The bottom half of America is struggling. Labor market questions, the savings rate is increasing, use of credit cards are declining, delinquency rates on credit cards have doubled. All of that excess pandemic money that the government dumped into our bank accounts, 4 or 5 years ago, that money's gone and then some. And so the lower half of the economy is really struggling. So when we have folks like Amazon and Home Depot and Walmart and companies like that in fact do cater to the lower half of America, we suspect that the word is going to be caution. But the math is such that as long as the top 10% keeps spending, and we're seeing that every plane that I'm on is packed. They're hoping that people will give up their seats. Every hotel that I'm in is packed. The $200 rooms are now $900 a night. Every restaurant that I'm in is packed, turning the tables over, 2 or 3 times in the course of the night. And so the reality is that this bifurcation is significant, but consumer spending continues to move up. Back to school is pretty good. We think Christmas is going to be pretty good as well.
Phil, thanks so much. Appreciate getting a few minutes of your time there. Phil Orlando, folks, he's the Chief Equity Market Strategist at Federated Hermes. We always appreciate getting his thoughts on the marketplace there. The S&P 500 is down 8 points. The Dow's down 75 points. And the NASDAQ's down 17 points. So just a little bit of a selling here. Again, a lot of economic data coming up later this week. We'll have it for you. George Ferguson, Bloomberg Intelligence, Senior Aerospace, Defense, and Airlines Analyst. He's going to join us on just a moment. We'll talk about all things aerospace and airlines. That's coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with an advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. Well, you've got stocks mostly lower to kick off the new trading week right now. The Nasdaq down about 0.1%. The Dow off 0.2%. Same for the S&P 500. Now, meantime, bond investor Jeffrey Gundlach, he's questioning the health of the U.S. equity market.
The health of the equity market in the United States it's among the least healthy in my entire career in terms of the PE ratio, the CAPE ratio, all the classic valuation metrics are off the charts.
Well, Gundlach was a recent guest on the Odd Lots podcast. Let's head over to the yield space. The 2-year, 3.61%. That's up. That's little change. And the yield on the 10-year, 4.13%. And that's down 1 basis point. To commodities, we have COMEX gold down about 0.5% at $4,073 an ounce. We go to Brent crude, $64 a barrel. That's off about 0.2%. WTI crude, about $59 a barrel. The Bloomberg Dollar Spot Index strengthening by about 0.2%. And Bitcoin up nearly 1%. At just above 93,000. Over to company news. Disney, Google, they've reached a deal to return ESPN, ABC, other Disney networks to roughly 10 million YouTube customers, ending that standoff. And Boeing, they won a $38 billion order from Emirates for 65 777X airlines. And finally, the Wall Street Journal reporting Tesla now requires its cars in the U.S. to be built without Chinese parts. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Scarlett and Paul.
All right. Very much. Lisa Mateo, thank you very much. Appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, Scarlett, when I was managing BI, part of my responsibilities was kind of managing and approving expenses, travel, that kind of thing. This George Ferguson guy, he kept coming across my desk all the time. His trips were like air show in London, air show in Paris, air show in Dubai. I'm like, how come they don't do air shows in like Cleveland or Pittsburgh?
It's not quite the same thing, is it?
That's not how they roll. And sure enough, the Dubai Air Show is going on right now. And that's usually where you see some big orders, like Lisa was just talking about, that big Boeing order. I mean, when those orders come through, they're big time. And you want to turn to George Ferguson and see what's going on out there. He covers all the aerospace, defense, and airlines analysts for Bloomberg Intelligence. George, tell me you're not in Dubai.
I'm not, actually, believe it or not. I'm here in cold New Jersey today.
There you go. Very good. Working hard, nose to the grindstone. George,
Paul
talk
approves,
to us.
by the way.
Yeah, exactly. So, in this Dubai Air Show, or just any air show in general, how much is like commercial versus defense during these air shows?
I would say prior to a couple of years ago, prior to the Ukraine invasion by Russia, they were almost all commercial, right? They were really very heavy commercial events. There's always a bit of defense on the field, showing off transports and other things, but I think since, the Ukraine invasion, Europe looking to throttle up defense spending, I think most countries around the world just thinking about their security situation, defense is becoming more and more a part of these shows, or at least increasing its percentage of orders at these shows.
Can you just walk us through how the ordering, the showing off of new aircraft works at these shows? Because I'm guessing in the age of technology, you don't actually have to go to the Dubai Air Show or the London Air Show.
That's what I always said.
To be able to decide whether you're going to buy X aircraft or Y aircraft. Why is it that, it requires someone to physically go over there, look at the goods, and then say, yes, I'm going to commit to buying billions of dollars over the next 20 years?
Yeah, I think it gives the buyer an opportunity maybe to get wined and dined a little bit before they buy the airplane. I think in the Gulf region too, those carriers are super important to the wide body business. I think they like the headlines they get out of hosting a show like this. So that's been one of the reasons why you have a Dubai show, you'll have a Singapore show. I think the reason we don't have one in the U.S. is that U.S. carriers just go ahead and place their orders. They look at the specifications on paper. They might fly out and see.
They have managers like Paul who say, you don't need to go.
Exactly. But I think in other parts of the world, I think there's a little bit of whining and dining done as well at the show before they go to place the order. Look for the press to be there to watch them sign the documents, things like that.
Well, talk to us about Boeing, because as Lisa Mateo was just reporting, Emirates plans to order 65 additional Boeing 777 aircraft in a show of support for the U.S. manufacturer's largest jet. Talk to us about an order like that and maybe just how Boeing's doing in general these days.
Yeah, so I mean, one of Boeing's strong suits definitely is their wide-body portfolio. And I think this shows on the top end of that portfolio, the 777 is going to be the largest airplane manufactured anymore. Right now, the 747 and A380 are gone. And I think the economics, they've got an airplane they could put 10 abreast, which I'm sure everybody loves who is stuck down in the basic economy part of that airplane. But you can put 10 abreast in it, and so we think it's about 14% more seats than its closest competitor, the A350-1000. And so that means it's better economics, it's better seat cost there. And I think the fact that Emirates has waited so long for even initial delivery and is placing follow-on orders shows you they see the value of the economics of that airplane. And Boeing's 787 has outsold the other portion of the A350, the A350-800. So 787, has got the most orders in backlog, the most airplanes out in service. Boeing, again, performs really well in this wide-body segment, and it's showing at the show.
So 10 abreast is 3, and then 4, and then 3 again, right? I mean, that's kind of the configuration. This is going to sound like a really dumb question, but whenever I go on social media, there's always some AI-generated video of aircraft that has people kind of perched against their seat. They're not actually sitting. They're just... it's almost like a roller coaster ride where they're kind of half standing so they can squeeze more people in.
As many as possible.
As many as possible. Do those things ever show up at an air show? Is this something that gets marketed?
So I'm sure it is, but usually you see some of the nicer business class seats and you see maybe some more comfortable configurations. But believe me, when those CFOs or buyers are in the back room, they're trying to calculate how many people they can fit in the tube and what kind of revenue they can get out of it. So,
hey, George, what happened to the A380? I'd love that thing. That thing was a beast, but I know not many airports can even accommodate it.
Yeah, it just didn't sell enough, right? I think when we were all done, I want to say it was 300 to 400 airplanes finally sold. Emirates was one that wanted it to continue. But there weren't enough other airlines in the world that wanted to buy that airplane. The challenge was it was so large that many markets just couldn't support it, right? You'd have to discount tickets in order to fill the airplane. You can't fly airplanes into markets with 50 or 60% full. You got to be 80-ish% full. And by the time the airline sold 80% of an A380, they were discounting to fill it, diluting themselves. Really hard airplane. Airlines would probably rather have 2 airplanes and increased frequency. They can pull one away in times of lower demand. And so it's really hard to sell the big beasts like the 380.
Have you been on an A380?
Once.
I was too. And George, I remember it took up 2 gates at the airport, and it took a really long time for boarding to take place.
Another challenge, yes. Another challenge, yeah.
All right, so real quick, Boeing 737 deliveries, what are we up to these days per month?
Yeah, so last month we saw something around 38, new build deliveries, it looked like to us. That's close to the target of where they're building now. They're going to 42, I think, by the end of the year. I think right now it looks like the 737's on the right trajectory for recovery. That's going to drive Boeing profits, cash flow. So we're pretty hopeful for what they'll be able to deliver in the new year, too.
And Boeing, it feels like, is going to get more orders as President Trump strikes more trade deals with countries, too, because it keeps coming up as, X country is committing to buy aircraft from Boeing and other national champions.
Yep, I think it will, right? And so, yes, I would expect as you see these deals get done, we saw Switzerland, not so much Switzerland, but in Asia, I think you're going to see some more orders announced. It's that or military orders, I think, that are going to boost some of the balance of payments between the U.S. and some of those countries.
Yeah, I mean, it's an easy thing to do if you're, some leader of some country. I'll buy some more planes.
Yeah.
Easy
5 planes, and that's a couple,
gets you off,
big
get
number.
the president off your back, and then you move on. So there you go. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence, not at the Dubai Air Show. So we note that. But again, he goes to most of these air shows around the world because it's That's where they sell the planes, apparently. S&P 500 down 5 points. This is Bloomberg. Good morning.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Brokers Studio in Midtown Manhattan. Scarlett Fu and Paul Sweeney here on Bloomberg Intelligence. And Paul, it's only mid-November, but it's never too early to begin thinking about the holiday shopping season.
Oh, totally. From what I understand, for people who actually buy stuff for other people, that's what happens.
That doesn't include you?
No. Just a pat on the back and good year. We'll see you
Boy,
come to New
getting
Year.
a present from you is a lot of fun.
Exactly.
All right, well, for those who are out there shopping, you might be wondering how tariffs are affecting your shopping list. And for that, of course, Bloomberg is all over it because Uma Bhatt is a Bloomberg News reporter here, and she and some colleagues looked into all of this for us, and they've come up with a 2025 guide to holiday prices to examine where tariffs are biting and where they're not. Uma, great to have you here.
Thanks for having me.
So what's the big takeaway here? I mean, is everyone going to be affected by tariffs, or are there certain categories where tariffs have not really taken a bite out of prices?
Sure. So we've seen different categories be affected in different ways. Like, for example, electronics are a little more inflated than normal. It just kind of depends on where tariffs are hitting, but not all categories are affected the same way. For example, grocery prices overall have held somewhat steady, but there's definitely some areas in groceries that might be more hit than others.
So are the retailers, are they trying to pass along cost increases to consumers? Because presumably the tariffs are there, they're impacting the price of everything, but some companies are taking it in their margins, some are passing along to consumers. What's the feeling as we go into this holiday season?
There's some companies that have talked about passing prices on to consumers. It's been talked about in multiple categories, but one area where I saw that hit was apparel. Carter's, which is a children's clothing company, mentioned that consumers seem to be slightly more willing to take price increases in for certain products. So we see it hit differently in different areas, but yeah, I do see that. Yeah.
You mentioned that food, grocery prices have held up pretty well in spite of the tariffs. What about wine? Because that was really caught up in the trade talks between the European Union and the United States. And I'm curious whether wine is something that could be good for your pocketbook.
Easy, where you go with the wine tariffs.
Sure. So wine is a pretty traditional gift category, and it's kind of gone in the other direction from something like distilled spirits. Prices are more deflated than normal, and that's because there are some well-documented headwinds. Like, for example, there's been tariffs on European producers, declining consumption among members of Gen Z, and growing public health warnings about alcohol's risks.
So before the tariffs hit, I'm drinking Barbaresco these days, the Nebbiolo grape. Love it. Fantastic. Kind of got turned on to it a couple years ago. I front-loaded the tariffs. So my wine...
You stocked up.
Yeah, my wine thing is just like stuffed to the gills. I can barely shut the door. So
you could give away...
I got ahead of the tariffs.
You could give away bottles of wine.
I could, but
as a present.
I could. That's in
yeah,
theory.
but you're not going to.
So talk to us about another category as we think about the holiday season, jewelry. I mean, is that, we've seen gold go crazy, and what are you seeing there?
Sure. So gold prices surged to record highs in October, and even as they ease, retailers are reporting strong demand for the metal as a gift that holds value. And someone told me that it might not be a great time to buy a Swiss watch, which is a popular gift with a lot of men. And that's because Swiss luxury watches, combined with tariffs on Switzerland, could drive further price hikes. But there could be some relief as trade negotiations go on. It's just, we'll have to see the fallout of that later.
And how about traveling? Getting from point A to point B before the holiday season really gets going. What are we seeing in terms of pricing for airplane tickets, for lodging?
Those haven't really changed much, even as there's, for example, like people have seen that there's stress on air traffic controllers right now. And that's because the category is a little less impacted by geopolitical tensions because it's a service-based industry, and the same applies for lodging.
But consumers are still going to spend this season, right? I mean, it's still going to grow in spending, right?
Yes. So there's going to be, I believe that the National Retail Federation talked about how this would still be a record year for spending, which is interesting, even as consumers are more wary about the economy.
I forgot to ask you about toys, because toys is where I feel like tariffs are really going to hit. They're not made in the United States. They're mainly made in China or somewhere in Asia where the costs are obviously much, much lower. So I would imagine that this is an area where you can't avoid the tariffs even if you wanted to.
Yeah, the toy market faces this kind of double squeeze. A lot of products are made in China, and China is subject to steep U.S. tariffs. And then also consumer trends shift kind of unpredictably, especially in the toy craze. You saw like everything with Labubus. So that combination.
Is that still a thing?
Labubus?
Less so.
I'm not sure.
I feel like less so. Like
okay,
you know, people are not talking about it quite in the same way.
All right, but still, tariffs are an issue for toys.
Yeah, the combination of those tariffs and like unpredictable consumer trends makes it a little hard for retailers to gouge inventory needs.
Yeah.
One expert told me. Shop early if your child wants something specific.
I kind of feel like on the toy front, Walmart and Target, and they can deal with the cost increases, and they can either eat themselves, pass them along a little bit. But we always tried, when I was in the toy buying business, to go to our local toy guy in town.
Right.
You know, and that
shop locally.
Yes, and that I kind of feel like that retailer has no choice but to pass them along.
Or you could go to eBay. That's another option. Buy directly, buy used toys from someone else. I mean, then you have to fill up your bathtub and wash it, but that's a separate story.
Yes, some
Lego, you
there.
could do that with pounds of Lego.
Oh yes, that's right. Yeah, we did donate the Legos at the end of the day after 25 years of gathering Legos in my house. Uma Bhatt, Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio with a great story just on inflation and stuff coming up. Thank you for coming in our studio. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network 24 hours a day. Sirius XM Channel 121, presented by Oracle.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good M&A Monday morning here from Bloomberg Intelligence in our Bloomberg Interactive Broker Studio. Paul Sweeney and Scarlett Fu here with you for the second hour of Bloomberg Intelligence. We've got a lot coming up. We're going to start with the biotech space. Michael Shah, BI's senior pharma biotech analyst, will join us to talk about Novo undercutting Eli Lilly's obesity drug price for those cash pay patients. Mary Ross Gilbert, who is Bloomberg Intelligence's senior equity analyst covering retail, will give us her outlook on the retail earnings season, which begins this week. The outlook for apparel 2026, definitely marked by newness and campaigns and, of course, AI. We'll also speak with Leanna Baker. I mentioned M&A, CD&R. I'm not going to name the PE firm because I can't speak French, but it's buying Sealed Air, which is a bubble wrap company, for $6.2 billion. And we've got Peter Chur, head of macro strategy at Academy Securities, to discuss the latest on the markets, including a big bond sale, corporate bond sale from Amazon. Scott Rechler, the CEO and chairman at XRX, will join us to talk about the state of commercial real estate. But first, let's bring in Charlie Pellet for a Bloomberg Business Flash.
Hi, thank you very much. And here's what's going on. We've got stocks lower across the board right here. Back to work Monday ahead of a jobs report and ahead of earnings coming up out of NVIDIA. NVIDIA shares, by the way, they are down now by just about 1.8%, but the Dow, the S&P, NASDAQ, all in the red, right to the numbers. Your S&P lower by 16, 67.18 where we stand now. That is a drop of 0.3%. We've got the Dow down 121, the Dow just above 47,000, down 0.2%. NASDAQ down 58. Drop there of 0.3%. Our Mag 7 index higher by 0.3%, with the 10-year currently yielding 4.13%, the 2-year 3.61%. Gold at $4,062 the ounce, down 0.5%. West Texas Intermediate crude down 0.3%, trading below 60 now at 59.89, and Bitcoin at 93,540 right now. Bitcoin little change higher by 0.1%. Lots of retailers will be reporting this week, including Home Depot, Target, and Walmart. Phil Orlando is chief equity strategist at Federated Global Investments. He was a guest right here on Bloomberg Intelligence. He says affluent consumers are doing okay, but for other people, things are tough.
The bottom half of America is struggling. Labor market questions, the savings rate is increasing, use of credit cards are declining, delinquency rates on credit cards have doubled.
Federated's Phil Orlando interviewed right here on Bloomberg Intelligence. Now, among some of the retailers scheduled to report this week, Home Depot down 0.5%, rival Lowe's down 0.2%. We've got Target down 0.6%. Walmart will be closely watched this week, up now by about 0.4%. So again, recapping here, stocks lower, the Dow, the S&P, NASDAQ, they are all in the red right now. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg News
Markets correspondent.
Bloomberg Markets correspondent. The new title, I forgot it.
I almost forgot myself.
Normal. Yeah.
We know she got a promotion, so we want to make sure we did
TV
right.
TV star now, but she still graces us with her presence. What are you looking at today, Nora?
Well, there's a lot of mega caps in focus, particularly tech stocks that we're keeping an eye on. Let's look at shares of Amazon. It's ticker AMZN. We're seeing shares of Amazon sliding with the broader market. Shares down as much as 2.3%. But we did get some news that Amazon is seeking to raise about $12 billion through a bond sale. This is the first first deal in US dollars that we've seen in about 3 years from the company. And this really just comes as we've really been seeing a wave of massive tech debt offerings. Of course, a lot of companies racing toward AI infrastructure and really trying to build that out here. So this is just really adding to all the news that we've really been getting in this space here. So we are really keeping an eye here on Amazon. Shares up just about 4.6% though year to date.
All right, good stuff. We'll keep an eye on those headlines from Amazon. Next up, NVIDIA.
NVIDIA, we can't stop talking about it. Of course, we know earnings come out on Wednesday post-market. What we're looking at today is the fact that shares are sliding as much as 2.8%. And this is, of course, after we did get that Peter Thiel's fund did sell off its entire NVIDIA stake last quarter. So you're really seeing Wall Street really digesting this, especially as we're getting a flurry of 13F filings. Of course, none from Michael Burry. This is typically the time that we hear a lot from him. But this is definitely something that people are looking at as we're going through this 13F filing, just seeing what this means for NVIDIA and just some people taking, pulling out some of their money here.
Google, otherwise known as Alphabet.
Yes, ticker GOOGL here. We are seeing it leading. It's the biggest gainer in the Mag 7 stocks if we look at what's going on this Monday morning in trading. And this is after Berkshire Hathaway acquired nearly 18 million shares in the company during the third quarter. The firm did trim its holdings in Bank of America and Apple, but I mean, just based off of the fact that they're building out their stake here, Berkshire Hathaway, a lot of people are always keeping an eye on what Warren Buffett is doing. And you're definitely seeing that reflected in the trade today. Shares of Google up for their highest level on record.
All right, thank you so much, Norma Linda, Bloomberg Television Markets correspondent. And for more conversations like this, subscribe to our Stock Movers reports, listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you get your podcasts. I feel like we have to talk about what's going on in biotech. It's M&A Monday, Paul, and there's been this trend, of course, of the big pharma companies desperate to refill their pipeline.
It's getting competitive now, and they're competing on price. That's what I'm kind of noticing here. It went from being like a rare to find it. Now it's everywhere.
Yeah.
And now they're competing on price.
So it's a good thing if you are looking to get in on the anti-obesity drugs and you're looking for a more affordable price because the companies are doing what they can to appeal to consumers. Michael Shaw is Bloomberg Intelligence senior pharma biotech analyst joining us now. And Michael, Novo Nordisk is now undercutting Eli Lilly's obesity drug price. Tell us exactly what they're doing here, because my understanding is that both these companies recently worked out a deal with the White House to reduce prices overall.
Yeah, thanks. So absolutely, this is obviously ahead of the White House deal. So you're seeing starting doses being reduced to $200 per month, and then doses thereafter being charged at an average of $350 per month, compared to $500 previously. So I mean, those prices kind of align to the pricing in the White House statement coming from Trump RX. But compared to Lilly, I mean, they're undercutting them by about, $100 at each dose. And this is basically employed to basically compete for new patient starts. As we know, Lilly's got the more effective product in terms of weight loss profile. And they're also, executing better on the launches. And I think that's clear from 3Q results, where we saw contrasting fortunes between those two particular drug makers.
Mikey, give us a sense of this marketplace here. What percentage of the addressable market is actually taking these obesity drugs versus, because it seems like as the price comes down, more and more people will be able to get access to them?
Yeah, absolutely. I mean, it's a highly price-sensitive market. When we look at penetration rates in the US, low single digits. That's obviously going to accelerate as these drugs become cheaper. Looking outside the US, penetration rates are even lower. So there's, still significant kind of, patient runway out there. In terms of US penetration, I mean, the White House pricing deal on GLP-1 drugs, supports kind of use of these GLP-1 drugs in Medicare. There we think that it can unlock 7 to 8 million patients, according to a White House statement. I think they said 10% of Medicare beneficiaries would become eligible for GLP-1 drugs based on the pilot program that's going to be introduced in 26, and I think it's going to become mandatory in 27. And then they've also, lowered the price in Medicaid too. I think the uplift in terms of patients there is a bit harder to deduce or to kind of model, given that coverage is going to be on a state-by-state basis, and there's also kind of different qualifying criteria, which again is state dependent.
What does this mean, Michael, for the companies like Hims and Hers, the companies that make compounded copycat versions of these anti-obesity drugs? They've done very well, and I know the stock for Hims and Hers has been kind of all over the place, but it is modestly higher from where it was at the start of the year.
Yeah, I mean, I think that whole, the compounding situation, I believe that, 1.2 million patients are on compounding GLP-1 at the moment. That's based on kind of comments that Novo made during their 3Q results. Obviously, lowering down the price would kind of the branded treatments would basically, it would lessen the delta between copycats and branded treatments. So I guess it's a negative for these compounded GLP-1 drug makers.
Mikey, when I look at the big cap pharma names, is it as simple as I want to own the ones with exposure to obesity market and not own the ones that don't? Because I'm looking at your slate of stocks, and you're either up 30% or you're down.
Yeah, I mean, I think there's a few large pharma names which have entered the space. In the recent years, you've seen kind of deals with Roche and Zealand for an amylin drug. Most recently, you've obviously got the Pfizer Metsera M&A deal.
Yep.
I mean, I think obesity is obviously appealing given the size of the target population, how underpenetrated it currently is. And if you're looking to offset patent expirations later in the decade, there's an abundance of kind of GLP-1 products out there, as well as other assets too. So I think that's the appeal of the space. It's a large market, it's underpenetrated, and there's high demand for these treatments too.
I mentioned M&A, and of course we know that J&J is making a purchase to increase its pipeline to get away from relying on these older drugs that have lost patent protection. Is every pharma company doing the same thing? Is that their not only strategy, but is that the way they move forward? Is there anyone who's kind of like in a good position and doesn't need to make a deal?
I mean, I think that's always been part of the large pharma model. They supplement kind of in-house innovation with external innovation, particularly if they want to get into areas perhaps outside of their core competency. But I mean, I think that's just the model in general. Biotech's always been the pipeline for large pharma companies, or at least help bulk up their pipeline.
All right, Mikey Shaw, thanks so much. We appreciate that. Mikey Shaw, senior pharma biotech analyst at Bloomberg Intelligence. We hired him when he was a kid, and now he's like one of the most senior, best pharma analysts in the city of London.
And that's why you call him Mikey, right?
Yeah,
I can't call him Mikey.
Oh, yeah. He's great. He's one of the best, and they love him over there in Europe for these big cap names, because that's like in Europe, they don't have tech.
Right, but
so
they have
one
pharma.
of the big things is pharma. Boy, and investors, Bloomberg clients are really fired up for our healthcare research, which is, I think, the best on the street there. And Mikey's, they are leading the way. We appreciate that. He's pulling some guy Sam Fazeli on his coattails. So, but otherwise, it's all good. It is holiday shopping season. I think it's really hard to be a retail analyst. You got to be right on the stock and valuation and earnings and all that kind of stuff, like every other analyst. But then you also have to kind of be right on fashion. What's
I know, and how do you do that?
How do you do that? I have no idea. Mary Ross Gilbert, that's her job, Bloomberg Intelligence Senior Equity Analyst covering the retailers. Mary, talk to us about apparel, and where are we in the world of apparel these days? What's selling? What's not selling? Are some companies getting it right? Because we're right smack in the middle of the holiday shopping season.
Yes, so Paul, you're absolutely right. Here we are in the holiday season, and yes, there are some companies that are getting it right. One of those companies includes Gap, which they'll be reporting their earnings on Thursday. And we see a lot of strength with their two largest brands being Old Navy. So we're seeing, tremendous strength in style, their viral campaigns that they have there, and also with their namesake brand Gap, which is their second largest brand for that company. So that's like 70% of sales right there for those two brands. And we're seeing a lot of strength and momentum, and we think that continues into 2026 for Gap. Aritzia, which is expanding in the U.S. and is entering new markets, opening new stores, and then they're gaining on a comp sales basis. So we're seeing a lot of strength with that brand really taking off in the U.S. So it's still very small here. They have under 70 stores in the U.S., and most apparel brands have over 200. So that's one that's faring well. And then, of course, in the value segment, and obviously Old Navy touches that, but off-price, We see strength in off-price because here you have the brands that consumers want, and it's pretty prevalent across all the companies, TJX, Ross stores, and Burlington stores. Now, on the department store side, we just had Dillard's numbers out for the third quarter last week, and their third quarter comp sales rose 3%. That's a really nice figure there, and their margins came in better than expected. And that's because they execute a full price model. They're not promotional like Macy's or Kohl's at all. They do have clearance sales, and they're typically two times a year, but they're showing their models working. But we think that Macy's is showing some signs of improvement, that we could see their comp sales also come in higher when they go to report in early December. But Kohl's, they're still struggling. They, they still need to get assortments right. We did notice their online traffic was better than in store. And then, of course, when they reported their second quarter, they were still seeing lower sales for their credit card customers. And those are supposed to be their most loyal customers.
So, Mary, I got to ask you about Abercrombie & Fitch, because you did not mention that stock, that company at all. And that was like the star retail performer in 2023 when its stock jumped almost 300%. In 2024, it gained about 70%. So far this year, it's down about 54%. What is Abercrombie not getting right, or did it just peak already and, now everyone else is, playing catch up?
We're just not seeing the strength in the namesake brand, but in their Hollister brand, we are seeing strength. So really their Gen Z focus with Hollister, we're seeing strength, and we're thinking they're going to report some strong numbers for the third quarter. But the namesake brand, maybe it's become a lot more competitive. That customer that shops at Abercrombie also shops at Aritzia. So they could be getting more competition, and with some of the department stores like a Macy's bringing in more relevant brands, that might also be taking share. So we're just not seeing the strength that we had been seeing on a comp sales basis. And then also we'll have to see how they're faring with margins, because they did have a fair amount of exposure with India, and India is now at 50%. But we think they'll be able to shift, sourcing, into those lower cost Asian countries. Most of Asia is kind of near that 20% range now, including China. So we think most of these brands are doing a good job shifting sourcing, and we think that tariffs can be overcome. And we think in the second half, you will see margins improve across the board, but there are certain retailers that are not really experiencing the erosion, such as Ralph Lauren. They're really doing a great job generating strong sales at higher price points. And then, so they're getting the benefit of the sales leverage, and then also the full price selling and at higher price points, and those are offsetting tariffs. So you're just not seeing a negative effect. It's just you're not seeing the margin expansion you would typically see with Ralph Lauren.
Mary, thank you so much. Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst who covers retail on the 2026 outlook for apparel, and of course, before the crucial holiday shopping season. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the session. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. The Dow, the S&P, NASDAQ, all declining right now. In fact, worst level of the morning right now. Back to work Monday. Lots of deal activity, but traders are preparing for NVIDIA's earnings and a key jobs report that will shape the outlook for markets throughout the rest of 2025. Also this week, a ton of major retailers will be reporting their latest results. So here's where we stand. S&P right now down 35. We're at 66.98. A decline of 0.5%. Dow Industrials also down 0.5%. NASDAQ down 0.5 as well. Our Mag 7 index, though, holding on to a gain, little changed, up under 0.1%. The 10-year, 4.12%. The 2-year, 3.61%. Gold right now at $4,062 the ounce. Spot gold down $21 the ounce, down 0.5%. Brent crude down 0.1%. West Texas Intermediate crude $60 even a barrel, down now by 0.1%. And Bitcoin, the slump continues there, down 0.3%. Bitcoin right now 93,140 on Bitcoin. Ford has struck a deal with Amazon to sell certified used cars through its e-commerce website, becoming the second major automaker to reach customers through the massive online retailer. Ford joins Hyundai Motor on the Amazon Autos portal. Right now, we do have Amazon down 1.7%. Ford shares, they're down by 1.1%. Again, recapping, stocks lower. S&P 500 index right now lower by 0.5. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well. It is Merger Monday, and today we got a financial buyer making some headlines here. Clayton, Dubilier, and Rice, now known as CDR, they agreed to buy Sealed Air Corporation in a deal valuing the packaging company that invented the bubble wrap at $6.2 billion. Let's break this deal down. Leanna Baker, managing editor of the Deals team, joins us live here in our Bloomberg Interactive Broker Studio. So CDR, Sealed Air, $6.2 billion. Pretty interesting deal. Was this expected in the marketplace?
Sure. So CDNR, we had picked up last week, had been in talks to buy Sealed Air, and the biggest packaging deal in a long time. And today we see it get to the finish line on this Merger Monday. And what's interesting here is that while the enterprise value is over $10 billion, which is pretty big, the share price is sort of below where it's trading on the margin. So not a huge premium here. In fact, no premium. It's sort of a take under. And if you see where shares are trading, investors aren't super thrilled, but it is, still a good sign for this to get to the finish line. We are seeing a lot of take privates in this M&A boom. Private equities putting their dry powder to work. This is the latest example.
Was this an obvious candidate for a takeout?
It's funny that you asked, because packaging has been sort of a predictable area of revenue, and we were sort of expecting at a time of economic uncertainty that we would see more packaging deals. But if you look at the data, packaging deals have been down compared to last year, where other sectors, even in industrials, had been busy. So it was a little surprising to see a big deal in this space, but there could be more because it's sort of a predictable area to invest in.
Having been adjacent to the private equity world most of my career, I think I learned a few things, which is it's easy to raise money. It's easy to put money to work. It's really hard to monetize those investments. Where are we in that monetization? Because it's been kind of a fallow market for the last 4, 5, 6 years.
So I'm surprised you said it's easy to raise money, because I've seen my colleagues who focus on private equity have been writing about some issues in the fundraising market, that it's not as easy as it used to be. But definitely there's fewer and fewer publicly traded companies for you guys to report on, because there's just so many of these take privates. And the IPO market, which is one way that these PE firm sponsors could get some monetization, that's been shut the past few years. I know things are coming back a little bit, but these sponsors love to trade assets to each other. And there were some other private equity deals today. Bain bought a golf company from Clear Lake for like $1 billion or so. So we do see like the steady drumbeat of private equities firms just trading assets to each other, and then the occasional big tape private like this morning.
So you mentioned that it's a little harder to fundraise now than it was a few years ago. Presumably that's because of where interest rates are. If interest rates do decline in 2026, what does that mean for fundraising efforts by PE?
So I would say that it's going to be easier for firms to borrow for leverage buyouts. So we could see more deal making, and that could lead to monetization, which could then lead to saying to investors, hey, we have these great returns from these sales. Maybe now's the time to raise money. I do think that there's also so many newer private equity firms emerging, and then with private credit, like there's just a lot of things competing for investors' attention. But yeah, this is one for CD&R, probably their largest deal in a while. But there's probably more take privates in the market for some of their competitors.
MA go on this deal. You see where the advisors are, who's getting paid, which one of my buddies are getting paid.
So it's funny, I don't have enough time to mention how many banks are on the financing. So everyone is on the financing. And it's funny, we reported late last night that this deal was going to happen. And we were trying to get the share price, and we were kind of kicking ourselves because we didn't get that in time. When everyone clearly was a poorly kept secret, a lot of people knew. They were, mom's the word on the price.
Well, there are 10 investment banks getting paid.
Who's not part of it?
From the private equity. Because, I mean, these investment banks, they have departments that their only job is to call on private equity. That's it. They don't call on, they don't care about industries. So you got to pay these people because they've been calling on you all year. And when you finally do a deal, you got to pay all of them. Whereas the advisor, the seller was represented by Evercore, one bank.
Which used to be sort of a boutique name, but now, they're pretty big and public, and they're, trying to eat the bulge brackets lunch, for example. So, not many people left off that deal.
Everybody gets paid. So good stuff. Leanna, thank you so much for joining us. Leanna Baker, she's a managing editor of the deals team over there at Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio, and a nice deal in the industrials space, if you will, kind of an old school kind of deal, private equity transaction. And of course, you're going to see all these banks pony up with some debt financing as well. Let's go back to the broader markets here. I sense, I got my VIX out above 20. Kind of just suggests to me that there's no panic, obviously, in the marketplace, but there's a little angst out there. It's not just buy. So let's check in with somebody who does this stuff for a living. Peter Cheer, he joins us here in our Bloomberg Interactive Broker Studios, head of macro strategy at Academy Securities. Peter, what are the conversations like you're having with your clients these days?
I think as a lot of people are talking about, it's the rotation, right? Where do we stand on some of these momentum stocks, whether it's the data centers, AI, some of the energy companies chasing it? Is it a bit overdone? So I think you're seeing a little bit of rotation. I like the S&P 500 equal weight versus the NASDAQ 100 right now. And I think there's a little bit of concern that not just VIX is going up, but realized vol is actually going up faster than VIX. So there's some pressure in the markets that way. And the MOVE index, which gets a bit wonky, but that's more on the bond side, kind of an equivalent of VIX, that's up to around 80 from 65 a couple weeks ago. So I'm seeing a little bit of volatility, and that always brings out the fear that the risk parity crowd, those who like to balance commodities versus stocks versus bonds, may have to de-risk a little bit.
So where do we stand in terms of how exposed people are to negative surprises? We're going to get a lot of economic data this week. We're going to get earnings from NVIDIA. We're going to get earnings from Walmart, from Target. It feels like there's lots of catalysts out there.
Yeah, and I think like a lot of things in this market, it's, whether you want to call it K-shaped or little I-shaped, there's a bunch of companies where expectations are going to be
I didn't know about little I-shaped.
I like that. It's like a little I, so you got the dot that's doing extremely well, and then the stick that's like, and maybe not great, maybe not bad. So I feel like part of the market's poised for really strong earnings. You're going to need that to continue momentum. And a bunch of others, I think it's almost going to be impossible to do poorly, even on disappointment, just because the market still doesn't like it. I think energy is still one of the most hated sectors, oil and gas. I love that sector. I think that should be strong into year end and into next year as people realize the Trump administration is going to build out electricity production. They're going to enable it. They're going to allow some regulatory changes. And natural gas, oil, coal are all going to be big beneficiaries.
You say you don't like treasuries. Why not?
I think they've had a pretty good run. We liked them for a while. They kind of stopped at 4. I think they're drifting towards 425, 430. So it's not going to be a big sell-off. But, inflation stories creeping in. The Fed doesn't seem to want to cut this time. It's going to take a little bit of time for Trump's people to get on board and take charge where we will get those cuts. And I think there's just that bit of fear that, hey, inflation's more persistent than we thought, so I think you're going to get a slightly steeper yield curve than we've had, even when we get the cuts.
How worried are you about the credit market? I mean, there were some concerns a few weeks ago about some blowups in that space, and everyone kept calling it idiosyncratic, but it feels like when all these idiosyncratic news are kind of hitting around the same time, and you've got economic weakness in the lower income consumer, that's a trend.
Yeah, so I'll tell you 4 things I think that are important to me. One is watching some of the delinquencies rise on the low-income consumer, so whether it's auto, even some housing. So there's a little bit of stress there. I think there's some stress coming from the private credit market, you know, where we have had some of these defaults. I think really the more interesting stress that comes is people now saying, hey, maybe I want to sell my private credit, and I can't. So guess what you do? You go and sell your public credit. So I think the pressure on public credit's now twofold. So people are starting to sell because they can't exit their private credit. That puts some pressure on, and I do think the realization that we're going to need to issue $2 to $3 trillion a year for the next several years to fund data centers and AI is weighing on public sector credit as well.
Your theme that you've had for a long time is there's production for security. How does that translate into maybe some sectors that you guys favor?
Yeah, so I think you're supposed to be looking, we kind of break this down into 2 things. One, what we're calling national champions. So if you take a look at an Intel, right, look for industries that are going to be important to this government. So chips, shipping, I think is going to be a big, play a role. The refining and processing of rare earths critical minerals. So look for maybe a mid-tier player in that the government can embrace and work with and get scale. So that's kind of where I see the Intel. I think you saw a little bit of that when the government got very involved in U.S. Steel. And then at the other end, it's almost the lottery tickets. Look for these small companies, these small plays in those fields. Again, whether it's chip manufacturing, AI, shipbuilding, clearly anything, particularly on the processing and refining of rare earths, critical minerals, and commodities, right? Getting the rare earths, critical minerals, commodities is okay. It's the processing and refining I think this administration is really going to focus on. So find some of these small companies. They are momentum, so you got to trade them. One I follow is LEU. It went from 200 to 400, I think back to 200. So you got to try and take advantage of this. But I would call MP as the deal that kind of triggered that whole lottery ticket type thing, and LAC, which was Lithium Corp of America.
It feels like, though, you're looking for winners and losers. You're picking winners and losers, which is really hard. Is it safe to go in just into the sector overall?
I think you've got to be very careful. I think you want to do a little bit more screening. So I've looked at some of the ETFs, and normally I embrace the ETFs. What I found is some of the rare earths and critical mineral ones, they're very heavy on China-dominated companies or companies that aren't 50 to 75% U.S. focused. So I think you really have to say this is going to be a very U.S. play, at least initially. So that's why I want to look at those companies that are at least 50% domestic, where most of their expansion plans are domestic, because I think that's where the money is going to flow in this first wave. I do believe sometime next year this will start going more globally, but for now I think it's very domestic.
All right, Peter, thank you so much for joining us. Peter Cheer, he's head of macro strategy at Academy Securities, joining us live here in our Bloomberg Interactive Broker Studio. A little bit of a sell-off, kind of off the lows of the day. The S&P is down about 10 points. It's 0.1%. And the NASDAQ's down about 6 points right now, so pretty much unchanged on the day. WTI crude oil steady, right at $60 per barrel. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with the developing story. Headline right now on the Bloomberg Professional Service. Chevron said to be exploring options to buy Lukoil's foreign assets. That according to Reuters. Right now we do have Chevron shares. They are lower. Chevron down by 0.8%. But again, headline developing story. Chevron said to be exploring options to buy Lukoil's foreign assets. Again, according to Reuters. The Dow, the S&P, they are lower. Little change, perhaps the key takeaway right now on the S&P, down by 1 point at 67.33. The Dow remains lower by 50 points, down 0.1%. NASDAQ, though, back in the green. The NASDAQ Composite Index up 33 right now, up by about 0.1%. Wall Street, though, shunning risk ahead of reports this week from NVIDIA and also jobs data. Our Mag 7 index now higher by 0.9%. The 10-year at 4.12%, with the 2-year 3.61%. Gold down 0.3%, 4,071 the ounce. West Texas Intermediate crude, little change, 60.11 a barrel right now. And Bitcoin remaining higher, up 0.5%. Indeed, a turnaround from our last update. Right now, Bitcoin at 93,939. Double Line Capital founder Jeff Gundlach says he is keeping his strategy simple by loading up on cash and staying away from private credit.
The next big crisis in the financial markets is going to be private credit. It has the same trappings as subprime mortgage repackaging had back in 2006. Now, it took a couple of years for it to totally unravel. So this stuff doesn't happen in a week or a year even. But I'm very negative on that.
Double Line Capital founder Jeff Gundlach interviewed on the Odd Lots podcast, marking the show's 10th anniversary. And by the way, you can watch the full conversation on YouTube on the Bloomberg podcast channel. Recapping right now, S&P 500 index, I'm calling that unchanged on the day right now. The Dow lower by 0.1%. NASDAQ higher by 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Powell, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio in A-plus building on Note. And we're also streaming live on YouTube as well. Here's my stat of the day, folks. In terms of the New York City office market, about 80% of empty space is found in just 33% of the buildings. Wow. There are some big winners and losers out there. Let's break that down. We can do that with Scott Reckler, CEO and chairman of RXR. He joins us live here in our Bloomberg Interactive Brokers studio. Scott, that's amazing. I mean, I guess during this whole pandemic, and we've all learned about A, quality space, B, quality space, all that kind of stuff. But boy, here in the city, it's really concentrated where the vacancies are. How do you guys look at this New York City office market?
Yes, I think there's been this flight to quality since the pandemic, but the New York City office market is back, just like New York City is back. And, you know, I've been here with you over the last 4 years having this conversation where there were the doubters as to whether New York was going to come back. And, you know, we were always positive it was going to come back, and we thought it was going to come back where there was going to be a differentiation of space. We called it Project Kodak, you may remember. We had digital buildings and film buildings, and the digital buildings are back, and there's so much demand where, like, we'll actually have leasing volume records back that we haven't seen since 19 years ago, right? So we're, like, at a level now where companies are trying to grow, and there's just not enough space for them to be able to have the ability to grow in those good buildings.
So a good building makes all the difference. If you're not one of the good buildings, what are your options? Can you just lower the prices you're asking for and get some kind of tenant, or is this market not even conducive to that?
So as the market has gotten really strong, we have seen some of the lesser quality buildings start to get some occupancy, but generally some of these buildings are competitively obsolete, right? No matter what the price, you really can't lease them. And what we've seen is there's been good policies put in place, tax incentives, to convert those office buildings to residential. And so we've seen a major wave of office buildings being converted to residential. We're ourselves doing 3 buildings right now, from 5 Times Square to 61 Broadway. You know, we have, as a city, we can probably see 20 to 40 million square feet of office buildings that will be converted to residential. So we're solving 2 problems at the same time, right? We're getting rid of obsolete office buildings, which become a blight on the community, the neighborhoods, and we're creating residential where we have a 1.5% vacancy rate on multifamily apartments in New York right now.
All right, so on my walk from Bloomberg to Penn Station every day. Bloomberg's 58th and Lex, and Penn Station is like, 7th, 8th Avenue, 32nd Street. I walk by a couple of iconic areas. One is I just walked by the new JP Morgan building. So that is just what is great about New York City office space, just world-class building. And then as I get closer to Penn Station, I walk by a building that used to be there across the street from Penn Station. They tore it down, and nothing's there for several years. So it sits almost an empty lot smack across the street from Penn Station. What do you do with that kind of area? It kind of says, boy, if you build these big things, they'll come, JP Morgan, but then you still have an empty block right in the middle of Manhattan.
Yeah, and that block used to be, I think, the Hotel Pennsylvania, right? So this is the first step of it being converted to a higher and better use. So as an example, we have the contract to buy the Hyatt Hotel right next to Grand Central. We're going to tear that down, and we're going to build a 2.8 million square foot office building with a hotel at the top. It would be the largest building and the tallest building in the Western Hemisphere, commercial building in the Western Hemisphere. And we're starting that the first quarter of next year. There's tremendous demand by companies that want to commit to New York, can't find space, and so they're committing for 2028, 2030, 2032, particularly if you're able to build brand new high-quality buildings like the JP Morgan building that you referenced.
So on that Hyatt building, what's the time span for something like that to completion? At what point do you start to get interest from potential tenants?
Yeah, we're in negotiations right now, and we would be delivering the building to tenants in 2030 so that they can, do the build out of their space, and then they would occupy in 2032.
And we should note for people that aren't steeped in New York City lore, the Hyatt Hotel was owned by President Trump early in his career, and one of his early successes in really turning around that part of the city.
Right, and really turning around the city, right? In the late 70s, at a point where the city was really struggling, the Commodore Hotel, which was what it was called at the time, that President Trump renovated and rebuilt, really sparked economic development and cleaned up what was really a bad neighborhood.
Yeah, his former wife, Ivana, was behind the designing of the interior. Right. Scott, I got to ask you about the new mayor who's coming into office on January 1st, Zohran Mamdani. He's made affordable housing kind of the pillar of his campaign, and that's what he got elected on in many ways. How is the real estate industry, I guess, anticipating his ascendance to the mayor spot?
I've met with the mayor-elect, and I agree with his issue about affordable housing. As I said, there's a 1.5% vacancy rate. We still have record rent growth in New York in terms of multifamily. So we need to create affordable housing. I don't necessarily agree with the way to do it. You don't really create more affordable housing by putting rent freezes on, which is one of his proposals. If you go and look, at the data and other areas around the country, what really creates affordable housing is building more housing of every housing. As a matter of fact, the Minneapolis Fed did a study, and they said for every 100 units of market rate housing, there's 70 affordable houses that are created because people move from the affordable up to the market rate housing.
How does he respond to proposals like that from the industry?
When I've met with him, he seems to be moving to acknowledge that he needs to work with the business community to actually be successful. And so I think he will try to work and try to create policies that creates housing. I think he's talking 200,000 units of housing, so that's a lot of housing. It's not going to be done just by the private sector. And we saw here in New York in 2019, they passed on rent-regulated housing a freeze on how much you could increase rent. And now there's 50,000 units just sitting vacant because owners can't afford to invest in bringing those units up to standards and a place where you can actually re-rent them because you can't increase the rent at all.
Interesting. So real quickly, next 6 months, 12 months, what should we look for in New York City real estate?
Listen, I think New York City is back, is strong. There's tremendous amount of momentum. I think you're going to see more projects like we talked about where we're doing on the Hyatt or the Pennsylvania Hotel. You'll see more of that come to life in New York and that vibrancy. But its success isn't preordained, right? And I think it's going to require a level of leadership, both from the mayor, from the governor. Public safety is really key to this ecosystem, so we can't really take that for granted, and that's got to be something that's got to be focused on. And I think we got to focus on this affordability issue. This is a real issue, and what makes New York great is we attract the best talent from around the world, and if they can't afford to live here, they're not going to come here.
Scott, thanks so much for joining us. Always appreciate getting some of your thoughts there. Scott Reckler, CEO and chairman of RXR. New York is back. New York real estate is back. We see it time and time again, whether it's 9/11 or the pandemic. You cannot keep this
Or
town.
Hurricane Sandy, right?
Yep, Hurricane Sandy, another great example. You just cannot keep this town down, and we're seeing it in the real estate numbers right now. Index is pretty much unchanged on the day.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so go to youtube.com and search Bloomberg Podcast, and that's where you'll find us there. I don't know, tonight I'm taking some folks out to Fiorino's, my favorite Italian restaurant. The place is going to be packed on a Monday night. I guarantee you. I mean, it just seems like the restaurant business remains pretty darn strong, but what do I know? Michael Halen, Senior Restaurant and Food Service Analyst from Bloomberg Intelligence, he joins us here. Hey, Mike, give us a sense here. I know you track this stuff really closely. How are the restaurants doing out there? Does it depend upon what segment of the market they're targeting?
Yeah, that's definitely part of it. We saw that in last month's data. Fine dining had a really nice rebound. And I think part of it is because they're catering to higher income consumers who own assets and are feeling pretty good about things moving forward. Right now, November is going to be a tough month. There's no doubt about it. The government shutdown has definitely impacted sales and traffic for the chains we cover, especially in the DMV area, as well as in the South, where there's a lot of government workers. Also, last November, restaurant sales had a nice boost from the election. And so we're going to be lapping tough comps. So November is not looking great, but things should bounce back a little bit here in December, and we're not crazy bullish, but we're more bullish about the first half of next year.
So, how about let's start with quick service dining. Talk to us about that marketplace. I think back to McDonald's of the world and so on. How's that faring?
Yeah, so quick service had a really difficult first half of the year. They were lapping strong comps, and they kind of lost their way when it came to value, right? They just had implemented too big of price increases over the last few years, and customers started to push back, especially low-income consumers who have been, who are really impacted by inflation to a much greater degree than middle and higher income consumers. So the first half was difficult, but here in the second half of the year, things have gotten better, largely because they've reestablished their value propositions. McDonald's has revamped its dollar menu this year. They also reintroduced snack wraps at a $3 price point, which have boosted checks by people adding them on to their orders, as well as bringing in some low-income consumer traffic. But low-income consumers are pulling back at a pretty big rate. We think part of that is the SNAP benefit pullback, right? And so but they've been able to bring in some higher income consumers and middle income consumers. So things are starting to look better, all right? McDonald's especially. I mean, McDonald's is going to be lapping the E. coli, or right now is lapping the E. coli outbreak from last year. And so, they're the 800-pound gorilla, and I think good results out of McDonald's over the next few quarters should boost the entire category.
How about the cost of beef, which consumers complain about across the board? I know companies are dealing with it, and what I understand is we're not going to see a material improvement in the cattle herd till maybe 2028. So how does that factor into the profit margins of all these restaurants?
Yeah, and so the restaurants that are impacted the most are, burger chains like Shake Shack or steakhouses like Texas Roadhouse that own and operate all of their stores. To your point, beef inflation for these chains is going to be in the mid-teens in the fourth quarter. So yeah, very high. So definitely a lot of margin pressure for those chains. If luckily those two chains, have driven traffic as of late into the stores, which and driven higher sales and been able to pass along price increases, and that has kind of helped their operating leverage, which has helped offset the higher costs. For the burger chains, there's less impact for the chains that we cover for McDonald's, Wendy's, Jack in the Box, because they're largely franchised. So then the franchisees are the ones footing the bill for the higher beef costs.
Why do not all chains do like the McDonald's franchisee model? What's the benefits of franchising, or what's the benefit of owning versus a franchise? I saw the movie. I think I understand the economics of franchising. It seems pretty good.
Listen, the franchise business, that's a great business. And from where I sit as an analyst, we love it. It's easier to predict the earnings and the free cash flow. It's a much more steady business model. Franchising eliminates a lot of the operating leverage and thus the risk to your margins out of the business, right? But if you are running a full-service restaurant chain where operations is very core to your business, think Darden, think Texas Roadhouse, you want to own and operate your stores because you want to have control over those operations. You want to make sure people are getting a good experience, and they're just much harder to run than a McDonald's or a Wendy's. And then I'd say on the last case would be somebody like Shake Shack or Wingstop or Cava. When your cash-on-cash returns are 40, 50, 60%, we don't think it's a bad thing to be greedy and want to open up as many stores as possible.
All right, Michael, thank you so much. Appreciate that. Michael Halen, he's the senior restaurant and food service analyst, Bloomberg Intelligence, getting us the latest update. I love talking about the restaurants because it gives you a good feel for the economy, particularly how the consumers are doing, because it's one of the places they spend their hard-earned dollars. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM at Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. S&P 500 up 12 points. The Dow is pretty much unchanged. The Nasdaq's up 80, so a little bit of green on the screen. 10-year Treasury yield's pretty steady, 4.12%. More Bloomberg Radio coming up right now.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. It's a day of relief at the nation's airports.
I'm glad that it ended before Thanksgiving.
With the government shutdown over, the FAA lifted the flight restrictions at 40 major airports just in time for millions to travel for Thanksgiving and the days ahead. CBS's Chris Van Cleve.
The nation's airlines predict they'll fly a record 31 million.
Thanksgiving in general is always a big push for us.
American Airlines Chief Operating Officer David Seymour.
Shutdown aside, how busy do you expect Thanksgiving to be this year?
We're expecting Thanksgiving to be like any other Thanksgiving, to be very full aircraft.
The vast majority will drive. AAA expects more than 73 million will hit the road, but that number could be higher if some chose not to fly. Drivers will find gas prices about the same as last year, a little over $3 a gallon.
The U.S. has stepped up its military presence near Venezuela in the Caribbean, but President Trump has indicated there could be talks with the country's president. CBS's Charlie D'Agata.
As far as the Trump administration is concerned, this is still a drug interdiction operation called Operation Southern Spear. But with all this U.S. military hardware in the neighborhood, there are plenty of options to expand that operation.
The judge in the James Comey obstruction case has raised concern about what's been referred to as a, quote, disturbing pattern of profound investigative missteps by the Justice Department. President Trump's given House Republicans the green light to vote to release the Epstein files, something that's expected this week. CBS's Weijia Jiang.
Sources tell us behind the scenes that, frankly, he is just done talking about Jeffrey Epstein. He is incredibly frustrated that it is taking up so much oxygen, especially here in Washington, when he wants to be talking about issues that matter to him, like affordability and what he's doing on the border, and tariffs and bringing prices down.
Reports say O.J. Simpson's estate has agreed to pay the family of Ron Goldman $58 million. The initial claim was for $117 million nearly 5 years ago. CBS's Jim Crisula.
A judge ordered Simpson to pay the Goldmans the money in 2021 as part of a civil case stemming from the 1994 murders of Simpson's ex-wife, Nicole Brown Simpson, and her friend Ron Goldman. Simpson was acquitted in a criminal trial.
And Simpson was found liable in civil court. He died last year. It's not clear how much the estate will be able to raise by selling off his assets. Now to Germany. Two long-lost organ pieces written by a teenage Johann Sebastian Bach were unveiled today, described as a great moment in the world of music. Wall Street right now, the Dow is down 15 points. This is CBS News. Some early morning work today for SpaceX.
3, 2, 1, ignition.
and liftoff.
SpaceX has launched a joint NASA-European environmental research satellite. It's the second in an ongoing billion-dollar project to measure long-term changes in sea level as related to climate change. The first satellite, known as Sentinel-6, was launched in November 2020. The latest spacecraft, Sentinel-6B, was launched from California atop a Falcon 9 rocket today. Jennifer Kuiper, CBS News.
The third installment of the Now You See Me series has topped the North American box office, outpacing The Running Man over the weekend. Studio estimates indicate Now You See Me earned $21.3 million. The Running Man made $17 million. And 63-year-old Tom Cruise received an honorary Academy Award last night at the Governor's Awards in L.A., his first Academy Award. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Trump flips on the Epstein files. Welcome to the Monday edition as the president pulls a 180, urging Republicans now to vote for the release of the Epstein files when it hits the House floor tomorrow. We're going to have the latest from Washington when we sit down with Bloomberg's Nancy Cook, as the president prepares as well for the arrival of MBS big state visit tomorrow at the White House. Bitcoin falls out of bed despite the Trump administration's embrace of all things crypto. Nathan Dean at Bloomberg Intelligence will join us to talk it out, and we'll have analysis from our political panel. Bloomberg Politics contributors Rick Davis and Gidi Shanzano back together after a busy weekend and a pivotal week ahead in politics. Let's start, as always, with the voice of Wall Street. He's back with us today, live from New York. Charlie Pellet on the markets. Charlie, how's it look?
Right now, we are looking at a mixed market there, Joe Matthew. Glad to be back. We've got the Dow lower, the S&P, NASDAQ both higher. You mentioned Bitcoin. Got to begin there, up 0.5% right now. That is a reversal. Bitcoin just about at 94,000 even. S&P right now higher by 6, up by about 0.1%. The Dow in the red, down 37 right now, down 0.1%. Choppy morning. We've got NASDAQ up 53. The NASDAQ Composite Index up 0.2%. NASDAQ 100 Index up 0.3%. The Russell 2000 Index of small cap shares down now by 0.3%. 10-year at 4.12%. The 2-year 3.61%. Gold is down $11 the ounce to $4,072. Spot gold down 0.3%. West Texas Intermediate crude just about flat on the day, just above $60 a barrel right now. And Bitcoin bears repeating, 93,890 right now on Bitcoin. Bitcoin higher by 0.5%. Wall Street is looking ahead to NVIDIA earnings Wednesday after the close of trading. NVIDIA's report will be picked over by investors increasingly uneasy over stratospheric AI valuations, even though the chipmaker is widely expected to deliver another earnings beat. NVIDIA right now down 1.2%. The earnings report comes as Saudi Arabia's crown prince heads to the White House for a meeting with President Trump. Benjamin Ritzes is head of tech research at Melius Research. He says this will be a crucial meeting for big tech.
We need the Gulf nations to be allied with the United States so that they can receive licenses to build data centers and use their energy-rich economies to build massive data centers so that they can power their own sovereign AI. And I think President Trump and his administration see this, and that's what we're hoping for.
Ben Ritzes of the Melius Research. And by the way, you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. NVIDIA shares ahead of earnings, down now by 1.1%. Recapping, S&P higher, little changed, up 0.1%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, many thanks. Welcome back to the fray. Charlie Pellet will have more on Wall Street in about 15 minutes, live from World Headquarters in New York. The voice of Wall Street and the New York subway. Listen closely next time you get on the train. I'm Joe Matthew in Washington. We'll be sharing this hour with Michelle Jamrisco back with us today in the nation's capital as we consider what is about to happen this week. This is going to be a pivotal week for politics. Yes, the government is reopened, and yes, airlines are getting back to normal. But here in Washington, we have big questions about the Epstein files with a discharge petition set to hit the House floor tomorrow. And imagine, Michelle, the compartmentalizing for this president As they're voting on releasing the Epstein files, he's welcoming MBS at the White House and considering whether to start a war with Venezuela.
Yeah,
It's
really
a
a
lot.
good illustration of trying to get back to issues on affordability, but all of these things kind of blowing up at once. So we'll see how he manages that balance.
Well, you remind us of this event involving McDonald's this evening. Is going to be talking about prices, trying to get their arms around this issue, but it's pretty difficult to do that when you've got the Epstein story screaming you in the face.
And I think they're also still weighing how to respond to this, drumbeat of, removing the tariffs on certain products. Is that a concession that they're actually raising prices? They say no. White House says this is Biden's inflation still. We're trying to deal with.
Well, I'm glad to say that Nancy Cook is with us, back with us here in studio for the first time in far too long. Of course, our Trump whisperer, as we've said before, and I always have to check to make sure I have the business card right. Senior national political correspondent, Nancy, it's great to see you. You know the personalities and the vibes in this White House better than most, and I'm wondering what's really going on here, because the president has decided to pull a 180 on the Epstein files, now urging Republicans to vote for the release. Is this what you do when you're out of options?
Well, I think that what has happened in the last 2 weeks or so is that the Trump White House has just been put on their back feet. They were riding high this whole year. I think these off-cycle elections, particularly the gubernatorial races in Virginia and New Jersey, where Democrats won, really sort of pierced the bubble that everything was going well for them. And they really have had to rethink their message on the economy, which has always really been his strong point. And with Epstein, too. I mean, this has just been a drip, drip, drip story for them. It's not going away. We're seeing Republicans starting to peel off from him. And so I think that, he did an about face and completely pivoted his whole stance on the Epstein files yesterday in Florida. As he was coming back, he just said, fine, release them. Now, there's still many steps to go. I mean, the House still has to vote to release them, then the Senate does. So this is not a story that's done by any means, but I think that they did this so that, some of the story would just go away.
So, Nancy, let's talk a little bit more about that 180, because as you mentioned, there's been a drip of Republican support going away beyond just the MAGA base, which remains, furious, as we see from Marjorie Taylor Greene and others. But what are some other reasons, perhaps, that the president decided to take this 180? If you get inside his head, or if you were advising him, what would be the other reasons that you should just go ahead and let it go and push these Republicans to vote for the release?
Well, because I think he wants the story to end, and then he doesn't want there to be more defections. We've seen Lauren Boebert, Marjorie Taylor Greene, Nancy Mace, women who have always been staunch advocates of him sort of turning against him on this, in addition to people who have long been critics like Representative Thomas Massie. And so I think that he's worried about just keeping the coalition together among Republicans, because there has been so much fracturing lately over, the party's stance on Israel, the party's stance towards Nick Fuente, the party's stance on a number of foreign policy issues. And I think heading into the midterms, where Trump really does not want to lose the House, largely out of reasons of self-preservation, because he does not want to be impeached again, it's going to be very important that he keeps this Republican coalition together.
The president on Truth Social says House Republicans should vote to release the Epstein files because we have nothing to hide and it's time to move on. Going on to write, the House Oversight Committee can have whatever they are legally entitled to, in all caps, I don't care, exclamation point. We remember as well, the president directed the Department of Justice to investigate Bill Clinton, Reid Hoffman, other Democrats he says were actually playing games with Jeffrey Epstein. Is that the calculation here, Nancy? I've heard a couple of people say this already today. Go ahead, vote to release the Epstein files. When that happens, the Department of Justice says, well, we've got an ongoing investigation.
Yeah, that's a whole nother hurdle that we haven't even talked about. And Pam Bondi, who has been sort of working with Trump or a Trump ally for years, they go way back in Florida. She goes way back with Trump's chief of staff, Susie Wiles. She is going to do what he wants. And so even if Congress does sort of do its own 180 and really, release something and do something that's potentially damaging to Trump, he has the backstop of the Justice Department.
So this is never coming out. Is that fair to say?
I mean, maybe. I think that they're just really so much on the defensive at this point, on the economy, on the Epstein file. The MAGA coalition is not sticking together. That this is just, there's a number. This is just one of many data points.
Is there potentially also, he's calculating the MAGA base. They have other things that they've worried about, and we spoke to it earlier. Venezuela, all these foreign entanglements, trade deals, or he just wants to kind of redirect their focus on something he's doing for them? Is that possible? A political move?
Sure, I think that that's part of it. I just think he doesn't want this to be sort of an ongoing storyline.
So let's talk about what else he's up to this week. We've got this state visit tomorrow. It's going to be 2 days with MBS, full arrival ceremony. This is a little bit different. There have been kind of a revolving door at the West Wing. Recently, you see the motorcade or usually the SUV comes up, you see maybe a color guard, but that's it. This is the full flourish, which we really haven't seen much of for this president. Why is he rolling out the carpet in this to this extent? And will it involve a deal around F-35s or something greater when it comes to Middle East politics?
Well, I think that his relationship with Saudi Arabia has been so important to him. You know, we saw that that was one of the first places that he went to when he was president.
Yep.
His family has a lot of business entanglements there. The Saudis gave Jared Kushner quite a bit of money to manage. You know, there's a potential another real estate deal in the works with Saudi Arabia. So I think it's a real combination of sort of him being transactional and wanting to pay back the Saudis when they showed him such hospitality, him wanting to also sort of take advantage of their money and their buying power for potentially, you know, U.S. hardware, military contracts. And then also he has a lot of business interests. You know, the Trump organization has business interests there. This is just a real entangled situation.
Wow.
Is there a way to kind of spin this event, you know, as he tries to refocus on affordability, to spin this event as this is good for America, you know, these are deals that are going to benefit and push prosperity at the low level and the middle income level in the U.S.? I mean, are you anticipating that might be an argument that he might have to put forward?
I'm sure that's a great point, Michelle, because so much of what, you know, on True Social over the weekend, one of the talking points that he's saying about the economy is that all these companies are investing in the U.S. And if Saudi sort of buys, you know, Boeing planes or, you know, buys some helicopters, I mean, I'm sort of just making things up here, but, you know, buys something that is made in the U.S. or invests money in some U.S. factories, that's another data point that he can say as he talks about the U.S. golden economy.
Right.
All right, the real question we need to have answered here while you're with us. Will the president paint the EEOB white? The old executive office building, this beautiful piece of architecture that looms over the White House across the West Wing driveway. Most of us thought it was a beautiful piece of architecture. The president apparently does not. And he's considering whitewashing the building to the point where now there's a lawsuit trying to prevent this from happening.
I think that if he is given the opportunity, and lawsuits usually don't stop him, he will take advantage. I mean, he seems to be deriving a huge amount of pleasure from redoing the White House. It's like, I think he's really into it. He thinks he has great taste. He loves the gold in the Oval Office. You know, he loves the Mar-a-Lago patio that he's made at the White House.
Yes.
Lincoln bathroom.
The Lincoln bathroom. I've been to Mar-a-Lago several times.
Is it feeling more like Mar-a-Lago?
He's making it look like Mar-a-Lago.
That wasn't really the original intent. What happened in the Palm Room, the Palm Doors? I saw he had Laura Ingraham in there the other day. They've totally cleaned that out as well. We're going to find out other rooms in the White House that have been refurbished that we didn't know about?
Probably. I think that what will happen is, you know, assuming he leaves office, you know, after the next election, whoever's the new president after 2028 could be very surprised by how much the redecorating has seeped through.
If they paint the old executive office building, I don't know. You're not going to be able to get the white paint off. Nancy Cook, right? As always, Nancy, for coming in. Bloomberg News senior national political correspondent with us on Balance of Power. Nathan Dean's coming in next as we turn to Bloomberg Intelligence, America's dad, as we call him, with some important information about hemp and legalizing weed. You never know what we're going to hear on this program. It's next, only on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P higher, little changed. Just a moment ago, we had the Dow higher. Right now, dipping back in the red. Dow Industrials down 19. Little change there, down under 0.1%. NASDAQ holding on to a 23-point gain, now up by about 0.1%. Bottom line here, Wall Street holding back on big bets ahead of key data this week, jobs data, and also a number of retailers reporting earnings, and of course, NVIDIA right now down 1.5%. 10-year yielding 4.12%, with a 2-year currently yielding 3.61%. Gold down 0.2%, $4,026 the ounce. West Texas Intermediate crude flat on the day at $60.08 a barrel. And Bitcoin up 0.3% right now. Bitcoin at 93,740. Our Nathan Dean will have a whole lot more on crypto coming up in just a moment, along with the latest on hemp legislation. Clayton Dubilier and Rice has agreed to buy Sealed Air in a deal valuing the packaging company that invented bubble wrap at $6.2 billion. The company, by the way, traces its roots to 1957. Shares of Sealed Air uses the ticker SEE, down now by about 3.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Balance of Power continues right now. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. Charlie Pellet in New York. He'll have more on the markets coming up in about 20 minutes. We missed Charlie last week. He's back in the saddle. And so are we here live in Washington. Thanks for being with us on Bloomberg Radio, satellite radio, channel 121. And how about this? Have you found us on YouTube TV? I always tell you to watch us on YouTube, and you can search Bloomberg Business News Live. But if you have YouTube TV, you can watch this program on Bloomberg Originals. You can watch Bloomberg TV itself, the mother channel, anytime you want. It's being piped into your house now. Just want to make sure you know that. It's a recent addition. And, of course, you got the podcast where you can always find us, curated daily by America's producer James. Side by side today with Michelle Jamrisco in Washington as we try to find truth at the beginning of a long week here in the Capitol. It's going to get longer as we get into tomorrow. Imagine the compartmentalizing, as I said earlier. The split screen in Washington will be on one side, House Republicans voting en masse, well, now that they've been told by the president to vote for the release of the Epstein files. That's tomorrow, right as MBS rolls into D.C. for a full-blown state visit at the White House. I haven't figured out if Venezuela is going to be part of the day tomorrow, but it's going to be a pretty busy one around here with much more to discuss. The airlines are getting back to normal, Michelle. Transportation Department and the FAA late last night say they're lifting cuts across the 40 major airports where they had been clipping capacity. Starting 6 a.m. today, on Friday, they eased up on flight restrictions to about 3%, so this should feel a little bit more like normal, suggesting you'll only be delayed by hours instead of days.
Yeah.
Is that about right?
This is where we start.
It's not like the airport was great before this started.
Yeah, and it'll be a real test next week when we get into the holiday travel, particularly around Thanksgiving, to see if things are all patched up from shutdown.
Thanksgiving weekend, right? You nervous?
A little bit.
I wouldn't go near the airport myself. So then you start considering the government shutdown and whether we're going to be in for another one in January, because it's time to negotiate health care.
Yeah, we've just restarted the clock again, right? Mm-hmm. So the countdown is real, and there's a lot to get done before that. So
whether it's an extension of Obamacare subsidies or a whole new product is kind of the big question right now. Remember, President Trump said he wants to just give money directly to people. Of course, they'd still have to give that money to the insurance company. So he was asked about this flying around over the weekend on his way back to Washington, D.C. Here's President Trump outside the plane.
We're negotiating with lawmakers, and I've had personal talks with some Democrats. I can't tell you who they are. I just don't want to do that. It's not fair to them. About paying large amounts of dollars back to the people.
Back to the people so they could, I guess, give it to the insurance company. You still need an insurance company here, right?
Yeah, I mean, who knows how they're going to try to set this up or
under the table with your doctor, maybe?
I think we still need, I think there's still a role for them to play. I think it's safe to say.
Safe to say. Nathan Dean is with us right now. Straight from Bloomberg Intelligence, the senior U.S. policy analyst. Nice to see you, sir. Did you guys win the football game?
We beat the Vikings yesterday.
You did?
So
all right. Kids are happy? The Dean household is happy.
My son's a Vikings fan. He was upset. He rage quit, but the rest of us are happy.
Very good. I don't know what to make of this. Are we really going to open this can of worms right now? And what kind of calls are you getting when it comes to people who own shares of these health insurers? Because everybody's nervous about what comes next.
So obviously we're going to have a vote in December, and this vote, my colleague Dwayne Wright put out a note, and he used words like long odds, skeptical. Look, you're not going to be able to figure out to come together on a comprehensive healthcare solution within 15 legislative days when they've been trying for years. The Republicans have been trying for years to figure out an alternative to Obamacare. And let's also not forget that if the ACA subsidies go away, the Democrats then have a message for 2026. And so I think this is one of those things where they're going to go through the motions, they're going to have a vote, and at the end of the day, even if this passes the Senate, and that's a big if, it goes to the House where Speaker Johnson has not put a guarantee they'd even have a vote. And so I think this just gets kicked into 2026 politics. But again, Dwayne doesn't really see a deal coming together.
Well, Nathan, if we zoom out for just a second, I mean, we're just past the shutdown. There's a lot of messes to be cleaned up. We're talking about the FAA finally getting flights back in order. I mean, what else, if you're Mike Johnson, how do you triage this? Like, what else is the top priority? We still got appropriations bills, arguably, that are at the center of this, right? What else do you have to make sure you're not distracted by Epstein and other things that might get in the way of the congressional business? How is he, do you think, thinking about the agenda for this month to come?
So I think there's a couple of things that are going to be working that he can sort of deflect away from Epstein to say that we're going to work. First is the appropriations work. You know, we have 9 out of the 12 bills that still have to go through appropriations. You know, knock on wood, we'll see some momentum on that. But we also have the crypto story. You know, Senate Banking and the Senate Ag Committee are doing some work right now. And obviously the House Clarity Act is already passed, so the House doesn't really have much of an effort to play at the moment. They're waiting for the Senate here. But, for the long story short is that the House doesn't actually have all that much to do. Because now that the One Big Beautiful bill is passed and we don't see another reconciliation bill, there's not much we're anticipating from the House all the way up through the 2026 midterm elections. And so this is one of those challenges for Speaker Johnson is how is he going to keep his members busy when you're not anticipating a lot of legislation coming out? So I think it's going to be a lot of hearings and it's going to be a lot of, saying we're going to work on stuff. But again, you hit it right on the head. Speaker Johnson has an issue on his hands because we're not anticipating that much.
Boy, just to be clear, on the healthcare subsidies, do you see subsidies being extended as more likely than a new system being crafted, or nothing happens before
I think status quo plays out.
Okay.
The status quo is meaning that the ACA subsidies goes away, and Dwayne's note essentially said, look, you are going to see debate over this. You are going to see efforts over this. And look, the Republicans have to do something because neither party, I mean, obviously, I think most people do not want these subsidies to go up in terms of the political messaging for 2026. But it's going to be a challenge for Speaker Johnson to support any deal that comes out of the Senate. And Dwayne's whole point here is that, the Democrats also have a message that if nothing gets done, the Democrats can go out there and say, look, we tried, we had this fight over it, and now it's the GOP's problem, and they have to own it throughout the 2026.
The polling is tough on this. We saw these new numbers today. Plymouth Union Public Advocacy, which is a conservative nonprofit, they looked at 2 states, Maine and Alaska, where you've got contests here. If Susan Collins votes to extend the credits, she gains a net 6 points in her campaign. In Alaska, 43% undecided voters say they were more likely to back Dan Sullivan, senator from Alaska, if he extends the credits. 48% less likely if he allows them to expire. Republicans know this.
Yeah, absolutely. But they also know that with tariffs as well. I mean, tariffs are extremely unpopular, but this is a situation where, I think in order to get this done, Speaker Johnson would have to violate some form of the Hastert rule where, the majority members of your caucus may be against this. Do you bring something to the floor here? And so Speaker Johnson has to make this calculus. Am I going to do something that helps individuals in 2026, or am I going to try and protect a lot of my caucus here? I don't think we really have an idea, but at the high level, without getting into a lot of the specifics of there, I think ultimately the status quo wins, and that is just the ACA subsidies go away.
Well, Well, Nathan, I know we're just out of the record-long government shutdown, but you were so good at handicapping the probabilities of the duration of that one. I'm wondering, what are you seeing in the months to come? Or is there a possibility we're going to go right back into shutdown mode?
So I'm at 30 to 40% right now that there will be a shutdown, meaning that
you got odds already on January.
These are very, 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 very low. But I don't think I think there's 30 to 40% chance of a shutdown right now in January.
Yeah.
The major caveat is what comes from the White House, and this is I'm looking at rescissions bills here. Because as you both know, it takes 60 votes to put in an appropriations bill. It takes 50 votes to actually rescind money. And that equation just does not work. It's if you see any steps coming from the White House saying, look, I just know that you agreed on a bill, but we're going to try and take steps to actually rescind some of that money. I'm not saying it's going to happen, but that would put the equation of we potentially could see a shutdown in January. But I go back to this idea that next year is an election year, and the Democrats who came out of this shutdown, according to the polling, slightly more favorable than the Republicans. I think the Democrats say here is that, you know what, we had our fight, we kept our unification amongst the party base. Our polling was slightly ahead. Let's cash the chips in now while we're ahead. Let's not have a shutdown because it's an election year and it's bad politics.
Boy, all right, this is fascinating to hear, and I'll remind everybody that it was just last summer. You and I sat here and talked about President Trump potentially wanting to reschedule marijuana, cannabis, something that was already underway in the Biden administration. There's been no movement on this. And in fact, quite the opposite. We just saw, as part of this reopening, a continuing resolution that was passed, an excising of hemp legalization that was part of the 2018 Agriculture Improvement Act. This was a Mitch McConnell initiative, if I remember, and it allowed a lot of folks to be creative with uses of intoxicating elements of THC from the hemp plant as opposed to the cannabis plant, if I understand this correctly. So you go to the convenience store, you see all this stuff on the shelf. That's where it was coming from. Now that's illegal. Where's the administration on this whole story?
So I think this really showcases how difficult marijuana investors and the marijuana equities that we always say have hot sauce on it.
Yeah.
This is the difficulty of trying to get additional regulatory relief from the administration. Now, there's two pieces to the hemp argument that are important to note. One is the deal that just came in, the government shutdown, doesn't impact any industrial usage of hemp. So we did have some questions coming in from clients on whether or not this takes away from hemp clothing or hemp manufacturing. Not so much on the industrial side, but on the consumer side, it's a little bit different. We're talking about an industry that's around $28 billion and employs over 300,000 people across the United States. But by a vote of 76 to 24, the senators said, we're going to close this loophole. Now, what does it mean for marijuana? Well, two things. One, marijuana legalization and even something like the Safer Banking Act, much more difficult, unlikely to happen through 2026, and probably may not even happen until 2028 or even longer because of that generational issue within the Senate. But when it comes to rescheduling, just a few weeks ago, President Trump said, look, I'm okay with this idea, and I'm paraphrasing here because he released a video saying that, maybe the idea of research, maybe the idea of testing and so forth, but it's ultimately going to be the DEA's decision. And Terrence Cole, the administrator of the DEA, is not a fan of marijuana, has spent 30 years of his career combating this. And unless President Trump comes out and says, I want this done, I don't think the DEA is going to do it. The one caveat I would have to it is next year's an election year, and if President Trump decides he needs that support, then we may see a kick of the can and say, let's start this process. That's exactly what I was
going to ask, Nathan, because some of this you're expecting in the second half of 2026. What's the political win for Trump? Just a small base, or do you think significant enough to sway him?
Probably enough.
All right. In the meantime, if it's about hemp, go smoke a rope is the message from Congress here. All right. Nathan Dean, Senior U.S. Policy Analyst at Bloomberg Intelligence. I'm Joe Matthew. This is...
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. It's been a choppy session so far. This Back to Work Monday. We're looking at losses right now. Little change, the key takeaway, but losses nonetheless for the Dow, the S&P, and once again, NASDAQ. Right now, the S&P down 4. 6730 where we stand. Drop there of 0.1%. The Dow down 53, also down 0.1%. NASDAQ Composite Index flat on the day. Little changed, actually, down now by 3.5 points. 10-year currently yielding 4.12%, with the 2-year 3.61%. Spot gold is trading lower by 0.2% at $4,077 the ounce. West Texas Intermediate crude 59.97 a barrel, down right now by 0.2%. And Bitcoin has been swinging between gains and losses, looking at a loss now, extending its slide just above $93,000, $93,072 on Bitcoin, down now by about 0.4%. Double Line Capital founder Jeff Gundlach says he is keeping his strategies simple by loading up on cash and staying away from private credit. And on a special edition of the Odd Lots podcast, marking the show's 10th anniversary, he also had this to say about the market backdrop.
In recent years, the garbage lending has not gone to the public markets. The garbage lending has gone to these private markets. Next big crisis in the financial markets is going to be private credit. It has the same trappings as subprime mortgage repackaging had back in 2006. The health of the equity market in the United States it's among the least healthy in my entire career in terms of the PE ratio, the CAPE ratio, all the classic valuation metrics are off the charts.
Double Line Capital founder Jeff Gundlach. And by the way, you can watch the full conversation on YouTube on the Bloomberg podcast channel. Ford has struck a deal with Amazon to sell certified used cars through its e-commerce website, becoming the second major automaker to reach customers through the massive online retailer. Ford shares, they're down by 1.1%. Amazon also lower today. Amazon down by about 0.7%. Recapping stocks lower across the board. The Dow, the S&P, NASDAQ, all in the red, with the S&P down under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie, appreciate that. We'll have more with Charlie Pellet on the markets coming up about 1 p.m., top of the hour here, Eastern Time, as we connect the dots between Washington and Wall Street every day on Bloomberg Radio. Available as well, streaming live on YouTube and on YouTube TV. Either find Bloomberg Originals if you want to catch us here at noon, or Bloomberg TV right there on your YouTube TV. Coming up in our second hour here. This is quite a day in politics, as the president, who had been at least leaning away from the Epstein story, not one to mention Nick Fuentes, is now embracing both. Michelle Jamrisco at my side today. When it comes to Epstein, we've got a vote tomorrow, a discharge petition that's going to force this floor vote on the Epstein files. President's just decided to rip off the Band-Aid. He is now urging Republicans to vote for it instead of the opposite.
And he's giving them the freedom to do what perhaps they would have done anyway, I think is the point here. He's seen the writing on the wall that they want to move a certain direction, and maybe he was going to lose the vote, so why not own it?
Why not own it? Writing on Truth Social, House Republicans should vote to release the Epstein files because we have nothing to hide. And it's time to move on, he says. The House Oversight Committee can have whatever they are legally entitled to. I don't care. Exclamation point. Having just days ago brought the likes of Congresswoman Boebert to the Situation Room to try to convince her to take her name off the discharge petition. Remember, Ro Khanna told us last week could be 30 or 40 Republicans voting for this on the floor. Tom Massey said on Sunday morning TV it could be 100. And in that world, will the Senate have any choice? Will the president? Enter Nick Fuentes. This is the other big one, Michelle, that's been dogging the White House and splitting, in many cases, Republicans. After Tucker Carlson interviewed the notorious, what am I supposed to call him? White nationalist? I mean, seriously.
Well,
provocateur?
I think to the extent that he embraces those labels himself, you can call him what
Fair enough, he does,
embracing. Right? So, yeah, I mean, it's another tricky subject that's kind of splitting the MAGA world apart, and interesting that we heard the president weigh in on this.
You've had the Heritage Foundation backing Tucker Carlson. A lot of folks in the Republican Party, a lot of folks in the MAGA world don't believe Tucker Carlson should be platforming an individual like Fuentes, who will remind everybody had dinner with the president at one point. Donald Trump was asked about this over the weekend down in West Palm Beach. Here's what he said.
We've had some great interviews with Tucker Carlson, but you can't tell him who to interview. I mean, if he wants to interview Nick Fuentes, I don't know much about him, but if he wants to do it, get the word out. Let him, people have to decide. Ultimately, people have to decide.
All right, I don't know what get the word out means. It's a really interesting response. If he wants to interview Nick Fuentes, I don't know much about him, but if he wants to do it, get the word out. Let him. You said people have to decide. Ultimately, people have to decide. Let's assemble our panel for their take on this move across the board by Donald Trump to lean into the opposition. Rick Davis and Jeannie Shanzano are with us, Bloomberg Politics contributors. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, is this a strategy to just own it?
I'm not sure what he's owning. I mean, you know, he talked about, well, I barely know this guy, Nick Fuentes, except that he had dinner with him at Mar-a-Lago that blew up during the campaign.
Yeah.
You know, and he says people have to decide. That last clip you just said, and I'm like, decide about what? Whether Nick Fuentes is a racist anti-Semite? I mean, or anti-Semitism is bad? I mean, like, what is it we're undecided about here? And the thing is, it's not that Tucker Carlson interviewed the guy. On its own, Tucker Carlson should be able to interview anybody he wants to. I mean, for heaven's sakes, he interviewed Vladimir Putin in Moscow. But at the end of the day, it's the fact that he didn't challenge Nick Fuentes on any of his racist, anti-Semite comments. And so that's the backlash. There are MAGA people in an uproar that Tucker Carlson has been, you know, helping this guy by not challenging him.
Well, Jeannie, I mean, can you address this sort of free speech argument here? I mean, Trump is saying, let's just air this out. Let's let him have his due. You know, he can interview whoever he wants to. And to Rick's point, you know, he has interviewed some pretty controversial characters and given a platform to others. I mean, do you think this has legs at all, the Fuentes argument, or is this just going to kind of go away and then in lieu of it, we'll talk Epstein because there are bigger fish to fry on that front?
Yeah, this has been what Tucker Carlson has been saying to put himself in a victim position, essentially, is, oh, they are trying to cancel me and not let me interview who I want to interview. And the reality is nobody is saying he can't interview Nick Fuentes or anybody else. There is a long history, as you know, Michelle, of reporters interviewing the worst type of people. But it is the way in which that went forward and how he embraced, how he, as Ben Shapiro called, glossed Nick Fuentes, how he went on there and described Christian Zionists as the worst people in the world, how he hugged Nick Fuentes. That's what people are objecting to. And I think what we heard from Donald Trump in both of these stories is something pretty sad for Donald Trump, which is a surrender to the worst parts of this MAGA coalition. In both cases, as much as Donald Trump wants to yell at Marjorie Taylor Greene and say, I am MAGA, I created it, I know what they want, he is being led around by the chain from the most extreme elements of this coalition, and he has zero control over it. He can't get them not to release the Epstein files, and he can't even denounce Nick Fuentes, who, as was noted, he ate with Kanye West, much to the chagrin of many on his own team during the campaign. So Donald Trump is losing control of his own MAGA group, and he can cry to the wind, but these are two sure signs of it.
Wow, led by the chain. Jeannie's not mincing words today. Rick, what do you make of the Jeffrey Epstein salvo here on Truth Social? I mentioned it coming into our conversation. And you know how Washington is. Everyone's trying to figure out 2 steps ahead here, knowing that the president also dispatched his Department of Justice to investigate Democrats who were reportedly on the list here in the Black Book, like Bill Clinton, among others. Is this a way now for the Department of Justice to say, hey, sorry, it's an ongoing investigation. I know you voted to release the files, but we can't do that now?
Yeah, I mean, you know, by the time the buck stops here on the president's desk, it may be sent back over to the Justice Department as you talk about it. I mean, look, who knew on Friday night that this thing would breeze through, which may be a unanimous vote in the House of Representatives, something that took a discharge petition, very unusual. I mean, almost unheard of in Washington, that a group of members could overrule the Speaker of the House. And as a result, may turn out to be everyone voting for this thing. And it gets to the Senate, and everyone was saying on Friday, hey, no way is it going to get through the Senate. Oh, really? Donald Trump can get it through the Senate. Oh, and he has 13 Republicans. You don't think he can get 13 Republicans? So, I mean, like, but then the question is, why in the world would he want it to get through if he has to sign it? The reality is, if he wants these released, all he has to do pick up the phone, call his buddy Pam Bondi and say, release him. He has that power. He doesn't need Congress to sign off on that. Congress needs to sign off on that if they want it done over his head. So somebody's going to win, somebody's going to lose, And I sure don't want to place a bet on this one the way it's headed.
Well, Rick, just to build off that, I mean, if you're a political consultant in the White House right now, considering all these factors, considering what the DOJ might be able to do to protect the president, considering the writing on the wall that the House was already going to vote in favor, and perhaps the Senate too, as you mentioned, would you have said, "Hey, Mr. President, yeah, just say, you know, let him free to vote for the release," knowing that there are risks here for the release for Donald Trump himself?
Well, that would assume that I was just brought in today, because I would have never suggested the track they've been on all this time. I think I'd have blown my brains out. You know, so the reality is they should have dispatched with this a long time ago. Either had decided to get it out and done it themselves without any congressional activity, or had cold sweated enough Republicans to get off that discharge petition before it was signed off on. I mean, like, it looked like they just reacted at the last minute as if they didn't know this was coming. I mean, we've been talking about it for months. And so, yeah, I think that it's going to be the kind of thing now where it's not clear what the position is to take. I mean, I'm not sure I could take a poll today that said, hey, is it better or worse for Donald Trump to actually do this himself and preempt Congress, or let Congress roll him? Nobody buys this fact that he is now saying, oh, I'm for this now. I want everybody to get this word out. Because the reality is, you don't think there are going to be a massive number of redactions in this material? I mean, 1,000 FBI agents were dispatched earlier to go through this stuff and redact all the important names, Trump included, out of that material from what the reporting is. You don't think that's going to have a backlash if it gets out? So, look, I think we're just seeing the beginning of this story. This could take us all the way through to Christmas Day.
Incredible, Jeannie. Just the beginning. What happened to Donald Trump at the end of last week or over the weekend? He had Lauren Boebert in the Situation Room days earlier to peel her name off the discharge petition. Now he's urging everyone to vote for it?
Absolutely. I sat here on the show late Friday afternoon with a theory that I was told was a conspiracy theory, but not so much. Donald Trump has ordered an investigation of the Democrats. Tom Massey brought it up on ABC this weekend, saying it is a big smokescreen so he can allow Republicans, encourage them to vote for it, let it go through the Senate, let him sign it. He said in his statement, they will get what they are legally entitled to. And in fact, Bloomberg's Catherine Lucy asked the president about that over the weekend, saying, is this investigation a smokescreen, as Massey called it, so that those files will not be released? And look at his response to Catherine. You are fake news, you know, all of he went on and on about fake news. That is a sure sign. This is Donald Trump's playbook. He did this before, as we remember, Joe, the IRS. He can't release his tax files because they are under audit. That is the same thing Pam Bondi will say about these files. So all that they're legally entitled to is all we will see. Not a conspiracy theory anymore, I will say.
Wow, this is a great panel today. It's only Monday. Think of where we'll be this time tomorrow. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, bringing us analysis and truth every day here on Balance of Power. I'm Joe Matthew, alongside Michelle Jamrisco, who's going to be back with us tomorrow on the program. Looking forward to it.
Yeah, happy to be here.
Stay out of trouble in the meantime, because we have much more trouble to find, at least here on the air. We'll welcome our global television audience to the conversation coming up at the top of the hour here. We'll check the markets for you, and we'll spend some time with former Ambassador James Jeffrey as the president prepares to welcome MBS to the White House. This is Blue.
from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump comes full circle on Jeffrey Epstein. Welcome to the Monday edition as the president urges Republicans to vote for the release of the Epstein files when it hits the House floor tomorrow. We're going to get the latest from Washington when we sit down with Bloomberg's Wendy Benjaminson. The Saudi Crown Prince arriving at the White House tomorrow with the full flourish of a state visit and the prospect of a new order in the Middle East on the table, if not just F-35s. We're going to talk about what's on the agenda and what might come from it when we talk with former Ambassador James Jeffrey straight ahead. We'll have analysis from our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour, and it's all after a look at Wall Street. We'll start there right now with Charlie Pellet. He's got latest on the markets live from World Headquarters in New York. Charlie?
And I thank you very much, Joe Matthew. Another leg lower for the U.S. equity market right now. Lots of red on this back-to-work Monday with the Dow, the S&P, NASDAQ all declining. Right to the numbers here with the S&P down 25, drop there of just about 0.4%. Wall Street's holding back big bets before key data this week, also ahead of earnings from NVIDIA. The Dow right now down 176, down 0.4%. It has been a choppy session today with NASDAQ now slumping 90, down 0.4%. But the Mag 7 index, our Bloomberg Mag 7 index, is holding on to a gain of 0.2%. 10 years currently yielding 4.13% with a 2-year 3.61%. Spot gold is trading lower by 0.3%, $4,074 the ounce. West Texas Intermediate crude down 0.2%, below 60 at $59.99 a barrel. And Bitcoin is now lower by 0.8%, 92,663 now on Bitcoin. Wall Street is looking ahead to NVIDIA earnings Wednesday after the close of trading. NVIDIA down 1.9%, but also this week, a number of key retailers will be checking in as well, including Home Depot down now by 0.3%, rival Lowe's down 0.3%, Target is slumping 0.2%, and Walmart higher by 0.3%. Again, recapping here, S&P right now down 28, drop for the S&P of 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Back in the saddle today, Charlie Pellet. Thank you, Charlie. At World Headquarters in New York, he'll have more on the markets. In about 20 minutes' time, we'll get another update from Charlie here as we keep tabs on the Monday trade. Yeah, Monday bringing a lot of news, much of which broke over the weekend, including the president's 180 on the Jeffrey Epstein files. As we try to get to the bottom of all of this, and we'll be talking in a moment with Wendy Benjaminson. We'll bring you back to the Truth Social post. This hit on Sunday, as he said on Friday night aboard Air Force One to the fake news media, as he writes here, House Republicans should vote to release the Epstein files because, he says, we have nothing to hide. And it's time to move on from this Democrat hoax, he writes, perpetrated by radical left lunatics in order to deflect from the great success of the Republican Party. Knowing as well that only days earlier, Congresswoman Lauren Boebert was in the Situation Room at the White House for a high-stakes meeting with the president in which the administration tried to peel her off of the discharge petition. He was said to be playing phone tag with Nancy Mace to accomplish the same thing. He had a falling out with a dear friend and loyal, keep this from happening. And so it's considered curious the president is now urging Republicans to vote for it. Ro Khanna, the Democrat on this bill, told us last week 40 to 50 Republicans could vote for it. Now we're hearing from Tom Massey it could be closer to 100. Rick Davis, our Bloomberg Politics contributor, suggesting it could be a unanimous vote in the House, which would make it very difficult for the Senate to ignore. So what's the calculus here? And is this new investigation into Democrats purported to be in the Epstein files the smokescreen for them ever being released? It's where we start our conversation with the aforementioned Wendy Benjaminson, Bloomberg News senior editor, who you want on that wall. She was on duty all weekend while this stuff broke.
Playing four-dimensional chess.
Okay.
Like, I don't know. It could be that he's had it up to here. He's fed up.
Yep.
Just go ahead and release them. Perhaps he's either... And even now I have sub-paragraphs here. Either he is confident that there's nothing incriminating that he did in there, or the House can say, go ahead and release the files. It may not pass the Senate. He may not sign it. Or the Justice Department can just say, wow, this is an ongoing investigation, and sorry, I can't release it. And then he would get what he wants. But that's more the four-dimensional chess thing here. But yes, the shift is absolutely remarkable. Also, remember, he took a shellacking in the elections, to quote President Obama a couple of weeks ago, where Democrats swept all the elections. Then, of course, they caved on the shutdown. But he's at a point where he's feeling a little bit with his back to the wall. And that's, when I think you have to watch for strange things to happen, like go ahead and release the files.
Yeah, also his evolution on Nick Fuentes and the writing, maybe it's not an evolution, but his decision to weigh in on this.
The funny thing about that was where his defense was, well, he came with Kanye West. It was like, okay.
When you're explaining, as they say, but it's also happening against the backdrop of some very high-stakes real policy, with affordability being an issue here at home.
Right.
The Crown Prince of Saudi Arabia about to arrive for the full flourish of a state visit tomorrow, and the question of whether we're about to go to war in Venezuela. How do you rationalize all of these extremes?
This is the way Donald Trump likes to operate, but it is just as you point out, this is a tremendous load on him. I mean, there is the Saudi visit alone should be weeks and weeks of prep for the president. The carrier group being staged off the coast of South America with who knows what going on. And remember, the Southcom commander quit over this a few weeks ago. So we're not really sure who's running things and how this is going. And then the Epstein files, and then the shutdown. And then, yes, the midterms, politically speaking, are right around the corner, even though they're a year away. But that is politically zero time. And if he doesn't successfully seize this affordability message, which the Democrats got right finally on last Tuesday, then he's looking at another shellacking next year. And so, yeah, this is a really tough time for him.
Add the matter of recrafting the nation's healthcare system. And you might need a little extra time on your hands here. What's going to happen in Venezuela? Do we have any idea? The president said at one point he had decided effectively what to do, and then a headline over the weekend that you're well aware of, that he's open to sitting down with Maduro for talks. Is this all one big military deterrent that's supposed to bring Maduro to the table?
Yes, I mean, I think that's the end goal, is either to bring Maduro to the table or, like Noriega, out of the country.
Got it.
Way back in the old days when they got rid of the...
So regime change is still on your list of possibilities?
Yeah, and, the U.S. has a long history of regime change in South America, and, the trouble is the Venezuelan people, I think, are not entirely opposed to they're not opposed to getting rid of Maduro, but it's always the then what. And I think if Trump did seem to indicate last night that he was open to negotiations with Maduro. Maybe it's you step down and get out of town. Maybe it's something more complicated. Again, there isn't a lot of transparency here.
You surely remember the fist bump heard around the world when Joe Biden went to Saudi Arabia. Jamal Khashoggi's name was still fresh in our minds. There won't be any such criticism or skepticism when MBS rolls up the driveway tomorrow in the age of Trump, will there? No, this is a full-on, I think it's not quite a state visit, but it's just shy of a full state visit. He's getting dinner at the White House. There is a chips deal on the table, which is making some members of Congress and others nervous because some of that could end up with the Chinese. He wants, the prince wants F-35 jets. He wants to buy those, which would be a change in U.S. policy because U.S. longstanding policy has been that Israel has functional military superiority, or words to that effect, so that Israel always has the strongest military in the region. They have F-35s. And not only does the U.S. not want China to get the F-35 technology, it also then would put Saudi Arabia at not equal, but it would raise up their military capabilities vis-a-vis Israel.
MBS is not going to sign the Abraham Accords at this point. And so that's maybe the one point of tension between them. But otherwise, it's all a big deal. And quite remember, the Trump family has a real estate deal going in Saudi Arabia right now.
Deep ties on a lot of levels here. Wendy, it's great to see you. Thank you. I hope you actually get to rest after your very newsy weekend. When you see these headlines cross the terminal and Bloomberg.com over the weekend, you know where they're coming from. Wendy Benjaminson, thank you. As we add the voice of experience in former Ambassador James Jeffrey, Distinguished Fellow at the Washington Institute for Near East Policy, former Ambassador to Iraq and Turkey, former Deputy National Security Advisor and former Special Assistant, Presidential Envoy, I should say, to defeat ISIS. That was in the first Trump administration. He's a man who knows this region extremely well. And Ambassador, it's good to have you back. You were just listening to our conversation with Wendy Benjaminson. MBS will be at the White House by this time tomorrow. We're going to be listening in on a bilateral lunch that will presumably include some press. How are you viewing the stakes surrounding this visit, and what is in it for the United States?
Thanks for having me on. The stakes are high, and a great deal is in it for the United States. We were talking about four-dimensional chess on the Epstein case domestically a moment ago. It's the same in the Middle East. While Saudi Arabia is a hugely important country in the region and for U.S. relations, this is even bigger than Saudi Arabia. It's locking in a regional security, trade, and diplomatic coalition that will build on the defeat first of Daesh, the Islamic State, about 7 years ago, and now the defeat of Iran, its proxy empire over the past 2 years, to allow the region finally to enjoy peace, prosperity, political independence, and allow the United States slowly to back out of the region. So lots at stake. The Saudis, like the Israelis, like the Turks, like a couple of other countries, are central to it. Trump is pushing forward on all of these fronts.
And what does Saudi Arabia get out of this visit, Ambassador?
First of all, acknowledgement. This is almost a state visit, although technically the Crown Prince is the Crown Prince, not the King. The King is still there. But he's also getting to build on the Biden fist bump forgiveness for the Khashoggi case. But more importantly, he needs economic coordination. He needs U.S. investment. He has promised $600 billion in Saudi investment in the U.S., and that's a good deal for Saudi Arabia, given the way our economy is cooking. But also, he wants progress on a pathway, that's the word we're using now, to a Palestinian state. That is a requirement before the Abraham Accords. He wants a nuclear accord. He wants a deal like we just gave to the state of Qatar, that is an executive order stipulating that any attack on Saudi Arabia or attack on its territorial integrity would be seen as an attack on the United States. That's what the Qataris just got. The Saudis will want that too. They will probably get something like it.
They'll probably get something like it. How about F-35 fighter jets?
I think that there'll have to be more progress on the Abraham Accords and more assuaging of the Israelis. As Wendy said, the Israeli military advantage is a critical part of our relationship with Israel and the whole region. But for example, the Israelis use a lot of F-16s. Other countries in the region have F-16s. There are ways to work this, but it is sensitive and it's delicate.
When the president was in Riyadh in May, Ambassador, he said, talking about MBS, remember there was this big love fest. The president brought a number of executives with him from the United States, and he said, I like him a lot. I like him too much. What do you think he meant by that?
It's a riff on how you hear a lot of people in the Middle East who are native Arab speakers use very. We hear this all the time, and Trump along the way has picked it up and was using it back. But what he means is, this is my guy.
You know, he had the new president of Syria with him in the Oval Office quite recently, Ambassador, and that raised a lot of eyebrows. It's not something that we would have even considered a couple of months ago, as this was an individual involved in a Syrian a branch of al-Qaeda. How does that inform this meeting tomorrow?
Very much, because Syria is another critical piece, and here Trump has, by embracing, literally, al-Shara, formerly al-Julani, he's signaling how important Syria and Syrian involvement in this growing region-wide coalition is. I worked indirectly with al-Shara in the first Trump administration. He was fighting the real bad guys, the Islamic State, as early as 2016. Importantly, he was also fighting the Russians, Iran, and Assad. So he might have been a former terrorist, but he was a former terrorist who was effectively on our side. And we have honored that with his visit to the United States last week.
Does a global deal, to the extent that you're describing, involving potentially investment here, direct foreign investment, fighter jets, maybe even more than that, Ambassador, make the United States safer?
Yes. First of all, we've remained safe, all in all, since the 1940s by the same recipe, which is keep the global Eurasian island free of domination by a single power or a coalition that is hostile to us by working by, with, and through other countries, be it China and France and Britain in World War II, be it the NATO alliance, be it our friends in the Middle East. This allows us, with only 3% of our gross national product going to defense, to maintain a relatively stable world and that is secure and peaceful, not only for the American people, but for people all around the world. And that's a huge plus for global development, for economic trade, and everything else that's important to the American family.
You mentioned in the outset a Palestinian state and the extent to which Saudi Arabia would like to engage the U.S. on this. Where's Donald Trump's head here? He's spoken around this issue a bit, knowing, of course, what has transpired in Gaza. That's something that MBS is not very fond of, is he?
He's not fond of the terrible deprivations of the Gazan people, but he's very happy that one of Iran's major arms, Hamas, has been defeated. And he will be happy if President Trump continues pushing for, in the language we're using in our latest diplomatic statements, is a pathway to a Palestinian state. That's not a Palestinian state, and that has made the Israelis nervous, or at least some Israelis, but nonetheless, it's where Trump is now, and it will help him in these meetings tomorrow with the Crown Prince.
How long is that pathway? Is that beyond this president's tenure?
Well, we started 30 years ago with the Oslo Accords. And we came very close in 2000, in the view of then President Clinton. The fault was the Palestinian leader, Yasser Arafat, who could not take a deal when one was offered. The overall question is, are the Palestinians really, in their hearts, willing to accept a Jewish Israel as a neighbor? And that question has not been finally answered. We also need to know if all Israelis are willing to let the West Bank eventually be on a pathway to a separate state, given the claims of settlers. So there's several things at play here. But nonetheless, President Trump is pushing this, as all presidents have before him.
I'm really glad we could have this conversation ahead of the visit, Ambassador. Good to see you. James Jeffrey, Distinguished Fellow, Washington Institute for Near East Policy, and a voice of experience in the region. He's been in the room. We'll assemble our political panel next, only here on Balance of Power on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks in the red with the Dow, the S&P, NASDAQ. They're all declining. Wall Street holding back on big bets ahead of key data this week. Among those bets, NVIDIA earnings Wednesday. NVIDIA right now down 1.6%. Here's where we stand. S&P trading lower by 24 points, 6709. For the S&P, a decline right now of about 0.4%. The Dow lower by 185, down 0.4%. NASDAQ is down 77. The NASDAQ Composite Index down now by 0.3%. 10-year at 4.13%, with the 2-year currently yielding 3.61%. Spot gold is down $9 the ounce to $4,074, down 0.2%. West Texas Intermediate crude down 0.1%, 60.03 a barrel. And Bitcoin now down by 0.8% with a $92,000 handle. Bitcoin 92,680 right now on Bitcoin. Johnson & Johnson has agreed to buy the cancer treatment biotech Halda Therapeutics for $3.05 billion in cash. All part of a strategy to cope with eroding sales for its major psoriasis drug. J&J shares, they're up now by 2%. Recapping stocks lower, S&P down 0.4 at 6706. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington as Balance of Power continues. Once again, your host. Here he is, Joe Matthew.
All right, Charlie, thank you so much. Live from New York, Charlie Pellet back in the fold today, and we'll check in with Charlie for more on Wall Street in about 20 minutes' time here on Balance of Power. He's part of the show every day as we join you live from Washington here on Bloomberg TV and radio, with our eyes, of course, on the Caribbean, where they have been for the past couple of months at this point, knowing now as well that the largest aircraft carrier in the world has arrived in the region, the USS Gerald Ford, which comes with it a massive strike group that adds to the already large armada that's been assembled off the coast of this nation. There was a thought going into the weekend that the president, having told reporters that he effectively had made up his mind what to do, was about to launch strikes against Venezuela. Now the president says he's considering talks with Venezuelan President Nicolás Maduro, even with the buildup of U.S. forces off the coast. So it's changing the dynamic here and prompting different questions, as the president also prepares to host MBS, the Saudi crown prince, tomorrow at the White House, with the full flourish of a state visit, even though he is not the king. Now, we've also got the vote when it comes to releasing the Epstein files tomorrow in the House, and the president taking a 180 on this to tell Republicans to vote for the measure. I asked earlier when we sat down with Senator Mark Warner, the Democrat from Virginia, exactly how the president can compartmentalize all of these stories at once, all of these challenges, as he prepares to make such an important decision in South America. Listen to what he said.
I'm not sure he can compartmentalize that much, and clearly America's history of intervention in South America or Central America has usually ended up with a not a very good outcome, and the Maduro government's a bad guy. We don't even recognize Maduro. But I've seen nothing that would give a basis for a military intervention. And the activities they're taking right now in the Caribbean and in the Eastern Pacific, those are all about drugs, has nothing to do with Venezuela. On the case of MBS, I have visited Saudi. I do think I've got concerns about obviously what happened with Khashoggi, but I do feel like MBS is trying to move Saudi Arabia into the 21st century. I think you've seen a great deal of empowerment of women. I think you've got an economy that's trying to move away from oil, but whether they are really going to be the long-term steady partner that I think America would hope for is, again, a bit of an open question.
With the buildup of military might that we've seen in the Caribbean, do you expect that we will see either some sort of land invasion or airstrikes?
Well, there would be, I can't think of any legal justification that would validate, a landing, putting troops in harm's way. And even on the airstrike, I mean, this is not something, this has been building for months. If the president's going to take action, I think it is absolutely obligatory that he would brief Congress. This is not something that would happen out of the blue in some other part of the world where, the president has to act very quickly and then brief Congress after the fact. Since this has been about, appears to be a pressure campaign on Maduro, he must keep Congress informed.
This is why it has, of course, been a big conversation on Capitol Hill regarding a potential war powers act, but those votes have so far failed. You can hear our full conversation, by the way. I was talking to Senator Mark Warner alongside Laura Davison for the late edition of Balance of Power. Join us at 5 p.m. Eastern Time to hear more of what he had to say about all the stories we're managing here. As we assemble our political panel, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, what do you make of these different headlines? We're putting more firepower in the region than one would need effectively to defeat Venezuela in a military head-to-head. But the president now also saying Venezuela would like to talk and that the U.S., quote, may be having some discussions, unquote, with Maduro. Where are we in this saga?
Yeah, I think where we are is I think we see the Secretary of State sort of playing Vice President Dick Cheney vis-a-vis Iraq 2001. President Trump earlier this year wanted to and did talk to Venezuela about potentially easing up on the U.S. pressure. In exchange, Maduro would stop selling to China and open up the oil markets to the U.S. By all accounts, it was the Secretary of State who poo-pooed that idea and said, no, we need regime change there. So I think what we're seeing is the president sort of waffling between advice and pressure from the Secretary of State, who for ideological and other reasons has long wanted regime change in Venezuela, and the president's own instincts to deal with this as a business investment, as a deal he can make with Maduro. And I think these two things are sort of clashing in the president's mind, and I don't think we know yet who will win out. But for my view, I think the president's view should win out. I think a deal is far better than is an attempt at regime change, as we've been there before, and it doesn't turn out well for the U.S.
Rick, would we turn the biggest carrier strike group out of the Mediterranean and into the Caribbean to simply add pressure for someone like Maduro to have talks with the president? What do you think is at work here?
Well, it's certainly a hallmark of Donald Trump's leadership. He isn't afraid to break eggs and redirect a massive maritime militia like this into this region. And it kind of reminds me a little bit about one of my favorite presidents, Teddy Roosevelt. Talk softly, but carry a big stick. Obviously, Donald Trump's barely talking at all about his plans for Venezuela, but he's got the biggest stick I think we could have ever put together floating outside the waters of Venezuela right now. So he's clearly got a plan. He's obviously not talking to Senator Warner about it, as was pretty clear. But I think we got to let this play out. Look, Maduro is an illegitimate head of state. He lost election after election. He is only there to repress his people and to benefit from the cocaine trade. Studies have been done over time that basically brands him as a cartel leader, not a nation builder. And so I don't think we ought to shed a tear for what's going on with his administration there. He's called up his troops, and I think if you were a betting man, you would probably think the poly markets would give advantage to the U.S.
I should think so. The cartel that we are alleging Maduro is the head of, in this case, Jeannie, is going to be designated, according to the State Department, as a foreign terrorist organization. That will be effective on November 21st. Is that open season at that point, if Maduro doesn't leave?
Yeah, it does set the stage. And by the way, Joe, you didn't play, but Maduro over the weekend singing Imagine by John Lennon in one of his speeches is really a classic. Yeah, it's really a classic. I think it does. It puts certainly more pressure on the Maduro regime, but I don't think we can underestimate what is going on here. A month ago, there was a meeting of the World Bank, the IMF, Barclays, some of the big hedge funds and others in Washington, D.C. The focus of discussion was, how can we get into Venezuela once we see regime change? This harkens again right back to discussions Dick Cheney was having about what can we do in Iraq in terms of oil once we get rid of Saddam Hussein. This is the conversation going on. Donald Trump's instinct is to make a deal with Maduro Secretary Rubio's is regime change. And I think we don't know yet what is going to happen. And by the way, while this is...
I think Jeannie might be having a little trouble with the connection there. We'll work on that. Rick, I've asked you this before. This so-called covert CIA operation that the president acknowledged when asked about it by a reporter on the ground, they say, in Venezuela, is doing what right now? Are they tracking drug shipments to port, which leads us to bomb these alleged drug boats? Are they mapping targets for airstrikes? Or is it all of the above?
Oh, I think only the imagination can, run wild when thinking about what these soft operators are doing, if indeed they are in Venezuela. We have to believe the administration when they tell us these things, and yet these are the most highly skilled warfighters ever created in the history of the world. And so there's nothing really that I can imagine they can't do. One thing, too, is making sure that the rightful winners of the last presidential elections are protected. These folks have been basically hunted ever since the election because they represent the future of Venezuela, which is a big problem for Maduro. So the hope that I would have is the first order of events is to ensure that the future succession of democratic leadership is safe and secure, so that regardless of what happens to Maduro, you have a leadership in that country that will allow people to pursue their self-interest and really help build a nation that we could do business with.
Well, knowing that much more of the drug trade is flowing through Mexico or originating even in Mexico than it is coming from Venezuela, Rick, do we simply chalk this up as Claudia Sheinbaum knowing how to create a good relationship with Donald Trump, or is Venezuela potentially a playbook for Mexico?
I think Mexico has actually done a pretty impressive job of avoiding controversy with the Trump administration, and yet at the same time pursuing their own self-interest, both with tariffs and border and immigration and other very thorny topics. And so Venezuela could really take a lesson from the Sheinbaum administration and the deft diplomacy. Doesn't mean she's always right, but she's handling it in a very, very professional way. I don't think there's any going back to any kind of normal relationship with any democratic country if you're Maduro. He has violated every international law that there is to violate. He's repressed his people. He's driven a lot of immigration into the United States from Venezuela. He continues to pollute the world with his drugs and benefit from it. He deserves to go.
Well, he may be. And we're going to find out together if the president, in fact, has made this decision. Rick, thank you. Rick Davis, and there's Jeannie Shanzano, Bloomberg Politics contributors, always our favorite panel here on a Monday, and we thank you for the insights. I'm Joe Matthew in Washington. Thanks for being with us on Balance of Power. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all very much in the red. Interestingly, though, our Mag 7 index holding on to a gain right now. Little change, higher by about 0.1%. But bottom line here, stocks selling off. Back to work Monday with the S&P down 32 now, down 0.5%. The Dow down 271, a drop there of 0.6%. NASDAQ lower now by 0.5%. 10-year at 4.12%, with the 2-year currently yielding 3.60%. Gold right now down $15 the ounce to $4,068, drop of 0.4%. West Texas Intermediate crude holding right around $60 even a barrel, 60.04 right now. West Texas Intermediate down 0.1%. And Bitcoin now down by 1%, 92,451 on Bitcoin. Our Mike McGlone will have a whole lot more on crypto and Bitcoin. The selling there coming up in just a moment. Clayton, DeVilliers & Rice has agreed to buy Sealed Air in a deal valuing the packaging company that invented bubble wrap for $6.2 billion. The company traces its roots back to 1957. Right now, we do have shares of Sealed Air Corp. They are trading lower. Sealed Air down now by just about 3%. Wall Street, of course, looking ahead to NVIDIA earnings Wednesday after the close of trading. Yes, Bloomberg Television and Radio, we're going to be all over this when it drops. NVIDIA's report will be picked over by investors, increasingly uneasy over stratospheric AI valuations, even though the chip maker is widely expected to deliver another earnings beat. $4.6 trillion company is also facing questions about SoftBank Group's recent exit as a shareholder. Again, NVIDIA ahead of earnings in the middle of the week, down now by about 1.7%. Some of the other stories that we're following for you. Ford has struck a deal with Amazon to sell certified used cars through its e-commerce website, becoming the second major automaker to reach customers through the massive online retailer. Right now, we do have Ford shares down 1.8%, Amazon down by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks. Charlie's always watching crypto for us alongside stocks and bonds because, boy, it's been a moving target recently, and Bitcoin has all of our attention today as the chart just looks broken. We talked about Bitcoin with Mike McGlone next week, and I think we've got to do it again. Down $870 right now, about 1% to fall back below $93,000. And if you're a technician, this is a problem. If you're an investor who bought at 120 something, well, this is an even bigger problem. Mike McGlone covers commodities for us at Bloomberg Intelligence, our senior commodity strategist, and therefore owns the Bitcoin beat. It's great to see you, Mike, and I'm just trying to figure this out here. If we take a look at what's happening with gold today, it's still holding above $4,000 an ounce. So is Bitcoin the store of value we thought it was?
No, unfortunately. We're finding out it has a much higher correlation to the stock market, which some people consider a store of value, but it got way too expensive. And Joe, I really appreciate you putting Bitcoin and gold in the same sentence, because my old mantra used to be, well, you can't really hold gold anymore without some Bitcoin in that space with the word going digital. But sometimes it's better to overweight gold, and that's been the case since last year, certainly since Mr. Trump was elected and since ETFs were launched. So right now, Bitcoin's hovering around 92,000. It was up 34% in a year. Now it's down. The key question is, was it due into the end of the year? I think it's going to go a lot lower, unfortunately. I don't think it's going to stay above 100,000, and it could bring a lot of things down with it. And one key indicator for that is the ounces of gold equal to 1 Bitcoin. It's been a great leading indicator. It's just broken down through key support. Right now, it's about 22.7. The high was 35, and key support was 25. So it's breaking down. And Joe, also key to remember, it's the end of the year. Potentially, this is the time of year we get position squaring and people hitting stops. I'll end with one key thing. The Bloomberg Galaxy Crypto Index was up about 30% on the year. Now it's down about 12% a year. So hitting stops.
Wow. How much do we need to worry about the technical factors here? Is there support in the 70,000 or 77,000 range here, Mike, or is the chart broken to the point where it doesn't matter now?
Well, it's always going to matter. We initially bounced from 100,000. I think the next key level is around 84,000. But the key thing is that we have to talk about technicals because there's no fundamental underlying. There's no basis. Like, I mean, I trade crypto dollars. There's a basis. I trade crude oil futures, and there's a basis. There's nothing in these 27 million cryptos. And I think that's what's happening, Joe. We're finding out, yes, a lot of this was pie-in-the-sky hubris, and now we're getting towards the realization that it's just potentially a start of a bear market, and Bitcoin's a big one. But here's the key thing to remember. There was only one in 2009, and now there's about 27 million of them, unlimited supply of these things.
How about that? Well, you wonder about some of the forecasts. I think Tom Lee had it around $250,000. I think Kathy Wood's got like $1 million price target in 5 years or something. I don't know how you can even issue a forecast when you're in the throes of this kind of volatility. But I'm curious, Mike, what does this mean for the treasury companies, these crypto treasury companies like Strategy and others that have promised an even better hedge on crypto, sort of crypto on steroids? They're going down hard with this too.
Exactly. Strategy is one of the worst performing stocks this year. I know Michael Saylor well. He was one of my key indicators, got me bullish Bitcoin around 10,000 in 2020 when he turned toward Bitcoin. But what he did is he doubled down on the 10X. He double dog dared the market gods with the 10X. It's not a good idea. So it's starting to lead the way lower. But the key thing to remember about crypto treasuries is it's an oxymoron. Treasuries should be in the same sentence as treasuries, It does make sense. And I just look at this as a classic stuff. So here's what I think is going to end up my book someday, Joe. It's going to either read that this time was different or this time wasn't different. I think it's going to be this time wasn't different. We're going to look back at all these silly crypto things as just pie in the sky things like pets.com in 1999.
Can I get the first interview when the book comes out? I'm looking forward to that. Mike McGlone, Bloomberg Intelligence, Senior Commodity Strategist. Thank you, Mike. We'll keep tabs on Bitcoin for you. Like I said, we're below $93,000 right now, down more than 0.6%. President Trump is putting the apron back on this evening. I'm just assuming that's what happened the last time he had a McDonald's event. The Impact Summit, hosted by McDonald's here in Washington, is going to draw the president. This is an event that he'll be attending a little bit later on, I believe within the White House campus. I don't know what the venue is going to be here, but he's going to be talking about his affordability message, of course, with an audience of McDonald's owners and operators and suppliers who are all coming together. His favorite restaurant chain, knowing he loves a Big Mac and a Diet Coke. Loved making the fries, too, when he was at McDonald's on the campaign trail. So this one's got our attention. Knowing that this is such an important message for the president, affordability. It's not just food. After the president issued those exemptions on tariffs last week on everything from beef to cocoa to bananas, it's also health care. And this is what draws our attention to our conversation with Congresswoman Gwen Moore. Knowing that we've got a couple of weeks to figure something out here, either to extend Obamacare premiums, having reopened the government, or if you ask the president, recraft the entire healthcare system in the United States. I suppose a third option would be doing nothing. But here's what the president said about this over the weekend.
We're negotiating with lawmakers, and I've had personal talks with some Democrats. I can't tell you who they are. I just don't want to do that. It's not fair to them, about paying large amounts of dollars back to the people.
Maybe he's talking to Gwen Moore. The Congresswoman from Wisconsin's 4th District, Democrat, with us live from Capitol Hill. Congresswoman, it's great to see you. Welcome back to Bloomberg TV and radio. Have you received any overtures from Republicans when it comes to negotiating health care?
I have not received any overtures, nor have I in the entire time that I've been in Congress and since we've passed the Affordable Care Act, gotten any sort of alternatives to the ACA, also known as Obamacare. And with regard to the president giving us all a couple of $1,000s for our health savings account, last time I checked, that really didn't work. Last time I checked, and I've been around for a while, people have had these health care plans, as it were, that barely cost anything, had high deductibles, didn't provide any health care at all, and it looks like Obamacare is on life support right now.
Well, if we do not see an extension of these COVID-era subsidies that we've been talking about straight through the shutdown. This is a big reason why Democrats and Republicans could not get on the same page. What happens to people in Wisconsin? This is something that could cause premiums to double or quadruple depending on where you are.
Yeah, that's true. 114%, and that's an average. But it's even more than that. I had a conversation with folks this weekend, you know, and they've been seeing and listening to something other than the TV commercials and Republican and Democratic talking points. They are actually getting the proposals in the mail. And they can see that they've gone from paying, you know, $150 for coverage to like $800 a month for coverage. Just a couple of people I talked to this weekend. You know, so the whole notion that costs are going down under President Trump's administration and they're going to have an alternative. I mean, people are not stupid. They are experiencing this shift.
Congresswoman, the president, you might have heard me mention, is going to be having an event with McDonald's owners and operators this evening. And we've heard from McDonald's just a couple of weeks ago in its earnings report, and it told us that low-income customers were actually falling off its list of customers, and that people with more money were trading down. If we're in a world now, I don't know if you prefer an extra value meal or the dollar menu at McDonald's, Congresswoman, but if we're in a world where low-income people are not able to afford a $1 meal or whatever it costs for an extra value meal at McDonald's, what does that tell us about where we are here in the affordability conversation?
Well, the extra value meals are no longer an extra value. You know, of course, I fed my kids, my grandkids on McDonald's, and I mean, this is one of the canaries in the coal mine. When you can't afford to just drive through without being concerned that you're spending your kids' lunch money for the whole week, when you drive through one time, you know, that's a measurement of people's well-being. People don't have to discern whether or not they can afford a lobster. When you can't take your kids drive through McDonald's, you know you're in trouble.
Well, that might be where we are here, depending on how this all works out. Congresswoman, the president is putting exemptions on certain food items when it comes to tariffs. If you're with us on Bloomberg TV, you can see him reaching out of the drive-through window there from the campaign trail. What are we going to see happen to prices when it comes to food and energy in the weeks ahead?
Well, price volatility, the way it goes, I don't know that people are going to experience those drops right away. You know, a lot of these tariffs have been baked into the economy. I have one vendor in my district, and I won't mention the name, but they bought some equipment to expand their business. Those tariffs have been paid, and they've already had to either pay them or bake them into the price of their product. I mean, you can't just hit the undo button on everything. And I think that that's where we are. Our farmers in Wisconsin, I represent Milwaukee, but I'm very sensitive to the farm-to-table catastrophe. Our farmers have completely lost all their markets for their soybeans to China. You can't just hit the undo button and snap your fingers and have that return.
You know, the next vote you might take, from what we understand, is on this discharge petition to release the Epstein files, Congresswoman. The president has turned a 180 on this to tell Republicans to vote for it. So this could pass, we understand, with a pretty remarkable vote tomorrow. I'm wondering if you expect a unanimous result, and to what extent this has hit your conference as a Democrat.
Well, I can tell you, if the president has told Republicans to vote for it, I'm sure they will. Of course, this is a defensive tactic on his part, because what he'll do is he'll say that, oh, we're investigating this thing. We're looking at what Democrats, Larry Summers or Bill Clinton has done. We're investigating it. So therefore, the Justice Department just can't release the information. You know, the bottom line is that the President of the United States does not want his relationship with Epstein, which, you know, is extensive and over long periods of time, and is at least embarrassing to come out.
Well, we'll have a lot more to learn about this, I guess, in the days ahead, Congresswoman. That's Gwen Moore, live on Capitol Hill, the Democrat from Milwaukee, Wisconsin's 4th District, talking with us live here on Bloomberg TV and radio. We should mention Larry Summers is a paid contributor to Bloomberg TV, and we'll have a lot more on this conversation as we move forward here. Bloomberg Business Week Daily is straight ahead, coming up at the top of the hour at 2 o'clock. And we'll meet you back here for the late edition of Balance of Power at 5 p.m. Eastern. Join us for our full conversation with Virginia Democratic Senator Mark Warner, only here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, a very happy Monday. Carol Masser, Tim Stenivek. We are back here at Bloomberg headquarters after being in Boston on Friday, which was a lot of fun, very informative, if you will, on another world, certainly the medical world and what they're doing for kids. Having said that, today, this week, we are focused on a lot of stuff. And it does feel like if you just look at the trade today, investors just kind of going back and forth here, trying to make sense of all that's coming at us, Tim, this week.
Yeah, we're lower across the board. Charlie Pellet is back. He's going to give us an update on how things are looking on the S&P 500 and more business news. In the meantime, traders and investors really squarely focus on what we hear from companies this week. Certainly, NVIDIA is top of mind and what that sets the tone. But, Carol, we got a slew of retail earnings coming up this week as well.
Yeah, Home Depot, Walmart, those are some of the big ones. We also get a long-awaited monthly jobs report from the U.S. government. But it's going to be for...
Remember, that's the September one, okay, right?
It's going to be a little old, folks. Yeah. As we said, NVIDIA, really a big deal because they report on Wednesday. We also get Fed minutes that day as well.
You know, people are always like, oh, well, the jobs report's backwards looking. Well, this one's backwards looking.
It's super backwards looking. All right, looking forward to that. Keep in mind the S&P 500 on track to halt a streak of 6 months of gains, but could change if investors get some reassurance on that AI played and also on Fed rate cuts. We have one more meeting this year, and that is on December. All right, that's our backdrop. As we dig into this hour, one of Wall Street's bond kings who is spotting overpriced assets almost everywhere.
Yeah, speaking of past overpriced assets, Chris Whalen, who was a go-to nonstop during the global financial crisis, he joins us on banks and credit stress.
Can't wait to talk to him. I feel like it's the perfect Monday guest. Hey, also the president and CEO of Generac, that's the companies, they make generators and power equipment. We're going to get into their earnings that sparked a sell-off in the share price. Also get into growth opportunities when it comes to large megawatt generators for data centers.
Well, speaking of data centers, those are powering AI, and that's certainly our focus really each and every day, including with the CEO of Mozilla, Laura Chambers, is going to be back with us, talking about the growing presence of AI in our day-to-day web browsing experience. Remember, just in the last few months, you've had some of these, they are startups, but they're very well-funded.
Yeah.
Kind of battling it out for control of the browser.
Well, it's all about that, right? How much time do we spend searching around stuff? All right, lots coming your way in the next 60 minutes. Let's get you going, though. What's been kind of a round and about trade on this Monday. He is back. Charlie Pellet, over to you.
Hi, thank you very much indeed. Just as you guys came on the air, we hit the lows of the day. How about that? The Dow, the S&P, NASDAQ, all very much in the red. Right to the numbers here. Wall Street traders preparing for NVIDIA's earnings, and, of course, the jobs report. S&P right now down 51, drop there of 0.8%, 66.82 where we stand now. Dow Industrials down 387 on the Dow, drop of 0.8%. NASDAQ, the composite index, down 0.8%. The NASDAQ 100 index down 0.8%. And the Mag 7 index, which had been positive for most of the day, the Bloomberg Mag 7 index now down by about 0.4%. 10-year currently yielding 4.13% with a 2-year 3.60%. Gold is now down 0.6% at $4,060. West Texas Intermediate crude, $59.99 a barrel, down by 0.2%. And Bitcoin today extending its losses, down another 1.1%. Bitcoin now at 92,390 on Bitcoin. Wall Street, of course, looking ahead to NVIDIA's earnings after the close of trading on Wednesday. We got NVIDIA down now by 2.5%. And Amazon's first U.S. dollar bond offering in 3 years has drawn about $80 billion of orders. Amazon down now by about 1.7%. Recapping the Dow, the S&P, NASDAQ, all in the red. S&P down by 0.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Good to have Charlie Pellet back with us. We'll check in a little bit later on the continuing market trade. Hey, one of Wall Street's bond kings is spotting overpriced assets almost everywhere that he looks. In an episode of the Odd Lots podcast recorded to mark the show's 10-year anniversary, Jeff Gundlach called out nosebleed valuations in the equity market. He also warned investors, Tim, against incredibly speculative bets.
The Double Line Capital founder joined the host of Odd Lots, Joe Weisenthal and Tracy Alloway.
In recent years, the garbage lending has not gone to the public markets. The garbage lending has gone to these private markets. Next big crisis in the financial markets is going to be private credit. It has the same trappings as subprime mortgage repackaging had back in 2006. The health of the equity market in the United States it's among the least healthy in my entire career. in terms of the PE ratio, the CAPE ratio, all the classic valuation metrics are off the charts.
All right, just 3 snippets from that interview. That's DoubleLine Capital founder Jeff Gundlach with the hosts of Odd Lots, Joe Weisenthal and Tracy Alloway. Highly recommend you check it out on the Bloomberg and at Bloomberg.com. We want to stay on the markets and the outlook for financial assets in particular, and what is kind of a tricky time it feels like for U.S. financial markets. Great to have with us Chris Whalen. He's chairman of Whalen Global Advisors. He's also editor of the Institutional Risk Analyst. It's a weekly newsletter that looks at the intersection of financial markets and public policy. It dissects and analyzes bank balance sheets. Chris is author of Inflated, Money, Debt, and the American Dream, among others. That book, originally published back in 2010, second edition released in May of this year. We could go on his background. He's so well known to the Bloomberg audience, and he really was a go-to us during the great financial crisis. Chris joins us here in New York. Chris, it is great to have you here, and I feel like there are so many places to begin with. And I kind of want to begin with what we just heard from some of the interview that Jeff Gundlach did with the Odd Lots team, how he's keeping his strategy simple, loading up on cash, staying away from private credit due to garbage lending and unhealthy valuations, his words. The notes you shared with our team, you point out, in the credit markets, the wreckage in private equity and credit continues to accumulate. Wreckage is a big word in my world. So what do you mean by wreckage?
The loss rates on many of these assets, Carol, and thank you for having me, is quite astounding. Remember that you had not just big private equity firms diving into private credit, but you had retail firms selling this to individual investors for the past couple of years. I think it just speaks to a decline in standards in the investment world. I've been an investment banker for 30 years, member of FINRA. And I got to tell you, most of my astute clients, the banks I really have respect for, don't see anything that they like. They're using the private markets to lay off credit risk. They're selling assets to raise cash. And I think that's frankly very consistent with what Jeff Gundlach is saying, which is that there's so much out there that needs to be fixed. And the loss rates could be rather considerable. So I think it's only getting started. You saw the story on Bloomberg this morning about Blue Owl. Yeah. We're going to see a lot more of that. So, just take that example and multiply it across the entire spectrum of private equity. One of the interesting statistics I saw in the last couple of weeks is that something like 2/3 of the existing private equity firms are never going to be able to raise money again because the losses on their portfolio are so profound. So I think we're seeing something episodic. And as Gundlach said, this is a commercial story this time. This is not about consumers and mortgages. This is purely institutional.
So the question I have is how it manifests. And do you believe it manifests in some sort of crisis? Does it become something that is systemic and has an effect on the entire financial system? Is it that big of an issue?
It is that big, but remember, this is institutional investors. So a lot of it goes on behind the scenes, lawyers and bankers sitting in conference rooms trying to figure out how to extract value from a situation. So when it impacts a public company, yes. When a bank has to fess up about a loss, you just saw one with Blackstone, a telecom company, which is going to cost them $150 million. Looks like the whole thing was a fraud from the word go. But over time, yes, you're going to see more disclosure from the public players, but the amount of loss is going to be much larger than what the typical investor, the typical media person actually sees, because so much of it is private. I'll give you an example. There's a really great publication called The Real Deal that covers commercial real estate. They can't even begin to cover all of the things that are going on. If you just read their headlines every morning, you get a sense for just how much restructuring there is going on in some pretty important and well-located assets here in New York City and other cities around the U.S., and it just continues. And yet the funny part is you have new investors jumping in to buy these assets after they've been marked down, thinking that they're getting a deal. Well, we'll see,
Well, we will see, right? I mean, does the AI spending frenzy play into this?
Oh, very much. I covered Silicon Valley for years, Carol, as a banker.
Right.
And I have a lot of respect for real technologists as opposed to salespeople. I don't think AI, as it's described to most investors today, is going to amount to anything except the convenience for consumer users of the internet. When you talk about real intelligence on the part of a machine that is based on its ability to observe and integrate new information, that's not what we're doing here. We're simply taking existing language, existing words, and putting massive horsepower behind search.
Okay, so
they summarize the first page of Google results. That's it.
So to be fair, to make sure I understand this right, you're arguing that what we're seeing right now with LLMs such as ChatGPT from OpenAI and Claude from Anthropic, that's the extent of the innovation that we're going to see when it comes to the investment in AI.
The head of AI at Meta, who's a really smart man, I was watching some of his videos yesterday over the weekend, and he just dismisses this entire phase. And I understand what he's talking about. I used to cover companies that did what we called natural language processing, where we were trying to teach computers words and then be able to integrate those words. We're not even doing that with AI. We're just simply throwing muscular search at it and saying, okay, what's the top 10 search results? Let's build a summary. That's not intelligence. So I think a lot of the spend, and you've heard this from other people, is going to end up being wasted when it comes to AI.
That's a lot of money, and that's a lot of big bets that, in your view, will not.
Don't get me wrong. I've made a lot of money on NVIDIA.
Sorry, go ahead.
Well, I don't think it will generate revenue proportional to the spend. Let's put it that way.
So. Okay, so
I made a lot of money on NVIDIA. Don't get me wrong, and I love that stock. I love the company, but I think the desire for investable assets has just overwhelmed these opportunities. We see inflation everywhere we look in the financial markets today, and that is defined as too much money chasing too few opportunities.
I want to push back a little bit, Chris. I've been talking about this piece that was on 60 Minutes last night about the founder of Anthropic.
Yeah, Dario Amodei.
Right, and he talks specifically about how AI in healthcare. And I've talked to doctors too. We just did, actually, even on Friday, we were at Boston Children's about the use of they can't keep up to date on everything, and that how AI can data points and so on really come together to help create in terms of diagnoses, treatment, and also in terms of innovation. But Amadei's saying on 60 Minutes, basically he's talking about this thing of condensing basically let me just look what he says. The compressed 21st century. That's the phrase he uses to describe what could happen. He says the idea would be the point that we can get AI systems to this level of power where they're able to work with the best human scientists. Could we get 10 times the rate of progress and therefore compress all the medical progress that's going to happen throughout the entire 21st century in 5 or 10 years? I realize it's his book, but I mean, those of us who've started playing around with it are kind of blown away with it in terms of what it can do. But again, do you think it's just a productivity tool or something more that maybe creates?
At this stage, yes. Remember in the old days, Ray Kurzweil was one of the early advocates of AI, and he said, well, it's not intelligence, it's simulated cognition. And he was right. But then he had so many people throwing money at him to go to conferences and speak that over time he adopted a more liberal, more, I guess, accepting view of this technological phenomenon. But to me, as a writer, when I use AI, I use Google, for example, it's nice if you know what you're looking for specifically, but I'll always ask the machine 2 or 3 times the same question, differently worded.
Yeah.
And you always get different outputs. So let me give you another example. Imagine using AI for a mortgage lender to deal with customers who are calling, for a variety of reasons, and you want to use it to try and sift through those inquiries, answer the ones that you can in a reliable fashion, also use it to do summations of phone calls that have to be reviewed and okayed before they're, finalized, right? These are all valid functions. But ultimately, all we're really doing here is summarizing. And that's what computers do. They sort, they do summations and averages and everything else. But it's not intelligence. It's not the ability to learn on the fly, and particularly without a monitor and a companion, if you will, in a human sense. So for a lot of companies, they look at the horsepower, they look at the speed and the robustness of these AI tools, right? But they don't quite get there in terms of rolling it out because of the high error rates.
Well, so
that's the thing.
Okay, Tim and I are like fighting to who gets to ask the next question. Go ahead, Tim, because I'm gracious.
So, are you out of NVIDIA then? Because if this doesn't amount to, you're
everybody
completely
seems to be getting.
Yeah,
a lot of people.
I got in a long while ago. I wrote it up, then I got out, then I got back in, and each time it went up so much, it got to be such a big percentage of my portfolio that I had to sell it.
Well, the thing I want to ask you, Chris, is how does this end? Because I'm looking at a day where Amazon did their first U.S. dollar bond offering in 3 years, looking to raise $12 billion, but it tracks about $80 billion of orders.
15 billion, the size of U.S. dollar bond offering at 15 billion.
It's like, and Meta did it. Like, so how does this end? I mean it when we turned to you so many times during the great financial crisis. And this was something that there was so much FOMO and people, didn't want to miss the gains, but we know how it all ended. So how do you, I don't want to be alarmist, I want to be smart here. How does this potentially end? The AI component, who's impacted?
I think you're going to see a correction in some of these valuations simply because they've gone up so much in a relatively short period of time. Let me give you another interesting example. A company I actually like a lot, SoFi. SoFi is the best performing bank stock in the United States. It has been for the last 18 months. You know what the next one is, by the way, among big banks? Citi. The rest of the big guys have fallen behind. So why did SoFi do so well? Well, slowly they're growing into their overhead. Their overhead was massive. It's still too high relative to the size of the bank. It's about $50 billion in assets now. But they had a tech component, a Silicon Valley component, a little bit of Bitcoin. All of these pieces that made equity managers love it. And they drove the thing up over 100% over the last 12 months. I think stories like that are going to cool off. I think Bitcoin, frankly, is in big trouble because it was kind of co-opted by Wall Street. When you see ETFs with Bitcoin, that's not a good thing. This was supposed to be a means of exchange, remember?
Well,
so I think all of these markets are going to have to retreat a little bit, Carol. Will they go down way much like 2008? No, because there's still too many dollars chasing these opportunities.
Yeah, there's a lot of liquidity out there. Chris, so glad already. My team is like, when can we get Chris back? Thank you so much. Really appreciate it.
Time to rebook him. We have lots of follow-up questions.
We have lots of follow-up. SoFi, by the way, is up it's up about 74% year to date. Citigroup's up about 40%. Comparison, JP Morgan, also having a good year, but a gain of about 25% year to date. Chris Whalen, thank you. So appreciate it. Chris is chairman of Whalen Global Advisors, author of Inflated, Money, Debt, and the American Dream, which we didn't even get to talk about.
That's why we're going to rebook him.
Because it's so relevant to today. Coming up, the CEO of Generac. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are at the lows of the day with the Dow, the S&P, NASDAQ 100 index, Russell 2000. We're all in the red right now. 60-point drop on the S&P, down by 0.9%. So the S&P now at 66.73. Dow Industrials now down 450 points. That is a drop of 1% on the Dow. NASDAQ down 217. For NASDAQ, a decline right now of 1%. The Russell 2000 index of small cap shares down 1.3%, and our Mag 7 index down by 0.4%. 10-year 4.12%. We have got the 2-year 3.60%. Wall Street shunning risk ahead of NVIDIA and the jobs report. Spot gold down $21 the ounce, now at $4,063, down 0.5%. West Texas Intermediate crude oil down 0.1%, $60.01 a barrel. And Bitcoin now down 1.4%. Bitcoin 92,130 on Bitcoin. In the energy industry, Chevron studying options to buy global assets of sanctioned Russian oil firm Lukoil. This according to Reuters, citing sources. Shares of Chevron, they're down now by 1.6%. So recapping, selling underway with the Dow, the S&P, NASDAQ all in the red. NVIDIA, by the way, down by 2.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, we want to switch gears, talk a little bit about the company Generac. Shares of Generac are well off their highs this year, drop of nearly 30% since mid-August, and slumping about 21% since the company reported earnings late October. Now, those earnings from the power equipment company, you know who they are. They make generators and a lot more stuff. Included the company cutting its adjusted EBITDA margin and net sales growth forecast for the full year. The firm also posted adjusted profit and net sales for the third quarter that fell short of expectations. We had so much fun last time. Matt was here, Matt Miller, and we talked with the company's chairman and CEO and president, and he's back with us to talk about the business and the outlook. He is Aaron Yechfeld. He is, as we said, the president, CEO, and chairman of Generac, and he joins us from Wisconsin. Aaron, it is good to have you back here on Bloomberg Business Week Daily. How are you?
Good. How are you guys doing?
Doing okay. I can't believe that it's already November of 2025.
I know.
It's been a lot. Hey, talk to us about earnings, because investors seem pretty disappointed in the results. What do we need to know now that it's a couple weeks since?
Yeah, so we have two parts of our business, right? The part that probably most people know us for, the residential machines that we build here in Wisconsin and around the U.S., home backup systems. It was a soft season this year, really driven by two things. I would say the first thing is just we actually had really nice weather most of the summer and the fall. No landed hurricanes, which is great for the people who live along the coast. But if you're in a business like ours, obviously that does impact demand. So demand was softer just on the back of, basically nicer weather. And secondarily, we're starting to see some demand destruction, I think, with the consumer. We've had to put more pricing into the marketplace over the last 5 years, coming off of COVID, response to the tariff environment today. And that is starting to wear on the consumer and starting to impact our business a bit.
The demand destruction that you're talking about, I want to home in on that a little bit. What specifically is being hurt right now? Is it the purchasing power of the consumer? Talk a little bit more about that, what you're seeing in the marketplace right now.
No, thanks, Tim. And specifically for us, this is a home improvement project, right, for the most part. So because it's tied to the home and investment in the home, I think, I think housing just in general has just been slower, right? So the number of sales and purchases of homes, new construction of homes, all of those statistics are lower than I think where we'd like to see them at this point. We're not making enough housing in this country, unfortunately, and people investing in their homes, picking those types of projects. I think there's just a reticence right now, given some uncertainty, just where's the economy headed more broadly as we turn the page on 2025.
Are you a little bit more subdued then, like as you look into 2026? I mean, it's just around the corner here.
Certainly in our residential business, I would say that's the case. I think, interestingly enough, in our commercial and industrial business, where we make larger generators for backup manufacturing plants, hospitals, hotels, and data centers, which is a new market for us, we're actually seeing, some very nice indicators of strength, obviously on all of the CapEx spending in data centers in that market, with being driven by AI, of course, as you guys have reported and everybody's reporting on. but we're getting swept up in that a bit, and that is, I think, going to offset largely, be a nice counterweight for what we do and what we're probably going to see here in the residential market.
What is the connection between severe weather patterns, outages, and then, a few weeks or a few months later, your own sales?
Yeah, typically for us, what you would see, so if you go back, you wind the clock back to last year, we had a very strong hurricane season, 3 landed storms starting in July, and then we had 2 storms in October and 1 in November, 1 in October, 1 in November. Typically, you would see a pattern of increased demand for a couple of quarters after that, which we did see first half of last year and kind of coming actually into the season this year in anticipation for another season we thought was going to be active based on all the long-range forecasts. But it just didn't play out that way. So the weather patterns were a lot more mild, and as a result, we didn't see products sell through at the same rate.
Hey, I want to take a bigger kind of step back and look at the big picture environment of what you sell into, the U.S. energy grid. Because we talk a lot each and every day about the new data centers that are coming online, the increased demand that we're seeing not just from consumers, but from companies when it comes to energy, increasing energy prices. And we understand the grid is definitely cobbled together, and what a grid looks like in one community is not what it looks like in another community. But how would you characterize the resilience of the U.S. energy grid right now?
Well, they do grade the grid, and they grade a lot of the major infrastructure every year, and I think the grid got a D this year. So, I think when you look at that's a report from the civil engineers.
Who we should note are the ones who want to be, building this stuff.
Exactly.
So we have to take those grades with a grain of salt, I think.
Well, I think you're right on that, but still, nonetheless, outages have been on the rise, right? Maybe this year, this past season was a pretty mild one, but outages are on the rise in terms of the frequency of the outages and also the duration. And, it used to be weather delivered a lot of those knockout punches to the grid in terms of 80% of all outages caused by something driven by weather directly, hurricanes, ice storms, things like that. What we've been seeing is an ongoing trend here, a trend that's been forming around outages that are happening because you've got constraints of supply, where demand is overwhelming supply. If you go back, probably the best case we can give you as example is February of 2021 in Texas with the freeze down there, right? So you had just very cold, temperatures down in Texas, not historically cold, but very cold. And all of the heat is, either electrical in nature, heat pump or baseboard heating, and it overwhelmed the amount of supply that was available. And what you saw there is ERCOT, the grid operator, was, they basically had to make a tough choice to turn everybody off. They took the decision to disconnect, millions of homes and businesses to save, the major elements of the grid from long-term destruction. And so we're seeing these types of patterns. You mentioned we're seeing demand growing at a rate that we haven't seen in 2 decades. So, they're only talking about a couple of percentage points increase, and it sounds like something small to you and I, but when you talk about the grid in kind of the greater context, a couple of percentage points of increases in demand is a lot. It's projected, especially when you look at the data center build out, 100 gigawatts of power is going to be needed over the next 5 years. And so, that's like the equivalent of adding 20 New York cities. So if you think about just the amount of power that is, the raw power on the grid that's going to be needed. And it's happening at a time when we're actually retiring a lot of older assets, coal-fired plants and some other things like that.
Well, one thing I want to ask you, Aaron, just to provide some synergy with our earlier guest, Chris Whalen of Whalen Global Advisors, someone who we've talked to since the great financial crisis. He analyzes banks, the financial system, but we talked a lot about AI and the spend that's going on. And he's got a little bit more subdued view of the impact that AI will have on us longer term, that maybe it won't be as innovative or disruptive as some are saying. If it's not, how do you think about that? That what if it isn't as big as everybody says? How do you as a CEO of a company think about smartly what your exposure, what your build, or what your spend should be in exposure to that, when there is still the TBD is a big TBD?
Yeah, no, I'm sure as the case with Generac and other companies, a lot of boardroom conversations around this topic, right? Is it a bubble? How long will it last? Is it a 5-year run, a 10-year run, a 2-year run? I think what we know now, and we can look at our own business, how we're deploying AI, right? So we're using AI in our operations. in the manufacturing floor. We're using it in our customer support functions. We're using it across the business to drive optimizations. And we're doing that as a trade-off for adding heads, right? So I think a lot of businesses are looking at AI as a way to, okay, can we gain enough efficiencies where we don't have to add as many new heads into the business? And so I think those trends are very well pronounced. In fact, we have a bunch of conversations and a lot of projects that are ongoing to utilize AI in that fashion. So I look inward and we see we're using it, and we see a lot of opportunity in the future to use AI even more deeply in our operations. And every company in America is going through this same process, large and small. And I think personally, I think this is something that is a game changer, obviously, for businesses and the way we are productive and how productive we can be as a business, and the impact it can have on our customers and the impacts it can have on our products as well. So, when I look at that and you look at the kind of game-changing nature of it, I think even if let's say for the sake of argument that maybe it's not going to play out over the next 2 years the same way we all, different forecasts have said it's going to be, dramatically higher than anything we've ever seen. Let's say it doesn't turn out that way. I do think over time, you're talking about this is a game changer in terms of the technology and the way it's being deployed. And I don't think there's any reason to believe that this isn't going to be something that's going to, obviously have a tremendous amount of spending underpinning it for a long time.
But the connection to your business and what it does for people and companies that want to buy machines from Generac, does it mean the grid becomes more resilient and more reliable because it needs these upgrades in order to support the power demand? Is that net not so great for your business because, well, things are more reliable?
Yeah, that's very true. I think on the context of a broader grid kind of network, right? The ability to kind of shift if you've got a problem in one part of the network to a part of the network that doesn't have a problem. I think in our business, though, frankly, what happens is it's kind of the last mile, right? So that line that connects, directly to your home, right? If a tree falls on that line, there's not a lot that AI is going to be able to do for you personally, for your home or your business. And that really is at the heart of our, kind of our resiliency part of our business. I would say that, the other side of this coin, of course, is as we put more data centers on the ground and you see that demand for power continue to increase, if we don't have enough supply, I do think that we're going to have continued problems here. The Texas example that I gave you is an example from several years ago, but what we're seeing is localized pockets where there's just not enough power. That's a problem.
Aaron, someone listening, watching right now, said, hey, ask Aaron when the 28 kilowatt generator that you were talking about when you were on with us in August, when that's going to, I guess, be available. Just got about 30 seconds.
Yeah, today. We just opened shipping for the product today. So it's a brand new product line for us. And it's the largest air-cooled home standby generator on the market. So great product.
All right. Good stuff. Good stuff. Hey, listen, we always appreciate time with you. Be well. Aaron Jagdfeld joining us, Chairman, President, and CEO of Generac, joining us from Wisconsin on this Monday.
Hey, some headlines crossing the Bloomberg terminal. Fed Governor Lisa Cook offers defense of mortgage records. This, according to the Wall Street Journal. The AP writing in a letter to AG Pam Bondi on Monday, lawyers for Federal Reserve Governor Lisa Cook disputed allegations by a Trump administration official that she committed mortgage fraud.
All right, when we continue the intersection of AI and search and security with everything in our world, we do have an AI theme today. We're going to check in with the CEO of Mozilla. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. In a letter to Attorney General Pam Bondi today, lawyers for Fed Governor Lisa Cook are disputing allegations by a Trump administration official that she committed mortgage fraud. Now, President Trump used the accusation as a basis to seek her firing. It was the first time a president sought to remove a Fed governor in the central bank's 112-year history. So, developing story, that headline right now on the Bloomberg. Wall Street shunning risk ahead of NVIDIA's report this week. Also, jobs data later in the week. Stocks lower across the board right now. Worst level of the day, with the S&P down 77, now at 66.56, down 1.1%. The Dow is down 567 points on the Dow, a drop of 1.2%. NASDAQ lower now by 1.3%. The 10-year at 4.12%, with the 2-year that's yielding 3.60%. Spot gold down 1.3%, 4,032 the ounce. West Texas Intermediate crude 59.77 a barrel, down 0.5%. And the selling in Bitcoin continues, now at 91,830. Bitcoin down now by 1.7%. Ford has struck a deal with Amazon to sell certified used cars through its e-commerce website, becoming the second major automaker to reach customers through the massive online retailer. Ford down 2.5%. Amazon down now by just about 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week Daily. Carol Master along with Tim Stenovec. Want to get to our conversations from the C-suite continuing on this Monday. And something that caught our attention was from our Bloomberg Law team. And they wrote about OpenAI and its most recent update to its usage policies for ChatGPT that provides kind of a window into the company's efforts to insulate itself from potential liability for handing out legal advice to its users. Tim, the company's update, they tweak policies about how ChatGPT and other products can be used to provide legal and medical advice. And although some lawyers prematurely and inaccurately celebrate the changes as an outright ban on giving legal advice, the update was more a change in wording. ChatGPT still produces legal advice, including drafting contracts if asked to do so.
Okay, so a brave new world.
Yes.
Don't take legal advice from us.
No.
Choose whether or not you want to take it from a large language model. Curious what Laura Chambers has to say about this and sort of everything that is this layer of technology that's kind of underlying everything in our ecosystem right now. She's CEO of Mozilla Corporation. She joins us from San Francisco. Mozilla is the global nonprofit dedicated to ensuring the internet remains open, inclusive, and equitable. And you might know the company from its Firefox web browser. And that's really where I want to start in sort of understanding this layer of technology that we're talking about so much, that so many of us are using. And I wonder how you look at it as a way that it's part of the ecosystem now, Laura. Is this like, is it a web browser? Is it like internet access was in the 1990s? Are there going to be no such thing as like, AI companies because everything is going to be an AI company? How should we be thinking about it?
Yeah, it's a moment of tremendous change. One of the big shifts we're seeing is a really renewed interest in browsers as a category. Perplexity just launched their Comet browser. OpenAI just launched their Atlas browser. And it makes sense. The browser has been around for decades, and it's a product we use all the time, but we don't think about it very often. And it's not surprising that AI companies are getting into this space. The browser has incredible access into credentials, your tabs, where you're browsing, how you're spending your time. And as you know, AI companies are very hungry for that information. So it is sort of a moment of resurgence for the browser right now.
Is the browser the gateway to all of this? Or is it not, because we're using apps like Claude or ChatGPT?
What we're finding is that the folks that created those apps are feeling that the interface is a little clunky right now, that you might be in a browser and then you have to go to another tab and back and forth a little bit. And so I think that there will be a role to play for apps. But what we're certainly seeing from OpenAI and others is that they're really interested in getting into the browser space. But I think the browser's changing. The browser has traditionally been a container. You have a URL and a search bar, you have some tabs, and the browser renders content on the web for you. The shift that we're expecting to see is that the browser will become more of an agent to actually do work on your behalf in that browser interface. But with that shift becomes a big shift in power of data as well. You know, the AIs now have more information about your credentials, where you're spending your time, where you're spending your money. And we know that people are worried about that. 60% of people in the US are really worried about privacy with AI, and the other 40% probably should be as well. And so I think to be successful in this space, people are going to have to go back to those values that Mozilla and Firefox are really built on, which is around privacy and choice and control over your experience and your data.
Do you feel like it's difficult to compete against the behemoths that are out there?
It's always challenging to be a smaller company. The big tech companies consolidate a lot of power. They lock you in. They have vertical integration. But it's something that is incredibly important to do. The internet, if left to its own devices, would always trend to being closed, to being expensive, and to just have a few players. And that's why it's important to have open source solutions. It's important for alternatives for Firefox, like Firefox, to be there. You know, we have our own browser engine called Gecko. There are only 3 browser engines left. Microsoft and Opera, everyone else moved over to Chromium. It's expensive to run a browser engine. I know why they did it, but we think it's incredibly important to invest in options like that, because very quickly, otherwise, you end up in a very, very sort of monopolistic world, which is bad for the health of the internet, and it's bad for the users of the internet.
So are you creating a web browser? Are you changing Firefox in order to be an AI-first browser so it can compete with whatever browser OpenAI ultimately has, whatever browser Perplexity ultimately offers, in the way Chrome changes from Alphabet's Google?
Yeah, at Firefox, we always adapt to where users are going and what they need. And not all of our users want AI. About 12% of users in the US actually don't want AI. So there'll always be an experience for them. But we just launched Smart Windows. We have signups for those available right now, which will be our version of AI. But it's going to be centered on privacy, on trust, and on transparency. So you'll be able to have a great AI experience in the Firefox browser, but it's going to be one that is really oriented around what users really need and how we can do a great job of protecting their data.
Yeah, I am curious too about, you're thinking about who actually owns the data. We know the data is what's going to make AI and LLMs really powerful. So I'm just thinking about, is some of your concerns too about certain companies, again, going back to the big guys, the big players, that they will have the access to most data out there as more and more folks use their search within their AI chat engines, if you will?
Yeah, I think that users should be really thoughtful about their data. Now, the good news about data is it can create great experiences, right? You can have seamless, faster experiences. There's a lot of good things that data can do. But as you give away more and more data, you're actually giving away control. And so the big tech companies control what you see, where you spend your time, how you spend your money by sort of the algorithms of what they decide to show you. And so even though on the internet it feels like you have a lot of choice, actually that choice has already been pre-narrowed, and it's pre-narrowed by the data that's been collected for you. So I think it's incredibly important for users to think about who's got my data, how is it shaping what I'm seeing, what I'm buying, how I'm spending my time, how I'm spending my money, and to not sort of give that data away without really thinking it through, and to make choices that help to preserve privacy.
Yeah, certainly lots of issues. We're kind of finding our way through all of this. Really good to get your perspective. Laura Chambers, she's Chief Executive Officer of Mozilla, joining us from San Francisco.
Hey, taking a look at markets, we're actually seeing a little bit of a deterioration in the trade right now. The NASDAQ Composite down 1.3%. The S&P 500 right now down 1.2%. The Dow down 1.3%. Looking deeper into the S&P 500, information technology, a laggard down 2%. Financials down 1.9%. Energy, Carol, down 1.8%.
Yeah, we're seeing 8 of the 11 major industry groups in the S&P 500 down on the day. The top performer, communications services, up about 0.75 percentage point. Utilities Utilities are up about 0.5% overall. Healthcare up about 0.1%. And if you look again at the S&P 500, 412 names are losing ground on this Monday, 91 to the upside. A lot coming out investors. As we mentioned, we'll get a jobs report for the month of September. We've got Fed minutes. We've got NVIDIA earnings and retail earnings, which will give us a read on the consumer. So a lot coming our way in just a moment.
Coming up next, stocks on the move. This is Bloomberg Business Week Daily.